Peter, we're back.
Good morning, Mr. Caberta. How are you?
I'm fantastic.
Great. Monday, new week, new trading day. We got 2 solid weeks left. I shouldn't say that. You never know. It could be really interesting during Christmas and New Year's, and especially since Christmas drops on a Wednesday.
Yeah.
New Year's drops on a Wednesday. You kind of have thin days on both sides traditionally, which sometimes gives you interesting ranges to trade. But if things are kind of quiet, maybe we don't get as much movement with it. Sometimes when it's on a Monday or a Friday, you still get the bulk of the week, kind of gets back to normal.
I think a couple of things. First of all, how was your weekend?
My weekend was great, actually. Got to spend some time with my friend, which was nice. So,
yeah, that's right. Yesterday was like, it was like that first spring day in Chicago, but it's December.
It was so weird. Saturday, I put out Christmas decorations, and I couldn't get any of the little stakes into the ground. So, I start them, and then I start to pound them, and the stakes just...
The ground is frozen.
The ground, I was so surprised, because usually in Chicago, it's not like rock solid frozen by now, but we've been so cold here recently. And Sunday, we warmed up to the mid-50s.
Unbelievable.
And I wouldn't have thought it, but the ground was just... It was good to go. I went around and I did all my little.
Oh, so you did get to
Sunday
after we went shooting.
Yeah. So we did some sporting clays and skeet shooting on Sunday because it was so nice to get outside and do a little bit of something different, which was really fun. You had your best day ever shooting, I think,
which was still really bad. I'm really bad.
Sporting clays is, again, not to get into too much, but it's a much more challenging kind of thing because they're coming at you from all angles, and it's just not skeet. You go around a very limited course, and
skeet's what we usually do,
right? And it's angles. It's really just angles around a half moon. So if the wind's constant, you kind of can do some math and figure out your leads. Here they're, coming from behind you and rolling over, and it's like I don't know where the heck they are or where I want to be. But you did great.
I don't know what it is about the sporting clay environment that makes I definitely hit at a better rate than when we're doing the skeet, which shouldn't normally be the case, right?
Yeah, skeet should be. But I think part of it is I've shot skeet for 40 years, and I tend to go really fast, and maybe I pull you around at that speed instead of giving you enough time to.
Well, because we do when we do the skeet shooting. What is it? 20 shots? What is it?
25 shots.
25. And Pete literally, the over/under on a round for you would probably be 23. I think would be like a true line, depending on I don't know your mood and your health that day. Maybe 22 and a half, or 23 and a half. But like the line is right there.
Right.
And so we move. I maybe get like a little after the first 2 stations. I'm like, all right.
That's why I give you a rubber gun, because you get frustrated and you throw it on the ground.
The sporting clay thing, I don't know what it is. I love, especially where you belong, that club. There's like there's no terrain in Chicago. It's all flat, but there are nice trees. There's like some different like streams and stuff, and it's fun. It was a lot of fun.
Yeah.
It was a beautiful day. And then you went back and you did some yard work. I went back and took the dog for a walk.
Oh, you're a good man. Yeah. My wife had covered that while we were out. So,
that's nice.
Did some yard work. And then, again, as bad as you think the Bears could be, they actually are worse.
Well, thankfully, you didn't bet on them, did you?
No, I did. Okay. We talked about that. You're like, maybe they're doing it. It's like, I don't know if they're doing it or not.
Well, unfortunately, they were going up against a team that was really due. And when we were talking about it, the line was only 3.5, and we were both just kind of like, man, it's in San Francisco, and they're only getting 3.5, and San Francisco's a real team.
But they were down a lot of guys. I mean, this is what you get at the end of the year. You get actually a lot more variance because so many guys are out, and they're at their second or one of their linemen, they're down to the third string on some of these guys.
I saw that. Yeah, I saw that. Because, they had like a guard go out, and they're like, that's the third guard.
Yeah.
And it's like, this team is screwed. But, it's funny. I can't help but think, whether it's, sports gambling or just life in general, skeet shooting, sporting clays, whatever, mean reversion is a real thing. I think mean reversion is more real than someone being like a genius. Or I would say it's more likely because you always hear about like, oh, Warren Buffett or like this guy or that guy who are like the best investors ever. And it's like, okay, maybe those guys have something special. It's likely that they have something special. Maybe I could also make a case that in a population there are going to be outliers, and so maybe they were just the guys that got lucky. That, you know, if there were tens of thousands of people who were born in the range that Warren Buffett was born and started investing in the range that Warren Buffett invested, and he's the one guy that kind of just picked all the right things. Right. And I don't want to talk that down because I love his story.
You're going very Plato on me. I love it.
Well, but the thing that I will get back to, of course, in a big distribution like that, there's outliers, whatever. But in more everyday people like you and me and like everybody on the planet who's not Warren Buffett or Bill Gates or, you know, kind of these outliers, mean reversion rules almost always. Yeah. And the 49ers scored, what was it, like 6 points the week before and had the worst yardage that they've had and whatever. And then they smoked the Bears. Yeah. And it's like, you don't maybe always see that. But I would contend the Bears also had a pretty poor offensive day today. They're going to probably have a great offensive day in the next week or two. Markets as well, you see so much mean reversion, and sometimes it doesn't work out. Sometimes you do get that case of like that market got annihilated and it never came back. Right. But I can't help but, and I'm always drawn, and I think you and I are drawn to these markets because it is mean reversion is, at least for me, I don't want to speak for you, the underlying idea for almost everything I do. And that's why I'm, for example, long a bunch of PayPal. And PayPal's actually starting to pick up again. Yeah. Long a bunch of China. I don't know anything about any of the Chinese stocks, but whenever a market is getting annihilated and the news articles start coming out about how this is going to be the worst ever, and, you know, PayPal,
it's over. It's done.
They're not making any money, and they're investing in crypto. This is PayPal like 2 years ago or whatever. And it's whenever that stuff happens, I'm like, okay, maybe this is, you know, the one stock that was huge, gets smaller, and then goes to zero. But it doesn't normally happen. We don't see it across whether it's, like I say, sports gambling or you know, investing or trading or whatever. Or even just, like I say, skeet shooting or sporting clays. I'll probably have a really bad time out the next time we go, because this time I was so good. I just if you perform better than expectation, you're probably going to come back to that expectation or below it. If you perform worse than expectation,
setting the table for the next time, I'm going to have to.
Unless I've created a new expectation, which I don't think I have. I don't like practice at this. We go out like 4 or 5 times a year. But it's just always interesting to me to see stuff like the Bears 49ers games and seeing these markets this morning.
Absolutely right. And, you know, when they came out and they scored their first touchdown in 20 seconds, it was like, this is done.
Not going to be the day to be betting against the 49ers.
The air right out of the Bears. They did. But take a look at the markets. We're getting a very different kind of movement here.
Well, I want to zero in on this Aussie, and it's again, I'm going to try to land the plane on all the BS I just talked through. But this Aussie's getting annihilated at the end of last week, Pete.
It was just unrelenting. Euro got a brief reprieve. Sterling got all the way back up to 128 after non-farm payrolls. Now, Euro got above 106, couldn't hold it. Spent an hour there and didn't get back. No, stay on the Aussie, sorry.
Well, just want to show, there was the one spike, and then everything sold off. But this Aussie here really sold off.
Very different looking thing. Got the spike, not near as much, nowhere near the previous, this kind of congestion channel we've been in. Didn't get close to it, and then really sold off and went off at the end of the day on Friday, right near its lows. So a little bit interesting to see.
Well, and usually we see something like that, Pete, and you might see these markets, everything I just said, mean reversion, blah, 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 very different than equities. Equities almost, they don't really live.
Well,
the stock market at large has drifted higher for years and years and years.
Right.
Now.
There's a natural bias built into that you have to be mindful of. And I think what's nice about this product, and a lot of the commodities or FX is another type of exposure, a financial asset, but a commodity that is a true neutral security. There's no inboard bias, whether the bias is that it's more expensive to short than be long. It's not. You can express your opinion on either side with the same cost. There's no necessarily embedded carry bias to one side consistently. So that makes it a very interesting product.
Well, and in a day like today, it doesn't have kind of that hard asset appeal of markets like gold or Bitcoin or even equities. I don't want to put my tinfoil hat on here, but like it feels like equities also just continue to drift higher in recent years because people are trying to park their cash in something that is going to appreciate more than 5% because their cash is depreciating by about that much if they're not in a harder asset like gold or Bitcoin. And so currencies don't have that. It's pairs trades. It's, you know, these fiat currencies against each other. And so you don't have that kind of, like, to your point, for whatever reasons, inherent drift one way or the other, or you don't have this ability to like arb out, oh, interest rates in Japan are 0 and in the US they're this. Everybody is aware of that. Everybody who's trading these markets is getting those benefits. And the price that you're seeing right now factors all of that in. But I raise all of these points because usually you'll see a little bit of a, okay, here's the Friday action after non-farm. Aussie breaks 64 cents and sits down there and closes below 64. And you and I are trained to think, you know, on Sunday it's going to be a tough time for this market. Really opened unchanged last night. And then here this morning, now it's, you know, getting to be late in the day in Australia, but when the European session kicked in, this Aussie has gained back everything that it lost at the end of last week. Huge. We talk about mean reversion. I more like to talk about, you know, this monthly chart where it's like, okay, you have this Australian dollar market that tends to trade in this, you know, 70, 80 handle range. It's in the long term, it's cheap, and when it's been historically cheap, it's tended to bounce back, and when it's been historically expensive, it's tended to sell off. It looks like VIX a lot, you know, in the long term. But we're seeing some huge short-term mean reversion here. What did you see last night? What's going on this morning?
You know, the Chinese announced that they're going to be more aggressive with their fiscal policy. I don't know if that helped them. It'll be interesting to see if FXI opens higher.
I would expect so.
Yeah, $2.50 higher. So it's up about 6-7%. Look how happy he is in his long FXI.
I'm not even. It's so stupid because, like, I know all the guys are going to come in and they're going to be like, everybody likes to talk down the like monetary policy. Oh, this stock or this equity market is up because of, you know, monetary policy. That's BS and this and that. I truly don't care.
Yeah, and
I got long China because it was beat up. And that's really it.
And that's such an important point. Is this drive again? Where with this news about the Chinese trying to again desperately defend against possible tariff impact, and I think this is the first time in 11 years they've agreed to, you know, be more aggressive with their fiscal policy. What that means, I have no idea.
And also,
it's a market
who could
reacting.
See that coming? You know, who could see that coming?
It's a market reacting on its lows, closed awfully weak, testing the will of the shorts. They weren't able to push through new lows, and they, again, anybody who had sold them on Friday is now in a difficult position. On a very short, that short-term scalper is in a tougher spot. So. You know, this is where we will see that correlation between China and Aussie kind of play through a little bit. So when I saw this, I wasn't surprised, then kind of dove into what kind of had transpired and expected FXI to be up $1.50, not $2.50. But so what that means is Chinese stocks right now are a little bit higher, China a little bit stronger, and Aussie getting the benefit of that, albeit a big outside benefit because we were at such cheap levels.
Yeah, exactly. And let me pull up the daily chart because this is all short-term talk.
Right.
But this is a market that's still, one, if you wanted to be long this Aussie.
You haven't missed the boat.
You have not missed it. Because, I mean, where we went out on Friday, here, Pete, that was really the low
Yep.
for the last year plus
Yeah.
of trading. And now this is, a 50 pip bounce off of those lows. But just really quick as we dive into some of the rest of these markets. Yeah, Europe, not really affected by this. You're seeing this euro dollar market pretty much unchanged from where it went out at the end of last week. Now, did it get hit as hard at the end of last week as Aussie? No, but I mean 105.60 is still, decently low for this market. Man, I forgot that we went down to 104.
Yeah, we had
and
that
bounced off of
capitulation with down to 103.60. So, yeah, absolutely. So, and here's a case where great elasticity. We traded all the way down to 103. A 300 pip rally up to 106 was a pretty big rally.
Yeah.
If you were bearish and you thought the dollar had legs going into the end of the year, for me, if I'm going to make that trade, I feel a lot better selling that than selling new lows at 103, which I'm not that momentum guy.
Yeah.
So, but interesting to see tape action euro a little bit harder now because we were softer at one point. And now we're getting back up. We're not through 106. We're getting back up to the upper end of this congestion range again. So we'll see that. Cable, same story. Cable actually holding on the best out of everybody.
Yeah, I mean,
On the rally, we're still 50 pips away from the highs.
Nowhere near its
No.
lows. Yeah, if anything, kind of mid-range for the last year or so of trading. But yeah, these larger currency markets. I'll throw euro, sterling, and yen in here, although dollar is actually, as we speak, screaming higher against this yen, back above 150 and feeling fine as they do it because they're challenging 151 in a second.
Right, and this is so interesting. Now, news came out Friday, and nothing last night, but Thursday, Friday, the Bank of Japan cursorily saying, we don't want rapid FX moves, and the usual talk, completely ignored. So it's like, well, why did the talk in China mean something and the talk in Japan didn't mean anything? Partially the levels we're at.
Sure.
We didn't get that talk at 160. We got it at 150.
Mm-hmm.
So middle of the range.
Well, and I just feel like, although this is a big move here today, and we'll continue to watch this dollar yen because, 150 has been such. You and I never, ever are like, oh, this is an important price for this market or that market. But I mean, I'll be damned if we haven't traded 150. You look at this action in here, you look at this action in here, and really off of this level, made some big moves lower or higher. Every single time we've gotten around here, it's been really interesting, and we'll see if the next stop is 155 or 145. I don't know which direction it'll be, but all I do know is we'll probably get there if last year's pace is anything in the next couple of weeks here. A 500 pip move has not been abnormal. But those major currencies, Pete, not the interesting piece recently, and likely not the interesting piece this week. You've got Aussie, huge move here today. You've got dollar CAD, doesn't look big, but 25 pips has been a pretty big move in this market. US dollar giving back some ground.
Little bit of ground, yeah.
Kiwi up here, 25, 26 pips. And as I rope in the calendar for this week, well, actually today, you have an Australian interest rate decision tonight. They're expected not to move interest rates, Pete, but they haven't cut. Out of any of the major central banks, they're the last one that has not cut at all. And they were pretty, competitive to the upside. 4.35% is not the 5% plus that the US and the UK got to, but it's pretty substantial. And I think they had a GDP come in last week that was the second in a row that was under what they expected and is sitting around like 0.2, 0.3% growth. This will be really interesting. Again, they're not expected to cut. They've been saying that they're likely going to cut aggressively next year. But, the Aussie US dollar market down at 64 cents. I think some people out there think there could be a chance of a surprise cut or the fact that they might not cut and say we're going to be really aggressive at the next meeting.
and that'll be interesting to see. What's nice is this one at 9:30 is tradable. I mean, so you're not up at midnight having to wait for the number. So a little bit of short covering going into that, absolutely. A little bit of baking in what you're talking about. Couldn't agree more. So this one will be one to watch to see if we Aussie get some legs out of that as we go forward. We got CPI on Tuesday, I believe, or no, Wednesday. I'm sorry.
Yeah, this is Wednesday,
So U.S. inflation numbers Wednesday and Thursday. CPI on Wednesday.
and then we have what is it? ECB. Did I miss
Yep.
Canada? Do I not have Canada in here for some reason? I don't. That's why I can't find it. We have Canada, I believe. Yeah, here on Wednesday, right after that CPI, Wednesday morning, Canada will make a decision, and they're expected to cut 50 basis points. They got up to 5% even. They've already cut 125 basis points. Their unemployment last week printed, I think, 6.8%.
Right.
They're really worried
Yeah.
in Canada, and this
And the
could be a really
gasoline
interesting
of the tariff thing doesn't help either.
Yeah,
so,
exactly.
Absolutely. So they're being much more aggressive on the rate hike, the rate cut, excuse me. And you're seeing that play through in that currency above 140 kind of struggling to get any feet under it whatsoever.
Yeah, if we pull in the daily chart here, yeah, this has been one of the weakest markets, this Canadian dollar in here, and getting a little bit of bounce here today, but not as much as that Aussie, and right there near its lows for Canada, high for US dollar at one. Man, I forgot that on Friday they put all of this back in because they went up and hit 141. I believe it was maybe 2 weeks ago, maybe pre-Thanksgiving.
Yeah, it turned a little bit.
Turned over to below 140, and it was like, okay, that might be the move. We're 141 bid again. Jeez.
So there, like we said, I think it'll be interesting to see Aussie Canada, an interesting pairs trade. That probably is pretty much.
Yeah, let's take a look. Yeah, Aussie getting a nice move here today, but this has been a better one. If you're talking about actual mean reversion over the course of the last year, has really bounced around between 93 and 88 cents. Right now, smack dab in the middle of it. But yeah, might be a better one for the day trade. Whereas coming out of these interest rate decisions from Australia tonight and Canada on Wednesday morning, you would expect some more big moves and sustained action. Because I wanted to get back to
out of Aussie.
Yeah.
Yeah, absolutely. So Aussie Kiwi, we know the correlation. Aussie Canada, we know the correlation. Not as positive as Aussie Kiwi, but both those will soften the blow a little bit if you want to have an Aussie position. So it's just thinking a little bit, and you should look at, well, it doesn't have a dollar component in it, so it's more difficult. Doesn't make it more difficult. As long as the markets are liquid and tradable, substituting in something that doesn't have as much beta to it by having two correlated, removing the dollar component of it gives you something that has two higher correlated pairs against the dollar, so they themselves will have less beta or movement to them. It's a way to get Aussie exposure and possibly mitigate a little bit of the beta or the volatility that may come in from a pure Aussie move. Because Canada will be pulled along with it, and Kiwi especially will be pulled along with it. So moving along that line, don't think of this as, well, I could trade everything with a dollar on either side of it because I understand that, but I can't trade something without a dollar on it. It is really about opportunity, relationship, and the ability of, and how big a bite you want.
Well, and it'll be especially interesting here because, well, a couple of things. So we have Australian Central Bank tonight.
Right.
We have Canadian on Wednesday morning. We also have US CPI on Wednesday morning. We have ECB, I believe, on Thursday early morning for us here because it's all leading into the Fed next week. And so many interesting things going on. But then you talk about year end, Pete, and you were talking about how, the week following next week being FOMC, the week following that is Christmas week, and then after that, it's New Year's week.
Right.
And so both holiday trading schedules, the last couple of years, and maybe you can speak to this, maybe I just have a little like recency bias, maybe this never happens, maybe this always happens, but the last couple of years, we've seen a trending market going into the end of the year.
Absolutely.
And one year it's dollar bid, the other year it's dollar offer.
Yes.
And right now it's looking like dollar bid
Right.
going into that end of the year. But a week like this week is the one that kind of sets the tone for what could happen.
Excellent point.
Those
Yeah.
lower
You start to
schedules.
sniff out a little bit of what's going to come through on those flows through the end of the year. Then you go into New Year and kind of becomes a game of chicken.
Well, they've
Does that-
reversed it every time. The last couple of years, they don't
last
always
couple,
do it.
not
the last
every,
couple.
every 75% of the time they reverse it. It's the one time where it opens at the higher or lower end of where we have kind of pushed the market. It sits, and if we don't get the capitulation, then it's everybody. Okay, we're off to the races. So, but knowing that context, it gives you a lot of opportunity. Again, setting reasonable metrics around these scalps of nothing's too cheap, nothing's too expensive. I'm going to set, my win and loss metrics around these, scale them. I'm going to downsize either by correlated pairs or by just the size of the trades.
Sure.
And just great tools to take advantage of this.
Just as a last example, this was last year. U.S. dollar was getting hammered going into the end of the year. And then January, U.S. dollar took back a lot of that ground. This year, obviously, very different. Dollar has been on a tear really since before the election, but especially since the U.S. election.
Right.
We'll see if it continues. You and I love this, whether it's like natural gas and seasonality.
Right.
It feels like whenever you think you know something about one of these markets, it gets ahead of you. So maybe this was the move, the end of the year move we've seen the last couple of years.
Early.
And this is the reversal that we've seen. Yeah, it's come early. With natural gas, it's always like, we're waiting for November. We're waiting for December.
Yeah, and those last couple of years, that moved up to October, then September, then August.
Exactly.
Don't get too trapped in the time zones.
This week will be interesting. That's
because we've got, you just covered some really interesting events that'll set the table for, does the market have enough dollar strength to continue into the end of the year, or are we going to see those longs get tested and maybe a little bit of a reversion? But that's it for today. Exciting week coming up. Guys, stay tuned. Tom Sosnoff, Tony Batista, Vanessa Logan come up next. Have a great day. We'll see you back here tomorrow.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to tastytrade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola, Thomas.
Hola.
Thomas, those 6-day-a-week days with you, they used to be 7 days a week. Now they're down to 6 when we travel. Man, nothing's better. I come home, my wife appreciates me. It's so awesome.
Oh my God.
I don't have any snarky attitude from being with you for days. It's awesome.
So this weekend, it was the end of a legendary road show that brought so much joy to so many people, traveled all over. I'm, of course, talking about Taylor Swift's Eras Tour. I was watching the live stream late last night, crying, oh, but also you guys.
Well played, Vanetta, well played.
But it was the end of an era, but the start of an age. Tell me how Phoenix was.
It was great. We had a great show. A lot of people came out. It was fun.
Yeah, it was good. And it was a very busy, what were we there, about 12 hours? No, about 24 hours, whatever it was. It seemed less than 24 hours.
7 hours in the air, 7 hours sleeping.
Oh, we got pictures. This is the Van Buren, the venue there. Looks nice.
Yeah, it was a cool venue.
Nice.
Yeah. Let's see what we got. I haven't seen these pictures yet.
Oh, there's the crew.
There's the whole crew. Yeah. I like it.
Very nice.
Very nice. Cool
Oh, the
venue.
lighting looks great. Yeah, that's a lot of people.
Cool venue. Yeah. There was like 400 or 500 people there.
Well, they knew the bat was coming out, so they made a special trip far and wide.
Is that JJ?
Liz,
yeah, that's our special guest. I know. A little disappointing.
Yeah, it's pretty disappointing. We could have done better. There's Jenny.
I like those pants. Oh, Dr. Jim. Hello, Florida
man. Be on a show today too. That's right, Dr. Jim.
He did not fall off stage. A little Julia Gulia.
Mm-hmm.
A little Tony Batista.
Mm-hmm. That's right.
That's me. That's our game. Where's Bat?
Oh,
having a little
that was
fun.
the game because the bat was literally right there.
Yeah.
Very hard for them to find. Gave away a nice. I think
there's
gave
the
away
guy.
grand.
There's the guy that we chose from the audience. He actually flew in from Seattle for the show, and
wow,
he ended up winning some big
That
money.
was Reggie.
Yeah, so we randomly picked somebody from the audience, and he won. So he came up on stage. He was a little nervous, but it was good.
He was a little nervous, but it was very good.
He ended up winning some money. He was very happy.
Took himself a little G. It was very good.
Wait, he won $1,000?
Yeah.
That'll pay for your airfare back to Seattle. That's
right.
Good.
That's right. If not more.
I think we have a
Very
time
nice.
lapse too. John, you got that time lapse, dude?
You bet.
Here we go.
Oh, beautiful. Look at those red rocks.
I'm special. Phoenix, Arizona.
Man, we're here. Man, we're doing it like it's happening live.
But we're lots of fun.
I don't know if I can make it. It's a long one.
Well, you guys are yappers.
I usually had 2 drinks by this time. Usually made a fool of myself already with some young woman. Big Tom's got to have a big picture of me in the background without me.
But we're lots of fun.
Hey, nicely done, nicely done.
Can I just say, everyone puts so much work into this, the crew and the production and everything to do on the road, and Brittany does a great job organizing these events. But I just have to say, all I asked for over the weekend was you guys to send me pictures so I could put them on social. I got 15,000 photos of Tom sleeping in first class. But then Sunday night, I get the cherry bomb. And then Tom drives in a driverless car, and I have absolutely no bleeping footage of it. The one thing that would go viral, and I'm so upset.
That's because
we did do a Whymo. We did.
Yeah, we did. And I
Where's
sat.
the footage?
The best part of the footage would have been, and I didn't capture it. The Whymo.
You didn't, Boomer.
No, I got pictures of him driving. I'll send it to you. I'm sorry. We were supposed to pick up the car on a corner, and it was too busy, so it went across the street. And it was JJ, myself, and Todd, and Tom, and it was about 18 seconds to the light. So the 3 of us sprinted across and kind of left Tom he waited another couple. It's just like the pit back in the day, like he was last on the trade. He waited a little bit long. We're at the car, and it only waits like 2 minutes or something like that. It was a big, long light, and Tom's stuck on the other side, so we had to keep the doors open. And the Whymo was like about to explode because the door
danger,
does not compute, does not right. Danger, Will Robinson. Danger, Will Robinson. And then finally, we got Tom to get in the car, and we went.
I sat in the front seat.
The depth seat is what we like to call it.
The jump seat. You were in the jump seat.
Yeah.
I was in the jump seat, helping the driverless driver drive.
You were not helping.
Navigate.
You were not helping.
I got to adjust the temperature. That's about it.
So what were your thoughts? You were so in your cherry bomb. You're like, oh, it's no big deal. I was never scared. I think this is the future.
Seriously, we were late for dinner, and because the Whymo took like an extra 10 minutes to get, because it was, I don't know, just a little longer than an Uber to get it. But we wanted to test it out. So once we got in, we were just cracking jokes and laughing, and I never even paid attention to the car one time. I mean, it's a electric Jaguar, so it's a really nice car, and it seemed like it went pretty fast. It was changing lanes. I mean, it was. I really don't think there was any issues. I don't think we had a single issue or anything.
I'll say it. I'll say it. I prefer it over a regular Uber or cab.
Yeah, I mean, you don't have to make small talk with anybody.
No, that's an introvert's dream. You don't have to smell like his Axe body spray. Like, that's amazing.
I know.
But again, I would have loved some footage of all of this.
I know.
Well, the funniest thing was the first time we were standing on the corner and a Whymo came up, and it wasn't ours, so the doors didn't open. But we were trying to get in, and then
oh my God, that's hilarious!
It said "back the F up."
You were like, look at
We were like, how do you get in this thing? And we're like, oh, it's not ours. And then
how much was it? Do you remember?
It was about $5 more than a regular Uber.
But it was about half the price. It was about half the price of an Uber Black.
Right.
Oh.
But this only fits 4 people. An Uber Black could fit more, right? Or no?
No, that's Uber XL.
No, that's the Uber Black XL. But the regular Uber Black.
It's not Black XL. Those are condoms.
Those are magnums. But no tipping. Because so that works out good.
That is good. Oh yeah, that's true.
So it's cheap. I think it's cheaper in the long run.
Okay.
Well, it's definitely cheaper.
And a Jaguar's better than a Nissan Altima.
No, right. It's a really nice car. And it's smooth and it's quiet. Yeah.
All right.
I mean, here, all of us got out and said we would do this again in a heartbeat.
Yeah.
Look at you. You take one Whymo, and next thing you know, you're a billionaire signing up for space.
So that was an interesting experience. And then we also got a recommendation as we were leaving to try out some Texas barbecue in Arizona.
Mm-hmm. Mm-hmm.
And when we got there was a long line, so we knew it must be good.
And it was good. It was really a long line.
Oh, what did you have?
We had everything.
Okay.
Oh my God! I think they got a picture of it. Tom ordered a beef rib, 2 beef ribs
for the table.
That's what he said, but it was sitting in front of him on top of his brisket and ribs that he ordered for himself and coleslaw that he got for himself.
That's what you got for yourself too, genius. So I don't want to hear you.
He forked some of my baked beans off my plate. I mean, I was in like the splash zone. I had to eat like I was in prison for a little while. You know what I mean? Like with my hand in front. But these beef ribs, they were the size of Sosnoff's head. That's how big
Flintstone size.
They were.
They were really good. The brisket and the beef ribs were great, and the sausage was great.
And I think he was wearing that pullover because I could see the stain on there from the rib.
Oh no! What are you doing?
When it fell on his shirt right there.
You were not.
Is that
I was
what
not
happened?
wearing this pullover. Thank you very much.
So what was better, the place that you went for the team dinner Friday or the barbecue?
Oh, they were both very different. The team dinner was very fancy. It was very nice.
Oh,
team dinner was awesome.
It was a French steakhouse. It was beautiful. It was like
French steakhouse. I was told there were budget cuts.
No, we didn't pay. Our friend Bert for many years took us out.
It was a really beautiful restaurant. It was hip, a lot of action going on. It was a little too hip for Tony because he was out late. It was like a little too much of a scene for him. But the rest of us, we ate it up.
French steakhouse.
It was a place.
It was great.
It was a place to be seen. It was excellent. Excellent.
Sosnoff's head was on a swivel.
We're getting sweatshop sandwiches in the office this week.
By the way, sweatshop sandwiches are my favorite.
It was really good. And Francis was out there. We got Frankie from the chat room was there. It was nice to see him. It's been a couple of moments before we've seen him, which is nice. It was really good.
Well, it sounds like you went out with a bang for your last road show of the year. Tom, what's on the horizon for next year? Have you figured it out?
Oh yeah, but we're not. We're literally not saying anything until.
Well, you literally haven't even told production, so.
I know. We're not saying anything except.
I would like to know because I'm sure I have stuff that's due before the end of the year, and I would like to know sooner rather than later.
Well, I'm off the road I've already said this many times. We're not going back on the road until May, so we're not going back on the road this winter. Because we've been on the road now for almost 2 straight months. So we're taking a couple months off from being on the road.
And it interferes with you going to Park City?
No. But we are doing 3 digital collectibles, January, February, March in Chicago. And we're going to mint them one a month so we can finish out our portfolio, which we hope to deliver to our customers in April or May, which is going to be the first one of its kind ever. So we do have those 3 things coming up, which we're going to start to promote and sign people up after next Saturday. We did the one that the show we just did in Phoenix. We have it in a digital collectible version that's coming out this coming Saturday. So
yeah, you can sign up on our website. It's free.
Yep. And then we have 3 more coming January, February, March. That will roll out. That will kind of fill out the portfolio. And then we will go back on the road starting in May, June, July, August, September, October, November, and December of next year.
And how are you going to get these promos out to people? Who's going to write these promos?
Tracy.
Tracy's on maternity leave.
Maternity leave. She had a baby like 2 weeks ago. She's ready to come back.
That's not how this works. That's not how any of this works. Anyway.
Don't worry. I'll do it myself.
I'm glad that you had a great time. And more importantly, I'm glad that even more people got a chance to witness the magic that is a Tasty Live roadshow. Thank you again so much to the dedicated team that puts these events together. They really do work so hard, nights, weekends, holidays, all sorts of stuff, and to put it all together. But hey, in the meantime, in between time, we have a great show for you today here on tastylive.com. Sorry, I have to get my schedule up here. At the top of the 8 o'clock hour, we're going to do a little options jive. We got Research Corner. We got Kai in the house. What are you talking about with Kai today?
Just all the stuff that's happening this week.
Well, last week was, dare I say, like the craziest week. Just there was too much going on. Like France collapsed. You had South Korea. CEO got assassinated.
Did you not read my cherry bomb? Nobody
Syria
cares.
Is free. Like, wait, like slow down.
I tried to explain the whole thing in the cherry bomb last night. Unless the VIX goes higher, nobody cares.
Yeah,
Okay.
I know, but that was a grammatical landmine. Yeah, I sort of got what you were trying to say, but I had to clean it up a little. But anyway, it's going to be a crazy week.
You had to put it in English?
Yeah, I had to put it in English.
Oh, my God.
It's going to be great. Anyway, Kai's going to come in at 8 o'clock for a little Research Corner. At 8:40, Dr. Jim, who you just saw on screen, hopefully he got home to Florida safely. He's going to do his skinny on options, abstract application, trading a runaway bull market. He's going to show you how to tame them little doggies. No, I don't know. But he's going to talk about, just trading a runaway bull market at 8:40. At 9 o'clock, our market measures. Is December surge real? There's a rally in the alley. Get your stocks. Is the Santa Claus rally real? We're going to break it down on a market measures. A lot of people have been writing in, and I myself am curious as well. And live from the trade desk, big boy Scotty S. Scott Sheridan, counting down all the top trending tickers over at Tasty Trade around 9:30.
No.
Did you turn on all the faucets at Scott's winter home? Make sure the seals were good.
There is no Scott today, but we will be taking phone calls.
Oh, my bad. Okay, my bad. Okay. So we would love to hear from you at around that 9:30 hour. But hey, in the meantime, in between time, let's get this show on the road. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Just in.
Today's headline. This just in.
Breaking news.
All right, everybody. Let's do it. Today's a magnificent Monday. It's December the 9th. This is the part of the show that's called the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
We could say we have Oracle and AutoZone. I don't think Tom will do anything in AZO, but he might do something in Oracle.
Oh, okay. There you go.
We have a small Oracle. Let's see. Yeah, we have a small Oracle position on right now. Is that tonight, Oracle?
Yes, after the close tonight, I believe. You got to do something today if you want to either change your position for earnings or open a new position for earnings specifically. It comes out after the market closes today.
Okay. Hey, getting to the first headline of the day, stocks and crypto could rally through the year end, but watch out for this one last wild card. The November Consumer Price Index data is going to be published Wednesday this week, and it may be the last wild card that could upset expectations for a Fed interest rate cut in December. What are your thoughts?
Can we finally say, and I think the market's already told you, that all these economic numbers mean absolutely nothing?
No, but I love economic numbers.
What do you mean?
Really
Can we finally?
less and
What do you mean?
less.
Can we finally say? We've been saying that for 20 years.
I know, but a lot of people on the network don't get it yet. And I mean, there's going to be the one time when, it sparks a little volatility expansion, because for crying out loud, it's been so low for so long. But I mean, can we stop now? Is it enough?
Do you want me to
Can
give
we
you,
talk about treasuries,
do you
though,
want
and
me to
what
give you
you're
Vecchio's
doing?
email?
No, thank you. I have it. I appreciate it. Bonds are down 17 ticks, 119.20. The notes are down a little bit less, half a tick. That would be ZN.
How are you adjusting or not adjusting your bonds going into this week, Tom?
I just sold some puts in the bonds because we have no position on coming in this morning. I just sold some of the Jan. What am I working? Jan 118 puts, and I'm working some more, but I need a downtick here. I need bonds to be down like 21 or 22 to get filled.
Okay.
Ticks, 21 or 22 ticks, yes.
The S&P 500 is up nearly 30% for the year, but don't expect such high returns to continue. It's important for investors to temper their expectations and to remember that years like this one are rare. What a bananas year it has been. What are your expectations for next year?
Yeah, Tom, what are your expectations
Up
for next year?
30% again. When we do the year-end forecast, let's see, we're currently trading at 6,000, let's just say. So I'll be at 70, well, figure 30%, 7,800.
I'm going to top him with an 8,000. It's a round number. We're probably going to go there.
Yeah.
Yes. Yeah.
Why not?
All jokes aside, what are you doing in the indices, like relative to each other? So an S&P relative to the NASDAQ, relative to the Russell.
I'm long the Russell, short the S&P, short the NASDAQ, but I have extra shorts in the S&Ps. So far, no bueno.
Well, by the way, low IV rank in the teens or lower for those ETFs you just mentioned.
Yeah, they all stink. I'm just naked short.
Yeah, you got to be directional. I think is my play. Yep.
Okay.
Totally agree.
All right. See what happens. Hey, oil edging up slightly as rising Mideast tensions offset demand fears. Oil prices nudged higher Monday as heightened tensions in the Middle East following the overthrow of Syrian President Bashir al-Assad by rebels offset concerns over weak Chinese demand that was highlighted by Saudi's Aramco's price cuts to Asian buyers. There's a lot going on. Let's talk about China and oil and the Middle East and oil.
I mean, oil's on the low end of its range. It's up a few pennies. It's up $1 today or whatever. It's up about $1. But it's, it's.
I mean, that's more than a few pennies. I mean, that's a decent sized move
but
for
it's
oil.
$1
and
off its
implied
lows.
volatility.
Yeah, I mean, it's $1 off its lows. This doesn't mean anything. This is nothing.
Yeah.
Okay. All right.
Pay it no mind, Vanetta.
Just keeping it moving. What about natural gas real fast?
Big up move overnight.
Oh.
A big one, almost 5%, right? That's in the middle of its most recent range, 3.21.
You would have thought it was summer yesterday. Everyone was out and just like wearing shorts and having the time of their lives. It was, dear reader, I tell you, it was 50 degrees, maybe.
Yeah, it was 14 degrees when I left for Phoenix. It was 50 degrees when I came back. I put up all my outdoor decorations. I spent the most of the day doing that yesterday while my son was skiing.
Okay. What a time to be alive.
It was 50 and
Japan.
sunny.
Japan's economy expanded in July through September at a faster pace than initially reported, thanks to upward revisions in capital investment and exports, keeping alive market expectations for a near-term interest rate hike by the central bank. Let's talk currencies, starting with the yen.
Tomas, the yen.
I mean, the yen's down today, but we're long the yen. That helps.
Okay.
It's had a little bit of a rally the last 2 weeks or so. It's been going sideways for about 4 or 5 days. If you look at the euro, you see a similar picture, maybe a little bit more bullish as the euro is up this morning, which means the dollar is lower. Chinese stocks are up and up significantly too, after a little change in the wordage, the way they talk about their currency. Baba trading 91 is up around $5 or $6. Baidu was doing the same. Baidu's trading at $91, also up $5 or $6. So you got a little bit of a rally in the alley.
What about the euro? The EU's largest economy, Germany, Volkswagen, the automaker there, having some strikes, some labor strikes, which is not good.
Euro basically unchanged, up a tick or two. So they don't care.
Market don't care.
Market shakes off everything, it seems like. Yep.
It sure does. Hey, eToro, the social trading platform, is planning a U.S. IPO with Goldman Sachs, targeting a $3.5 billion valuation, making its second attempt at going public after a failed SPAC merger in 2022. What do you think about this?
Well, they failed their SPAC merger at 10 million. So 3.5 billion, looks a little bit more. I don't know anything about eToro's actual numbers. I mean, I know a lot about eToro, and I personally like the CEO.
Okay.
Yes, he
likes the CEO because he gave him a shirt.
I like the CEO because he's a smart guy and he likes to take chances, and I like him.
Okay.
They're an Israeli company based out of Tel Aviv, and they are a bunch of smart people. I mean, they're a decent firm. I don't know. I've never used their platform.
They did raise last year. They raised $250 million. So that's something.
Oh no, they're legit. Yeah,
they're legit.
Yeah. All right. Well, yeah, more players to invest in. So that could be good. Hey, sorry, getting to the next one here. The FDIC asked financial institutions to pause crypto-related activity, and that's according to letters that Coinbase obtained through a lawsuit. It seems that Coinbase sued the FDIC and accused the agency of trying to cut off the crypto industry from the banking sector, and it seems like their case was proven by they did a FOIA request, a Freedom of Information Act request, for any records from the federal agency. And through their FOIA request, they found that there were pause letters that the FDIC issued to some financial institutions asking them not to expand crypto-related activities. Boom.
Boom. There you go. What do you say about that, Sazna?
Poor Coinbase. I mean, they have been fighting this valiant fight. But it costs time and lots of money for them to fight this.
Bitcoin trading just under 100,000, 99 and change. After trading 102.
Tom?
Yeah, I think this is old news. I don't think this is anything relevant.
Well, can we talk about digital assets in general to start the week in Coinbase?
Coinbase is probably lower this morning. Let's take a look.
It is lower this morning. Coinbase is trading on the bid around 339. It closed at 341, so it's down about $4. But it had a nice day on Friday with a rally, so it closed basically at its highs. So it's $4 off its highs.
Okay, not too shabby.
Yep.
What about Ethereum? You guys doing anything in that?
No.
Okay.
Ethereum, which traded over 4,000 and a half last night. It's 39 and change right now, about $100 off its highs.
I'm going to hold your hand, Tom, when I tell you this, but a federal appeals court, so again, federal appeals court has upheld a law requiring China-based ByteDance to sell the popular social media app TikTok or face an effective ban in the United States. Again, this was upheld by a federal appeals court. I know this is not what you want, but that's not how our legislation works.
It's not
This was predetermined by a law that was actually passed. So this was not an executive order. This was not just a whim of one administration. This actually carries through several administrations, and a federal appeals court has upheld this. So this deadline is coming soon. Again, I'm holding your hand when I am telling you this.
Never going to happen.
It literally was
It's never going to happen. Like people that
the unanimous ruling by a 3-judge panel of the U.S. Court of Appeals in Washington, D.C. rejected TikTok's argument that the law is unconstitutional and violates the First Amendment rights of the 170 million Americans who use the app. Let me say that again. This ruling by a...
Did you not hear what our Lord and Savior Tom
believe
Sadnov said? It will not happen.
I can't believe how public you are. It's never going to happen.
I'm not public. I'm literally reporting the news.
There's a difference. There's a difference.
No, there's a difference. You are not reporting the news.
Yeah, there's a difference between
Tell her
reporting.
what the news is, Sadnov.
This is zero chance. Zero.
And I'm sorry, what power do you hold over our U.S. appeals system?
Oh, you
Zero
know.
Chance. Zero.
Okay. Oh, you know.
I don't even give this. I don't even give this a 1%
enough, though,
chance.
on this news, John, I'm going to the next story. Meta shares rose. Meta rose 2.4%, closing at a new record high after, again, a court upheld a law requiring Binance to sell its U.S. TikTok business. Facebook is up 77% for the year. After almost tripling in 2023. Amazon shares also ticked up. They also closed at a record because, again, TikTok offers shopping portal that competes with Amazon. So both stocks closed at records Friday. What do you have to say about that?
I say people are really stupid if you're buying Meta up here and Amazon up here because you think TikTok's going out of business. You're crazy. That is
again,
and Meta and Amazon are both unchanged near their highs this morning.
That is the dumbest reason.
Holding your hand when I tell you this.
That is the dumbest reason I've ever heard to buy a stock.
You better hug him more than hold his hand. He needs a lot more than that.
Oh man. Okay. Keeping it moving. Google is suing the U.S. Consumer Financial Protection Bureau over the agency's decision to order federal supervision of Google Pay, the company's payment arm. As I mentioned, the CFPB wants more oversight over apps like Zelle, Venmo, PayPal, and Google Pay and Apple Pay. And so Google says this is a clear case of government overreach involving Google Pay peer-to-peer payments, which never raised risks and is no longer provided in the U.S., and we are challenging it in court. Harumph.
Harumph.
Take that.
I agree.
What are you doing in the Goog?
No, nothing.
Okay. No. Nothing.
No, nothing. You can't make me.
Yeah, you can't be mad at the messenger. Like, I'm just here spitting facts.
I spent the weekend with him. He can be mad at the messenger, believe me.
All right, well, that's fine. What's Google doing, Bat?
Ooh, Google, good question. Google is sitting at 174 and change, basically unchanged, maybe down around 30 cents. The market's unchanged, so you get a little bit of a mixed bag of tricks.
Speaking of scrutiny, EU antitrust regulators are asking NVIDIA rivals and customers if the U.S. AI chipmaker bundles its products that may give it an unfair advantage. NVIDIA, which has a near monopoly with an 84% market share, is far ahead of rivals Intel and AMD, and the EU would like a word. What are you doing in NVIDIA?
NVIDIA is actually down a little bit on that news, down around $2.50 or so, but not too far off its highs. as the market isn't too far of a size.
Tom, chip stocks, chippies.
I don't really have an NVIDIA position on right now.
Okay. Intel, AMD.
Ivy rank is 13 in there, by the way.
Mm.
Really shouldn't have a position there is my point. I mean, that's short premium.
Okay. Well, shifting gears, Supermicro got an extension to file its delayed annual report. Supermicro Computer said on Friday that it received an extension from the NASDAQ until February 25th to file its delayed annual and quarterly reports, sending the AI server maker shares up 5% in extended trading last month. They named BDO USA as its auditor, and they submitted a compliance plan to the stock exchange. So it looks like they're trying to do all the right things, but they were granted this extension. So they're going to just like chillax over Christmas break, and then they'll worry about it in 2025.
Hey, Sadnov, going back a little bit here to this TikTok banning, my friend Sean, who writes in from time to time, he probably really writes you too, he said now that he won the Bears under bet from fading Tom Sosnoff on the amount of games the Bears are going to win or lose this year, he has a little bit of extra money. He would like to bet on the TikTok banning happening too. Is there anywhere, where he can place that kind of bet?
Ooh.
Oh, that is so funny. Good humor.
And Sean has a penis.
Yeah.
Ooh, burn. Ooh.
Most of Tony's followers have been neutered. Don't worry.
Trap, neuter, release. So are you going to bet? You going to put up or shut up?
Doesn't seem like it. Seems like
Oh
he's
my
take his
God.
tail,
I'm not
put it
going to
between his
deal with
legs and run away.
I'm not going to deal with every Tom, Dick, and Harry. There's no
it.
chance that TikTok's going to be going away. Zero chance.
Every Tom, Dick, and Harry. He is amazing.
All right. Well, we'll see. We'll see what happens.
All right, you're scared. No big deal.
What?
Supermicro.
SMCI.
SMCI, Sadnov. It's up around $2.50, almost $3.
Yeah, we don't have a position on there.
Ivy rank at 34. Not too bad, by the way. I put a position on there, a double ratio spread for my option trades today, every Tuesday and Thursday. Unfortunately, I have to wait till tomorrow to see another one, but you'll like it.
Hey, Apple is preparing to launch its long-awaited series of cellular modem chips next year, which will replace components from longtime partner Qualcomm. The iPhone maker is looking to ultimately overtake Qualcomm's technology by 2027. What are you doing in Apple d Apple?
We do not have an Apple position on right now for a change. I think the IV rank was pretty low last time I looked.
Okay. What do you plan to do in Oracle? Speaking of Qualcomm, Oracle, whatever, which does have earnings after the bell. Let's talk about that.
Oracle, right now, we just have a short strangle and a short iron condor, but I don't know what we're going to do later.
Ivy rank of 89 and Oracle's real good. Thomas, correct. Apple's under 10, 3-4 in Apple. Very low Ivy rank.
The killing of United Healthcare CEO Brian Thompson spurred big Medicaid insurer Centene to hold a virtual investor day instead of an in-person event at the New York Stock Exchange. And over the weekend, other major health companies, including United Health Group, removed photos of executives and board members from their websites. Thompson was fatally shot outside the Hilton Hotel in Midtown on his way to Investor Day by a masked gunman who is still at large, who the internet is writing folk songs, erotica, and other things about. They've nicknamed him the Adjuster. I don't know what's happening, but CEOs across all industries are stepping up their personal security. They're looking at other ways to stay safe.
I must be in the minority here. I got to say something, because this is, usually the internet, Twitter, and all this stuff is so funny and so good, but they really have treated these people with malice. It's not.
But it does speak to a deeper issue of.
I get it. Okay. But there's probably better ways to do that than.
Sure. No, I agree.
The guy's got family and stuff. He might be, the reincarnation of the devil, but do it in court or somewhere. This is really, I don't know.
Do you think they'll ever catch this guy?
Oh my God, they know who he is. He's probably, I think he's already dead.
What?
I think he killed himself. That's just my 2 cents.
Why? But he got away. Why would he kill himself? This isn't like the guy that like was in Maine and had to like run into the woods. Like, no,
Okay.
he went to the bus
You
station
asked
and he's.
me a question, and I've just told you.
Yeah, okay.
Well, he's surmising that they have his face, they have everything
They,
about
know,
him.
they
can't
have
find
more
him.
than his face and everything. They know who he is. They know exactly his name. They know where he lives. They know everything about this guy. They know every single thing possible. You can't find him because he's dead somewhere.
Okay.
Usually these guys, they don't want to, he did it. He doesn't want to deal with the consequences. He probably killed himself.
It's not a bad assumption, Tom. I mean, it's not.
No, I don't think it's a bad assumption. That's why they can't find him.
It's not based on anything, though.
Of course it's not based on
No,
anything.
of course not. Yeah.
But it's just,
Like, it's not like he's cornered. It's not
that's
like
why they can't find him. Because
Okay.
he's dead. He's not moving around.
It's
All right,
based on his TikTok prediction.
All right, your brain is a magical place. Hey, President-elect Trump may cancel U.S. Postal Service electric mail truck contract. The transition team is considering canceling the USPS contracts to electrify its delivery fleet. The move, which could be unveiled in the early days of Trump's administration that begins on January 20th. There are a couple of companies that are involved in this. Oshkosh Corporation and Ford hold the contracts. Oshkosh shares fell by roughly 5% on Friday on that news. I don't know. It's OSK, Bat. I don't know why you wouldn't want electric postal vehicles, but that's neither here nor there.
OSK trading at. It's hard to tell where it's trading because the only 400 shares have traded and markets are quite wide in there. But you are right. On Friday, it had a very, very bad day, going from around 112 to about 106 where it closed. I'm not so sure where it's going to open.
Sure.
Can't tell.
Just putting that out there. Hey, landlords are using AI to raise rents, and cities are pushing back. Federal prosecutors say the practice of using algorithm based on proprietary lease information to set rent prices is part of an unlawful information sharing scheme. Lawmakers throughout the state of California are moving to curb it. San Diego City Council president is the latest to do so, proposing a ban that would prevent local apartment owners from using the pricing service. What are your thoughts? So all of these rental agencies are using an AI, and they have exclusive insider information to what everyone else's contracts going out are worth. And so using that is like massive collusion. So then they can continue to set prices, higher and higher because they know that their competitors aren't going to undermine them because they're all in this together. And so now people have figured out what these landlords are doing, and they're like, hey.
It depends how they get the information. When you say they have access to inside information, I don't know what that means. If they're getting...
Well, they're loading all of their proprietary lease information into this algorithm. So it's information that the two separate companies, yes, your company knows what your leases are being priced at, but now they're all aggregating all of this data, and that's how they're rigging the pricing system. That's what I mean by insider.
Oh, some CEO is going to get shot here.
I mean, I don't know if they're actually rigging it or if they're just trying to determine what the market is. It's
you say determine what the market is. I say rigging.
It's a very slippery slope because if it was an exchange-based market, it would be done the exact same way. You understand that? So
but consumers would have insight also as well.
But there's nothing wrong with supply and demand determining price in an exchange setting. So it really depends what, I'm not exactly sure what's going on here, but it sounds like it's probably not as bad as you make it seem to be.
I'm sorry, and where are you going to be at 2 p.m. today?
Tell him.
Keeping it moving, you fat cats. 2 U.S. senators have asked the Federal Trade Commission and the Justice Department to investigate online betting platforms DraftKings and FanDuel over concerns that they're coordinating against competitors. Republican Senator Mike Lee and Democratic Senator Peter Welch asked for investigation following reports that the two companies were allegedly acting together to pressure businesses not to engage with competitors. These are serious allegations levied at both of these sites. DNKG, DraftKings.
What is it? I'm so sorry. DraftKings?
Yeah, DraftKings.
I thought you said something else. Yep,
No.
got it.
We do not have a position on in there.
Okay.
Trading $44 off basically unchanged, near the high end of its most recent range, and about $5 off its old highs that it reached back in May or so.
Okay.
Flirting with destiny, Saznoff.
All right, there you go. Hey, move over McRib. McDonald's is bringing back the snack wrap in 2025. Yes, fan favorite, the snack wrap will be back in 2025. McDonald's U.S. President Joe Erlinger confirmed on Good Morning America. McDonald's trying to turn things around after a little E. coli kerfuffle with some of their onions, trying to turn that around. What's McDonald's doing?
Thomas, McDonald's plan on having any positions in there soon?
I do not.
McDonald's have got an Ivy rank of 20, sitting at 300, just under 300. Looks like it's up around $1 off the highs of 320, reached back in October.
I can honestly say I've never had a snack wrap. Thank God.
Oh, they're good. It's good. All right.
Maybe.
You've never had one?
A snack wrap? No.
Okay.
Last week, Miller High Life released its High Life Dive Barfume, a perfume meant to evoke the sense of beer, bar stools, greasy food, and everything else that can be found at one's preferred watering hole. The perfume combined notes of cedarwood and patchouli to evoke a bar counter, tobacco and leather for a well-used bar stool, and champaca blossom to mimic Miller High Life beer. You can get this champagne of perfumes online. The customers must be 21 or older to purchase.
Sadnuf, you ever had the champagne of beer? One of my favorites. It's like a little bit of camel urine with sugar. It's good.
You know, the best of this taste is if you take the Miller tour in Milwaukee and you get like fresh, like off the line High Life. It's really good. I'm not a beer drinker at all, but I was like, wow, that's delicious.
I like a little Miller High Life. Yeah, sure.
It's the champagne of beers.
There you go.
Yep.
Would you want to smell like Miller High Life though?
Only if I'm at a seedy strip club. Then I want to smell
all right,
that.
Good times all around. Hey, as I mentioned earlier, last night was the last show ever for Taylor Swift Eras Tour, taking her to nearly every continent, so many countries. 10 million people in total saw the tour, added billions and billions of dollars to the global economy, and just brought so much joy to so many people. So in honor of that, for my viral video of the day, let's you, me, and Bat get in the car, head down to Naperville to check out this Merry Swiftmas installation. Watch this.
Oh, I like this. Merry Swiftmas.
Look at the attention to detail. That's Travis Kelce. He's got the tortured poets department typewriter. There's the folklore cabin.
Not bad, not bad.
It is located, it is located at 1228 Atlas Lane in Naperville. The display will be up through January 6th.
I like it. It's a little bit better, a little bit more elaborate than what I put up this year, but it's very, very nice. Hey, Benetta, do you keep your Taylor Swift by the front door and kiss it, walk out? You're.
I have it. I have my background up, but I do have it hung up. The sign that you gave me.
Yeah.
Picture. Yeah. It's up.
Give her a little high five like they do at Notre Dame or something.
I'm like, have a good day, Tay-Tay.
Good job out of you. Listen, let's take a quick 90-second break and come back. We got more Tasty Live after this sound stuff. Don't worry about a thing. We're going to go through confirm and send for you. We'll be back in 90 seconds with Tasty Live. Thank you, Banana.
If you missed the live show, here's our cherry on top weekly recap.
When I was in Krakow a month ago, I was introduced to, this is cherry vodka. It's not like vodka you get in the States. It's like 80 or 90 proof. We should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque, I'm going to be honest. I mean, she's got two cherries that are kind of...
Easy.
Yeah, you're uncomfortable considering...
The show doesn't have a lot of sex appeal. The network
You're
in
50%
general.
right.
But here's the thing that I don't get about TP. He's got to stop doing the show from a lazy boy. He goes
Usually
lower
you can see right up
and
his
lower.
nostrils.
Like you,
I want him to go even lower, so it's just all you see is just like
Like he's in an iron lung. Okay, we want him to be in an iron lung.
It's like it's a bubble boy.
Stas, what comes up next? The opening bell. Don't look so surprised. Sadov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like what has
Wasn't
changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got
wait a minute. So
when I got in this business,
we used to open it 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that at $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, baby.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live right now with Confirm and Sense. Before we do, would you like to take a quick look at the market?
Go for it.
You got it. Even the S&Ps are down 2 and change. NASDAQ's down 35. Russell's up 12, and the Dow is up 43. Russell and the Dow leading us to the promised land, to the upside, and even the S&Ps and the NASDAQ trying to bring us lower. Volatility up by 5 cents to 14.30, but you could see very low at its low end of its range. Bonds down 16 ticks. Tom's trying to sell a couple of putties, haven't gotten filled on a few tranches, filled on one. Looking for a little bit more. Bitcoin hanging out at 100,000. I'm going to round up here. Have to trade up to 102. Trading at the low end of its range, 99.6, 98.4, 98.5 is the low. Oil up $1.16. That's almost a 2% move, 1 3/4% move. But on its lows also 68 and change. Gold up 27. Sad enough. That's a big 1% move. Been going sideways as of late, trying to get its footing under its self here. Same thing with silver in a bigger way, almost a 2 or 3 times as big move as gold, up $1.12 in silver. That's a big move. Nat gas with the biggest move of all of the commodities here, almost a 4.5% move, up 13.5, almost 14 cents, the mid price of its range. Some stocks are going a little bit higher, Sadnoff. Tesla continues its rally, 397. I mean, Tesla's been on a run here from around 340 to, let's just say it, to almost 400, Sadnoff, in a matter of a week. That's all I got.
It has been on a tear.
Yes, sir.
I think it's a really good short on the opening today, but
64 IV rank, got earnings after January. If you don't have a premium position on in there that's short a little bit premium, maybe it's something you look at.
You got'd it. All right, let's take a look at emails that came in over the weekend. We got a lot of them this weekend. Monday, December 9th. Oof. But it's 50 degrees in Chicago, so no complaints. Sunny and 50.
So far.
I don't know. It was nice yesterday. I went out without a jacket on. It was fine.
It was beautiful. I told you I was outside all day putting up decorations. Yeah, I agree with you.
I recently watched an interesting podcast you did, Tom S., and you said that digital currency, specifically Bitcoin, was dead money. What did you mean by that?
Go ahead, Sadnoff. Tell them what you're thinking. I mean, I know you've told me numerous times your feeling on this. It has nothing to do with the product.
I have made this comment before, and yeah, it doesn't have anything to do with the product. What it means is that when you invest in Bitcoin and you invest in ETH or any other kind of digital asset, it's basically a passive investment. As much as you want to think that, you're trading Bitcoin, you're really just buying it and holding it. I own Bitcoin and I own ETH and I own other digital assets, and I don't trade them. I kind of just sit on them, and I can't really sell calls against them. You can't borrow money to trade with them. Of course you can with the ETFs, but with the actual Bitcoin cash, you can't borrow money, so you can't leverage it because it's not a security. You can't sell calls against it. And so you just buy it and you sit there.
You can't monetize the money in any way, right?
You can't improve your basis. You can't leverage yourself. It's just you buy it and you hope it goes higher. It's a passive, it's what I call a dead money passive investment. You just buy it and hope you wake up a year later and it's higher. Unless you want to sell it out. If you're up money like now, you've had a nice rally, you want to take your profits, that's fine. But it's not something that's really like tradable or strategic. It's just buy it, put it away. That's dead money to me. It's not a bad thing. It's just that's what it is.
Yep.
Let's go next slide.
Actually, it was probably one of the better performer, if not the best performing product of 2024.
Could be.
Yeah, that's what I'm saying. In an environment when there are a lot of candidates for the best of the best in 2024, as we're at all-time highs.
What do you do with unallocated capital in your portfolio? I know Tasty likes to keep some capital unallocated. Yeah, we don't like to get much over, 50 to 65%, depending on account size, stuff like that. Right now, we're much lower. Right now, buying power uses, we're about 33 to 35%. That's because VIX is so low. I know Tasty likes to keep some capital unallocated. Do you put it into bonds or something like that? Is that a good idea? Or do you just leave it in cash?
I try to be diligent, and I mean personally, I go to like an SGov type thing or a BIL type thing. If you can do the bonds, also you could do it right on the mobile app if you want to, or you can call in to the trade desk and do it that way if you're
No, you can.
larger.
We launched a new T-bill
On the mobile app. Not mobile. I meant
on the
web-based. I
we
apologize.
just launched a really cool interface on the web-based platform, which we'll be adding to the software platform very soon.
Yeah.
So
That's what I was saying.
It's on. So if you go to the Tasty web-based platform, if you want to buy T-bills, you can do it direct yourself. The only issue is that kind of a round number there is like 50 grand. They're trying to get it
50 grand
down.
is the lowest. Yeah.
Yeah, they're trying to get it down to where you can do it at 10 grand increments, but you can buy and sell T-bonds right on the platform now, cash T-bonds, or you can use BIL or SGov, of course. I tend to leave most things in cash because I just use my money, but it's just up to you, whichever way you want to do it. Let's go to the next slide. Like I have T-bills, but not my trading.
I mean,
account.
it's a choice. It's a choice now with interest rates, 3 to 5%. It wasn't a choice before with interest rates basically at zero.
I mean, I buy some T-bills with some cash I have, but I don't do that in my trading account. Friday morning when the jobs number came out, the ES flashed down 10 points for literally 1 second, and then it turned green. That has happened quite often this year when a number comes out. I'd be curious to hear what you attribute that phenomenon to.
Basically, liquidity backing off for an instant to allow for markets to normalize, and I think it's probably prudent on all levels. But man, 10 points on the ES when expected move, and daily moves can be 100 handles. Not that big of a move.
So I'm going to give you a slightly different answer. There are hundreds or thousands of pre-programmed trading bots out there. I'm not saying they're good. We're brains over bots people. I'm just saying there are hundreds or thousands of pre-programmed trading bots where what they do is for like earnings reports. That's why a lot of times you'll see earnings report. You'll see a stock like down tick $10 and then be up 20, or be up 20 and then be down 10, something like that. People can pre-program. So basically to say, if the jobs number is X, then sell as many futures as you can sell up to 10 points lower, up to whatever number you have. And I guess my whole point is that these are all pre-programmed bots. And as soon as the number comes out, the bot does its thing. Sometimes it gets filled, sometimes it doesn't. It's usually almost always wrong. But a lot of people like to invest in that stuff because 1 or 2 times they might hit one. I don't know. Yeah, but that's what it is.
Yeah,
it's not somebody sitting there with their finger on a buzzer. You'd be too slow.
Yeah, totally.
Let's go next slide. So I've been trading a lot of iron condors lately. This person writes, I've been rolling the untested side when warranted. Once it gets to an iron fly, is there anything more that can be done? I could buy the guts and sell the wings of the short strikes and leave the longs in place.
You know what? An iron fly, selling an iron fly, well, it really is pretty much set it and forget it. You can roll to the next. If you're doing this, I'm assuming on a shorter dated period of time, you're pretty much done. But if you're doing it a longer period of time, you can roll from 1 month to the next and possibly get a couple of pennies in credit. This is the type of strategy that really is pretty much set it and forget it.
Once you, if you're starting off with iron flies and you've worked them into, you start off with iron condors and you've worked them into iron flies with adjustments, you're pretty much done. There's not a lot you can do at that point. You got to just kind of roll with the punches. You've adjusted all you can. You picked up as much credit as you can. And now you just got to hope that you land in that small little tiny area you've got left. I mean, That's really all there is.
Yep.
Let's go to the next slide. This may be a risk-dependent question, but is there a certain account size when I should consider trading with 2 contracts per trade instead of 1?
I mean, yeah. I'll do math for you, but it really is risk dependent. I mean, one investor's floor. I've said this numerous times. Another investor's ceiling. But if your per contract risk tolerance is $3,000, to get around that 1 to 5%. I don't know what percentage you want to use for your own risk tolerance, and you now have more money in your account than that, and you want to go to 2 contracts. Sure, go to 2 contracts. Absolutely. I don't, but I can't answer that for you. You got to answer that.
Yeah, I think
the viewer.
I think this is a very difficult question for Tony or for myself to answer, because a lot of things come into play here. How big is the account?
Well, if it's difficult for you to answer, it's impossible for me to answer.
Yeah, I know that, but I was just trying to be nice. How big is the account? Are you doing defined risk or undefined risk? If you're, the one thing you can definitely do when you're trying to decide how to scale up is you can start scaling up your defined risk trades before you scale up your undefined risk trades. That's one way to do it. I would say you can, the true answer to this is you can scale up once you've proven concept. So once you've proven that you can be consistent, you can scale up. Somebody asked me this weekend, they said, I want to be a rising star. And by the way, if you want to be a rising star, we have a new website. It's called, a new email address. I think it's risingstars@tastylive.com. Just send us an email to risingstars@tastylive.com and we'll take a look and vet you, whatever. But somebody asked me, what does it take? And I go, the key, what we're looking for is people that have proved concept. Like people that I don't want a one-trick pony. I want people that have proved concept over time. And when you go from 1 contract to 2 contracts, you do that when you prove concept and you're ready to step up.
Yeah.
Okay, let's go next slide.
You're right.
And the last one, do you think there's any advantage in trading weekly options for highly volatile underlyings like MSTR? Would it give me an opportunity to create more occurrences?
Yeah, I guess it gives you an opportunity to trade more occurrences if you want to trade the weekly options, for sure. Markets are a little wide. Quite wide in my opinion. But here it goes to risk tolerance again. If it fits your risk tolerance and your account size, go for it. I would prefer you be a little bit longer dated, but that's just me.
This is it's a tough one again. These are tough questions because sure you would create more occurrences, but weekly options in a stock like MSTR can also, it's a tough one, and you're not going to get any edge in the option pricing there because the markets are wide. So if you want to make a lot of trades in the weeklies, and there's a reason people use SPX or SPY because the markets are tight, so you're not giving up any edge or any theoretical bid-ask differential to the counterparty. When you do it in MSTR, you are going to be giving up some money, whether it's 5 cents, 10 cents, 15 or 20 cents every time you make a trade. So it's going to be a lot more challenging. Just be careful and stay small if you're going to do micro strategies on a weekly basis. I don't think there's an advantage to trading weekly options there. If I was going to trade weekly options every week, I'd rather do it in the SPX.
Good job out of you, Sadnaf. We're going to take a quick 90-second break. You know why? We got an option chat coming up next with Kai. We'll be back in 90 seconds. Let's Tasty Live. That's why. That's right.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's options. Jive.
That's right, Sosnoff. It is options Jive. Oh, you took off the stained shirt?
It's not stained. It was merely
gently used,
defrocked.
All that means nothing. No, we've got this man Kai in the house. Kai, how are you, my friend?
I'm doing great. How are you guys?
Doing well, doing well. Thank you for asking. I appreciate it. What you got for me today, Kai? You're gonna go over the whole week, aren't you?
Kind of.
All right, let's take a look at it.
Yeah, so this is the update from the last week and also some data from long term, so we can have a better sense about how was last week was doing compared to the long term average. So last week, to summarize it, it was a quiet week. So pretty much every major asset has really small move. So we can see from data. So first, for major index, other than NASDAQ, can we see the slide? So other than NASDAQ, pretty much everything else is in the expected range and is really small. So S&P, 1%, exactly the same as expected move. Russell, Dow, very small movement. So NASDAQ has positive 3.3%. That's probably the only outlier.
What I don't like is
3+% move. A lot of NASDAQ stocks like Tesla were crazy.
What hurt us?
Right, Tesla has 14 or 17. I don't remember the number. I saw it yesterday. One of the largest movers for major kind of high tech companies.
Yep.
Yeah, you're right, Tesla. So
what
next
hurt,
one
what,
is
what hurt us was that 1% up, 1% down. in the NASDAQ Russell.
What?
One was up, one was down. That's all.
Oh. So the expect move last week, at the beginning of the week, we have expected 1% up or down, and we end up with exactly 1%. And the VIX at the beginning was trading at 14, and this week or yesterday, I saw the VIX was trading at 12.8. So this is a new low in the past couple of months. So the expected move of SPX this week is even lower, 0.9%. So let's see.
Crazy small volatility. Yep.
Yeah. So not only the ending weekly movement for indices were really small, the daily volatility of these index, except Nasdaq, was extremely small too. So the ES, the candles, is tiny every single day, just inch higher. Right. This is we haven't seen that for a couple of months. So this is the expect move for 40. Looking back 45 days ago. So if you sell strangle or 1 standard deviation options, this is the underlying looks like compared to the both put and call strikes. So it's been months that we haven't seen any single week that the price has bounced out of the edge, even including the election. We're right at the top edge of the expect move right after the election, but even before and after, everything falls into that 45-day expect move.
Well, everything in the SPX, but the NASDAQ was way outside
SPX,
last week. Yeah.
No, I'm talking about 45 days right now, not weekly.
Oh.
Yeah. So next one is the major assets IVR. As I described, that was a quiet week last week. Every IVR drops significantly other than the euro. So the euro pretty much keep the same level, 68, 65, whatever level. SPX right now only have 4% IVR, very, very low. So probably we should consider try to get into some calendar or diagonal spread if you think the SPX price is too high or you want to keep it neutral. So bonds drop to 10%. Gold keep decreasing, oil 16% only, and natural gas retreat back to 40%. So all the IVR drops last week. Was a quiet week.
Yeah, it's hard to find new trades with high IV rank in this type of environment that we're getting, and now you've got some stocks that are going to have earnings looming. That makes it a little bit harder too.
Yeah, I think the only main difference we can feel is the option sellers. So the premiums came in really quickly last week.
Yep.
Then you have a neutral position. If you can sell very wide strangle iron counter in the coin, MSTR, you see the premium came in for the stock doing nothing.
Yeah, just be careful at these levels of volatility. I don't like selling a lot of premium here.
Oh, I'm just saying that the premium came in the past 2 weeks, especially last week, really fast. Okay, so the next slide is we want to take a look at how the price move for these major assets. So bond, gold, euro, oil, natural gas, and also I include Bitcoin here. Other than natural gas, the underlying price move downside 8.5%, which is larger than average long-term weekly movement. All the other assets barely moves. Bitcoin, you can say 4%. Is kind of moving, but compared to the long-term average, almost 8% to 6%, 4% is still relatively smaller, right? Euro is only negative 0.15, gold is 1%, bonds is only less than 0.5%. These are tiny movement for weekly.
That's interesting. Good slide.
Yeah. So next one is the VIX. VIX. The week before we had the number as a 13.5, which we had 33%. We saw 33% this year and 29% in the past 20 years on average. And now we only dropped 0.7% in the VIX to 12.8. Then the percentage of occurrences actually drop even faster. We dropped from 33% this year to 16 and 29 to 17 long term. Which means now we're entering the really low VIX territory if we're looking at this year. What do you say? 12.8%.
I say that's not what I ordered for Christmas.
I thought you liked it.
Can you help me? But it is what it is, right? So I do a lot more diagonal spreads now. I've been getting a little bit more directional, especially on defined risk trade as opposed to selling premium, which you just outlined a moment ago. How volatility is so light. So you change your strategy a little bit. That's why you can't depend on one strategy forever. Like that is not an iron condor picture right now, or a strangle type picture right now. At least it isn't for very far and few in between for stocks.
Right. You have to sacrifice a lot of space between strikes if you want to get in right now.
Yep.
Cool. All right. So quickly, we review the earnings last week. We didn't have too many companies announce earnings, probably around or less than 100 companies, and some big moves. But most of them have some big moves, right? Chewy up 10%, American Eagle up almost 10%. And on Thursday afternoon or Friday morning, we see the price is Lulu, Alta, DocuSign. They all up 2-digit, like 25% and 11%, and DocuSign up 34%. I hope anyone who trade these underlyings are fine in their position.
Yep, gotta do something.
Yeah, 34% is a large move.
Yep.
Yeah, looking at the big picture, we didn't have anything changed from this earnings season on average. Still winners 46%, slightly lower than the 50%, and the average return didn't even change. This is probably the third week or fourth week. We saw the on average is negative 0.1%. It didn't even change for the past three and a half weeks or so.
Good to know. Yeah, those numbers, those earnings numbers are a little misleading because there were some big moves, but still, thanks.
Yeah, no, this is kind of a long term for since the beginning of this earnings season, right? Since the JP Morgan and the Citi announced their earnings.
Yeah.
All right, so the last slide is the upcoming earnings this week. We have some interesting ones. We have AI this afternoon, Oracle, and we have the Toll Brothers. And Tuesday we have AutoZone, we have GameStop. And Wednesday with Macy's, we have Adobe, and Thursday afternoon we have the Costco, Broadcom, and RH. So which ones are on your target this week?
Oracle, probably Oracle, maybe Costco.
Not ABGO, not Broadcom?
I don't know. Maybe.
Oh.
We have positions on at Broadcom right now. I just don't like trading it that much. But I have positions on in there.
Okay. Not even Adobe? Not even look at it?
No, we don't have any positions on. I don't think. Let me check.
You know, Tom, he'll start moving it. You know that.
I have no positions on in there. I do have AVGO and Oracle.
All right, beautiful. That's it.
Awesome. Good job out of you. You finished right on time, too. Even the S&Ps are down 1. NASDAQ down 27. Russell is up. That's your leader in the clubhouse, up 15, and the Dow up 54. We'll take a quick 90-second break and come back. We got more Tasty Live stuff. Don't worry about a thing. We got the opening bell next. We'll be back in 90 seconds. This is Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. You know that, Sadnov, with the opening bell. We've got about 2 minutes here. Even the S&Ps, Sadnov, relatively tight range since we've been on the show. About a 15 handle move, maybe a little bit more, top to bottom overnight. NASDAQ down 39 still, Russell up 16, and Dow up 66. Your percentage movers are in silver, up almost 4%. $1.18 move in silver is a big move. Nat gas doing an equally large move, up 10 cents and change. Your euro product, /6E, is up small, but your yen is lower, /6J. The last time I checked, it is lower by almost 3.5 cents. Some of the Chinese stocks, Baba and Baidu doing well, up around $6 on Baba. Baidu was up around $4 or $5 earlier. Looks like it's up around $3.50 right now, Sadnov. Tesla with a big move to the upside, but you know what? We got the opening bell imminent, Sadnov, so I'll let the market open and then get back to those.
Yeah, PDD.
Coin to the downside.
PDD, we're short some put spreads in PDD. That's up a lot too, so... It's going to be a good day in China. It's going to be a bad day in Tesla. But where do you sell Tesla here? 400?
My friend Jason said they changed their monetary stance from prudent to moderately loose in China. So that's why they're rallying.
I don't give a rat's you know what. I've been bullish on China forever. I'm staying there. I'm going to take some profits this morning. And
there you go, my friend. You're gonna get that opportunity right now.
I'm gonna take some profits this morning.
Good job out of you. What can't you do?
What can't you do? What can't you do's?
What can't
you think
you do?
Tesla trades 400?
Has to.
Statistically.
Boy, that was a quick answer.
Statistically, it does. Statistically, it does. Let's see.
Tesla $397 and change, up $8. Make it holler.
PDD.
Ivy rank expanding to the upside too.
Just got our call spreads back in PDD. We sold them last week at 145. Got them back at 40 cents.
Just got your put spreads back, not call spreads.
Put spreads. Puts. What did I say?
That's okay, Sal. If I know you go out on the road one day, you get all messed up, I'll keep you going. Don't worry about it. You're getting old. It's all right.
You know me.
Yep.
Yeah,
I got you.
You know me.
Mm-hmm. All good, my friend. All good. Don't worry. That's what I'm here for. I'm here to protect you. Just like I had to do when you were crossing the street.
Thank God you're here.
Even the S&P is down 6, Sosnoff. Close all watertight doors? Let's see what's bringing the stocks lower or this market lower. Netflix down around 9, Lilly down around 7, Coin down around 6, AMD down around 4, Nvidia down around 4, MSTR, small move relative, down around 2.5. Goldman Sachs down 140. Call the plunge protection team on Goldman Sachs. Let's see what's going up on the upside. One less click, bet. RDDT, you know it as Reddit, Sadnov, up $12, 170. Oh, I'm rounding up, 175 to new highs here, Sadnov, in Reddit. PDD up 7.
Reddit, can I just say Reddit is Reddit was my biggest long to start the year when it went public. I couldn't wait to get out at $60. I thought it was the gift of the century. It's 170. That was like 2 months ago.
Damn, you stink.
Damn, I do stink. Damn is right.
You stink.
Yeah, I agree.
There's your gold trade, Sosnoff.
I just rolled up some puts in gold. Gold has been very strong. I guess that's the easiest way to say it. Gold has been very strong.
Yes, it has.
I'm just going to take some gold. I've been rolling since early this morning. I've been rolling up puts in silver and in gold. Let's see, what else do we got here?
I think there's a song like that, Sadnov. Your Tesla's just about to trade 400, Sadnov.
Tesla is, I have my offer in right now at
399.96, Sadnov, is where it trade up to.
I have an offer in at 497.
Beautiful.
I fully expect. What the hell? Oh, we did some 0 days. What did I forgot about this.
Let's take a look at those in SPX.
Yeah, do you remember doing that on Friday on the close? I guess we did a double. Was it a double? Double.
You
Brooklyn?
did it. You did. Did you do the 11, 5100, 5250, 5300?
No, SPX.
I got it in SPX. I'm in SPX. Sorry, 51. I said 5100.
It's 61. You mean?
I'm sorry, 6100. I apologize.
Okay, so we did the 6115, 6120, 6130, and then you did it for 605 credit and 590. That's got to work out quite nicely for you. I think we're up 57 cents.
No, didn't you do the 51? You did put spreads, right?
Put and
you
call.
Did it for,
I did double broken wing butterfly.
Right. You did it for $6.05 and $5.90 in credit. You just bought the put spread back at $7 and
no. I didn't do anything yet, Tony. I didn't done a trade in there.
Oh, you haven't put it in yet. I'm sorry. I was looking at something else. I apologize.
Yeah. So I'm going to take a look right now and say
I don't know.
Isn't it a huge winner for you?
No.
Why?
I don't know. Looks like it's.
What did you sell the put broken wing butterfly for?
Ooh, Tesla just got filled.
You did the 10-day options too, Sosnoff.
I have 0 day in here. I don't think you're looking at the right thing.
Maybe I'm in the wrong account. Let me take a look. I'm so sorry.
Yeah, I think I only did 0 day.
I'm sorry. That was my account. I apologize.
I was going to say.
I made $5 and $6. I'm so sorry, Sosnoff. You, on the other hand, didn't do so well.
We made money. I don't think it's all.
Yeah, you made like 15, 25 cents, something like that. Yeah, 50, I apologize.
58 cents.
Yeah, I forgot. I forgot who I was dealing with. I'm sorry. You did the kiss your sister trade. I apologize. I digress. I made a mistake. I stink, Sosnoff. I stink. I did good, but I stink. I apologize.
Yeah, don't let that happen again.
I won't.
Yeah, Tesla's my big problem child here. It's at 4.
Mine too. It's the one that's been a P&L slayer for me, Sosnoff. It's up $15 to 404, so you got that going for you.
Yeah. We got a lot of problems here. Not a lot of problems. We got a couple of problems. What was the other stock? Some stock with... Oh, APP.
Yeah, you know me.
We got a little ratio spread in there that was a loser. Now it's a winner.
It's a loser, baby.
Some of these markets are a little bit wide.
Mm-hmm. Gotta be careful. Be careful out there, traders.
I know. So what do you think here? Based on the opening.
I mean, volatility is upticking a little bit. You got the E-mini S&Ps lower by 5 handles and the NASDAQ lower. I don't like it when the Russell and the Dow, you like it because that's the position you have on. I think we could see a little bit of weakness here, but man, this Tesla move is big, and some of these individual stocks in the NASDAQ are really taking it to the upside pretty big. And when China's leading the group, I think we're closer to the highs than we are the lows, Sadnoff. I think you could get a close on watertight door, Sadnoff, for a Tuesday trade on option trades today. That's right, Sadnoff. Might be looking at something on the SPX. I
think you could get into a little bit of trouble when you have these kind of what is APP? What the hell stock? What did we do in here again?
APP, yeah, you know me. APP loving, Sadnoff. I believe somebody got us into that from like maybe one of our podcast trade, not one of our Tuesday.
I took a small profit in there. No big deal.
Down $35, Sadnoff.
Yeah, I know. I just couldn't figure out why I had a position on in there. So
it's only Monday. I'm being reminded by our YouTube fans.
Yeah. Just taking a quick look around. Is there any big movers? For us, it's just really Tesla.
Yes. Tesla is the P&L killer. Yes.
Yeah. Tesla is the P&L killer. All right. Yeah.
You want to take a quick 90-second break? We've got my friend Dr. Jim. Nobody says Monday like him. I got to see him this weekend. Made my weekend.
Sure.
Should we bring him in?
Yeah. Let's do it.
Let's do it. Nothing says Monday like this, man. Dr. Jim and the Skinny and Options abstract applications. Right after this, we'll be back in 90 seconds. This is tastylive.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some life taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you'd like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. Nothing says Monday like this, man. And my new friend, Dr. Jim. How are you, kind sir?
Your new friend? Come on, man. We've been friends for at least a couple weeks.
At least a weekend.
I mean, at least a weekend. We kind of had to be, right? I mean, we didn't really have a choice.
We worked together. We broke bread together. It was a wonderful weekend, Dr. Jim.
I mean, we were sitting on the beach in St. Petersburg, Florida together, as my slide clearly showed. I mean, it's all there, man. It's all there. So, gentlemen, I mean, you know, I read it in the Cherry Bomb this morning, of course, but I just want to hear it. I want to hear it from y'all. Like, what was better, man? The Whymo or the beef ribs on Saturday afternoon? Like, what was better? Give it to me.
Wow. I really enjoyed the beef ribs. I'm gonna go beef ribs.
I gotta go beef ribs too, but I was more surprised about how good the Whymo was, I knew when I pulled up to that barbecue with the line and just the way the joint looked that it was going to be good. So Whymo was outside of the expected move and my expectations, and the barbecue joint was spot on and didn't disappoint. So that was great.
There you go. Go ahead, Tom.
I'll agree with him. Whymo was above expectations, but the barbecue, Texas barbecue it's little beef ribs, little Texas barbecue, very pecan lodges.
Well, we were in Phoenix. It wasn't Texas, but sure.
I said Texas barbecue in Arizona.
I don't know if you said that, but whatever.
And I mean, I think that's why it performed so well, right? I mean,
there you go.
If you walked into that place in Texas, you have to imagine that your expectations are going to be scaled up accordingly, right? I mean, that's kind of part of the deal, of course.
Totally.
Yeah.
And that beef rib on its side like that doesn't do it any justice. I mean, it was like a baby's arm holding an apple. That thing was like a forearm. It was beautiful.
I think.
Tell me again, why can't they do beef ribs in Chicago? You tried to explain this to me at the table, and it didn't make any sense.
I
So
will
please
explain
try
it to
again.
you because the barbecue joints in Texas take all the beef ribs.
So it's a supply and demand issue?
It is. That's why you can't it's hard to get a good steak outside of Chicago. I mean, I know it sounds crazy and people are going to think like, in Chicago, you can get baby backs, which don't really, you don't get a lot of baby backs in Texas, which, they ship a lot of baby back ribs here, but we don't do a lot of, beef ribs or the big pork, spare ribs, that kind of thing. And they just do it better everywhere else. Those things.
They do it better. I'll give you that.
You got to have, Jim, seriously, those smokers, those are not city smokers. You know what I mean? You can't, you'd have to spend, God knows how much.
You can't fit them in a 25 by 125 lot. I give you that.
Yeah. You need your own $1 million lot to have those smokers in a city like Chicago, and if you're not going to get those things in New York, Chicago, LA, that kind of stuff. That's why the place we went to was sitting right by the airport where this, on the side of the road.
Yeah, because the space is so cheap. No, I get it.
Yeah. Those smokers are those are cool.
Yeah, and how many did he have? He had 4, he had 6. How many did he have running?
I don't know, but they're cool.
Yeah, they were cool. They were big too.
Yeah, those are badass smokers. You get one of those in your backyard. If you're a Batista and you got that kind of space, you got that kind of yard space. I don't have that yard space. But if I was a Batista, I'd get one of those. Just not because he knows how to use it or anything like that, just because he'd be showing off.
Listen, Sosnov's property is a commissioned park. So it's not sanctioned or allowed zoning for a smoker that big. He has to go with a smaller Johnny smoker for his park-like setting that he has for his outside space. He
has to follow different laws and regulations.
That's correct. Okay. That's correct.
Yeah.
That's correct.
Yeah.
Plus, he would burn the house down next door to him too. So it's a hazard.
Speaking of burning the house down, Tom Sosnoff. So now that Juan Soto has officially signed with the Mets, and he has now set the market. Since I would say a Juan Soto and a Dr. Jim have similar abilities, I would like to go ahead and restructure my contract now, since it is at the end of the year.
I think you should.
What do you get? $750 million for 15 years and a $75 million signing bonus?
Yes. I think I will settle right here on the spot for 1 basis point of that. I will take 1 BIP and we can just call it a day. We can wrap it up and just be done with it.
So did they? I missed it. Did they officially signed him? He's all done.
Yeah,
he's all done.
He's gone. It was last night. I know Chris Vecchio's got to be. I mean, you can't be upset. You can't be upset that your guy's going to go all in like that. I mean, maybe it prevents you from getting other pieces, but I don't know, man. Generational talent.
Who would be upset? You're talking about fans? Fans don't care what owners spend. These guys are multi-billionaires. No fan gives a crap what an owner spends.
Well, no, of course not. But it's like, I mean, the Red Sox haven't spent money in years and years and years. So I'm just saying, like, I mean, being a fan, you got to feel good about the fact that your owner's kind of going all in. And Steve Cohen, like, he's all in. But at a certain point, you know, I mean, him signing Soto is going to prevent him from signing other people. Unless you go with, like, the LA deferrals. If you do it like the LA deferrals, you just defer all that money out for 20, 30 years and then don't even worry about it.
Hey, Dr. Jim, Soundlove just made about 80 cents on his Tesla scalp. Don't you worry about a thing, okay? You've got a little spendable cash, okay?
I'm going to bring that up in my contract negotiation here in the next couple of weeks. I'm going to be bringing that up for sure. Oh, yeah.
Please do.
And I did. And, Tom, we are now square, right? We are now square. Right?
You owe me,
so everyone is clear.
You owe me $3.
I didn't have singles on me.
Oh, that's a good one, Dr.
I gave him 20. I gave him 20, but I was a little short on the VIG. And so
that's a good one.
Okay.
That's a good one.
I was shocked. I was shocked to see the 20, but I'm going to require full payment.
Well, apparently you're making me come to Chicago in February. I'll be bringing that up in my contract negotiations as well. So I'll make sure I have $3 in my pocket.
February is practically summertime here.
Yeah. Oh, man. Anyway, all right, gentlemen, we got to do this, man. We got NASDAQ 22,000, Tom. It could happen any day now. What do you think about that? Tony, what do you think about that? Is that crazy?
It is crazy. I mean, right now it looks like everything is pointing to why not. But, man, I got to say why not with an asterisk, something I never thought I was going to see in 2024.
Man. Tom, I know that you're passively long the market, so you're feeling good, right?
Oh, yeah, Jim. I feel great.
There you go. That's because you listened to my talk on Saturday where I talked about short puts, and I talked about the simple fact that the beautiful thing about the short put is you can just take the shares, Tom. Just take the shares and hold them. Don't even worry about it, man. You're going to be fine.
That's right. The market will bail you out.
That's exactly right. All right, let's do it, John. So get us going here on the first slide. We are ready to go. So trading a runaway bull market. So what do you do? What do you do when you're short or you're neutral and the market just gets away from you on the upside? This could also really apply to the downside. But given the fact that we are right on the precipice of, NASDAQ 22,000, I mean, the Dow's going to be 50,000 maybe this upcoming year in 2025. That's crazy, man. Like, where are the Dow 50,000 hats? Have you guys seen those yet?
Yeah, I'm really disappointed with those people. I really am. I don't know why they haven't come out with those yet.
I know. It's like, come on, man. Like, this was low-hanging fruit.
Yeah, get with the program. They got to get with the program.
We got to do something. Yep. All right, so how do we trade a runaway bull market? Well, we're going to take a mechanical approach. We are going to talk about some things that you can do to help to mitigate the damage. So, John, go ahead and get us going here on the very first slide. So public enemy number one thing we know is that prices are extremely efficient and their day-to-day movements are random and unpredictable. And the geometric Brownian motion model lays the foundation for the volatility shocks that routinely occur in the market. That being said, our biggest enemy as premium sellers will always be a one-sided market that gets away from us, much like the one we are in right now. Gentlemen, do you think this is our biggest enemy as premium sellers?
That we're in a one-sided market? No. I think the biggest enemy as premium sellers is that you get into a market where it's not worth the risk.
Tom is wrong once again. You are right, Dr. Jim.
I know, but I'd like him to continue. Go on, elaborate.
Hold on, Sadnov. I know this is not something that you can do by yourself, so I will dig for you.
I think the biggest risk to premium sellers is when vol gets too cheap. Now, that could happen with a one-sided market to the upside, but that won't happen with a one-sided market to the downside. So that's why the biggest risk to premium sellers is not a one-sided market. The biggest risk to premium sellers is that volatility gets too cheap, and then the risk-reward of being short premium just doesn't make sense.
I agree with you in terms of what you just said. However, I'm going to push back with your kind of your counter example or the other scenario that you suggested is not necessarily a problem, where the market goes down and vol gets expensive and you can sell juicy premium. That can be a big problem too, my friend, because if you have short premium on now and you get slapped pretty hard to the downside, yeah, that could be good for new positions, but your current positions are going to be crushed because now you're hit on Delta and you're hit on Vega. So Tom Sosnoff, what do? We can't just sit in cash, sitting on Malord's pile of gold coins. We got to do something. So what are we going to do?
No. I don't just sit in cash. No. That was not my comment. I mean, like I took off some positions this morning in S&Ps and NASDAQ, some short premium because the IV ranks down to single digits. And so I wasn't worried about the market going higher. I'm actually way more worried about volatility going higher. So that, it's a perfect answer to your question. Like, why did I cover an SPY strangle? And the answer is because I'm worried about volatility with the IV rank at 5. Why did I cover an Q strangle? I'm worried about volatility with the IV rank at 3 or 4. I don't like being short volatility in single digits. That's one thing. So, I mean, that'd be my answer. I don't think I have another answer.
Well, no, you haven't even finished the first answer because, I mean, my question, so now you've got Vol at 12 or whatever it's at. I don't know what it's at right now, but it's around 12 or 13, whatever.
Yeah, 13.
Right?
Yeah.
Yeah, okay. So you don't want to sell premium. You don't want to necessarily play the market to the upside directionally, which makes sense.
Yep. No, but I mean there's lots of non-index plays that still have rich premium. That's the difference.
I mean, I guess that's the only avenue forward, right? I mean, that's the only pathway forward through the forest right now, right? I mean, basically. I don't disagree with you. I'm not setting you up here. Like I think maybe that's
but Jim, that is the difference. That's how this business works. There are times when the only vehicle you can use is, you have to kind of dig deep and search for things that have high vol.
No, you're right. And I appreciate you explaining that to me this morning because I've been with you for 9 years. I've been on the road with you now for over 100 shows, and I didn't know that. I did not know that. So thank you for explaining that to me this morning. That's very helpful.
It's been a very difficult process getting you up to speed. Most people.
It's really sad, man. Like this weekend was kind of like, I don't know what's going to happen this upcoming year. I mean, again, our contract negotiations, I'm not sure how it's going to go. We just got to see. Right. But I feel like the last, that was kind of the last hurrah for a show like that. We're going to do some different things.
And you're still like a sponge, right, Dr. Jim? You still have so much to absorb from Sosnoff, and waiting till May or June for the first show. Even if you make if you get the pick, if you get to be the chosen one, it seems like you're losing out. It's like half a year. You have so much to absorb. I feel the same way.
I mean, there's so much knowledge that is left untapped, Tony. Like this, and it's like I'm just humbled to be here, man. I'm honored to be a part of what it is that you're trying to do, man. And so
save us.
You're making it wait 6 months like that. It's really, you're doing us a big disservice.
Most definitely.
Okay, next time you're flying Spirit. I don't care what you say.
I don't think Spirit goes out of Tampa. It goes out of the St. Pete Airport, though. So you make me go through the St. Pete Airport. That's kind of brutal. All right, so next slide. All right, so what do we do now? So what do we do when we're in a situation where, we want to defend against the runaway bull market? Okay, well, first and foremost, we are all going to agree with this. We got to control the controllable. Right? I mean, there's things you can't control. We don't know what prices are going to do. Random, unpredictable, blah, 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 blah. But what can we control? Number 1, position size. Number 2, capital allocation. And number 3, strategy selection. So you got to lock these things down first. You got to make sure your position size is in check. You got to make sure your overall capital allocation is in check. And you got to make sure that you're utilizing the right strategies. Like, from a position size standpoint, you don't want to be allocating, 15 to 20% of your capital for a strangle or some undefined risk position. Keep it to 3, 5, 7%. Define risk, 1 to 3% of your account size are really good starting points. Capital allocation, you're somewhere between, 25 to 50% of overall capital allocated. I mean, it's quite a big range, but it depends on a lot of things like experience, account size, volatility level, et cetera. And then strategy selection. There's a lot of different ways you can go with this, but you really just have to know what are you signing up for? Are you clear that you understand what you're signing up for? If you're going down the undefined risk road, which is a great road to travel, you just have to know what it is you're signing up for. If you're going down the defined risk road, then you have to know what you're signing up for, right? Lower probabilities, fewer adjustment opportunities, et cetera. But these are all the things that you can control. You got to do this first. All right, so now
three concrete things that you can do to help with a runaway bull market. So, John, go ahead and click us on the next slide. So, number one, position management. When undefined risk positions are tested, that's when position deltas flip from under 50 to over 50. This is because, we sell out of the money premium to begin with, so the deltas are always smaller, whether it's, on both sides of the market or one side of the market. So the direction of moves are not going to hurt you as badly. But if a position gets to the in-the-money status, now all of a sudden the deltas are over 50. So now continued directional moves are going to hurt you more. And the reason why this is very relevant right now is because there has been a continued directional move against you for the last couple of weeks, last couple of months, really. I mean, the last 4, 5, 6 months has been pretty much a straight line higher. And so it's like, man, if you've been short any type of calls, whether they be as standalone short calls, maybe Tom, you talked about call ratio spreads on Saturday, right?
I happen to be a call ratio spread expert.
Yeah. So you're just leading people right into the dumpster fire, man. Just call ratio spreads. If people are following you, then they're feeling the pain today. They've been feeling it every day for 5 months. And so it's like when that happens, right? I mean, if you don't adjust early, then you're going to be feeling some significant pain. Some real
Yes, and it depends on the product that you're trading too, right? Like,
of course,
coin, which has a lot more with call ratio spreads, which I think is a good thing to do with an IV rank of 52, and call skew, which makes that out of the money option worth a lot more than the put equal distance away. And that, even though coin has gone higher, I got coin as lower today. That's actually worked out okay. Not profitable, not willing to take it off yet. But there are places you can go. Now, if you follow Sosnoff just because his name is Sosnoff, then you will feel the pain, and rightfully so.
Yes, that's your own fault. Again,
that's your own
controllable,
fault.
right?
I would prefer, Tony, that you
Batista,
didn't. I would prefer that Tony doesn't go into areas that he doesn't quite understand.
Is that why you
caveat emptor if you follow Sosnoff?
Is that why you let Tony do the broken wing butterfly on Saturday? You felt comfortable that he can handle that?
He let me.
Yeah, because it's defined risk, so he can't hurt that many people.
That's so good. It's so good. All right, so you got to manage, right? And again, I mean, if you're short a call, whether it be a call ratio or a strangle, of course, a lot of traders are obviously, in some strangles that could be underwater. This is something that you can control. So, whether you adjust, early, like when deltas get out of whack at 15 or 20, or you wait till the strike is tested. I mean, there's a couple different ways you could slice it up, but you just this has to be on your mind. It has to be on the forefront, 100%. So next slide here, John. All right, number 2. This is one that from a kind of a risk management standpoint, honestly, it doesn't get talked about enough, in my opinion. You're winning trades. And so managing winners early avoids having trades that were winners turning into losers. I mean, gentlemen, this business is hard enough, and it gets a whole lot harder if you've got a trade that's worked and then all of a sudden it's not working anymore. That's a really difficult situation to be in. And so, this could be strangles and verticals. You're taking it off at 50% of max profit. This could be straddles and iron flies. You're taking it off at 25% of max profit. Or it could be kind of, with all strategies, kind of a should I stay or should I go type of scenario, where after you're up X% in Y number of days, you take it off. Like you're a lot more aggressive and you're really trying to statistically maximize, kind of the output of your account. I don't remember. Do you guys remember, offhand what the percentage numbers are that you want to be at after a certain number of days and given strategies when it makes sense to take it off?
I mean, we have a couple of different studies, but they're all in that same. They're all very close to each other, no matter how many different times we do it, regardless of the amount of research we use. But if you're talking about a percentage, we generally don't like to do anything unless you're talking calendar spreads, we really don't start much less than 20%. Just because of transaction costs, bid-ask differential, that kind of stuff. I mean, like if you had 10% in a day, if you sold something for $5 and you had something like 10% in a day or an iron condor like that, that'd be fine. But generally, our research shows like at the 20% level, you can start, it kicks in, and then it's just common sense. If It's 20%.
Yeah, but we've done studies where it's like 10% after a day on a strength,
Yeah.
20% after 2 days,
Yeah.
3 days, 30%. I mean, those are kind of outlier expected moves.
Yeah.
You know what I mean? Like that's not the norm.
Yeah,
So
I
when
mean-
you say 20%, though, I mean, can you add some type of time element to that? Because
Yeah,
20% after 4 days is a lot different than 20% after 2 weeks.
Right. And so a lot of it is just common sense. And a lot of it is, if you're aiming for 50% or 21 DTE, you can kind of, and you're willing to take, and 20% is your bottom, then your range is between 20 and 50% over a 22 or 23 day period. Just talking about averages. So then you can kind of approximate or interpolate, between those numbers. So like anybody can say after 1 week and I got to 25%, yeah, sure, that fits into those numbers. If
Tony, he used it correctly. I can't believe it. He actually used that word correctly.
I know he used the word correctly, but the answer was completely wrong. Tom's a bottom, first of all, okay? And our strangle strategies work at 25 to 50% after 3 weeks. So if you've got 25% after a week, you'd be hard-pressed to stay in that trade for another 2 weeks to make 25% when you could take that money and use it someplace else and make more
That's
money.
exactly what I just said.
That is the answer. I have no idea what Saz said.
That's exactly what I just said. What I just said.
Okay, but I said it in the English language that people can understand. Just like my presentation that I did was well thought out and able to understand, and yours was, well, your presentation.
See, Tony, this is why we love you, man, because you are a man of the people. You're a man of the people.
I try.
You speak in words that we can all understand. Like you speak in words that we can use and we can apply. I mean, Tom's over here talking about, interpolation and optionality. It's like, I don't know what any of that means, man. Like, you got to give me something I can use, right? And look at you, man. I mean, you're doing it again.
Thank you. Look at me. Sazno, did your bag arrive okay? Because I left it on your doorstep for you. Is everything okay? And I folded your clothes for you, and I made sure you had water and your tea was hot. Tom did pass back the almonds, though. That was very kind of him. And I'm honest, he did it in a timely fashion because the bowl that it was in from first class was still hot.
That's impressive. That's impressive. That's pretty good.
That's
pretty good. All right, let's get in the last reason because I got to get you guys to some market measures, man.
Sure.
Time goes so fast. So number 3, we have to avoid unnecessary risk. So Tom, you kind of alluded to this a couple seconds ago, but the gamma risk associated with holding naked positions close to expiration is avoidable. We know it kicks up right around 21 days to go and obviously accelerates inside of that. So with your undefined risk positions, right, your naked puts, your short strangles, ratio spreads, you have to adjust at 21 days to go. There's no reason not to. Like the research just continues to back this up. There's really not a great reason not to. And so these are 3 things that you can do to help kind of mitigate the damage of a runaway bull market. So if you've been following Tom for any more than, I don't know, maybe 3 weeks, like you're feeling a lot of pain, these are some things that you can start doing to minimize that pain. So let's get them a few takeaways. Let's get them on their way to some market measures. As active traders, you want to control as many variables in the process as you possibly can. But ultimately, what price does is one thing that will never be in your control. Still, by following the mechanics we've established for trade management, you can minimize the damage that a runaway market can cause. So, gentlemen, one final question. Are you sad? Are you sad that I think that was the final time that I'm going to use the Einstein story on stage? Are you guys sad about that?
No, Dr. Jim. I actually had to put my fingers in my ears when you did that story this last time. I just couldn't bear to hear it one more time and know that it was the last time. I want to have the.
But you didn't know. Did you know?
I didn't know. But it was close. I knew we were getting there. Getting there.
Tom, are you feeling a bit sad?
A bit.
Yeah.
Nice.
I mean, I'm feeling sad too because when everything started in 2017, I've only got 3 stories. I had 3 stories. Einstein's gone now, right? I sold you my Dr. Wood story, and so I've got 1 left. I've got 1 left that I can use. That's it. And so I don't know what I'm going to do, but we'll figure it out.
Well, We'll give you some time to do that, Dr. Jim. We'll let you go. We'll take a quick 90-second break and come back. Even the S&Ps have moved about 3 handles. They're down 8 right now. We'll be back in 90 seconds. It's Tasty Live.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned. I was just in the car with him for 2.5 hours.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
We are back, my friend. You know what that means? Time for a little bit more Tasty Live, my friend. That's right, with this market measure.
All right, I'm
Even
looking forward to it.
Down 775, so I don't know if they moved a quarter.
Yeah, I know. Yeah, not much going on here. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks.
I am. Sorry.
He is. He hasn't changed his. He he's been Tony Batista since I've known him, but usually when
I actually have been Tony Batista because a lot of my friends in New York, I was known as Anthony, and then Anthony, then Tony.
Yeah.
I've always been Tony to you.
Yeah, he's pretty much always been Tony to me. But usually when Batistas get to the age that he's getting to now, they usually go into witness protection program and they're relocated somewhere. So we don't know where Tony's going to end up. I'm guessing some farm town.
If family history is to repeat itself, then that will be my fate someday.
Sure.
Yes.
Yeah, you're going to be relocated, and No, I could see someday you ending up like on. It's not a bad thing either, but I don't think it'll go that.
I have a feeling you're lying to me right now.
No, I'm not.
But go ahead.
I could see you ending up like I don't think you'll ever end up in. I actually don't think you'll end up in Florida or anything like that. I could see you ending up like in like Tulum or a beach in Mexico. I could see that.
I could see it too.
Yeah, it won't be anywhere cold. It has to be somewhere warm, and it has to be
somewhere warm.
Yeah.
Yes.
Yeah.
I agree.
Yeah.
I agree.
But I think it'd be more beach like. Yeah, I could see that.
Yeah. Yeah, I totally agree.
Yeah,
totally
I think on that where's bad thing, Turks and Caicos would not have been the worst answer.
Yeah, you're right. And I always thought I was going to retire there when I bought my property in Turks and Caicos for a small amount of money. But my wife at the time decided that we needed to redo our bathroom. And I sold my property in the Turks and Caicos. And the rest is history, Sosno.
How's that bathroom working out?
I don't know. I'm sure he's enjoying it. Sure he is. The next administration. Mm-hmm.
Yeah, I've never had that conversation with my wife. Let's sell this so we can do a bathroom. Yeah.
Yeah. It was the rest of the house too. I mean, it was more than just a bathroom. I always play it down that it was a bathroom, but man, that was not a smart move by me.
Yeah. Yeah, you're not supposed to like disclose any of that information,
Hey, otherwise you're not human, man. If you don't, you got to make, and you even said this in one of your presentations, like you have to make mistakes to be successful. You just have to. Otherwise you never make the right move to begin with.
Oh God, yeah. Yeah.
Mm-hmm.
Yeah.
Just look at you having me next to you.
Well,
I mean, that
funny.
has been.
It's funny. I did that whole back when we did that bad trader tour. I talked about all the kind of crappy investments and mistakes we've made all the years. So that was interesting, fun tour. But the other day I was reading something. I think it was Mark Cuban talking about what's that show they do?
Shark Tank.
Shark Tank.
Right.
And so Mark Cuban was talking about Shark Tank, and I just kind of caught the snippet of it. But he said something like he's made 100 investments. I don't know how long Shark Tank's been on the air, probably a decade or so. And he said he's made 100 investments, and he goes, "I'm only down 20 million, so I consider it a win." like his, all the Shark Tank geniuses, and those guys squeeze those people. Like they don't even make.
Yeah, sure.
They don't even. They get good deals for garbage, but
right.
He said he's down 20 million on 10 years worth of Shark Tank deals, which I know for him, he's a billionaire. It means nothing, but I just think it's interesting that people think it's such a layup. It's not.
Yeah, that's right.
Venture angel investing, you almost do it because you're giving something back.
Mm-hmm.
I made an investment. I made an investment about a year ago in something, and it was a small company, and it's not something we ever discussed on air, but it was a small financial service company, and I really liked what they had done. And I got a call the other day from the founder, and he said, we tried, but we couldn't raise any money. We couldn't do this and that. So we sold the company, and, here's how much you're getting back on your dollar.
Right.
And I'm like, okay, I get it. It's hard. I wasn't like, he's like, I hope you're not mad. I'm like, I'm not mad.
Yeah, I almost had to have that conversation with Jimmy. That's right, of Jimmy Bread in Algonquin until Sosnoff saved the day as a angel investor by buying the product. Man, oh man, you are a giver.
I am not an
Sosnoff.
angel
Thank you
investor, but I've been buying a lot of your boy's product. I'm number one son right now.
Yeah, keeping it afloat. Keeping it afloat. We might actually get ourselves a 1987 van, Sosnoff. We're thinking about stepping up a little bit. That's right, Jimmy Bread in Algonquin. Go visit him. Mention the bat. Get yourself a free pastry.
Free pastry. Don't put the guy out of business. Anyway,
with a purchase.
With a purchase. Anyway, we are done with live shows for 2024. Thank you all so much for coming out to all the different events. We did 16 live. We were in 16 different cities this year, which, when you think about it, that's a lot of Saturdays. We were in 16 different cities, in I think 5 different countries, 16 different cities, and it was a pretty intense year, travel-wise and stuff like that. We probably saw an average of, I would say, 500 people per event, which is a lot nowadays in finance. But in-person events are really, really important for lots of reasons. They complement everything else we do. But 16 different events, you're talking probably 8,000 people live over the course of this year. So that was great. Thank you all for coming out. Hopefully we can continue to do it into perpetuity. The CBOE was a big sponsor this year. The CME was another sponsor. We thank both those exchanges for stepping up. And I wish all the exchanges actually cared as much as those two exchanges do. But, but they don't. But the good part is, good exchanges, they get paid in return. They get our order flow. They get other things like that. And they're big supporters of Tasty, which is awesome. Next year, I don't know how many live shows we're going to do. We also did 3 digital collectibles this year. January, February, March, we're going to do 3 more digital collectibles. Then we're going to have a whole portfolio of like 7 total, of which we're going to be able to put together for people. So our next digital collectible is this Saturday, and it's our last event of the year, but it's all digital. Sign up at tastylive.com/events. It is a little less than 2 hours. It's the show we just did in Phoenix, but it's all produced. And it's myself and Tony, along with Dr. Jim, 3 of us that you just had on air, along with Liz, Jenny, and Julia. It's a little different than the last show we just did. So again, me, Tony, and Dr. Jim, along with Julia, Liz, and Jenny. And it's a really good, really, really good 6 different strategies. And I think you'll like it a lot, and you'll own it. So just sign up and you own it. That's it. Simple. There's nothing else to do.
It really is a painless process. It really is a click.
It's
a click.
Literally one click. And so hopefully we'll continue down this digital path to combine it with our physical stuff. Next year, we hope to get, since we've been approved in Canada now, we're just waiting to go live there as soon as we get our clearing situation worked out. Hopefully we'll have a chance to be in Canada. I hope to do another show in Mexico City this year. I didn't even count that one. We will be back in London. Hopefully we'll be somewhere else. We're trying to work out something to go to Milan. We're considering Singapore, but I don't know if we'll get there this year. We are also going to be all over the U.S. later this year with a bunch of different stuff. So thanks again for all your incredible support this year. All right.
Yes, and something else, Sadnov, if I could just switch gears on something else, the back testing now has 142 symbols, Sosnoff, including the micro SPX EXP. So not only are we traveling around for free, we're giving away back testing for free too on the Tasty Trade platform. So pretty cool there with 142 symbols, Sadnov, probably even a symbol that you like to trade. Check it out.
So anyway, let's take a look. Yeah, we just put the back testing onto our software platform, and we will be transitioning our also our new Treasury bill stuff onto the software platform as well very shortly.
I said XSP. I know somebody's trying to. If I didn't say it correctly, I apologize. XSP, the micro SPX.
Yeah, and if you're wondering, is the micro SPX going to be the same backtesting results as the SPX? The answer is yeah. They're the same product. When something's 1/10 the size, you don't have to do both of them. You'd rather do the one that's more liquid. So your default should be to SPX, but you can do whatever you want, right?
Yeah, yes, but yeah, you're correct.
Yeah, you're going to have basically the same results if you did the SPY, SPX, XSP, or even ES option. ES. They're all going to be basically the exact same. I mean, any difference is just it's pretty marginal, pretty negligible. Anyway, all right, let's do it here. We have no Scott today, so we have a little time. But if you would like to call in, Tony, we can take calls today, can't we?
Sure, I'd be happy to.
Yeah, let's open up the phone lines. People that maybe they came out in Phoenix, or we just got some time. We got about a half hour after this segment, so we would love to hear from you. And any feedback, whatever, love to hear.
Awesome.
So,
or from anywhere else in the world, you have a question about trading or anything else, I'd love to help you.
Yeah. So a lot of people have a lot of questions about this. Look at Tesla. It gave it up, huh?
Yeah, Tesla did give it up. I did roll up some putties. I did keep some short delta in there, but I've been rolling up putties forever. Tesla unchanged at 389.
I didn't touch my Tesla position today because I'm a man.
You're a true trader. You know what? The Ivy rank is 70 in there now. I mean, it was down into the 30s. Volatility is really what's hurting you too.
Yeah. I can't believe Reddit's 176. Unbelievable. Anyway, we're going to explore December. Market myths and realities. A lot of people have these crazy ideas that September, even Vanetta said this morning, what about this Christmas Santa Claus rally? What about this December to remember? All this kind of stuff. So let's take a look. Market myths and realities. Exploring December. December being the final month of the year is notable not only for its major holidays like Christmas and New Year's, but also for the impact of market trends. In the trading community, it's common to hear about the anticipated Christmas or Santa Claus rally. Now that we're in December, we want to address this topic. So we did a study today to provide statistical analysis to determine whether December actually outperforms or underperforms other months. Would you like to take a bet? Make a bet.
Determine whether December outperformed or underperformed. I'm going to say there's a slight non-statistical advantage to December to the upside.
Let's take a look.
Okay.
So we did a 10-year study in a bull market. So if ever you were going to have a little bit of bullish, a little bullish tilt, let's say, you couldn't do better than the last 10 years. And we looked at tons of different things. The 16 Delta Strangle, 45 days to expiration, managed at 21 days, average. We looked at a price change, implied volatility, standard deviation, premium collected, the ratio of premium collected as a percent of buying power. And we compared the results for the entire year. Okay. S&Ps, by the way, down 17, they
just sold off.
Making a new low. And I have to do one thing while you're here, Mr. Batista. I was short just a little S&Ps. My sound's off. Oops, sorry. Just bought back some S&Ps.
Beautiful. Look at you.
No, I'm sorry. I take that back. Some NASDAQ futures. Down 109.
You are correct. /MNQ.
Figure that's a gift from the gods. We're also working to sell some bond puts. I think this is another little gift here. Bonds down. I'd like to see me get back into the 118 handle, but I'm working some puts above the market. Let's go next slide.
Let's go to the next slide.
I mean, down 17, you have to admit, it's basically a crash, right? It's a mini crash.
It would be the biggest crash of 2024 if it holds, South.
It holds. The graph below provided an
Big
overview.
if.
The graph below provides an overview picture of implied volatility and implied volatility change since 2018 to now. So you can see we're kind of on the very low end of implied volatility and implied volatility rank. Let's go next slide. So here's where we start getting into the meat. During the last decade, the daily changes in implied volatility and price have shown consistent average percentage across all months. This suggests that December generally exhibits the same daily implied volatility and price fluctuations as other months. Actually, yeah, I mean, December's on the low end. It's average for price fluctuations. It's on the low end for volatility change, daily volatility change. It's on the average for price fluctuations. You're right. There is really, I mean, our research team is correct. There's really no difference between December price and any other month for that part. 0.6%, right in line with everything else. High end of the range there, but low end of the range with respect to implied volatility. Right? Nothing jumps off.
Nothing there.
Yep. Let's go next slide. So regarding volatility, when analyzing the standard deviation of the average portfolio, that means how much swings do you take in December relative to the amount of premium that you collect? And again, the results are generally consistent across all the months. So the average P&L in December is kind of, it's right in the middle. And the average premium collected in December is right in the middle. So I guess the point here is that when you think that there's this incredible opportunity because December has, a one-way market or whatever, the reality from a trader perspective, that's why it always drives me crazy when the media jumps all over this Santa Claus rally, because the reality of the rally is that the opportunity is no different than any other month.
Sure.
That's the thing that gets lost in all the ridiculous headlines, is the idea that, oh my God, there's, Santa Claus rally, we make all this money. No, the reality here is that it's the same, opportunity is the same across every single month. Let's go to the next slide. To gain a deeper understanding, we're also going to examine buying power. First, the buying power remains relatively consistent across all months. And next, the ratio of premium collected as a percent of buying power used is approximately equal, averaging around 5%. So you can see on that bottom line, that's the ratio of buying power used as a percent of buying power to do, to actually put a strangle on. And there's no difference in December than any other month. And the buying power used is basically the exact same in December as every other month. The reason it's just a tad higher is because usually the market has rallied every year. So it's more expensive by December.
Right.
Let's go next slide. So even though December is the last month of the year and includes the holidays Christmas rally, many traders expect a change in price volatility or overall market activity. However, our analysis shows that the results are generally consistent throughout the year, meaning that you don't have this ridiculous opportunity in December. And like I said, the last 3 Decembers, the triple witching move has actually been lower. However, individual assets may experience impacts during this time, so it's important to manage your positions carefully. Yeah, of course, that goes without saying. But the reality is that when you start to look at the numbers and you look at it from an opportunity standpoint, there is not much difference in opportunity at all.
Beautiful. Good job out of you, Sosnoff. I want you to say, yes, it is.
Thank you. Yes, it is.
Let's take a quick 90-second break and come back. We got more Tasty Live. You know that sounds up right after this. We're going to your phone calls, 855-238-2789 or 855-BE-TASTY. Sosnoff, I got 4 or 5 lines open, and Jamie, I do see you. You will be first. Light them up, everybody. You got a question, we got answers. Well, I don't, but Tom does. We'll be back in 90 seconds with Tasty Live.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live
You
taunting
made me print out something for you in 40-point font.
from the smart mouths at tastylive.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Damn.
Wow.
Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what? Enough out of you. I got people all over the place ready to get answers from you, Sadnov. Are you ready?
I'm ready.
Jamie in Salt Lake City, what's up?
Hey, John, we got a lot of feedback.
What's up, guys? Can you hear me?
Yeah, Jamie, we can. Hang on one second. John, we got a lot of feedback, okay?
Should be good.
All right, let's see. What do you got, Jamie? What's up, man?
Okay, first, I love you guys. Love your show. Both of you guys are awesome. So I've just listened to an interview you guys did, or Tom, you did, with a trader that does zero DTE, trade SPX.
The last rising star guy.
Right. So for a newer trader, it's like, how hard is it to kind of like get in and execute on that level? And when you were talking about exposing his whole account every day, like I wasn't totally understanding why he was like so exposed in his strategy. But what's your general thoughts around someone kind of diving in at that level as a newer trader?
That's really tough. Like he spent a long time proving concept before, and he risks way more. Like I should be more clear. There was probably a point in our careers long time ago when dinosaurs roamed the earth where we would risk a lot of the money that we had, because I think every young trader does that. You know, you have limited capital, you risk a lot.
Right.
But on the screen based side, the odds are not the same. I mean, they're not as good. You know, the odds, you know, it's a much more even level playing field now. And I don't love the idea of the level of risk and commitment that he took. I mean, obviously he spent a long time proving concept and he believes in the methodology. We had him on because I thought it was interesting, because very rarely do you find somebody that A, commits that much of their capital, and B, that essentially makes as many trades and essentially does every strike. And it's kind of a unique strategy. That's what I thought was the most interesting piece to it, was that he kind of developed his own little approach to trading zero DTEs. It's a very patient approach. Honestly, I think a lot of his success has to do with the fact that, you know, the markets have been, over the last couple of years since he's been doing this, I think it was since 2022. So he has about a year and a half or 2 years of, you know, it's been a good market for him, because you've had declining volatility and basically a market where we haven't had any like huge drawdowns. But you know, I don't know how it will work over a long time. So my answer to you, though, is would I do it if I was in your shoes? That kind of commitment to that kind of capital? Probably not.
Okay. Well, I love the interview and I love all your guys' content. So
thanks.
Yeah, thanks again for all the value. Have a great day.
Thanks, man. Thanks, Jamie.
Yeah, great question. Thank you so much. We're gonna go to Michael in Chapel Hill, North Carolina.
How you doing?
Hey, Michael. What's up?
How are you?
Doing good. I got a question. Two questions. Well, two things. Can you give us any updates on the small exchange, when we're going to be able to trade?
Sure.
And the products?
Sure. We are in full beta right now. So it's private beta. So we're doing everything internally. We've launched the futures marketplace, and now we're testing. We're still testing futures, and next week we start testing the option marketplace. So we're hoping in just a couple more weeks. I mean, so far so good. Fingers crossed. The first product is going to be an S&P product. No, I shouldn't say S&P. The first product is going to be a version of a broad-based stock index. And the reason we're doing that, for starters, is because we created our own index. Like, we created our own big broad-based index with a lot of stocks in it. And the reason we're doing that, for starters, is because it's the most liquid product we could create. And we wanted something where people are comfortable and they can line it up and measure it against SPY or, you know, any of the other S&Ps, the S&P 500, any of that kind of stuff. And the initial launch will be futures, and the primary launch will be futures, options, spreads, and everything will be defined risk vertical spreads that trade at mid-price. So on our initial launch, every single thing that you want to do, you can do it at mid-price.
Buy or sell is what you're saying.
Buy or
Basically,
sell.
Pick a market.
Yep. So let's say you want to buy a vertical, or you wanted to do a two-legged vertical spread, like buy a call spread or sell a call spread or put spread. You buy it or sell it at the same price. So you don't have to worry about bid-ask spread. There's no price discovery. It's the first exchange that's ever come out with single prices. So you just pick a price.
And it'll be right there in the Tasty Trade platform, right?
Yep, it'll be built right into the platform. That's one cool thing about it. The other cool thing is that it'll be the first exchange that allows you to be on either side of the market. So if you want to do whatever you want to do, you get to do that, obviously at bid price. But if you don't want to decide what you want to do, you want to let somebody else give you a trade, you can take the other side of somebody else's trade. That's up to you. And so it's the first exchange. What?
No, that sounds great.
Well, it's going to be very different than anything you've ever experienced to date. So essentially, if you do whatever it is you want to do, you pay a small little premium for the right to do whatever you want to do. We call that a taker. And if you want to provide liquidity to the exchange, we call that a maker, and you get paid for being there. You get paid for providing liquidity. So it's just a new approach to exchange-based trading. We've been working on it for now going on almost 2 years. So the launch will be within a couple of weeks.
That's excellent. I'm excited about that. And my next thing is Dylan Radican. He needs his own show because he doesn't get, the shows that he's on, he's so insightful, but sometimes he doesn't get an opportunity to complete a thought. And I just want to hear more from him.
I love Dylan, and I will take that. I think that's fair. I think that's fair.
But you know what? If we do this, you asked for it. Just remember that, okay? Don't blame us. You asked for it, dude. Careful what you asked for.
Well, hopefully I'll get it, and then I'll let you know if I like it or not. But I appreciate you guys.
Thanks, man.
Okay. All right.
You take care. Bye-bye.
Goodbye.
Thank you. Appreciate it. I believe we have Kevin in Parker, Colorado. Kevin.
Hey, Kevin.
Yeah. Hi. Good morning. I don't know where you guys are at. Maybe good noon.
We're in Chicago. We're in Chicago. So Tasty, everything Tasty does is we're Chicago based.
Well, I guess I'm not that far. I do have a question. I've been watching pretty much all of your content lately, like I'm like a YouTube junkie. And I see a lot of comments about managing the trade at 21 days. And like I trying to figure out exactly what that means. Like right now I do have an iron condor on SPX, right? The market's been going up. So the question is, do I move the put spread? Because the put spread right now is like -2 delta. It's like it's the market has passed the put spread quite far.
It's no longer helping.
Do I move it closer, or do I move the call spread out? Because now the call spread is a losing spread.
No. You don't touch the tested side.
We don't touch the tested side.
We don't touch the tested side. So that call spread is the tested side. We don't touch that. We touch the untested side and move that closer. Because we don't want to add we don't want to add more money to the trade. Like that. That's the reason we do that. Statistically, there's no, if you move the call spread and didn't touch the put, do whatever, there's no statistical advantage. We just don't, mechanically, we don't like adding more money, and moving the call spread would require adding more money, but moving the put spread actually requires less money.
I see. Okay.
Yep.
So you're collecting a little bit more premium. You're not using any more additional buying power, and you hope that it goes in between your two strikes.
I see. So even though I'm kind of close to the 21 days now, do I still do that, or do I just wait for the 21 days and win or lose, take the trade out?
Well, that's up to you.
That's up to you, but you could consider, since you're close to 21 days, rolling to the next month, either the same strikes and collect a net credit on everything, or the same call strikes and a different put strikes if you wanted to. You also could move both sides of the trade as long as you do it for a small credit.
I see. Oh, okay. All right. Let me take a look at how all these things are going to work out.
Awesome, man. Good luck to you out there.
You got it.
All right. Thanks.
You got it. We're going to go back to Phoenix, Arizona. I got John in Phoenix. What's up?
Hey, guys. I was at the show on Saturday and appreciate what you guys did. It was a lot of fun.
Thanks, John.
Thank you very much.
Hey, I got a question. Went long on Palantir at 27 a while ago, and obviously now it's high. And I've got a put vertical at 60 and 45 to protect. I mean, what are you expecting out of Palantir, and should I try to roll that up, do you think, or do you have any comments on that?
Well, who the hell cares what we think about Palantir? You're the one that's held it from under 30 to over 70. What do you think? I want to piggyback what you're doing.
Well, I mean, it was luck, obviously, and I was bullish long term, but didn't expect it to go up like this. I guess my tendency is to just keep rolling it up.
So you have a long put spread against your long stock?
Yes.
Right. I mean,
at 60 and 45. Yeah.
Yeah.
And now
I mean,
it's at 77.
Yeah. The stock obviously opened higher this morning. Now it's reversed and sold off like, whatever, $7 or $8 off its high. But, I mean, if it's me, sure, I roll those put spreads up a little. I mean, I don't know what Tony's going to say, but if it's me, I probably roll the put spreads up a little bit. I would rather be like those 45 puts to me aren't really that useful. I'd rather be higher, and those 65 puts, I'd rather be a little higher. But that's up to you. I would rather roll into strength, so wait till it bounces back again.
I totally agree with Tom. Totally agree with Tom.
Okay.
Can't really add too much more to it.
Just another quick thing. I was looking online. Do you guys sell shirts and stuff like that after the show? I just wanted to buy some of that stuff.
We are about to launch our new store. We used to sell merchandise like shirts and stuff like that, but it was too much of a pain in the butt. We did it just because we wanted people to have our merchandise, but every time we sold something, we lost money on it. I mean, because shipping is just we're not very good at facilitating all that stuff.
We're not good at the schmati business.
Yeah, we're not good at that business. But and everybody that had to do it here, wanted to quit. But the good news is that we found a place that's going to facilitate all our stuff. And so as soon as we get it done, hopefully, like it's a Chicago-based clothing place where where every one of our customers can order whatever they want online, and they print it, they ship it, they do everything for us. So hopefully we can announce that in the next couple of weeks. We're one of the people here, she's been working on it, so hopefully we'll get it done.
Okay. Well, again, appreciate the show and the book giveaway on Saturday. It was a lot of fun.
Yeah. Awesome. Thanks, man.
Awesome. Appreciate you, and appreciate you coming out to support us. We'll go to George. You'll be our last one from Miami, Florida. George, what's up?
Hey, Tom and Tony.
Hey, George.
I was calling back that day that I called initially with the vol spike in August. I know that, Tony, I mean, you guys were, both worried, but, Tony I usually message him on Twitter. You were really worried the fact that I had a couple ES contracts that were a year out, and the spreads were all over the place, and I was freaking out because I had a massive loss. I ended up covering some of the contracts there, which cost me. But I wanted to give an update that, yesterday I was able to recover everything. So it took me 4 months, but I was able to make back the money. And
that's awesome.
It happened to be that day on the show, I was saying that every time I call, it happens to be the bottom. And if I would have held, every time I say that, it bounces the next day. But the reason I wanted to call, other than the update, was I I have an issue with holding. I don't know if all the years in trading, and I wanted to find out your thoughts on, do you guys ever keep a long portfolio always? It just feels like my mind is always just short term. I keep it for a couple days or maybe a couple weeks, but that's it. And I've missed out on, I know we're in a bull market, but I've missed out on so many positions. I have no problem holding the loss for a really long time, but a really hard time keeping the winners. And, Robinhood, for instance, I had a massive loss there. And I used to call Tom about it all the time. And if I would have held that, I would have literally made back, I had a 6-figure loss there. It was crazy. So I just want to know, do you guys ever hold something long-term, your portfolios, or is it just, you're in and out of positions all the time?
No, we definitely hold things long. I mean, we don't talk about it a lot on air because most of the stuff we do on air is trading, but we hold long-term positions, sure. Yeah, we both do.
And is there is it that, how do you do it actually? Because what's your mindset around that? Because I every time we talk, it's just trading in and out. And if you see the positions on the follow page, you guys are always in and out. But is it that you're just have conviction on something long term? I don't know. I just can't wrap my mind on keeping things for a year or two. So I just wonder, you guys trade so much. So I just wonder how you go around that.
So
I mean,
it is a tough question. Go ahead, Tony. You could say you.
No, it's a difficult question to answer, my friend. I mean, I guess it comes down to having confidence in the strategies and the amount of money that you're at risk. I don't think you really can hold anything if you're not confident and it's not a huge portion of your portfolio.
The sizing is an issue. Yeah,
sizing is an issue. Like you said, you had a 6-figure loss in something. I don't want to hear how big your account is or anything else like that, but that's a significant amount of risk. I don't think I would be able to hold a position like that in a short period of time, 45 or 60 days, with $100,000 loss. I think that's too big.
Yeah, I know. Tom used to tell me that my sizing. He goes, that's around what his size was. That I should definitely not have it.
Right.
So, yeah.
So I think it really does come down to sizing.
Yeah.
All right. Okay. Cool. I just wanted to give you the update on what happened, and I appreciate you guys.
That's a good thing.
You got it, man. I appreciate you too. Thank you so much for all your support. Sadnov, thank you for your support. You can give a little support to the market. Even the S&P is down 25, Sadnov. Tesla down 5 after reversing. Coin down 27. On the other side, you got Boeing up around 6. Chinese stocks are up. Also, Sadnov, volatility up 40 cents. That's a 3% move. We haven't seen that almost all year, Sadnov. What do you say?
Well, I don't want to say it's been all year.
Thank you so much for your comments, Sadnov. You know what? Liz and Jenny are next. Well, let's see what they have to say. Peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready to move?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. We drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
And welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. My travel partner, my partner in crime is Miss Jenny Andrews. How you doing, Jenny?
Great to see you, Liz. So much fun traveling with you on the weekend. We had an amazing weekend in Phoenix.
Yeah. Yes, we did. Yes, we did. It was awesome.
It was awesome. What a way to go. What a way to go out. Last tour of the year. What a way to go out on the year.
It was, and honestly, I mean, I don't know if there's going to be any tours like that ever again. It was really fun. Like, we had a wonderful time. It was great to see everybody. And I think, should we roll the tape pretty quickly?
John said he had a video. I haven't seen it. I'd love to see it. And I want to thank everyone. Thank all the viewers for coming out to Phoenix. We had people who traveled from all over to come to the show.
We did. The guy who won the game flew in from Seattle, which was amazing.
I know.
Yeah.
I'm special. Lots of fun.
Oh, thank you, John, for playing that. Garrett did a great job. He always does a great job making these videos on the road. And it was a great crowd, a great vibe. And really, it flew by, but we had an amazing weekend.
We did. It went by super fast. And you're right. There were so many people and it was great to meet everybody. So thank you for the production crew, from the production crew to the people that gave up their Saturday. It was awesome. It was awesome.
And a shout out and a thank you from the bottom of our hearts to Bert and Wendy, who took us out on Friday night to an amazing place. I told my husband about it. I want to book the hotel and stay there.
It was out of control awesome, to the point where I don't feel like we belonged there.
You don't think I could go back there? I think it was called the Ambassador in Scottsdale.
I don't know. I'm just kidding.
Well, it was a happening scene for sure, but the hotel was beautiful. The restaurants were beautiful. The rooftop deck was amazing. So we went there Friday night, and I would like to go back.
Yeah, it was beautiful. It was absolutely beautiful. But yes. Okay, so Jenny, we've got, the market is, we're getting the first pullback in a long time today, right?
While we're on, still talking about the show, can we just give a shout out to Evelina and Leo, our two youngest Tasty Traders, two members of Tasty Nation that we met on the road. Can we give a shout out to those two?
Absolutely. And if you want to pop into Twitter, I did not get a picture of Evelina, but here's Leo. And I said, one day I'll be working for you, Leo. That's what I kept saying. Because if you start trading when you're this age, it's going to be amazing what you can do. And I got to tell you, do you know what he did? He came up to me after the show and he's like, I've specifically got a question for you. And I said, okay, what? And he goes, because my talk clearly was the zebra, because I'm dressed as a zebra. I committed fully to my part. He said, what's the difference between a combo and a zebra if they're both stock replacement strategies? And I said, excellent question, Leo. Excellent question. And then I kind of left it off.
He really knows what's going on. He made his dad had told him if he made X amount of dollars in his trading account, he was going to get him a gaming PC, and he exceeded that. He had a great year. So I was really impressed with Leo and Evelina, learning how to trade. It's so much fun to see these kids. And I think a lot of people were inspired. I had a lot of people talk to me about your son starting to trade, just opening his account and getting so excited about it. So it is nice that the young people are getting involved.
I could not be more proud of my son today. No, don't get me wrong. Leo started way younger than my son. And that's what I thought. I go, my son's 6'6", and he just started. Leo, you are well on your way. So this morning when Tesla was up so much this morning, my son likes to scalp Tesla. He sold some to the point where I was like, he wasn't trying to ride the wave. He sold some. And now he can buy it back this afternoon.
Yeah, good for him. Good for him. It's so funny because he's at school, but that's your proof of life. He's at school, but your proof of life is his trades dinging through on your account and your machine, because you have them linked. So his trades, you can see them and hear them as they come through.
I mean, he won't text me. I'd be like, hey, I love you. Have a great day. Nothing. But I get
Yeah, this is insane. Okay. I'm looking at Tesla. You have it pulled up. This is insane. Down $10. Go to the chart. It was up
14. It was up 14. Here, this is what I was going to tell you. So the high was 404. 404. And I think he sold it at like 403. So I got to give JD a huge shout out for doing that. But wait, hold on. Only because my zebra talk was a little bit on improv and all these things. But have you ever seen the one thing where Tina Fey does, saying like having teenagers is a bit like having an office crush? Like, because you think about them way more than they think about you. You're always texting, being like, hey, like a couple of us are going to go have dinner. You're probably busy. Like,
I mean, I would compare
teenagers, and you're always like, I love you. Have a great day. Crickets. Like,
can you compare it to a high school crush and not an office crush? Because you said office crush,
she uses the term office crush. That's the only reason I said that. It's hers, not mine. This is not mine. This is Tina Fey, not Liz Deerking. But yes.
Yeah, I was gonna say there's no office crushes going on at our office. That's for sure.
No.
But high school crush, yes. Now that was funny because I unknowingly and not on purpose had the balloons come up. I don't know if you saw that.
How did you do it?
I don't know what I did. I was talking about when I said, hold on. I don't know what I did, but they just came. They just appeared.
I heard if we can do the heart, there'll be hearts everywhere. Is this true?
Well, yeah, you did this last week.
Oh, did it? Yes. That's why I wanted to say. It's for you, Jenny.
Thank you, Liz. Thank you. Love you too. Okay, so the turnaround is very interesting. This morning, we put on our morning SPX trade, and 5 minutes.
Thank the Lord I got out fast because I just do the puts.
No, so 5 minutes in, I called Liz because I wasn't out of mine yet. So 5 minutes in, I called Liz. And I said, Liz, this is really weird. We're not really moving much. SPOO's down a little bit. We're not really moving much, but VIX is up. VIX is up, and we're not really moving. So I was thinking of taking my SPX trade off, even though I wasn't out yet, because the VIX up when we weren't really moving was a weird tell this morning.
It is a weird tell. I do think that's a weird tell.
Yeah, very.
Yeah.
Very.
I mean, we're down 33 right now. That's bigger than a bread basket.
10-10. Are we going to do Jajun?
Yeah, let's do it.
Do it. Now, okay, I want to say on the road, there were mixed reviews on the Jajun trade. In Phoenix, we talked to lots of people, mixed reviews. Some people loved it, some people didn't. Listen, the trades we do on the show are for me and for Liz. Like, our trades are not trade recommendations.
No.
Liz and I had a lot of fun. We had a lot of fun telling Jajun.
I don't want people to follow us. Find your own trades. You know what I mean? Like, we like this. You know what I mean? You don't have to. There's zero pressure. So we got filled at what price did we get filled? Activity.
260. So put in 310.
That's what I will do today. I just want to go to today instead of like anything else. Okay.
310.
Look, it's already up money.
Anyway, yeah, our trades are not trade recommendations. We've been saying that for 14 years.
So we put it on when SPOOs were down 33. I will tell you that. So that's good.
Yeah.
SPOOs were down 33. So we need them down. I think if we can get down, 28, 29, I think we'll get out of it.
Yeah. Okay, we'll leave it. We're not going to worry about it. The order's in, the working order's in. We're not going to worry about it. Let's talk about some big movers today. The Chinese stocks, biggest movers on the board this morning, I think. All the Chinese stocks were way up, way up.
I want to see, what do we have in the Chinese stock department? I don't think we have anything.
Let's see. I don't see Baba. I don't see Baidu. I don't see Pinduoduo. I don't see DG. Nothing.
Nothing. We've got nothing in there. Okay, well, that's fine. Silver's up big. So, like, silver and gold are up. You've got, what else was happening in here? I'm gonna go P&L. I'm gonna go P&L day, and I'm gonna go the highest through the lowest. Okay. So Let's take a look. Boeing was a big mover. Here we go. Now Boeing, it's not P&L open per se is good, but we're making back $185 today. So we've got a diagonal in.
Here's the great thing about when you follow the mechanics of getting into a trade, you know what price you got in. So like here, I see we have a diagonal, 160, 167. With the 11-day being the 160, I know we got in when Boeing was 160. And guess what? It's just coming back to 160. So this trade is right back where it was when we put it on.
Yeah, it's right back to where it was. Okay, I just wanted to go P&L day to see silver is up. What do we have here? We have a zebra.
Which we should move because it only has 11 days to go. We like the zebras to have at least 20 days. 11 days is getting too close. So I'm glad it's up. I'm glad it's working. We could ratchet this thing and move it out in time.
I think that's exactly what we're going to do.
Wait, hold on.
What am I?
Jajun.
Come on, a little bit more than that.
I'm sorry.
That was the fastest Jajun we've ever done. Watch this.
I had to be quiet for a minute because I'm here all alone. There's nobody here. And I swear my garage door just opened. So I was just like, hold on, quiet. Let me hear.
I thought you were quieting us for the Jajun trade.
No, I was quieting everyone so I could hear if my garage door is opening. But maybe it's just the garbage man.
It probably is the garbage. But look at this. Jenny, 3 minutes, $50. Jajun!
Fastest Jajun fill. This could be the fastest Jajun fill in history.
I'm telling you, that's how mine was this morning, though. So I took $50 out of mine, and I did it within 30 seconds this morning on the open.
Okay, do me a favor. Do me a favor, because I looked at this today. Go to put on the trade. Just go to put on the trade.
Wait, my trade? My trade or the
trade? Just go to put on the Jajun trade. I'm not gonna have you send it, but act like you're putting it on. Put it on. And then hit review and send. I wanted to see this. Okay, so here's what I wanted to see. Commissions, $2 plus $1.54 fee. And then getting out, I looked at this morning. So getting out is just the dollar, for us, it's
just the $1.54. Yeah.
Yeah. So for us, it's $1 in, $0 to close. That $1.54 is not our fee. It's another fee where everyone has it everywhere, whatever firm you're with, that fee is a separate fee. So $3.54 in and $1.54 out. So $3.54, $4.54, about $5. So I know we had someone saying the fee on the Jive trade is too much. If we make $50, we're taking home $45. And I put on SPX trades.
I will do that until my hands bleed if it's going to be $50.
And I take $50 out of SPX trades all the time, and I'm fine with that.
Yep, because the risk is off the table, and you got it in 3 minutes. I mean, sometimes it's not. I was talking to somebody too about this. I mean, it was a hot topic on the show this week, or the tour this weekend. So I was talking to somebody, and we've kind of changed our tune a little bit on this. Where at the end of the show, if we put it on at 10:10, and at the end of the show it's a $10 loss, we're taking that. A lot of times we're just closing it and not letting it go to that 250. We're giving it the hour because the whole point of the trade was it's a 5-minute up bar. It's a quick scalp.
Right. It's a quick scalp. Now, in the end of the day, I think fees are a bigger percentage. Like maybe, I don't know exactly what percent my fees are of my profits, but you could expect your fees. I wouldn't be surprised if my fees were 10% of my profits. Here, the fees are 10% of the win here. I wouldn't be surprised if my fees are 10% of my profits.
But that's okay. But because traders. We're over traders. If you're worried about fees, you're not doing this trade. If that's what because people hang their hats on different things, right? People hang their hats on totally different things. And if I don't think about commissions because they're so low, I would rather take my profits and take my risk off the table. But that's how I trade.
It's so funny because we grew up in an era where we've been trading since the 90s. It used to be $25 to open a trade. So $1 to open a trade and $0 to close. I don't even think about it. But if you do, and we did, talk to some people who were, they really were concerned about fees. If you're really concerned about fees, collect more. Put on trades where you collect more. Put on trades where your profit target is higher. If you would want your fees to be a smaller percentage of your profits, then put on trades where your profit target is higher and you're collecting more, taking more risk, but collecting more.
That's what I'm saying. For every give me, there's a gotcha. And trading's a personal style. This is my personal style, right? Like I do this. I did it this morning. You and I both did it this morning where we put on a trade trying to take out $50. I'm okay with that. I'll do that a couple times a day. And if it works, I will gladly pay X amount of dollars in fees. You know what I mean?
Right. Yeah. I mean, my goal right now is to try to make about $100 a day in SPX. Yeah. And that's maybe baby small, but that's all I do. Like $50 here, $50 there.
Yeah. I mean, I was talking about that with a lot of the people too, especially with my son. He's scalping stock and he's scalping $20 here, $20 there. I think that's what he did in Tesla. A $20 scalp in Tesla. This is a $50 scalp using $250. One share of Tesla is what, 300 something?
Yeah. Well, and okay, Tesla's one of the few stocks that you can do that in where it's having those big moves. Most stocks you can't buy a share and scalp $20 out of it. It's not moving $20 a day.
No, it can't. But they're small. That's what I'm saying. Like trading is a personal decision. And I like this with this trade. We're not saying that we're going to be up on the day. I'm not even saying we're bullish. All we're doing is trying to get a quick scalp by a research piece saying that sometimes when the European markets are about to close, you get a wee bit of a pop. That doesn't mean it's not going to.
And I did talk to them. And they said it had nothing to do with European markets. It's morning versus afternoon. Like more 5-minute down bars in the morning, more 5-minute up bars in the afternoon.
Right. Yeah. True story. Okay, let's go back to our account. So we've got silver. We're going to close this position.
So here's the winning zebra. The ratchet is just closing the winning zebra and putting on a new one. Do we want to keep a bullish position going in silver?
Hold on. I want to do something real quick. Number one, I'm just going to do this to put some emails and some things to bed. Okay, this is everybody sign up. The digital collectible for the one that we went on the road with is this weekend. So come one, come all, sign up. Number two, if you go to the website, tastylive.com and go to on demand, then you go to this tab that says Liz and Jenny, go all the way down to this Liz and Jenny strategy series right here. These are all the strategies. And I talk about all of these, minus the Jive trade, which I think we need to put on here, to be honest with you.
Yes, I think we should. Let's talk to Jessica and try to add the Jive trade in here.
Because all of these that we have created and named are all on here. And here is the zebra. This is what I talked about. I said, if you need this, I've emailed this out 50 times but sideways this weekend because I put my email up and said, if you have any questions about the zebra, I'll send you the video. Here's the video on how to put it on. What Jenny and I are about to do right now, and you're going to see it, it'll be in this archive, is the ratchet. Well, actually, we're reestablishing it, but the ratchet is also a management strategy.
Well, this is the ratchet. I mean,
we're moving it out in time.
Yeah, but it's winning. So the ratchet, you can always, you don't have to stay in the same cycle.
But we're going to be paying for it. A lot of times with the ratchet, you're taking into credit. When you move it out in time, you're going to be paying for it. That's all I wanted to say.
But paying less because we're getting such a credit from the winning one that we're closing.
Yeah. So
it depends on how far you take it out in time.
Well, I mean, we're going to go to the regular one.
Yeah, just go to Jan.
So you just established with selling a 50 delta and buying 270 deltas. Oh, we're taking in a credit.
Taking in credit. Because it's not like we have one that's a breaking even. We have a winning zebra that we're closing.
Yes. And so take a look at this, Jenny. We're silver is up $1. We are taking this out in time. So if our trade price here is $275. If we take in an additional $1, all we have here is $175.
I know. So we're taking our risk down, moving it out in time. This is the great thing about the zebra. The zebra in a bull market has been an amazing trade. Amazing.
Yep. And done and dusted. So we've got only $1.75 in risk in this.
Mm-hmm.
It's pretty good. Okay.
All right. So another big mover today. You're sorting P&L.
I sorted P&L day and I'm going big movers. Target is up next. Oh, we've got to do something here. Oh, Jenny.
Wait, just put this on. All we did was sell put spread to buy a call spread. That's it.
Correct. And it's through our call spread. So we made almost full profit.
Right. Yeah, you can see when you do them in the weeklies. This is why I like these in the weeklies. We compared this to the buffer, and you used to like the buffer short term too in the weeklies. So I've been doing these a lot just to keep my risk defined, but have a bullish trade if I want a bullish trade. Buy a call spread, sell a put spread to pay for it. You're 20 cents away from full profit.
So they're giving me a hard time about the put spread. I'm gonna close them separately. Okay.
Sure. Can you get almost $2 on that?
Yeah, we'll need to. That's good.
So, all right. My job is to push trades out, and unfortunately, I couldn't get Jajun in and out quick enough. We were in and out. We were in and out it so fast. I couldn't get it out in time. Not that it's a recommendation for anyone to follow anyway, but you know what I'm saying.
None of these are trade recommendations. Look, SPOOs are only down 23. Cancel crash.
I know.
Okay, kind of going down the line. SPY. This is our...
There was a viewer's trade idea on Friday, I think, or a few days ago. They wanted us to do a crab, a bearish crab in SPY.
And that's exactly...
They were looking at ES, and we made it really small scale in SPY. So good for him.
This is a bearish crab in SPY.
And he did it in ES, so good for him. He's up way more.
Can we take this off?
I mean, I'm not looking at it. I'm pushing out trades, so.
So we're up 15%. We're up $50. So here's the deal. Our trade price was $370. All we can risk is $370. It's a bearish trade. We made $60 on it, $58. Do we close this and how? Yeah, because it's 11-day, 25-day. Let's close it.
Sure, you can. I mean, he might keep his on if he's looking for more profit potential. But I don't care.
Yeah, I have a closing order in. I didn't put a GTC. I put a closing order in. If we get filled on that, great. Walgreens Boots Alliance up 37 cents. I'm going to go past those two quickly. Our MCL, this is up today, but it's $4. It's just up for the day.
But will you please put in a GTC for that micro crude put?
Sure.
That way we don't have to worry about it. If oil pops up, this will hit.
Perfect. And it did pop a little bit today. Gold. This is another one we've got. What do we have here? Oh,
like a Jade Lizard with 2 put spreads.
Jade Lizard, 2 put spreads. We've got our GTC in. I'm going to leave that.
But I will say, Liz, so with the Jade Lizard, Well, it's not close yet to the calls. The calls are
That's what I was saying.
2.56. Yeah.
It's not close to the calls, but we're getting all of our, the calls are actually losing. We're getting all of our profits from that put spread.
Right.
And it's not close to the calls.
I know. So we've had, here's the thing though. We've had it on for 7 days and we're up 26%.
Okay, so let me ask you. You were the jade lizard on the road. I was the zebra. You were the jade lizard. What do you say? Profit potential for a jade lizard? Because I agree with you. Usually I'm okay with, 30% in a jade lizard.
21 days, 50% or 21 days.
50% or 21 days. Then we said, okay.
Then we wait.
Moderna put spread 30%.
And this, any 5 day ago trade, this was what your assumption last week. So these were great ideas from some of our viewers.
Yeah. Leave it or close it. Close it.
I mean, I think it's weird. Like, we didn't close gold, but Moderna, it's not like something we're always trading. Pop up in Moderna today with the market down. I'd take it. I'd take it off.
Yeah, I agree. Well, if it closes, great. If not, these aren't GTCs. Okay.
We've been in, and again, it's weird as we get to the end of the year, but we've been kind of in like profit protection mode.
Okay, so that is our profitable ones. I'm going to flip the cards over and then we're going to pop into Twitter, okay? Flipping the cards over, the only one that we need to kind of look at would be, this is a zebra that we have in CCJ, which is always makes me think of Victor Jones. So this is a zebra we have in CCJ. It is not to our long yet. That's when we would reestablish. I think we said on this.
Right, we wait. The odd thing is that the long has been, it says 54 days and the short 4 days.
Yeah, hold on.
I think this was like a zebra that we adjusted, and then we were crossing a strike, so it didn't adjust the strike of the new price. Because if we put the zebra on when CCJ was 60 and it's trading 58, I don't
Jenny,
know.
I know exactly what happened here. Okay, so we had the zebra and then we had a short call against it. Then when it gapped down, we bought back all of our short calls. Then we added back this short.
Okay.
So this is actually profitable.
This trade itself is.
This trade itself is.
You think so?
We have a defined risk, but it's still.
Let's just leave it. I would say. Just leave it.
Okay,
right?
we'll post that because I want to be long-term long.
Yeah, I like to have a little uranium and a little nuclear. CCJ is down, so is OKLO. They're both down, but I'm fine keeping those.
Yeah, me too. Okay, now I'm going to pop into Twitter. What do you think?
Sure.
Now, for the record, I did glance up at the chat. There is no Jajun video. Somebody said, I'm going to watch that Jajun video. What we're saying is there is no Jajun video. The Jajun video is done on a daily basis on our live show. So you got to watch the live show to see the Jajun video.
Right. We were saying maybe we'll try to make one. We'll talk to our production crew and see about making one. Okay. In Twitter. Oh, Frank. So this is great. If you're on YouTube, Frank, and it was great to see Frank in Arizona. So much fun. I was happy to see Frank. Frank, I felt like you today. I was raking leaves all morning. But he will take your post from YouTube and share it with us. So this is from YouTube from Ben. 7 of 7 success on Jajun since November 14th. Nice.
Congratulations. That's fantastic. Yeah. Love it.
And so to that point, like if you have one, and we've talked about this, in an hour, if we have a loser and it's a small loss, $10 loss, $20 loss, we will close it. We aren't anymore just saying like, leave it to the end of the day and let's hope it comes back. Because if you've won 7 times, but you have to take just a couple small losses, it's not going to wipe out your profits.
No, it won't. It won't. I kind of like our new management of that, taking a look at it or, closing it first, like a scratch. If it doesn't happen within the hour, we're closing it for a scratch instead of just like winging the prayer programming it. How about a reverse Jajun on days like today? So reverse would be buying the put spread, and absolutely, honestly, that's what I love. Take whatever trade you want to do. And if you think if you think you're going to get the small pop down, go for it.
I mean, I wish when I saw VIX up and the market down, SPOO's down 5, I wish I would have done a reverse Jajun.
Yeah. Yeah, right.
Jajun, love it. Love it.
We love this guy. Okay, so today, AI has earnings today. I didn't know that. Oracle, MDB, MongoDB, Toll Brothers, and ASO.
Okay. AI, Oracle, MongoDB, Toll, ASO. We'll take a look.
Okay, so let's take a look at those. I'm going to go to Oracle first, okay?
SPO's only down 22. Cancel crash.
Yeah. Cancel crash. Cancel crash. Okay. Oracle. It's 100 and did you know Oracle was $191?
No, I didn't.
Me?
I wish. I mean, some stocks have had crazy runs this year. That's what I know. Some stocks would have crazy runs this year. I wish Intel would have some kind of crazy run like this.
So look at this. So this is today's. It opened at 196. The high was 198, and now it's down on the day.
What a weird day, right?
It's a weird day. Okay, so in Oracle, I mean, it's a $15 expected move, so your diagonals are going to be too expensive.
I'm not playing Oracle, not with the $16 expected move, and Oracle's gone from 120 to 190 in the last 2 months.
And I spent 30 cents.
Oh, for the 217 calendar. For the 217 calendar.
May I?
I mean, I'm not pushing that out.
Okay, but I'm gonna send it, but we're not gonna push it out.
That's not gonna show up on the follow page.
Okay, so Oracle. Let's look at Toll Brothers.
Okay, Toll 155. Go to the chart. Copy this chart. Toll. Everything is. I
mean, I wouldn't have guessed Toll Brothers was 155 either.
No,
these are clearly things I don't look at that often.
I know.
155. Jeez. Okay. But wait, hold on. I'm just going to go back to Oracle because I just want to see something. I mean, here we've got a 92 rank. This is what I found odd. So I get it's a 190. You got a 92 rank in Oracle. I want to see where the skew is, if you don't mind.
I'm sure it's to the upside.
It's got to be to the upside, right? It looks kind of. It's trading 190. Let's just use 190. And so let's go 180 and 200. It's upside.
Yeah, it's upside.
And even if I skewed it a little bit to the upside, because say it's,
right, it's still
upside.
Still to the upside.
So you're saying there's a chance on that.
There's a chance that your 217 calendar is going to come in, Liz. You got a real chance. Let's take a look at AI because that is something that you have.
I do. I don't know if I still have it. I got it. I'm sure I still have it somewhere. AI, $40 product.
And what has that been doing? So
that had this major move right here. I mean, don't get me wrong. It's still like in an upward trend. And I'm not saying a trend because I don't know if it's a trend or not a trend. But here.
So how high did it get when like the AI boom started and this was really going crazy?
No, it was pretty cheap. It was a super cheap stock when the AI boom started. Like this is.
No, but like I knew it ran up, so it got up to about $52. I see.
So it was here.
Oh, there, yes. Yeah.
I mean, only because it's got that name, right?
Right.
Everybody's like, I need AI, and then everybody started buying AI because they thought it was AI.
I bet a diagonal here would be pretty cheap.
I'm sure they are, because look at that. Okay, let's take a look. So I'm going to go diagonal. I'll go upside and or downside. I don't care. I'm going to sell the 49 in the 4-day in a diagonal. Then go to the 11-day and buy the 42. So yeah, that's cheap.
Yeah, they're cheap. Like when the diagonals are cheap like this, I don't mind them.
Yeah, I'm putting this in.
Sure.
SPOOs are only down 21. It's crazy.
Okay, so that's in. And I don't know that there were any what's MongoDB up to? MDB.
MDB 50. Oh, geez, it's a $300 stock. I don't want to touch this with a 10-foot pole. Oh, I do want to go. I mean, I do want to go back to Toll Brothers. I don't want to trade Toll. I just went back. We stopped here and then I went to Oracle real quick because I saw the rank.
Mm-hmm. I don't know what to. I don't really have an opinion on Toll.
I don't either. I'm not going to put this in, and it's kind of wide markets too, and only 500,000 shares have traded. I just want to look at it.
It's kind of expensive.
It's expensive. I'm going to get out of that. Okay.
Just for like an earnings shot in Toll. There are a couple things I wanted to look at today.
Look at this. We would have been out already for a $10 win. My Oracle 217 calendar. If I would have gotten
that could be wide markets.
I don't know. Let's take a look.
Let's see.
Oh, I'm still on Toll.
Yeah, it could be wide markets. Yeah, Oracle hasn't skyrocketed since.
No, it's super tight.
Oh, 141 if one. Check the 11 day.
Oh, 20 cents there.
Yeah. I mean, what? Liz, did you put it in? I told you you could put it in. Oh, okay, it's working.
I did.
It's working.
I'm not gonna pay up for it though. That's my problem. You know what I mean?
Yeah. I think 30 cents is fair.
Yeah.
It's just so it's just so far. Like if you think it's going up, you can just buy like one.
No. I mean, once again, to those of you just joining, none of these are trade recommendations. That's the dumbest trade anybody can make. That's giving away $30. But
it's giving away $30. And for those concerned about commissions, it's giving away $32.
It's giving me $32. But this is a level of engagement. And whenever thing says 217, I do it because it's my name upside down on a calculator. So I love it.
And there have been trades where I was like, you're bonkers. That stock's never getting to 217, and miraculously it does.
This was my creme de la creme. I think I put on the 217 calendar when we were like here.
Oh, I know, and I was like, yeah, good luck seeing that at 217.
You lost your damn mind.
Okay, so we talk about getting trade ideas, right? So why do a lot of people watch this network? To get trade ideas? Not necessarily our trades, but just you hear of a product and then you think, oh, I'm going to go look at that product, right? I'm going to see if I can find a trade. So this morning I was listening to another network early before our network came on, and some guy who has a fund or manages a fund was on there talking about getting out with the old and in with the new, and what were some new products they were putting into their fund for this coming year that they thought had potential. So I wrote said products down and thought, I'm going to look at these, not to just go buy them, but to see if I'm interested in selling puts in any of them.
What was it? Talk to me.
Okay, Cake was one of them.
Cake? What is Cake?
Cheesecake Factory.
Oh, I might have been listening to the same thing you were.
And so I did go out to Jan and sell puts in there. Not the 11-day. I just went to the 39-day and sold the 47.5 puts. And I mean, I thought 47.5 puts for $1. Let's talk about this versus buying the stock.
Okay, so you're looking at this. Oh, yeah, we can go through this whole little exercise, Jenny Andrews. So if you're buying the stock, you go up here. Now, this is a margin account. You're going to go and you're going to put $2,400, $2,435, and you have 1-for-1 profit potential if it goes up.
Right.
Next.
I just went to Jan and sold that 47.5 put, thinking if they're bullish on Cake here, I would get in then at 47.5 minus $1.30. So you're looking at 46 and 20 cents, 46.20. So I'd get in at 46.20 instead of 48.70. I'd like that better. And it's only using $854.
And then, so can I only, just because I've got zebras on the brain, I'm also going to show you, and I like this, no matter what, is always going to be cheaper than buying the stock, going 50 delta, 7 delta. So here you're putting up $600, which is less than the put in this scenario, but you don't have that room to be wrong. So if you're going to go out and buy the stock and you understand synthetics, and I'm talking to you, Leo, because Leo understands this. If you want to be long something and you know how to manage it, this is your stock position for 39 days and you're only using $600. Your defined risk at $600.
So here, and this is a good point, because he wanted to talk about the difference between a zebra and a combo. So here is a zebra where you're paying $635. You essentially own 100 shares. You control 100 shares of stock if Cake goes up, but if it goes down, you're only risking $635. So you see your loss is capped to the downside, but your profits are unlimited to the upside because you have that extra long call and you're washing extrinsic value. So you make money 1-for-1 right there where that red flag is, where the stock is trading.
Now, and to Leo's point, so Leo was asking me, and I love that he asked this, because he said, okay, what's the difference? You said it's a synthetic stock position. What's the difference between that and a true synthetic? And a true synthetic is the combo, right? Where you're buying a call and selling a put. That washes extrinsic value, but that uses it. So in stair step of capital, number one, owning the stock is always going to cost you the most. But if you've got so much capital, who cares? Like Tom Sosnoff doesn't care if he goes out and buys something. But the combo is less capital than going out and buying the stock. But the zebra is even a step down from that in capital.
Right. And so here we're using almost double the zebra. You're watching extrinsic value and controlling 100 shares of stock, but you have the risk to the downside, where in the zebra, the risk to the downside is capped. If you go to the analysis, you see your risk is as far down as cake goes. It's not capped at the price of the zebra.
But this is a true synthetic. Synthetic stock.
Yes. And so, I heard them talking about this, and I just opened my platform and sold a put. I didn't even think about it. Like, I didn't look at a diagonal. I didn't look at a zebra. I didn't look at a combo. I just opened it up and sold a put with a 31 rank. I thought, I'll take my chances.
So, and I actually kind of like that, Jenny, because a lot of times you and I, and this is where the zebra was formed. So if you get the digital collectible, I will tell you about this. So the zebra actually came to light because we started with puts. And then when the put became so deep in the money, it had very little extrinsic value, right? So we wanted to be long the stock, but we wanted to have the stock, thought it was going to maybe come back, and wanted to do something that wasn't going to hold up as much capital.
It was the after effect. And so, like, when you look at that 60 put, let's say cake, we're trading 60 and we sold the 60 put, and now it's trading 48. And to roll that 60 put is going to give us no extrinsic value to keep rolling that. But then we don't want to go and roll from the 60 put to the 50 put, because then if it shoots back up, we've locked in a loss. So that's why we would close that deep in the money put on a zebra. So if it shot back up, we're not locking in a loss and we're just long the stock.
Yeah. Right. Crazy, right? So that's where it was from. So I kind of agree with you. Don't get me wrong. I love the zebras, but I think they are, I typically don't start with it unless we do have that, like, what's your assumption that we do all the time. And if somebody says to me, I'm extremely, or they put one of those, I'm aggressively, then I'll start with the zebra.
Right. But usually I'll start with the put. If I don't mind. Oh, we're filled in AI. If I don't mind getting long the underlying, like if I would not sell this put if I said to you, Liz, if cake drops to 47.5 or 45 or whatever, I can't afford to be long 100 shares. I can't afford to keep this position. I can't afford to have this position going. Then I wouldn't sell that put.
Right. And
so I think that has to, in order to be able to manage a trade, you have to be able to afford it if it goes against you.
Yeah. No, I agree. And I also think, and I'm not putting words in your mouth, you don't care that much about cake. You'll take your $100 and probably never look away and be like, I need to make 500 in cake.
No, but I don't mind, like, if, I don't mind every month if I'll try to take 50% out of this, and then, or at 21 days, move to the next month. It'd be great to keep this going and make $100 a month in cake if I could keep it going and keep selling puts in there. That'd be great. But I will say, I'd be happy to meet you at Cheesecake Factory someday, now that we're both getting into cake.
I would be 100% willing to meet you at Cheesecake Factory, for sure.
They have that good soup.
I know, it was really good.
Yeah. Next time I'm out, it's right in the middle of us, too.
I know, it is. It's smack dab in the middle. I'm in, because I'd like to do some shopping, too. Let's meet there.
Yeah. You know what? There really is some shopping I have to do over there. So pick a day and I'll meet you at Cheesecake Factory.
Yeah, let's do it. I'm in.
And we'll ask if they give a discount to customers who own the stock.
Well, I mean, Royal Caribbean does. Let's see what that thing's doing.
But RCL, don't even show me the cruise lines. Ooh, is that down $10?
You're seeing it down $10? I'm looking at the price. It's $250?
You're not in it anymore?
No. I get in it right before my cruise by selling puts. The last cruise I was on, I was selling the right here.
No.
March.
Okay. I was gonna say go to Carnival, but don't. I don't even want to look at it. I don't even want to look at it.
Close your eyes. 25. That's nothing.
Well, I guess it's not that bad. Yeah, that's fine. I'm not that upset. Carnival 25, 41 rank. Earnings coming up. I want to see how much the expected move is. 189.
For the earnings, it's right here.
You know what I got out of Carnival? I've got a new kind of trading mentality. If I don't,
oh my God, we're filled in Oracle to do something. I apologize, Jenny. Oh. I'll give you $30 when I see you.
Thank God. We got filled in. This is not my money. If I don't like the product, if I I've decided if I don't like the product or I'm not using the product or I wouldn't use the product, I'm getting out of it in my account. Or, like, I'll trade it, but I'm not going to have risk where I'm just long it. So that's why I called up and got out of my OTC Spirit Airlines. That's why I got out of my Carnival. That's why I also,
You've never taken a Carnival cruise. I always thought it was weird you were long it. You hate Carnival cruises.
Only because it had not gone up nearly, like if you look at Royal Caribbean or other, if you looked at like some cruise lines pre-pandemic and how they come back, Carnival never came back. It's pre-pandemic was probably 50. Now it's only 25.
Yeah, but I don't think it's ever going to come. I don't know that.
That's why I'm out of it. I'm out of it. I'm out of my Carnival, but the Disney carnivals are. I was trying to get the confetti like it's a carnival,
and then you just got real dark.
Yeah.
You got real dark. It's like it's raining. Yeah. Why are you making it rain?
I don't know. I'm doing 2 thumbs up. Do your thumbs bent back like this?
No, mine don't. You have the weirdest thumbs I've ever seen in my entire life. Mine is straight. Like, you'd be a good hitchhiker because this is as far back as my thumb can go.
They both go back.
Yeah, mine don't. You'd be a good hitchhiker, except I'd never see you hitchhiking because you're too risk averse. Okay, so I'm going to pop back into Twitter real quick. So we're filled in AI. We're filled in our Oracle trade. We didn't do anything in Toll or ASO. I know Frank came in. Can somebody do me a favor? And maybe I'm talking to Frank. I know this week there's the CPI, right? And that's on Wednesday. Can somebody confirm that it's Wednesday CPI number? That's all I'm asking. I'm not asking you, Jenny. I'm asking somebody else.
It might be. I mean, Vanetta gave a rundown of what was going on this week.
I think it's CPI.
Did someone say, oh, Mikey, you want to meet us at Cheesecake Factory too? Sure. Yeah. If you want to drive out to Orland Square Mall in Orland Park.
The address is. Okay. Look at this. I put a zebra on in Baidu on Friday. I'll take the 10% update, ratcheted up and almost playing with the house of money at this point. Love the zebra trade. That's right.
Yeah, love that. Love that.
Retweeting this. I love the zebra too. Because when you ratchet up, at some point, when you're getting an up move, if you keep following it up, you can have this trade on for a credit.
I know it's hard though. It's hard. So this morning, right, all the Chinese stocks were down. So I just got out of mine. Like I closed my Baba, I closed my Pinduoduo, and then I called Liz and I was like, I closed everything. I don't have anything. And then after talking to her, I went back in and put more trades on. Got back in.
But the China stocks are still up.
Oh, I know. I'm not saying they're down. I'm just saying I was content with just like getting out. But then after talking to you, I got back in.
I doubled up to catch up in JD. So I've closed all of my Chinese stocks and I put everything into JD.
That's fine. That's fair. They'll move.
They all move. Yeah, when they move, they move. Yeah. But I love it. Congratulations. I love the zebra. Zebras are great. It's like you have to learn how to harness the power of the zebra, right? Because if you just leave it and it's going against you, it's not a good trade, right?
But then you can't, if you keep moving it down as the stock goes down, you could give up everything you made. You have to be cautious. You have to be mindful of it. It's a smart trader's trade. And
that's what I said. It's a smart trader's trade. It's a little bit more complicated for the Gen Pop, right?
Yeah, because sometimes if my zebra gets so far down and I don't want to put that much into it to get back into another zebra, sometimes I'll sell out all that out of the money credit and put on a diagonal. Sometimes I'll change it because I don't want to keep throwing like good money after bad. Or keep putting more money into a zebra as it's losing because I don't want to give up everything I made on the way up.
But I mean, you and I are over traders, right? I know this. So I'll go from zebra to short put to diagonal to an in the money call to like whatever the wind takes me that day and whatever I think I need to do. I'll go from a zebra that's longer term to one call that's a weekly just to protect myself where there's less risk on the table. We run the gamut. There isn't a club in our bag that we don't use.
Yeah,
right?
No, I don't know where you were in the room, but someone was asking me about Spirit Airlines, and I was like, hey, I was talking about my year-to-date P&L in Spirit Airlines at the end of the year, and I don't have it anymore, and it is not bad at all considering how much I had of it. And they're like, how did you manage that? Because we're always changing. We might have changing what we have on, right?
Always.
Or selling strangles around it, or adding more short puts, or adding short calls, or adding, like, we're always adding to our positions and adjusting them. We rarely just put something on and just sit there and leave it.
Right, absolutely. Oh, Frank, thank you so much. Wednesday, 8:30 Eastern time. CPI.
At 9:30 our time.
9:30 our time. Okay, thank you very much. We'll be at the SIBO floor.
No. 7:30 our time.
Oh, then we won't be at the floor yet. We'll be...
Yeah, early. It's early.
It's early, okay. Thank you very, very much. Okay, Mikey, okay, not a trade recommendation. I think Tom would call this reverse stupid in Amazon. Buying a put spread, financing most of it with a short call spread in January. Yeah,
Mikey,
yeah.
I love this. I love buying a put spread and selling a call spread to pay for it, or vice versa. I've been doing a ton of these.
Yeah, for sure.
But let's look at it in Amazon. Let's get in with Mikey.
Let's take a look. He's got a bunch of tweets coming in. I just want to see what this one is too. Hold on. Okay, keep whispering silver to the money tree. Closed out of 3 contracts for a total of 700. Good. Any thoughts on playing Amazon? Okay, this year's been on a tear. Maybe a reverse Jade Lizard with IBR. Okay, let's take a look. So
and then we'll get to Alan too. While we're in Twitter, let's just talk about Alan's highlight is from Orlando. Liz, have 200 shares of AI. Would you do a 55-30 strangle around it for Jan expiration? Is there enough of a crush?
So yeah, they have, Alan, I'm in a very similar situation. So Jenny, pull up the tweet and we'll go back and forth, but I'm going to go to Alan first, right? And then we'll and then we'll jump in with the Polish warrior. So I'm in a very similar situation where I have the shares. And so you're looking at, I forget what cycle Alan was in. Hold on. Let me look. You saw my calendar.
Well, no, he has 200 shares. He's just looking at, does it make sense to sell a 55-30 strangle in Jan? But
so 55-30 in Jan. I don't know that I would in Jan. So this is an opinion, just an opinion, Alan. So when I'm waiting for earnings, I'm looking for a big vol crush. I would probably bring my strangle in, and I'm going to bring my strangle in. I'll probably go to like the 11-day and sell something. And then once the move happens, I'll move this out to January. Because if you're doing it for earnings, this vol by Jan, it kind of comes in a little bit, right?
Well, and you could see you've got almost a $7 expected move in the 4-day. Then you go to $7.50 in the 11-day and $8.90 in the 39-day. When I'm looking at that, I'm probably just sticking with the 4-day.
Yeah, that's what I was going to say. For earnings with the vol collapse, with a 75 rank, I'll probably stick in the 4-day. You can go to the 11-day if you want a little bit more room, because that will give you a little bit, especially if you're planning on rolling it out in either direction. Mm-hmm. But I'm going to go a little, personal opinion. But Alan's such a good trader. He knows what he's doing.
Yeah.
So.
But again, if you're selling strangle around it, just realize if you have 200 shares and it has a huge fall, you could end up with 400 shares. So that's just it. If I will sell strangles around my stock if I'm not at my max size. So if I think, I wouldn't mind 400 shares or 500 shares and I have 200, well, yeah, then I'll sell some strangles around it. But if I have my limit, then I'm not selling strangles around it.
No, I agree with you there. It's pretty interesting. A lot of times with earnings and something that I have, I'll sell 50% of the strangles around it. Because to your point, if it gaps down, then I am adding only one extra one on there instead of the whole thing. And if it gaps up farther, I've still got that extra long. A lot of times I like to do that through earnings.
And another thing that you'll do quite a bit would be do a wide ratio spread on the downside.
Oh, yeah. To protect it, I would
protect it in case it goes down.
Wide ratio spread. So I've got 150 here. I'm looking for right here.
And then make it as wide as you can and take in nothing.
Won't let me move these, Jenny. It's making me so mad. Okay, hold on. Yeah, there you go.
Okay, there you go. So like if it goes down, you can, that trade can make some money back. But if it goes down too far, then you would get long extra shares.
You're long extra shares, right? That's sometimes what I'll do to protect it.
Mm-hmm. And I don't mind that. I don't mind that either because it gives you some protection to the downside.
Yeah, it's not bad. Okay, now let's go back to
Amazon.
Did you have Mikey's
so here, Mikey went to January. I've been doing these every week where I, buy one spread, sell another to pay for it. I use the weeklies. I use 1 week out or 2 weeks out. I don't use the monthlies, but Mikey went to the monthlies, and there's nothing wrong with that.
Well, it's for me, it's hard with debit spreads because debit spreads don't really fully come in until the end.
I know. So, but here you see the calls would have to be pretty close. Like you'd have to be so close. Maybe go 1 more week out. Maybe go from the 4-day to the 11-day to give a little room on the calls. So if you sell the 235, 237.
Okay, so he was bearish, right? So 235, 237, that'll give you 66 cents.
All right, then you've got to bring it in one. Like, I'll look at this first because you can get.
I'm gonna go $5 wide.
Okay. And then buy the 227. You're gonna buy that put spread.
Yeah, 20-cent credit.
Yeah.
That's not bad. So you got a 20-cent credit, but you have $500 in risk to the top side.
235, 240. Mm-hmm.
That's not bad.
Now
you could make it narrower.
If it goes up in between that 235, 240, then I'd roll that out in time. But then you're going to work with the credit.
I'd rather pay that little bit of a debit.
This is what I usually do: pay a small debit and have a narrower spread.
Oh, we're jumping with Mikey. I'm in. Well, I mean, this isn't his trade. Once again, this is what I love about Tasty Nation. Mikey said Amazon, set a bearish trade. We came up with something, a version of it that was ours.
The only reason I do them short term is that put debit spread will only be full profit if it's close to expiration. But if you go out to Jan, gives you more time to be right.
It does. It gives you a lot more time to be right. And you can manage them both kind of separately.
See where the VIX is now. Is the VIX, because when we started the show, VIX was up like $1.10, I think. Now it's only up 92 cents.
This is
and
where
this
it was
morning
this
it's up about 80. Yeah.
Yeah, that's crazy.
I know.
Hold on. We have about 5 minutes left. I'm going to go back to Twitter and just make sure we got to everybody.
And I'm going to make sure I've been pushing everything out on the follow page.
Very much. Yeah, so we did quite a bit today. I'm going to pop out the side and kind of go over everything that we did to make sure that you've got it, okay? So activity today, all symbols. And I'm going to go bottoms down. Oh, look at this, Jenny. I don't know if you pushed this out. Our SMCI GTC got hit this morning at 8:30.
Oh, good. Where is SMCI today?
Let's take a look.
I did push it out.
Okay. So SMCI, we had a, what was it? A put vertical.
Okay.
Great. Perfect. So our GTC got hit in SMCI this morning at 8:30. Then our Jajun trade went in at 10:10, out at 10:13. 3 minutes, $50. Awesome. Our SLV Zebra, we rolled and ratcheted from December 20th to January 17th and took in $1 credit. Now we only have $1 and change in risk in that. Target, we closed and did not reestablish. Bullish trade.
Did we get filled on both sides? Because remember, we closed them as 2 trades. Yeah. Okay. We did get both sides.
They're both there. SPY, we closed that as well. That was a downside crab. AI, we are in for earnings, just a diagonal. And Oracle, we've got the 217 calendar.
Let's go, Oracle. If it goes to 217, won't you be mad that you didn't look for more profit potential on its way to 217? Because let's take a look at Oracle again. Where is it? It's not even 200.
No, it's 190.
I'm just going to see in the 4
so far, so in the 1 day. Well, look at this though. That's what I'm saying. Look at why this is $10 out of its expected move for the cycle, and it's still worth $1.40. That makes 0 sense to me.
If it goes up high enough, if it goes up the expected move, that 217 in the 10-day, I'll have something in it.
The 217 in the 10-day will have something.
Or the 11-day, yeah.
Yeah.
Right. This could be a calendar home run, Liz.
Or we lost $30. I think that's more likely.
All right. It was a busy show for sure. I think we got to everyone in Twitter.
Yeah, I know. I think we did. This is great. Okay, Jenny, it is. Yeah, we are over for today. It's Boozer down 20. Let's ask what do you think is going to happen the rest of the day?
I don't know. I really don't. I thought if we were going to see a continue. Oh, okay. I think we might be down more because sometimes it's like out of the blue, all of a sudden we're down. There could be someone unloading before the end of the year that needs to sell some stuff. That's like selling stuff.
That's a possibility. It is a possibility. It's kind of crazy though, right?
Yeah. I may put on a bearish Jajun right now. I may put on the put spread right now.
I think we're going to end unched.
You think so?
I do. For no real reason. So
Call me and let me know what's happening, because I have to change a shower head. My daughter's shower head broke, so I have to go to Home Depot, buy a shower head, change a shower head. That's what I'll be doing.
When did you turn into a plumber?
You just have to unscrew one and screw the next one on.
Oh, I'll be at my doctor, but I will have my computer with me. I'm always watching. I'm like Roz. So I'll let you know when it does.
Text me.
All right, everybody have a wonderful afternoon. Good luck with your 2/17 Oracle calendar, Jenny.
Have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. as you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Don't die like squirrel.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and of course, Ryan Grace in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in tastylive, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, crypto, anything you got, come hang out with us for the next hour of the day, my favorite hour of the day. I get to spend it with my guys, Mike, Ryan. Ryan, how are you, sir?
What's up, dudes? I'm doing well.
Back.
I'm doing well. Thanks for asking. I feel like we haven't all been together for a couple weeks, so this is going to be fun.
Yeah, it's our first one in a couple sessions because I was out, you were out. Mm-hmm. You were sick.
Yeah.
If you're feeling better now, which is great.
I'm back.
We're back. We're full strength. This is the A team at full strength. It's beautiful. It's a beautiful thing.
Did you guys have a good weekend?
I did.
We did, yeah. I actually was sick this weekend a little bit.
Oh, yeah?
So I just sat around and did nothing. But I feel like I've been traveling every weekend, so it was it was fine. It felt nice to just like literally do nothing.
Yeah, you need that post-Thanksgiving holiday
Yeah.
weekend off, basically. Prepare.
I was the one that, if you missed the email, I chatted Tori and I was like, Tori, I think right now is a perfect time to send that mass email to everybody to tell them if you are sick, just
that was
stay,
you.
Yeah, just stay home because in this office there's like a strain of like tasty virus that goes around, and it's like, just stay home.
Yeah, I thought someone had just come in and was so horribly sick, it prompted like an angry email, but that was a little bit more like preemptive, proactive.
Yes, a proactive attempt to, because if you come here, this is sniffle season. You hear everybody like, like everybody's coughing and like sick, and it's like, you know what? Just sit in your house. Don't get me sick. I got things to do.
Yeah. We got that 3 days a week only policy anyways. Like, what are you doing?
No.
Yeah.
Soon to be every day.
Okay. We're here every day. So.
We're pretty much here every day.
We are. Yeah.
For the most part.
Yes.
We're hardcore.
Yes.
But yeah, weekend was good. We have to call this out now, but we obviously bought some shit coins. You've got Fart Coin. I've got Snoopy Babe.
Yeah.
I sent you the tweet, but we're seeing that Fart Coin is actually gaining some traction in the social media space. People are starting to tweet about it, which is the first step to going straight to the moon.
Got some momentum, a little bit of a reversal. I thought I was going to come in here, and we'll talk about this in a little bit. I thought I was going to come in here and really underperform with Smart Coin. You were looking good as of Friday, but a little bit of a reversal. That's the way that these things trade. I'm excited to get Nick, on board here in the bag battles.
I'm ready for it, and the crypto space, I know you have some slides for us too, has been a wild ride. I wish we were together for the 100K mark. I think you had Katie on for one of her segments in the afternoon, the day of it, if I remember correctly. But there's some volatility. I'll do a quick little market rundown here. E-mini's down 25. The rare red day in the market right now. You got the Nasdaq down 162 and the Dow down 35. The Russell basically unchanged here, up $1. Some big moves underneath the surface in both directions. You got Nvidia down 3 and change from the big boys. Apple up $3 and change. Tesla touched 400 this morning. You got Google kind of bouncing. Amazon is at new highs here at 229. I think it got up into the 30 handle. 230 was the high of the day. And then on the flip side, you got some of the like second tier tech names kind of taking it on the chin. CrowdStrike was down 11. I know some people have been looking at this AppLovin stock, APP. This one's down, $60, $70 at one point today. So definitely a little bit of a two-sided market here across the board. Oil catching a little bit of a bid here, /CL 68.49 up $1.30-ish, bouncing off that lows. Should be good for your micro crude position. I think we put that on last week at the end of the week. Volatility futures upticking very slightly, up 35 ticks, 1460 on the vol futures. You got the VIX itself, 1381. It got into the 12 handle in the middle of last week. Bonds down 25 ticks. You got gold and silver both bouncing off of those low points. Gold up $29, silver up $1.11, about 3.5%. It was up about 4% at one point today. And then Bitcoin has had some volatility here, getting above 100,000, back down below here, down 3,800 on the futures, spot down 1,400, sitting about 98,000. What are your thoughts? I know that I feel like the public opinion in terms of what I see all the time is that you get the 100K mark. That's like your euphoric, everybody's dancing. You get the Pepe memes, and you get the green people hugging and crying, those memes come out, and then you get a little bit of a dip. Is that your thought process?
Yeah, look, I think we have a new reality that we're faced with. I wrote about this over the weekend in the Tasty Crypto email newsletter. You can read the article on the Tasty Crypto website. But I compared this to the first time that a human being broke the 4-minute mile mark. Okay. And that was back in the 50s. Since then, we've had almost 2,000 people that have run a 4-minute mile or less than a 4-minute mile. And the record is like 20 seconds below.
Yeah.
Close to that. So we have a new reality. It's just a number. 100,000, I think, is an emotional, a 6-figure kind of price where it elicits a response, for sure. But in the reality, we had a $7 stock go to 10. I think it can go a bit higher. I think that for a while, there's certainly a lot that was holding crypto back, at least here in the US. That's all changed. I can't overstate how bullish, let's just say, the shift in terms of a new SEC commissioner is and kind of our approach here from the US government. I think that's why you're at 100,000, but I think we're also just getting started. I would expect some pullbacks, but it's just a number at the end of the day. I think we continue to trade higher. You have to, again, look for those pullbacks, but what do you do when you get the dip? You buy the dip, in my opinion here. We have had a shift in almost in terms of, a paradigm shift in terms of policy here, I think, on the horizon. So be prepared for that. This isn't, it's gone up a lot, let's say, in 1 month, right? But I don't think that this is it.
It's so funny because, and crypto markets are no different than stock markets or anything else where, and we're so blessed because we're in the matrix of it, right? Like we are watching crypto, we're watching stocks, we're trading, we're in that zone. On Thursday last week for my bowling outing with some of my buddies, obviously it was like the talk of everybody, I don't have enough, I don't have any, what's your thought process of it? And, as somebody that's like kind of mildly, I would say I'm above average across the board, definitely more so than some of my friends. The one thing, and it goes to your point that I was kind of talking about was, it's gotten, I don't want to say too big to fail, but it's too, there's too much liquidity in it now because the thought is like, oh, it's fake, it's a scam, it's going to zero. That I feel like is a positive in the last like couple months where that's kind of come off the table. Like it can't go to zero. It could, but I don't foresee that. That was what I said to them. I was like, they were like, is it too late to buy or should I wait for a pullback? And I'm like, listen, put some cash into it and just forget about it and have it and you'll participate in the upside. If it goes down, you can get more. I don't think I would put my house into it. Like that's not the sort of bullishness I would put into it. But I think that it's gotten to a point where it makes sense to have some sort of allocation. And at least there's a liquidity floor, in my opinion.
Yeah, I think so. I mean, I think over the long term, this is an asset that you want to own. You want in your portfolio. I would apply the same thought process to the S&P 500. Is it too late? It's at all-time highs, right?
Yes.
Apple stock, I think you had said Tesla was up there earlier. Is it too late? I don't know. Gold, you can apply the same thought process. Some companies in the stock market can go to zero. I don't think that Bitcoin will go to zero. If Bitcoin was going to go to zero or it was dead, that would have been 2 years ago when the biggest exchange on the planet collapsed. And not only did it collapse, but it was a complete fraud. They were stealing the customers' money. And so you saw forced selling there, which took us to prices that I think at that point in time, people didn't think were really realistic. And it didn't stay there, presented an interesting opportunity. But I think we've come so far, obviously, from then. When we have an ETF now, we have a kind of pro-crypto presidential administration that's coming, I should say. And so, yeah, I think like it's kind of comedic to think that it is, anything can happen. I wouldn't say that it can't go to zero. Anything could happen, but I mean, if it was going to happen, it probably would have happened by now. It's going up. It's 100,000. So yeah, is it too late? I don't know. I think it's going to. I put it this way: do you then think that this is the highest price Bitcoin will ever reach in its lifetime? In our lifetimes, is this it for the technology? I don't think so. Like short-term price action, maybe there's a pullback. Maybe it goes to 75. Maybe it goes to 50.
Yeah,
but I don't think it's too late.
Yeah, even if you thought this was the high that it'll ever get, you wouldn't be a buyer really anywhere close to where we're at right now. Like that's a hard thought to have.
Yeah, I agree. I think for me, it was below 100K. There was a lot of two-sided sentiment. This is never going to 100K. This is going to 100K, blah, blah, blah. But now that we've hit 100K, there's a lot less bearish sentiment that I see out there. So, and yeah, I mean, everywhere you look, there's volatile products. Bitcoin is one of the more volatile products, but because of that, it has also been one of the biggest gainers on average, if you average out the returns year over year. So it's kind of like you get what you participate in. If you're signing up for the wild ride, you can get paid more because you're signing up for the wild ride. And I think that's, like we're saying, at the very least, it should be a part of a portfolio, even if you're mostly engaged in gold and S&P and NASDAQ, like having a little bit of Bitcoin, as long as you've sized it properly, isn't gonna, it gives you that upside potential, but you're keeping it in check with the rest of the market.
Yeah, I also think like we've talked about this quite a bit as a long-term investment, which I believe that it is.
Yeah.
And a lot of people want to hold their Bitcoin and they don't want to sell it. They believe that it's going to go up because there's going to be currency devaluation, et cetera, et cetera. But also just being aware of it maybe is enough, right? When you talk about your friends and they have this awareness of it, well, no one's saying go out there like you mentioned and put everything you have into it, but have it on the screen.
Yeah.
Buy the dips, trade in and out of it. I think there's going to continue to be opportunity. To Mike's point, it's going to continue to be volatility. It's quite volatile. And that's what makes it fun, in my opinion. And so just being aware of it is important. To that point, it's actually very early in terms of overall adoption and awareness.
And I think that volatility, like, that was another part of the conversation that came up. I think the volatility makes it more relevant.
Absolutely.
In terms of an opportunity. Like, nobody talks about trading Johnson & Johnson. Like, that doesn't, none of my friends want to buy Johnson & Johnson stock or Intel stock, like these low volatility, nothing burger stocks that don't move. Like, everybody wants that volatility exposure, and it brings liquidity, as we've seen with IBIT, which has blown away basically every ETF metric ever. That's not, I don't think that is attributable to the asset itself, but I think it is definitely attributed to the volatility of that asset. It could be whatever. And if you've got 70% implied volatility, everybody's going to want to trade it.
Look at Tesla, right? I've got an IV at 65%. Bitcoin right now is, I think it's in the 50s. Yeah, exactly. It makes it fun.
Yes, it's opportunity. It's good stuff.
And IBIT is really, I think, changes the game because it's a $50 stock. You can buy IBIT and not have to worry about like any of the other stuff if that's something that was a barrier to entry for you. So I think it just brings in a lot more money that wasn't there before, both to the upside and downside. But IBIT is a great product just because it's $50 stock, very liquid, plenty of expirations now. Like we said, 67% IV. Like, you can do literally whatever you want in here if you have a mid-sized account.
Yeah. It's
and we will do literally whatever we want in there. For the year-long trade next year, we're going to be in IBIT the entire year.
I love it. Which is really our easiest way to participate.
Yeah.
For us.
Yeah.
You get the leverage. That's the other thing that has kind of been a positive for IBIT and just the availability of it is that, the biggest barrier for me to spot Bitcoin is just the cash secured nature of it. It's just locked. And Tom kind of mentioned this in the morning session of it being like, quote unquote, dead money. Obviously it can go up and that's great.
Tom still calling Bitcoin dead money?
No, but he said it in this context, which I agree with him, is that as a trader, it's hard to just I don't buy stock and just sit on stock. I don't have the capital efficiency of it in a cash secured account or an IRA account. I need the leverage. Like, I need something like that. And that's why he said it was dead money in that sense of like, it's hard, especially with the price point that it's at now, for somebody to say, oh, I'm going to just buy a Bitcoin and park that $100,000, like away. That's a hard thing to do.
Yeah, I'll completely agree. I think that's why today what's interesting to me in terms of the trading aspect, I'm looking at micro Bitcoin futures here.
Yeah.
Spread is 98,480 by 98.5. Very tight spread. You can go long or short.
Yeah.
It's on margin. It's like any other futures product. So you have the opportunity there. There are some options on it. They're not that liquid. But with IBIT, now you have the options. You can trade volatility premiums or discounts in there. You can put together a ton of different structures. There's so much more to do. Even today, I mean, within the last year, the ETFs didn't exist this time last year. So I think it's only going to improve. Liquidity is only going to increase. And I think you're going to see as well, because there's obviously signs of this already happening on the institutional side, where what can you do with your Bitcoin? It's a digital asset that's used as collateral in this system. I believe that there absolutely will be a point in time where, and this is pending on regulatory developments, but where you can hold your spot Bitcoin in that account and then trade against that, use that as collateral. I think that we're going to see that in the same way that you can use your Apple stock as collateral.
And sell covered calls.
Exactly.
Yeah, that'll unlock even more liquidity in the space, which will be, again, another positive for the whole crypto space. I can't imagine how much of that capital is tied up, will be released into all sorts of things, even in the non-crypto space once that's available, because it allows you to keep the position without selling out of it, like without realizing it.
Yeah, and just to speak to the activity levels that IBIT has already realized, they launched options on November 19th, so like 3 weeks ago.
Yeah.
They only had monthly expirations. The option market were like 20, 30 cents wide. Now you've got weekly expirations, you've got 5 cent wide markets. So like this immediately became a very liquid vehicle. And even from a share perspective, like we're saying, IBIT has 30 million shares traded today. SPY has 11 million shares traded today. The Qs have 9 million shares traded today. Apple has 17 million. So like I was trying to get 3 in there where IBIT had exceeded, but IBIT has more shares traded than IBIT or SPY and Qs combined today.
Yeah. It is liquid.
You can't discount that activity.
The other thing I'd point out is that we're only really, and have been up to this point, talking about Bitcoin, which is like having one stock to trade or one stock that now has options on it. The Ethereum ETFs are not able to stake the Ethereum, generate yield, and pass that through in the form of a dividend. They don't have options yet either. Of the ETFs that exist, there's 2, Bitcoin and Ethereum. Solana, I believe, was most recently rejected in terms of the ETF applications. We'll probably see that in 2025. So I think it's early, and we're just getting started.
I love
to kind of bring it full circle to, is it too late? No.
It's never too late.
Maybe with the price action, it's run a little bit too far, too fast. I don't know. But in terms of being able to participate in this space, it's just getting started.
I love it.
In fact, did you see the Michael Saylor Davy Day Trader?
No,
segments?
I got to watch that. I have it bookmarked on my Twitter.
He basically asked the same thing. Is it too late? And he's just like, no, I'll be buying for the rest of my life.
Yeah.
Pretty much.
I
love that saga.
It's amazing. Congrats on the ETH, too. ETH moved 4,000.
Oh.
You got a 4K mark. It's still early.
I think so.
I know.
Yeah, I think so. There's a couple different directions I suppose we can go in, but yeah. Yeah, I think it's just generally, okay, we've had a huge move over the last month. Should you take some profits? Yes. I think it's prudent to do so. Nobody ever went broke taking profits.
Yeah.
But in terms of putting perspective around this is something that, we're not even at all-time highs with Ethereum. It played a little bit of catch-up. We got the bounce. I think that if you believe there's going to be more stimulus coming down the line, if you believe that more people are going to participate in this space, that we haven't reached peak adoption, and also consider, right, we're pretty U.S.-centric, but this is a global asset, globally accessible on the internet. Again, I just think that you haven't seen anything yet. And prices are going to get extended, as we've seen on both sides, but just in terms of adoption, there are going to continue to be these boom and bust cycles. but it's still very early from that adoption perspective. And I just don't think that this is it, because the price of something that was 60,000 or 70,000 went to 100,000 in a month on a catalyst, on a real catalyst for what could be, a much larger driver going forward.
I love it. Let's get to some slides, and then I'm ready to sling some meme coins here. I'm ready to get in the game.
Beautiful. Well, I switched some things up for you guys this week, and going forward, we've got a little bit of a different look to our crypto market update and our performance dashboards here. So I want to walk through everything with you guys and hopefully help to, again, put some perspective around where we are. So prices are moving a bit, but Bitcoin spot 98,000, ETH just under 4,000. Seen a little bit of a pullback from where we were last week and into the weekend here, but still momentum is as bullish as you can get across these different time frames. Bitcoin's up 132% year to date. You've seen some meme coins that have outperformed. I've now included Doge on here. We're bringing that to Tasty Trade soon.
Oh, awesome.
So you're going to see, I think, as you are across the industry, you're going to see a lot of participants expanding the token offering. We're looking to do the same thing here, so we want to bring more product to people. But going to start to put this on there. Clearly has outperformed Bitcoin. That said, it still kind of remains that story of Bitcoin over everything in terms of performance to this point. It's pretty bullish out there, though. I don't know how else to slice this.
Yeah.
Everything that was either neutral or was kind of bearish on a monthly, you're getting these longer-term structural signals that they could quickly reverse. But quite often when you're, this is pretty slow moving and it is backward looking. But when you start to see these things trigger on a weekly and monthly basis, those are signals to me that I want to be in that trade. I want to be on the right side of it, at least. And then on a shorter term time frame, that's where you'll look for signals as to when that might become exhausted or when you see a little bit of a reversal. But right now, structurally very bullish. This is an environment in which I would be buying dips. How do you calculate where you should buy those dips? I use the implied volatility, so we'll talk about that in just a second. But this is the performance. As you can see, it's been a hell of a month. It's been a hell of a quarter. I don't expect that to continue into perpetuity. Again, you want to take profits when you've got them. But if you go back to the show that we did last week, where Mike and I were looking at kind of just where are we in terms of the cycle, still pretty early there. So again, I think given that structurally momentum is very bullish, I want to buy dips in here. And I think you've got, I would say you have another 6 months or so at least.
I'm with you.
So that's our performance update. If we just take a quick look at relative performance kind of under the hood here, Bitcoin market cap dominance has pulled back a little bit as you see a rotation out of Bitcoin at 100 and into some of these other tokens that, when you look at the alt space, a lot of things were down 70, 80%. Memes have seen a rally. ETH has rallied a little bit. So things kind of got a little too stretched there. So there's a little bit of a value trade that we're seeing at the moment, but Bitcoin market cap dominance still at 56%. If we just look at this and model it from that momentum perspective as well, starting to break down a little bit, but we've gone from about 60 to 56. I think if you're really in full-blown alts to the moon kind of point in the cycle, you see Bitcoin market cap dominance below 50%. Looking at the relative performance or the ratios, we've got ETH, BTC, Solana, BTC, Solana against ETH here. Solana's underperformed, but Solana early on was the outperformer. So a rotation out of that and into some other tokens. ETH, BTC looking a bit better, but I'd love to see that at 500ths of a Bitcoin. Right now, we're just under 400ths of a Bitcoin. Obviously, if Bitcoin's 100,000 and we're at 500ths of a Bitcoin, then
you got another 50%-ish upside.
Yeah, I mean, you're going to see it's be a $5,000 ETH price. Yeah. So, seeing a little bit of a bounce there, but again, nothing that is telling me that the trend has changed. A little bit of maybe a dead cat bounce. ETH playing some catch up. So if you were long ETH, you like it a lot better now, closer to 4. But again, looking at that ratio, I think there's still some room to run. Doge has just been a wild outperformer here, and that's, I guess, evident when you look at the meme space, too, if we look at this Doge as a proxy.
That's beta. I mean, that's a high beta. I think it's everybody understands it's very memey.
Yes.
And when things are flying around, you expect a couple X difference in that kind of movement.
Yeah, the way that I would trade this too is just when you you see Bitcoin market cap dominance back up at 60, or you see some of that outperformance on the shorter term time period, you maybe rotate into some of those things that haven't necessarily been performing as well. And typically, they do play a little bit of a catch up. That's where you can find trades, because this is all positively correlated.
Yeah.
We'll see that when we look at correlations, it's like 0.85 between Bitcoin and Ethereum. So when Bitcoin gets stretched one way or the other, you look at that rotation, and you see that with Solana. And then from a market cap perspective, right, we have an asset when we look at Bitcoin that has about a $2 trillion market cap. We got ETH somewhere about 500 billion. You've got Solana somewhere near 100 billion. And I think over time, they all grow as participation increases and capital flows increase. And I think that's where there's going to be, again, a really interesting trade in Solana. We have a very short-term time frame that we think about things in at times. But Solana at 230, 240, I think is less relevant to me, if it pulls back from 260, versus I think that you're going to see Solana's market cap catch up or get much closer to where Ethereum is. And that gives you a much, much higher Solana price, regardless of whether it went from 260 to 220 in the meantime.
Yeah.
So quick look at relative performance. And then if we jump over here, we've got, just another look at where we are year to date. Ethereum still versus the others here hasn't done as much. So to that point, maybe you continue to see a little bit more follow through with that recent ETH move over time. That said, if we jump to the next slide, a little bit of a volatility analysis and trying to provide a bit more detail here when we look at implied vol for both Bitcoin and Ethereum. And this will translate to what we see in the IBIT ETF options and just kind of how we approach that space. But implied vol for Bitcoin's 59%. It's up a little bit. Realized vol is 55%. So you have a little bit of a premium in there. Ethereum implied vol 73 versus 68% for the realized vol. If we annualize the last 30 days, still a little bit of a premium as we would expect with IV. And then looking at where this is on multiple timeframes, what's the IV rank? Towards the top end of the range, but I wouldn't argue that options here are extremely expensive. There's a bit of premium in there. So if you own the IBIT ETF, for example, you can sell those covered calls against it short term. That might present an interesting opportunity. But your IB rank for Bitcoin on the 1 year basis is still kind of the middle of the range. Expected moves, $8,000 for Bitcoin, ETH right around 400. So about 10% or so of the underlying price. Solana 23, Doge about 8 cents, almost 9 cents there. And those are the ranges that I would continue to trade. If you get to the bottom of the range, I think this is an environment in which you buy the dip, but you also want to make sure that you take a little bit off the table on those rallies.
Gotta love about what's that? Put the implied volatility of Doge at like 160% or something like that.
It's I want to say it's like 140. The realized vol is in there when I was looking at it.
Implied has to be higher than that. Maybe it's like 200%. I'm just trying to think of like a 25% move in 1 week. What does that translate to longer term? Like 30-day implied volatility. It's got to be 200 or 300%. Yeah.
Yeah. The realized in there in terms of what it's been doing is about 140%. So
lovely.
That's a quick look at volatility, expected ranges. One other thing I want to check on here, as everything is near all-time highs. The S&P correlation, the NASDAQ correlation, the Russell correlation, I want to keep on my radar. So if we jump to the next page here, here's an updated correlation matrix. You can see a little bit of an inverse correlation here, short term, but still positively correlated as we would probably expect across risk assets, or at least across equities. Not as much of a correlation with the dollar, which has been a pretty consistent theme here. A little bit more of a positive correlation in the short term with gold. But Bitcoin and gold, even though we call it digital gold, haven't had much of a positive correlation over the last year.
What were your thoughts of Powell? Did you see the Powell comment?
I did not. No.
Oh, he was asked about Bitcoin. They did like a fireside chat with Andrew Ross Sorkin. But they asked him, they were like, is Bitcoin, a threat to Fed policy / dollars, whatever. And he said no. And then he parlayed it with, it's not really a threat to anything like US dollar related. It's a threat to gold. It's a digital gold. And that was his comment. And then, I
think that's interesting.
It was weird. It was odd to see him even acknowledge it.
Yeah.
Like, I thought he would have just went to the next question of like any comparison.
Yeah.
Like, I would think that he would be more inclined to be like, I don't follow such small markets of those sorts. I don't dabble in the peasantry kind of thing. That was what I thought his response would have been, rather than like saying, oh, no, it's just like gold that's in trouble. It's not the US dollar. Gold's screwed.
Yeah, well, I think in terms of competing for capital flows, clearly we're seeing that Bitcoin is a flavor du jour. But I bet Powell owns some Bitcoin.
Oh, I'm sure.
Yeah.
I'm sure.
He's a savvy investor, a smart guy, head of
the
world monetary policy.
Yeah. He had the purple tie on the other day.
I know, the purple tie. It's time to buy.
I would bet he has he's got a little bit. I mean, the other guys were like shorting S&P futures ahead of interest rate announcements.
Of course.
So I mean, come on, a little Bitcoin here and there. But yeah, just a quick look, guys, at cross-asset correlations. I think the one thing to point out here is you've had a bit of an inverse correlation with Treasury bonds and the long end of the curve. So if you're looking for a reason to kind of point to volatility in crypto, maybe there's something there. We've often seen that there's been a positive correlation between bond market volatility, the MOVE index specifically, and Bitcoin, as well as other assets. I mean, just generally speaking, risk assets don't like extremely volatile fixed income or extremely volatile rates. We saw that over the last couple of years, over the last year for sure. But yeah, those are your correlations. Still pretty strong correlation, obviously, with ETH as well. So just a couple things to point out there. But I think, again, 100,000 is a big emotional number. Try not to get too caught up in it. I think a 6-figure Bitcoin price will be commonplace, but don't freak out, as many people will, the first time that it goes to 100, goes above 100, and then pulls back thinking that this is it.
Yeah.
I think it could pull all the way back to 75, 80. That to me would be a short-term fire sale in some capacity. I think that would be really interesting in terms of an opportunity. But not at all surprised to see us trade. I mean, just a few days ago, we traded back, flash crash down to 91, 92, and right back up there. What you want to focus on is how strong is the bid into any of these pullbacks.
And
I think
it's been so strong.
Yeah.
I mean, every day, even like today, we had what's our intraday range been today? We got as low as 90, like this is basically the low of the day and a high of 100. So you're seeing, 3-4% intraday ranges on both sides of the market.
Which is totally normal too, right? We've shown that this can go down 20% in a week, goes up 20% in a week more often. But 10% down in a week, back to 90,000, wouldn't be anything. It would be totally normal. I think it would be a buying opportunity. You're structurally pretty bullish in here, and you have a ton of tailwinds. Now, are they all being priced in at the same time? Possibly. It's what's driven us from 60 to 100 in a week, or excuse me, in a month. But they haven't necessarily all materialized either. So you have an environment that we just haven't faced in the last 4 years in U.S. crypto. I don't think that it just went up in 1 month and stopped and that was it and now it's all over.
Yeah.
So those are your performance dashboards, volatility, correlations, little crypto market update. There's a couple headlines just to call out, but we've kind of talked about these already. MicroStrategy continues to buy Bitcoin for the 5th straight week, bought another 2.1 billion. Big ass flows continue, as I like to call them. A record week for flows, 3.85 billion, 2.5 billion of that went into Bitcoin related funds. That takes total year-to-date inflows into crypto investment products to $36.5 billion. It's real.
Yeah, it's real.
And last week we got
the crypto czar.
Yeah, AI crypto czar David Sachs. I'm sure people are probably familiar with him from the All In podcast, but kind of billionaire VC. Trump nominated Paul Atkins as his nomination for SEC chair. Paul Atkins is a crypto guy, I would say. David Sachs is a crypto guy. So you're seeing more pro-crypto people in some capacity in positions of power in the administration, positions of influence. Certainly, if the SEC chair is pro-crypto versus the former SEC chair, it's going to be a lot better for the U.S. crypto industry.
Beautiful.
You guys want to trade some memes?
Yeah, I'm ready. I'm ready.
It's bag time?
Yeah. How we play? There we go. We got the bag battles, baby. I'm a little chubby there. But,
we'll slim you down. Yeah, we'll talk to Shelly about that.
Shelly, get me some Ozempic.
Put you on that.
My God.
Yeah. So good. I did love, my favorite thing was the Thanksgiving one that you guys sent out with.
That's all Shelly. Yeah.
With Mike Butter. That was chef's
Mike
kiss.
Butter was.
See, I don't know if anybody got that right away, but then
that was really good. I got
awesome.
that straight away. That was fantastic. So Shelly, shout out to you for the creativity. It's been amazing.
Yeah, it's been really good. We got all three of us here now, so we got to get you in the game.
Let's
Nick.
do it.
If everybody watching, if anyone isn't familiar with what we're doing here, bag battles, we're putting $100 USDC into, and we're doing this on Solana right now. That's where most of the meme coins are. But we're using the Tasty Crypto wallet, using decentralized exchange to buy, really just take a flyer on a meme coin each week. We don't really have any rules, kind of just looking at who's winning, who's losing. I'm not quite sure how well you can see this, but we have a little trophy that we'll start to hand out.
I like that.
Every single week. This is the golden ape, and this is quite heavy. This is like a paperweight or something.
Is it like the
quite heavy
tungsten?
Yeah, right.
We're back in the tungsten meme phase.
It looks light, but it's very dense.
Okay.
Yes.
You know what's
Very
amazing about that is you could bring that to like a poker room, like bring it to an actual casino and use that as your card holder, and people will ask you, and you could just be like, "Yeah, I've owned Bitcoin for 20 years."
I won bag battles last week.
Hello.
So I'm hoping to hand this off to one of you guys here.
Beautiful.
In the upcoming weeks. But yeah, we're just picking meme coins. I guess let's jump to the next slide. Mike and I had a couple trades here. It's tough because we're just doing this on the show. So these are wildly volatile. There's going to be times where I think on Friday, Mike was up like 20%. I was down 20%. I'm up a little bit now. Mike's down just slightly. So these are the two tokens that we traded previously. Fart Coin and Snoopy Babe, S-Babe. That was Mike's pick. I'm in the Fart Coin right now. You can see completely different ends of the spectrum. Fartcoin has a market cap of 300 million, and Snoopy Babe maybe just getting started, 74,000 here, and also just trying to do the same thing. Just put a little bit of, context around what's happened and how volatile these are. So Fartcoin's up almost 2,000% in the last 3 months, up 300% in the last month. Snoopy Babe, I don't think has been around that long, but down about 40% or so in the last 3 months, but was up just recently. Market caps are a little bit different, but I don't know if you want to keep the coin that you have, Mike. I think each week you can stick with what you've got. If you think that it's going to keep going up or it's going to reverse if it's been going down, or if you want to add something new, we can rebalance. We'll change things around, but we each have $100 and
rebalancing our meme portfolio. Oh yes, I'm moving from S-Babe, putting a little bit more allocation into Fartcoin. I think that's the hype beta play here.
Yeah, I'm gonna hold on to mine because I think I've got 12 million babes.
Okay.
You like that?
And
you like the denomination of it?
Yeah.
The number.
Because if it takes off,
yeah,
all of a sudden, I might be gone.
Yeah, you can't go to like 3,000 Fartcoins when you have
12 million.
12 million.
When you're not down much, I mean, with something that can move 1,000%, you're down 9% over the last 2 weeks. And again, Mike was up. Mike is the winner for the past week, so he gets the trophy. Mike was up. We just missed the show because I was out.
Yeah.
But had we done the show, he was the winner. So he was up a little bit. But I think if I'm Just eyeing this up. Yeah, this is the current balance of Snoopy Babe, $91.12. Fart Coin, 103.75.
Ooh.
So just up slightly and just down slightly there. But we can start with you,
yes,
Nick. If you have a token that you want to purchase here, I've got the USDC in the wallet. This is a Tasty Crypto wallet that we use. So I will go through and we don't have this hooked up to the show today, but we'll start to do that more. We'll just kind of timestamp it here. But we'll buy whatever you're interested in. I'm going to sell out of Fart Coin and purchase something new.
Okay.
Which
I like that. That's, I mean, you're taking profits.
Yeah, a slight profit here, but I'm going to get into AI 16Z, not A16Z, but
AI 16Z. I think I've
see this
seen
in
this.
the top Solana coins.
Okay.
What's the
Yes.
story?
I'm still learning a bit about it, and sometimes for me, this is the best way to get a little bit of skin in the game. But it is, I believe it's a meme coin related kind of governance token for a platform that is responsible for a lot of the AI bots that are out there. I think that's going to be a theme this cycle as well. But these AI agent bots that do everything from trade to obviously you have some chat bots. That's not exactly what this is, but different trading bots, platform for it. I think you're going to see more of that. And so I want to ride the wave. The other thing that I want to call out here, at least what I've observed, is that with a lot of these, depending on where you are in the cycle, I personally just want to ride the momentum.
Yeah.
And I want to, it's tough because you're looking at this like, why would you buy something that's up 300%? Because that thing can go up for a moment 1,000%. It doesn't really matter. I want to buy that stuff that's kind of going straight up. And this is one that has caught the attention of the market recently. The other token that I was looking at, I like kind of what we're seeing in terms of price momentum on the chart, is Bonk. Bonk, I would equate to like the Doge coin of Solana. I think we also have to look at Doge as the benchmark here, or the beta that you're trading against in terms of the largest market cap meme coin. But I'm going to rotate out of Fart Coin here. Surprise, we got back to kind of even, so I'm going to take that scratch and go into AI 16Z, and I'll do that here in the wallet. We'll get that up in there for the next show.
I like that move.
You could get some chill guy.
Yeah, but so like
some peanut.
My thought process here was trying to think of like what are the next meme things that are on the horizon. I think AI is a good spot to be if you're like thinking AI. You have Christmas, which obviously can get in there. I think you have to go into a Trump coin.
Okay.
I think that's the new one because you have that happening in January. You got to have something tied to that. If you remember the Joe Biden ones.
Yep.
I think that's the move.
Okay.
So I'm just on CoinGecko right now. And I'm just looking. I just literally this is how accessible.
This is fun, yeah.
This is that I can just type in. Like,
maybe we can get the
it,
browser or something on screen too.
Yeah, Mikey,
if you guys can do that.
Or I could probably pull it up.
Because it's a good point, Nick. There's a couple great resources out there in terms of market data. Coin Market Cap, CoinGecko. That's where I'll go. They have a lot of tags that they've added to the tokens, so they categorize these. You can find lists of memes. You can find lists for the Solana ecosystem. And while this is memes, I would say you can trade any token that you want. It's just that if you really want to shine, the memes go up a lot more when they go up. They go down a lot more too. They're much more volatile, obviously. But yeah, that's what I do. Just looking at what the market cap is here, what the performance has been, trying to ride that train.
Yeah, I think you got to go. I don't know if I want to go like this MAGA one. This could be a good one because we have. I'm thinking of something that's in like because what was the market cap on yours? Like 5 mil or something like that?
Something small.
74,000.
74K. See, you are the bag holder.
Yes.
I'm thinking you got to be in like something that has like a little bit of juice in it because like Mike's he's screwed.
It's probably going to be a lot more volatile. It could go, it could go up 1,000%.
I could easily get my rug pulled.
Or it could go to zero.
Yeah.
He's out.
Yeah. The super Trump could be Peppy Trump. That's another interesting one. No, market cap not good enough for me. Free Trump. Okay, that one's I don't know. Trump AI.
We do have a few people calling out some suggestions in the chat.
Please.
Not necessarily political tokens, but Goatius Maximus.
Yeah.
Are familiar with that? That is a token that it was basically pumped by an AI chatbot.
Oh yeah, I heard about this one.
So that's what happened to us on Friday. We had an AI chatbot come into this show.
Yeah, and try to
they were
shill us.
pumping, and we were like, "Oh,
This
these
is
bots!"
beautiful.
And then they responded. They said, "I am not bot."
Yeah.
I'm like, "Oh, okay."
And I've completely taken over your guys' show. I apologize, but
No, this is fantastic.
Lincoln is asking how I can follow or trade these symbols. And the way that we're doing this is through the Tasty Crypto wallet. You can use any wallet software as long as it has access to these different blockchain networks. We use Tasty Crypto, obviously. It's what our team's been building over the last couple of years. Recently, we launched with the Solana network. We just added a base network connection. We got Optimism Arbitrum coming soon, but most of the memes are on Solana. So you're on Solana. You have to have USDC stablecoin, so dollars on Solana on the chain, or you have the Solana token. And then what we're going to do, and we'll show this in the app. I think Mike and I did this last week, but we'll show it next week.
Yeah.
Where we'll go to a decentralized exchange, a couple decentralized exchanges on Solana that are very popular. So this would be the Uniswap equivalent for Solana. Uniswap's on Ethereum. But on Solana, we've used Radium and we've used Jupiter Exchange. Those are the two big exchanges that we use. And you'll be able to trade any USDC or Solana, really any token, for any other token that's available on there. There's a ton of risk that comes with this. We're having some fun with $100, and we know that it could go to zero. So
Yeah.
be aware of that. But that's how you do it.
Love it. Love it. Love it.
Goatius Maximus, $694 million market cap.
It's
getting up there.
unbelievable. It's unbelievable.
It's up there.
Yeah. Okay, I have to pick one. So I was actually thinking maybe the Grinch could have some staying power here.
Okay. That I think is actually a stronger assumption.
Yeah.
You do a Santa or a Grinch or like Cindy Lou Who thing, like something related to Christmas.
Ooh.
Or a dreidel. Is there a dreidel? That I think
dreidel?
I think that's where you go. You do the holiday.
The holiday,
You're
because
gonna
it's
get the
shorter
holiday
term.
bump.
You got to get the holiday bump.
Yeah.
Let's see what we got on like Santa meme Santa Inu. Okay, that's an interesting one. Market cap 0. Okay.
Yeah, I do think I at least, again, to each their own, but I would pick something that has a larger market cap.
That's what I'm thinking.
Or use that as an indication of whether you just have any activity, because you do need activity in there, obviously, for people to push this higher or lower.
You got to have the. I think I'm going the MAGA coin at number 717 in the market cap list there.
This is truly a don't tell Tom trade.
This is don't tell Tom.
This is the biggest don't tell
If
Tom
I make money on this, I will certainly tell Tom. But I think there's, with the holidays coming up, I think there could be some pumping and definitely some virality to something Trump related with Santa.
That's fair.
And the symbol is MAGA. Okay, and that is on Solana. So here you have a token that's across multiple networks. Might be a good sign. I don't know.
That's good.
In terms of where liquidity could come in. It's on Base, it's on Solana, it's also on Ethereum. So we'll be purchasing this on Solana because we have our USDC on there right now. But just something to call out.
If this pumps to all-time highs, the all-time highs.
You know what we should
We're in June at $15.
Yeah.
We should generate a PPI, a pump potential index, and we can rank these coins based on
I'm
the
sure
number
they
of
have something
exchanges,
here.
the activity levels, previous highs.
Yeah. I love that. I think we could build that out. I can give you really quickly whatever the price momentum looks like in there.
Oh.
So
fantastic.
I've got, when I look at the MAGA token here, I've got this, basically, like you said, it was quite a lot higher in June. And then for, a good chunk of the last month, we've traded in this like below $2 range. But we've got neutral daily momentum on the exponential moving averages. Looks pretty bearish though, Nick.
Okay,
elsewhere, but you could get that bounce. I mean, look, you're going from
contrarian.
Bearish to neutral. Maybe that's a bullish sign.
Yeah,
$1.71.
I mean, we're at 3-month lows.
Yeah.
How low can MAGA coin go?
Could go to 0.
It certainly could. I think that's a move.
That's
here.
a trade.
I think that's a trade. I think that's a move.
Lock it in. We got Nick.
Yes.
In MAGA. Mike.
Yeah, we're riding the
in
Don.
S-Babe, and I'm in AI 16Z.
Let's see where your S-Babe is, Snoopy Babe. This is. See.
This one might actually go to 0.
Yeah.
We'll give it another week, and we'll see if we get a little pump.
Yeah, this could certainly be a 0.
What I like about this, though, is you have a $70,000 market cap token that, what if it just goes to $1 million?
Yeah.
You make a lot more money in your trade. Mike has more potential. There's kinetic energy.
The PPI index is high.
It's huge. It's 0. The implied volatility on S-Babe is 10,000%. Because it could be 0 or a lot. Okay, I like it.
All right, so you're in. We're all in.
Yeah.
We'll come back on Monday for a review of our bags.
Yeah.
Good stuff.
Who is going to win? The Golden Ape.
I want the Golden Ape.
I love that.
I'm ready for. Well, you get it for this week until next Monday.
I'm gonna. Put it
After this, I'll hand this off. I don't want to throw it, break a monitor or something. But this goes on Mike's desk.
Love it.
Oh,
I'm combing through the YouTube chat questions. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat as well. If you want to join that for free, comes out every Saturday.
Yeah. Take them all the crypto questions if we can get through them just real quick.
What is the preferred crypto equity? Coin, Byto. So right now the cleanest one is IBIT. Coinbase you could also do, but it's just a different world. Like if you're trying to trade straight up Bitcoin, IBIT is certainly our answer. Yeah. BITO has a dividend based on potential returns that they're kind of harvesting. So
and the interest.
Yeah. So that's another one where like if you're looking for maybe a more conservative way to participate in upside movement, maybe BITO is where you go, but IBIT I think is our answer.
And MSTR volatility has come down very significantly there. I mean, in the height of the kind of craziness when it got up to like 500, 550-ish, it was, 200-300% implied volatility. It's back to a more reasonable 120% implied volatility. Yeah. So just keep that in mind.
And MSTR, AJ asked, when Bitcoin first hit 98K, MSTR was at 540. Bitcoin's still at 98K, but MSTR is at 380.
Yes.
So
that's volatility.
The answer is MicroStrategy is going to act like a volatility instrument of Bitcoin. So like think of
it's the VIX of Bitcoin basically.
Right. It's the AMC and GME of Bitcoin.
Yes.
Like really in a different way though. Like you'll still see it elevated at this range, but when Bitcoin made its quick rally from 60 to 90K, MicroStrategy ripping higher was really, I think, a lot about the future potential move of Bitcoin as well. And then once Bitcoin kind of chopped in that 98K range, you saw that kind of come back down to this level of 400. 400 is still 10x. We're at the low of this year. MicroStrategy was split adjusted 40. Now it's at 400. So it's still well above the returns of Bitcoin, but you're going to see some kind of abnormal movements. Like there's days where you see Bitcoin up and MicroStrategy down big. Like you're going to see that.
Yes, the correlation is definitely not one.
Yeah, I think of it almost as a call option on Bitcoin where the price is the premium. And so we know that obviously the premiums can change and there can be points in time where there's significant premium in that market, which is what we saw leading up to, as Mike mentioned, that 100K price.
So now it's cheap calls.
Could be.
So there's no Michael Saylor for an Ethereum MicroStrategy. Sounds like a pretty early business model.
Ooh, Ryan.
Yeah, could be the sailor. I don't have enough money or a business.
We have a guy that we can,
Tom could be the Michael Saylor of Ethereum.
Yeah.
Powell says he's not legally able to own Bitcoin, so he probably owns IBIT. Like, there's ways you get around it. I would assume.
Or his wife or
Let me
kids or
remind
something.
everyone again.
Yeah.
They were shorting S&P futures in size ahead of their own interest rate announcements.
Yes, of course. I mean, Nancy's the greatest trader of all time. So
Not allowed. When did that stop anybody ever?
Yes. Amazing.
Yeah, I'm kidding, but yeah, I don't think he thinks it's a tulip bubble. Let's put it that way.
Yes.
We'll end it with the one and only Stonk Messiah. What kind of crap are you trading here now? Fartcoin? Welcome to the new show, Stonk.
Yes, this is our world, baby.
Guys, who was it that sent the Reddit thread this weekend? Was that
I
you,
think that,
Mike?
Yeah,
Yeah,
I think that was you. Yeah,
I pulled that up here on Twitter. I'm just laughing again at that.
Oh, the guy that, or the wife that her husband like invested their entire like net worth into.
Personal finance thread. My husband put a significant amount of our net worth in a cryptocurrency token called Fartcoin. What do I do? It goes on to say he has never really lost. Okay. I work in finance and told him he needs to diversify and buy index funds, but he will only ever respond with crypto jargon like hot air rises.
Don't put your entire net worth into any one single
So
thing.
good.
That would be my suggestion. Amazing. All right, so we got some bags.
Yeah. The bags are moving. But yeah, thanks for tuning in. It's almost noon, so we got to get out of here. But if you want to shoot us a note on Twitter, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. And of course, give Tasty Crypto a follow. Again, the newsletter is pinned to the top of the YouTube chat, tastycrypto.com. There's a link there. You can also access that from the homepage. Comes out every Saturday, free newsletter.
Yes.
Go sign up. But yeah, thanks for tuning in. We will see you next time, but enjoy the rest of the trading day. We got plenty more content coming your way on the YouTube channel, as well as tastylive.com. So stay tuned. We'll see you tomorrow, same time, same place.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
We are back. It is Monday, December 9th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to kick off a week, Ilya, where it feels like a decade has happened.
It hasn't even started yet. It's only Monday. And already there's tremendous news coming, at least from the Middle East. I'm sure we'll get to China in a bit. We'll see if their squawking means anything. But the situation in the Middle East is certainly rapidly developing. Let's call it that.
The fall of Damascus over the weekend certainly introducing a new layer of risk. I'm particularly interested in the news that China's central bank has officially resumed its gold buying after what they describe as a hiatus since May, 6 months off, although they probably were not exactly paused the entire time. That aside, they are officially back on the up and up. So a good day for metals here in the market, a good day for energy in the market if China's stimulus announcement means much of anything. There is the note that for the first time in 14 years, they have formally changed their monetary policy stance away from prudent and towards loosening, which small but perhaps meaningful shift to underscore what's been a very strong performance by Chinese equities today, an outperformance that certainly has not spilled over into our markets. Guys, we can go to the slides right away because it's been a fascinating few days in geopolitics. Of course, we're sizing ourselves up for an interesting week here ahead. Ilya, on Friday, you and I closed out the week talking about non-farm payrolls. When we take a look at the typical Friday run-of-mill, we usually talk about the macro calendar. So let's do that here today instead. The rest of this week, there are but a handful of significant events. None tomorrow, another exceedingly light day outside of a 3-year note auction and perhaps crude oil inventories. But beyond that, the fervor really picks up in the middle of the week. We have US CPI coming out, of course, on Wednesday, a Bank of Canada rate decision, an ECB rate decision on Thursday, Friday, UK GDP. It's a relatively light week for U.S. economic data when you put it into that context. What are you looking forward to most here? Is it the CPI report?
I think it's the CPI report. I think it's the ECB rate decision. I think it's sort of the global collective view on monetary policy and the collective view on growth, because really the key issues around what the Fed is going to do, say, in December, they're not going to be answered by this data. The ECB is in much the same stance. The cut that they're expected to deliver this week fully priced in at this point, pretty much. So the really key questions are going to be about what happens next. The Bank of England interest rate, or the Bank of Canada rather, interest rate decision may be a little bit less significant recently than it has been, just because it is less of a barometer, it seems, Canada, for the situation in the U.S. The two economies have kind of diverged, which is unusual. But nevertheless, here we are. Canada is in dire straits, but the U.S. economy is obviously swimming along just fine so far. And so when we look at what's going on here, I think it's really sort of the collective cost of credit next year that starts to be interesting, because much of the world, but especially U.S. corporate entities, face what is going to be a 2-year refinancing bonanza. They haven't felt the pain of higher interest rates yet. We talk a lot about the data put together by The Economist and the IMF showing that U.S. corporates have actually seen outlays on credit servicing decline since the beginning of this rate hike cycle. And that's because they had cash on hand. They saved a bunch of it during the pandemic, and then they borrowed a ton of it at essentially zero rates at that same time. That debt rolls over next year and in 2026. And the cliffs are big and they're steep, and we're going to be refinancing at 300%, 400% higher than that debt was incurred, because, of course, it was basically incurred at zero. So we're going to see a very interesting read-through maybe from this data onward. I suspect that as long as this data doesn't surprise too far, we might get a further pullback in the dollar. We might get a further pull up in bonds just as markets digest. But beyond the initial response, what this means for next year and the signaling therein should be very interesting.
That inflation data on Wednesday this week for me takes the cake in terms of what it may do for Fed rate cut odds. Those are pegged right around 86%. They were 86% on the nose at the end of the day. Friday, they're currently 85.8% right now, so not exactly a material shift as we start off this week. In terms of those inflation expectations going into Wednesday, we're looking at about a 0.26% month-over-month rate, according to the Cleveland Fed, 0.27% month over month for the core CPI, and then year over year, that translates to about 2.7% and 3.3% respectively. December data thus far isn't looking that great. December 2024 month over month CPI is 0.39% month over month. Core is 0.27. PCE is tracking at 0.32, and core PCE is 0.24. So and a little toasty there, but as we've demonstrated before, and we'll share tomorrow when we look at the inflation tracker, unless the market had rolled off basically 0% month over month readings for the next few months, you are guaranteed to see a rise in the year over year CPI readings and PCE readings simply because of the base effects in the data. And so we're more focused on the month over month this week. I know that we're looking at the year over year here as 2.7% rising. As long as we're at 0.2%, then that's, close enough. If we're at 0.26, it gets rounded up. It's not the worst. Does it take down the Fed's odds of a cut? I would say so, but that's where this massaging during the Fed's blackout window becomes so important, when you could hear from someone like Nick Timros at the Wall Street Journal later this week or early next, as we head into that December 18th Fed meeting, and we find out what we should actually be thinking and how we should be interpreting the data, because we don't want to be going into the meeting with a 50% threshold. We want to be sitting comfortably on one side of it, so the market reaction isn't too significant. Ilya, here on this Monday, stocks, they are down broadly, at least they were, at least 10 minutes ago, and they still are. S&P up by 0.45%, NASDAQ a little heavier, off by 0.77%, the Russell off by only 0.05%. That was more buoyant earlier today. It's since gone under. It has been a day where we've seen some rotation in play. QQEW is outperforming the market cap weighted NASDAQ. RSP is outperforming the market cap weighted. So there you go. Equal weighted is doing a little bit better, but broadly speaking, we are taking a step down from here. To suggest that it's a day of heavier volumes, that's not exactly sincere, but it also wouldn't be insincere. There were a few days last week we were tracking kind of sort of basically 550K, and so it is up at 789K, and that is more significant, but it's still not exactly high or healthy. So would we consider this a breakout in volume? I don't think so. What's your take on this price action on this Monday, where we've had so much geopolitics come to a head? It feels like we've had a South Korean coup, the collapse of a French government, a revolution in Syria since the start of December, and it's only December 9th.
Yeah, I mean, I think the geopolitics are very obviously being ignored, but that's not surprising, because none of these geopolitics really mean anything. I mean, okay, yeah, we had a toppling of things in Syria. Does that mean anything for right now, for immediate market action? No. Is it something that has earth-shaking consequences when we look back in 10 years, 5 years? Yes. But as far as the immediate sort of price action, nothing really. The South Korean coup took all of 4 hours. So thankfully, no big issues in the AI supply chain there, because that's, of course, the main story for Korea, with some overlay, I suppose, to the geopolitics of the U.S.-China rivalry. But again, it doesn't last. And ultimately, the status quo holds. And I think everybody kind of breathed a sigh of relief there fairly quickly. In France, the situation is pretty well telegraphed. I think the real question there is, does Marine Le Pen get to run in the next presidential election? Because we're waiting for a court ruling that may bar her for misappropriating European Union funds. So we'll see how that goes. And of course, the immediate sort of right there rubber to the road issues concern mainly monetary policy, the ECB, and that's outside of French national control, and Ukraine, which is still in the hands of President Macron. That doesn't change and won't change for a while yet. So the market seemed to have looked at this and said, right, these are all big, shocking headlines, none of which change the way we allocate money. And when you look at, I think, these setups here, whether it's the S&P or it's the NASDAQ, the magic day is November the 11th. November the 11th gives you the swing high that we are now retesting as resistance becomes support. It doesn't matter which one you look at. Is it NASDAQ? Is it the S&P? But that's the line in the sand. If you get back under that level on a closing basis, I'm going to explore shorts again. Until that happens, this is an uptrend that's correcting to retest former resistance become support, and there's nothing else to do here. There's just waiting to see what happens on a test of those levels, and if they hold, then they hold. And if they don't, then they don't. But the architecture is certainly looking soggy. You're starting to see negative divergence in oscillators. Maybe that means, again, a digestion or a correction in time rather than in price, and maybe we hold ultimately at these supports, which is why I think you have to wait here. The interesting divergence is the Russell, which not only made a bid for a double top last week, in the price action both Friday and the price action we see today, we retest the underside of the range that it broke, and we hold the break in a very kind of screamingly obvious fashion. You see those long wicks over the recent bars to tell you, no, I am not going back up there. I am going to hold this.
Yeah,
So
likewise, holding the downtrend. Holding the downtrend from the November 25th, November 29th, December 2nd high. So that was drawn prior to today. That's basically where we find resistance in the market. Also swing highs that you have December 4th onwards, Ilya. Yeah, technically it looks pretty convincing that the market isn't ready to reclaim an uptrend just yet.
Yeah. And so I'm still a little bit short here after it broke that range last week. That's where I started to put a little bit on here. I'm not standing in the way of anything else. This looks doubly soggy because it's weakening when the other major indexes are strong. So to me, this is just a purely opportunistic tactical kind of an idea. And so I'm sitting on it. A pullback to the bottom of the range somewhere around 2,300 would suit me fine. I'm not going to get out of it if it keeps going, but my ambition is for that and no more at this point.
That and no more. 2410 here. It's a small loss of 0.03%, but a more significant reversal from the daily high, sitting up at 2435. So just about 1% lower from the session highs right now. In terms of the volatility profile, the vols still keep coming off the board. The high for Friday's price action, 21.7 IVR. Today's high, 20.4, currently sitting at 18.9. Even with this pullback in the NASDAQ, there's nothing there right now, Ilya. That's what a IVR of 5.3 for the S&P 500 at 7.7. That's kind of one of the things that it's difficult to square right now. Even in the midst of this pullback, we're still seeing that the market is saying that vol isn't really worth breathing any sort of life into right now. Is that one of the reasons why you're a little bit more ambivalent about the price action of the S&P and the NASDAQ in terms of this pullback being anything more than corrective at this point in time?
I think you've had all the reasons. And it won't shock anyone, I think, at this point that I can rattle you off 1,000,001 reasons why I am so skeptical of this equities rally. Having said that, when the price goes up, it goes up. And there's not a thing that I'm going to do about it to convince anyone that it isn't the thing to be doing. And so you look at this and you go, yes, it looks overcooked. It's looked overcooked for a while, but that doesn't mean it's going to stop going higher. So what you need is a clear tell from the price action to signal to you that it's go time. And I've had quite a lucrative time with pullbacks in this very up market this year. So when there's been pullbacks, they've confirmed cleanly. I've had shorts on. It's worked. But I have very pointedly not tried to sit in short position saying this market is going to have the big reversal. No, I just take stabs at it when it seems like it's feeling soggy. And when it works, it works. And when it doesn't, I run quickly. So because an uptrend is an uptrend, and when you try to fight it, you're asking for it. So you need to be very careful. As thankfully I've managed to be. I haven't gotten run over yet this year. Fingers crossed. So we'll see how this develops, but I don't think you can really short it here until it tells you that it's made a lower low, because the price action that we've seen all year tells you this market shrugs off bad news and keeps going no matter what anybody thinks.
There's a little bit of loss of momentum today. We're moving below the 1 week moving average, but you mentioned the November 11th high high at 6053.25. That's just about 20 points from where we are right now. So if you start to leak below there, you could see a little bit more corrective action back towards the 1 month moving average, currently in at 6011.75. US catalysts are few and far between this week. And quite frankly, given the market is looking at all this publicly available information about the projected path of inflation moving forward, it's really difficult for me to think that inflation is going to be the thing that tips the apple cart over unless it's searingly hot. And that doesn't seem like it's in the cards, just given the set of data that we had for the month of November. December clearly shaping up to be something different. And the Fed may take that into account ultimately. You know, you just got to stick to the levels right now. And the fact that the NASDAQ on a day like today, even with its 0.73% pullback, it finds its 1 week moving average and immediately bounces off of it. It kind of just goes to show that that underlying strength we saw in mega cap tech stocks last week isn't exactly lost here at the start of this one right now. Last week was a big week for the NASDAQ, breaking out to new all-time highs. And so today we were at a new all-time high briefly. Today we pull back. We're back to the 1 week. Is it much of anything right now? I think it's far too early to say that this is the start of something new to the downside. So I suppose continue to trudge on. This is roll week for me. So hopefully the market can squeeze a little bit higher in the very short term here. And I, have a plan for what to do now in terms of stocks and bonds, which is, I suppose, continue to press forward in stocks while getting some long deltas and bonds into place. But beyond that, this is a week where nothing's changed. Volumes are still fairly low. Momentum is still positive, and volatility is still on the floor. As traders, you have to look what's in front of you, and what's in front of us right now is the same exact situation we found ourselves in a week ago.
Yeah, I mean, I think the key here is you might be reticent to buy this pullback, and nobody would fault you, I think, for being reticent. This is high up there, and nothing is telling you that November 11th level, that November 11th high resistance turned support, that's not going to hold or is going to hold. You just don't know. And so I'm not suggesting that you jump out the window and buy everything in sight. Not that I would, but you have here maybe the makings of a turn, maybe not. And you need the price action to confirm. I don't think the CPI number is going to change anything materially unless it is completely from the moon strange and away from forecasts. But what you might get is the kind of dynamic we've been seeing in the bonds and in the dollar, where the absence of narrative changing news allows for what has been a 2-3 month reflation trade since mid-September through about mid-November to find reasons to correct, to find speculative interest unwinding. There's no particular reason why the dollar is down. Nothing has changed since the middle of November. It's down because a trend has run out of speculative juice and is correcting. Ditto with the bonds. Nothing has changed about the Fed, really. We've basically been at give or take 60, 70 basis points for next year, so 2 cuts with a chance of 3, and December fully baked in. We've known this for quite a while. So really what you're seeing is a sort of year-end redistribution, money coming off the table when it was the kind of money that was looking for a 2-3 month speculative shift rather than something longer term. You've had that happen. The news is out. It's priced in. Could you see that in stocks? Of course. You wouldn't need a reason. It would just be, event risk is out of the way. It's been a good year. Let's distribute some of these gains and have a high bonus number if you're a money manager because you've generated realized P&L that's gotten you there. La-di-da. Could you see that? Of course. But until you do, you don't. So that's why my focus on the November 11th resistance turned support is so acute. That's sort of, in the immortal words of Walter Sobchak, across this line, you do not. And so if you do, then there's some selling to do.
You know, there's an interesting dichotomy playing out in the earnings side of this equation right now. FactSet in their weekly earnings insight update pointed out that, quote, in terms of guidance for the fourth quarter, the percentage of S&P 500 companies issuing negative EPS guidance for Q4 2024 is above average levels. At this point in time, 102 companies in the index have issued EPS guidance for Q4 2024. Of these companies, 67 have issued negative EPS guidance and 35 have issued positive EPS guidance. The percentage of S&P 500 companies issuing negative EPS guidance for Q4 2024 is 66%, 67 out of 102, which is above the 5-year average of 57% and above the 10-year average of 62%. But this is why I say this is an interesting wrinkle. Due to the downward revisions to earnings estimates by analysts and the negative EPS guidance provided by companies, the estimated year-over-year earnings growth rate for Q4 2024 is lower today relative to the start of the fourth quarter. As of today, the S&P 500 is expected to report year-over-year earnings growth rate of 11.9% compared to the estimated year-over-year earnings growth rate of 14.5% on September 30th, which if 11.9% is the actual growth rate for the quarter, it will mark the highest year-over-year earnings growth rate reported by the index since Q4 2021, which was 31.4%. It will also mark the 6th consecutive quarter over year-over-year earnings growth for the index, unquote. Okay, so earnings growth expectations are going down, but they're still due at an astounding clip of 11.9%. The turkey may be overcooked a little bit in the short term that precipitates some sort of pullback, but we're not exactly looking at a bad quarter for earnings by any stretch of the imagination. It could be the best quarter for earnings in 3 years. A quarter 3 years ago that was defined by what? What was the year-over-year baseline? The pandemic year of 2020. So of course those earnings are going to be great. You know, that says something.
That catch-up growth was rocket fueled.
Was rocket fueled, right? It was thanks to a very low base level. But the fact that we're getting double-digit earnings growth here in this environment, I mean, that goes to show that companies really are just printing money right now. So I see the guidance lower. I think of the old Jack Welch, which is beat, guide lower, you know, lower the bar for yourself to jump over in the future.
Yeah.
Maybe that's at play here, because if you're a company issuing guidance right now and stocks are at all-time highs and your stocks are at all-time highs, what do you get from being overly optimistic right now?
You're not going to go out there and be a gunslinger. Why would you do that? It makes no sense.
Asymmetrically, if you say, you know what, we're actually not so sure if this party is going to continue moving forward. If it does, hey, great, your hand was on the steering wheel. If it turns south, you know what, hey, you had the foresight to say that you thought the party was coming to an end. And at least you had those comments out there as a management team to keep people's expectations a little bit cooler. No one's going to punishing you for beating expectations. The market likes that kind of stuff. So
Sure.
I see this mix here where it's guiding lower against an exceptionally high bar. And even if we miss that high bar and land at 11.9% as opposed to the 14.5 that we came into the quarter with, that's still a really, really strong growth.
It's a really
level.
good quarter.
It's a really good quarter. So look, the Aviar is 4.9. The volatility is still exceptionally low. The momentum hasn't broken yet in the NASDAQ. That's been your leader. When that breaks, we'll have another conversation. But there are idiosyncratic things here, like NVIDIA today, for example. NVIDIA now under investigation by the Chinese government for antitrust activities. I'm sure this is a very significant, serious problem. As one might contend, Ilya, this is a tit-for-tat response to the latest allegations of our pushback and tariffs, which have gone into play before Trump comes into
TikTok,
office.
that got the green light to proceed. There's that too.
There is that too. Right now, the uptrend off the lows that we have in August, September, and then late November is maintained. We're actually green in the session so far on NVIDIA, even if we're still off by 2%. We gap open lower. We trade lower. We're moving up. But it's a pretty nice evening star candlestick cluster that played out there, Ilya. So if you were short coming into today.
Head and shoulders too.
Yeah, and that's the other side of this. So look, if we really want to get bared up in equities, if you think that the generals are the ones that are going to have to lead this market lower, you're going to want to see the uptrend here broken in NVIDIA. You're going to want to see that neckline right around 130, 131 broken in NVIDIA. And until those two things happen, it looked toppy, but silver and gold were looking toppy last week, but there was no neckline break. So, if you stayed away from them and didn't get short early, you're very thankful for that today because gold's up by 1%, silver's up by 3.2. That's not.
And while
nothing.
they're not breaking out, they're certainly not running away to the downside.
Right. And so that's why these patterns don't trade the head and shoulders until the neckline breaks. So it could be here, but it's still technically within an uptrend and it's still working its way out of a breakout condition. We'll see where it goes from here. But again, idiosyncratic reasons. NVIDIA down big. Apple, for example, has been having a very strong day up at new all-time highs. Tesla, of course, has been a darling of the market since the election, which, by the way, it did ultimately run up into its measured target here that we've been talking about for several weeks on overtime, at least near 400 a share. It hit a high of 404 today. So there has been some very, strong individual outperformance in this market, broadly speaking. But the NASDAQ still, nothing changes here, Ilya. I have nothing else to say on stocks. I'm not doing much of anything here today except for watching and waiting.
Yeah, I mean, the only thing, as I mentioned, is I have a little baby Russell short looking for this double top to work out, and that's it. Until you cross the key thresholds for the S&P and the NASDAQ, there's nothing to do in either of them for me. I'm not buying them up here, but if they do cross through those support lines, I'm going to become a much more interested seller. In the meantime, I'm not standing in front of either of them.
Let's make our way over to the bond market, which are down across the curve. I'm sure we can point to oil here, and I think oil is actually just take a brief pass through here. It's up by 2.07% today, and you see those inflation expectations, starting to move up for the month of December.
Yeah.
So bonds taking a little bit of a hit, but my gosh, what a horrible environment for the typical tasty trader right now. 5.5 IVR. If you missed the move on Friday, we were talking about the asymmetric risk that the non-farm payrolls report posed, where because of the give back that was anticipated, if the market saw a strong reading, you could basically say how much of this is real besides the give back. And if you see a weak reading, then you could say, well, that was supposed to be a give back. So bonds were naturally tilted to the upside going into it. It was, I don't think, a great report, as we discussed on Friday's Futures Power Hour. When you look at some of the internals, when you strip away the Boeing strikes going back in there, about 34,000 jobs. And I think the manufacturing sector added 33,000. So without the Boeing strike workers returning, the manufacturing sector would have lost 1,000 jobs last month, which
not great.
Right. And the unemployment rate was only 0.004% away from being 4.3%. And that sends a very different signal. So I think some people were looking at the market reaction on Friday and saying, wait a second, I thought this was a good jobs report. How come Fed rate cut odds just jumped higher? Well, because it wasn't really that great of a jobs report, all things considered. But today, oil is in the driver's seat. And so like was being discussed on Friday last week, or Thursday and Friday last week, I think this low volatility environment we were just chopping around remains a great place to look for and explore what some potential low cost, high upside, longer dated bond exposure may look like, which has served us well in the past, like last April, May, in various opportunities when the market was working through a low, coming into a period of low vol. And right now, Fed rate cut odds, as you would attest to, are basically on the floor. The only way that they go further south from here is if the market thinks that we're going to get a hike in 2025. And right now, that doesn't seem like that's going to be the path forward. Even if inflation comes back, that's part of the reason why the market's taking us down from a cut every single meeting through the end of next year to just basically one or two more.
The really interesting bit about today's price action is you get a simultaneous rise in yields, in the dollar, you get a sell-off, but in gold you get a rally, and in crude you get a rally.
Yeah.
So you get this very clear picture that this is not about macro factors. It's not about the Fed. It's not about growth. This is about geopolitics, because it is very strange to see gold up with yields. It is very strange to see the dollar down when yields are up. If what you're looking at is a response to the business cycle or monetary policy or some such thing, these are very counterintuitive moves. But if they're geopolitical moves and they begin with oil, and of course, given the fall of Damascus, that makes sense. If you get that kind of a dynamic here, well, then gold is up on haven grounds, crude is up on potential supply disruptions in the region, yields are up because that might mean something for the Fed downwind, perhaps. It's interesting that the dollar is down anyway, but I'm not mad at it. I'm short. And maybe that has a little bit more to do with what's been occurring with China overnight. The Aussie dollar had a screaming positive response to yes. Another maybe bait and switch from Beijing that, again, didn't do anything but said the things that markets want to hear. But when you look at the bonds here, I think you just have to give them time. They're making higher highs. They're not making lower lows. They're clawing and scratching their way higher, but they are doing it. So you look at this and I think from my perspective, what you see is a pullback that hasn't violated the bounds of anything. And so as long as that holds, the path of immediate least resistance still seems like it's higher for bonds. They would need to start to set a lower low for that to change. Ultimately, I think the down move that we've seen since the middle of September holds. And I think these gains are probably corrective, but nothing suggests that the story is over. So I'm a little bit long at the long end here. I've been a little bit long at the long end for a while. And so I'm just waiting. I'm waiting for this thing to either tell me the upswing has run its course and I should take my chips off the table, or make a higher high. I think the risk is biased toward that higher high, just because ultimately it's the Fed that we're going to focus on with CPI this week. The geopolitical story is not going to develop quickly, and any kind of supply disruptions to crude beyond this kind of initial headline over the weekend freak out are probably not a significant risk. So looking at all of that, you probably find your way higher on the bonds. But if you do, it's not because the outlook on the Fed has changed. It's because the Middle East has just gotten the puzzle pieces very significantly reshuffled.
How seriously do you take the shift in PBOC policy?
Not very.
Why not?
They got to put up or shut up. We've heard this before. So I think the two key things here, right? Let's catch people up that are not degenerates up all night watching press conferences from Politburo meetings. We have
not me. I was up watching the Juan Soto news. I don't know if anyone cares about that besides me, but
I was up and frantically refreshing the Wall Street Journal and any Twitter headline grabbers that I follow, watching the Aussie dollar and trying to figure this out. So as I was trying to unpick it, I think Bloomberg ultimately had the really good story that pointed out the key sort of language differences. The monetary policy stance in China from, let's call it 2011 through now, has been quote unquote prudent, which basically means we're just going to try to not have a credit crisis, but we're not going to aggressively ease. That's not really what they've done. They've actually eased quite significantly. It just hasn't worked. So now they've changed their perspective to say that monetary policy is going to be quote unquote moderately loose. The last time they were moderately loose in that parlance was November 2008 through 2010, which is to say the global financial crisis. In their parlance, moderately loose is they're going to throw ridiculous amounts of money at everything.
Haven't they been doing that?
Yes, that's the thing. Is maybe now they throw it all at the same time. Maybe they're learning the lesson that the U.S. and the Fed and much of the rest of the Western economies learned during the 2008 crisis and then applied during COVID. Don't do 3 rounds of QE. Just make it open-ended until the market decides that you mean business. And in the case of COVID, the market decided that the Fed meant business between the months of March and August. You didn't need multiple years of QE. You didn't need to play coy with, okay, we're going to end it here, and then we're going to do an operation twist, and then maybe we'll do some more, and then maybe we'll do some more. No, open-ended, whatever it takes. And in a few months, the market gets the message and everything is done. So we'll see if they've learned that lesson here. I think the much more critical bit that came out of China, and you take a look at the Aussie dollar, you can see the response is clearly favorable here, was their change in talk about fiscal policy. And here they called for a, quote, more proactive fiscal policy. More proactive as in the big fiscal demand replacing spending package that everybody's been hoping for. Yeah, we've run up those hopes before.
I have a different take on that. It seems like, well, back in September, people can check the tapes. My specific critique of China's stimulus announcements were that they were all supply side driven, and that Xi Jinping is shown kind of this allergy to any sort of countercyclical fiscal policy to boost aggregate demand within the economy. So if you've been
banging on about it endlessly on macro money as well.
And you've righteously pointed out that if you look to surveys about what Chinese consumers would do if they were given direct stimulus funds, like 70% or so would say it would go into savings, which means that you're going to have this problem where it doesn't really matter how much money you flood the zone with. Making it easier for people to purchase goods and services doesn't really matter if they feel like their economic prospects are bleak. Yeah. And that they might as well save their money now because things are going to be cheaper in the future because the economy's heading in that wrong direction. So I'm taking this as a sign that, in this Politburo announcement, we see specifically the quote is, the policymakers must, quote, vigorously boost consumption, improve investment efficiency, and expand domestic demand in all directions, unquote. Now, the PBOC obviously can't do that themselves, but there seems to be this percolation of thought over the last several months within Chinese monetary and perhaps now fiscal authorities, where they're beginning to understand. Economists have made the case that more supply side easing is not going to help. And maybe this is like the early indication that fiscal authorities are getting a hint that this is what needs to happen.
I think that's exactly the hope, yeah.
But we're not there yet. Like, we're really not there yet. But it seems now that there is an understanding, at least with some people on their hands of power, on their hands of the levers of power, that the problem in China isn't that there's not enough credit around. There's more than enough credit around. It's that there's no demand for that credit. There's no demand for that liquidity within the system. And so they need to, the PBOC is doing everything they can, but there's going to have to be fiscal actions done moving forward. So
that's exactly right.
This may have a little bit more staying power, right? Like Chinese equities today are having a bang up day, up 8+% the last time I checked. But there's, there's a limit right now how far this can run. But like we saw in September, was it just day one? No, you got the big explosion higher in price. We see this in September, right? September moves on, and then we get a few days of run up here. So if this is really like day one, fading this move in the Aussie, probably right now, not the best set of circumstances, although we'll get to that when we get there in the currency section. As it pertains to bonds, part of me sees the move in bonds today as, maybe there's some sincere reinflation vigor afoot with gold, with the Australian dollar, with oil prices. And we're pricing in a little bit more inflation than we thought today because now China's economy isn't going to be stuck in a deflationary spiral. Policymakers are finally getting the clue that they need to do more than just flood the zone with liquidity.
What's interesting here, mainland stocks actually closed down today. Hong Kong was up 2.7, 2.8%, but the mainland benchmark, CSI 300, their kind of version of the S&P 500, it's down today. It's only down a little bit, but it's still within its range, which is an interesting sort of thing here because it suggests that China has helpfully stopped reporting cross-border capital flows via the Hong Kong Stock Connect, the Shanghai Shenzhen Stock Connects to Hong Kong, and
helpful.
That's not helpful because there's no way to tell just how anemic these flows are. In fact, that was one of the key indicators I was looking at coming out of their COVID lockdowns, going, if this is really a recovery, where's the money? Why isn't the money flowing anywhere? Where's the recovery then if the money isn't going to opportunities there? And apparently authorities in China figured out that people were looking at those things and going, yeah, no, you're not doing what you say. And they said, you know what? This is not helping our credibility. So rather than lean in and actually do some demand support, we're just going to stop reporting the numbers. So it's difficult to see. But if you look at something like an FXI, you were just showing bang up day, ASHR looking good. Actual mainland markets, futures markets on mainland? No. So you wonder if this is optimism from foreign investors and how much it lasts. Because again, to your point, I think it is exactly right to say that the reason the markets are optimistic, looking at the Aussie, looking at the ETFs, but certainly the Aussie, which was moving already overnight on this, the hope is that there is fiscal stimulus finally coming because the economy has had no demand for 6 consecutive quarters. If you very clearly look at the last time the Politburo sent you this kind of signal, you had a massive rally in onshore stocks, and that stimulus never came and nobody said another word about it. And now we're getting the same kind of signaling into year end, in the immortal words of Jim Cramer, maybe to create a level of activity before year end. But who's to say? At this point, they're going to have to do it for me to buy it.
Ilya, we turn our attention to precious metals here, and metals broadly speaking today, which are up. Gold up 1.01, copper up 1.8, silver up by 3.08%. June 7th, 2024, the PBOC formally announces that they are done buying gold, which, considering they were the whale in the market, that may have been pushing things up at the start of the year. It made sense that they wanted to see if they could get better value for their price. You and I have made the argument that when you look to various FX reserve metrics that the regional authorities in China put out, you can make the case that they were still adding gold, if not formally, but informally. That policy officially comes to an end here today, where they are back on the gold buying spree. They announced that they're buying gold again starting in November. So that, I suppose, fortuitous timing. I would imagine that maybe that's around November 14th when they resume their gold buying, considering the downside aggressive price action for the first half of the month. I digress, though. With this announcement being made formal, coupled with those stimulus announcements, today is obviously a good day for the metals, but it doesn't change anything from my perspective. I mean, I still have my position
Not
on
a thing.
I'm grateful for this because I was at a max loss long position in those out of the money call spreads. So maybe this gets something going here that we can work with now the next few sessions. But other than that, in terms of deploying new capital around the holidays, in both gold and in both silver, has much of anything changed? Well, in gold, you're still in that symmetrical triangle or head and shoulders consolidation, still trying to sort through which way is which. In silver, maybe we now have a bit of a double bottom in the short term to work with, but it still doesn't necessarily speak to that significant of a move higher beyond a return to, we'll call it 32 less 30. $2 higher brings you into 34. Basically the underside of the breakout territory that you have from the middle of October. So again, still chop within a range. Is that worth trading right now? Perhaps it was a few days ago if you got long, but chasing this to the upside, I'm not convinced. I'm not convinced about the metal still, even with all the geopolitics of it all, because the volatility, quite frankly, still just isn't here. I know it's a 32 in silver, which is a little bit up from last week, but it's still just 54.5 here in gold. And we have lower gold IVR readings at the high end today than we did on Friday. So nice bit of fundamental news, not much differential in price action. I wish I had still had some of that silver I abandoned a few weeks back, but we're right back to the levels where I abandoned it back in November. So I guess I'm not too worried.
Yeah, I mean, you look at this and you go, okay, you've been stuck, let's say gold. You've been stuck in a range between, let's call it 2,700 and 2,600, broadly speaking. It's even a little bit narrower. Let's call it 2,604 to 2,670. But broadly speaking, 2,600 up to, let's call it 2,680 even. Did we break out of that range today? No.
Nope.
We've been sitting in it since November the 26th. I'll be back to watching these things when they do something. At
crude
this
oil
point,
here,
not so much.
No, crude oil here is really kind of in that same boat where it's not really doing much of anything. Sure, it's up 2% today, but contextually, it's still, broadly speaking, in that 66 up to 72, $72.50 range. I suppose of note, it's a bounce off the September and November swing lows here. We fell into that on Friday. We're back up off of it today. Maybe it's because of the China demand story, of course. It's the world's second largest economy. And if China's really trying to stimulate demand, then demand for energy should go up. Broadly speaking, the correlation between global GDP and demand for oil on a quarterly basis over the past 30 years is about plus 0.92, so very close to perfect positive correlation. And so again, more demand out of China, more demand for oil, end to Ukraine war, or at least a ceasefire there. China has to go back to buying oil in the market. I still have nothing here. It's a 4.7 IVR, so I suppose.
And we're sitting at the bottom of a narrow range that we haven't done anything with in ages. So, okay, yeah, like it's why I'm sort of it's why I'm not so moved by the move down in bonds today. Because yeah, okay, fine. There's a move up in yields. Why is there a move up in yields? Well, gold is going up with it. Crude oil is going up with it. But neither one of those things are making a break or anything that looks like that, at least for today. And so, all right, there's been a geopolitical headline that got markets spooked. That makes sense. It's a big headline with potentially implications, but are they near-term implications? Probably not. And if they're not near-term implications, then what does this change? Probably not that much. And if it doesn't change all that much, as the price action in crude and gold ultimately would suggest, positioning-wise, breakout-wise, well, then the bonds are probably only correcting.
One way to get away from this is if people are looking to take on some risk. The reverse iron condor here, if you're long at the money, call and put, which here would be 68.5, and then you look to sell the wings out at 58 and 78. It's a 58% probability of profit.
Expansion.
Yeah, because we're at a 4.7 IVR, right? And it's basically saying that we're rock bottom, we're coiling. There is going to be a breakout, a release of this potential energy into some kinetic energy. We don't know which way it's going to go, but it's going to be away from here, right? If you're of that type of mindset, there are ways to express that view with long enough duration, although it's worth noting these are fairly bigger trades, given the buying power in here. Doing it through a different product, maybe away from futures, something like USO could be a way to articulate it, or trying to do it through MCL. MCL, MGC, MES all have liquid, micros, and options markets. So just keep an eye on that. If we go over to MCL, for example, we were looking at the same thing type of setup here. You know, we're talking about buying power of 443. Let's go. Similar setup. All right. So basically the same exact trade. This one buying power of 549, risking one to make one, which at a 58% probability of profit, that's pretty darn good. Usually when we're at like that 60, 65% probability of profit threshold, we're talking about something in the neighborhood of like 1 to 3 or even 1 to 2. The fact that you're at 1 to 1, this is one of the cheaper times that you're going to have the ability to express this trade. So this is on my radar this week. It's not the typical way that we approach crude oil, but it may be an effective way to approach crude oil. Ilya, we've been talking a lot about the Aussie today already. We could go over to the yen briefly here and have a discussion about why it is so weak on the session. Maybe it's a growth story. You're not going to hold the regional safe haven if growth's coming back to the region in the form of chart. There's also the oil story. There's also the yield story here. But Aussie yen, that's a huge divergence. And Aussie yen is seen as a risk bellwether. When you look at the pullback in stocks, do you care more about what FX is telling you about risk on a day like today, where the yen is down against basically everything? And then the dollar is kind of right there with it, right? Everything else versus the dollar is up. What's your take from the world of FX as we start this week, where we have a BOC meeting and an ECB meeting on Thursday?
I think what you see in FX probably is as episodic as what we see in the bonds, in the sense that you're getting a reaction to a geopolitical headline coupled with a reaction from the China headline when it comes to the Aussie. I mean, that was very clearly cause and effect. You could see it. The news was coming. The Aussie was screaming. It was, I think, pretty straightforward. So I think these are more so idiosyncratic factors that are maybe good for a day or two. We'll see if China continues to show vigor. Doesn't look like the Aussie wants to break out here on this news. You look at the euro, it still seems to be building that head and shoulders. You look at the pound, and it may have built a head and shoulders. So you think, I think, path of least resistance, still lower for the dollar when it comes to European currencies. Maybe less so for commodity currencies, but with the China story, that's now in question. So we'll see if the Aussie decides to join the broader dollar weakness move. It's been notably diverging. And as far as the yen, I'm just as suspect of that move as I am of the move in bonds. I think it's ultimately a geopolitical response that doesn't last if you look at oil and gold and their capacity to actually make a trend change here, rather than something that sticks. And I think when you look at the yen, you see that this is a correction happening within a range that's carved out over the past several days. This is not a breakout move.
No, and you talk about a potential inverse head and shoulders in the British pound. It does look like we may be working through that here in recent sessions. We could see here through the 12th of November up to today, a swing region right around 127.5. If that's the case, it gives you a target north of 130 right now, considering this bottoming process took place over the course of, we'll call it 2 weeks. That, typically head and shoulders patterns unfold, or inverse head and shoulders patterns unfold about 60% plus of the time that it took to form them. So this could be resolution before the end of the month that would speak to a sharper dollar turnaround to the downside. The euro likewise is in a very similar spot where symmetrical triangle or inverse head and shoulders pattern, either way, we're kind of getting into a decision zone this week. And what a great place to be doing it, because it's the ECB on Thursday. And where are we today with our doji candle? Resistance up against the 1 month, support against the 1 week, a place of maximum indecision. Perhaps this too is getting ready to pop off, just like crude oil. Maybe a reverse iron condor there plays well. What's next on this calendar? Tomorrow, a very light day, but there's a 3-year note auction at 1 p.m. and the crude oil stock change at 4:30 p.m. Eastern. As we wind down the calendar, a brief look at education. Head over to tastylive.com, top banner, learn, begin futures, where you can find this great coursework put together by the fine folks on the Tasty Live research team. Today we're talking introduction to market sectors. Ilya, in the futures market, there are 6 sectors that we talk about typically, although one doesn't get much love from us here. Energy futures, equity index futures, metal futures, interest rate futures, foreign exchange futures, and of course the unloved but necessary agriculture futures. That's where it all starts.
For Westwater's return to tell us about these things.
Should be next week, perhaps. But ag futures, it's where it all starts for the futures market. So they deserve a little bit more respect. In any event, go to tastylive.com, top banner, learn beginner futures, where you can find more information about the futures market, or click the link here on the bottom of the screen. It takes you there directly. Ilya, we're done here for now. We will be back together later today for overtime, 4 p.m. Eastern, 3 Central, right after last call. So be sure to come back for us. Until then, though, there's more Tasty Live coming at you. After a brief break here, we'll be up next with Dr. Jim Schultz with From Theory to Practice. It's an extended edition, so be sure to stick around. See you soon, folks.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. I'm so thankful that you are here. And, man, I'm so thankful for everybody that came on Saturday to the Phoenix Where is Bat show. We found Bat. He was actually in the physical building, and so it made it a wee bit easier on all of us to figure out where he was indeed. And so thank you guys so much for being there on Saturday. It was an amazing time. It was just an incredible time to get to, do the show and meet so many of you guys before the show and after the show. It was just really, really awesome. That's really a highlight for me. I really enjoy doing that. It's just so terrific to get to put, names to faces and faces to emails and faces to YouTube chat handles and all that kind of stuff. So it's amazing. So thank you guys so much, because I know I say this all the time, but it really is true. We could not do what we do without you all and all y'all for my Memphis, Tennessee crowd. So thank you guys so much for all the support of the live shows, whether it be in person or the live daily show on the network. Just thank you guys so much. If you're watching over on the Tasty Live network, I would actually bounce on over to YouTube. If you bounce over to YouTube right now, you can hop into the chat. You can troll all of my trades. You can communicate with your brethren that are also watching the show. It is a good time had by most. And you can ask me questions. Drop your questions early in the chat, because we have an extra long show today. We're going all the way to 3:15 Eastern, 2:15 Central. So if you drop your question in the chat in the next, I don't know, man, maybe 3.5 minutes, there is a good chance that I will get to the question, because I typically move sequentially and I get to the Q&A portion right around the halfway mark of the show. But, man, I don't know, guys. Today the market's actually down. I don't know, Josh. Let's pop in and take a look at what's going on here in the old stock market. So, man, the S&P is down 25. Man, that's not good, guys. This could be day number one. Is this day number one for my Tom Sosnoff fans that are watching the show? Is this it? Is this how it starts? S&P is down 25, risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 152. You got the boomers down 116, and then you have the Russell 2000 futures index down 3 on the day. You got bonds down 24 ticks. You got notes even down a little bit. You got UB40 even down a little bit. You got the Bitcoin bros struggling a little bit, down 2,000 today. And so gold is kind of your flight to quality, apparently today up $26. And so, man, I don't know. This could be day number one, guys. It feels like day number one. And so if we go down and check out some volatility, man, look at the VIX today. Ooh, look at that. VIX up $1. VIX up $1? Wow, that's a pretty big move in the volatility index. I mean, this could be the start of something, right? I don't know. I mean, it's a Monday. It's still kind of a brand new month. It's we got, we're wiping the slate clean. This feels like day number one. This feels like the start of something special. And by something special, of course, I mean NASDAQ 22,000, probably tomorrow. It's probably just going to, just happen kind of with the quickness. So VIX up $1, and then you've got volatility futures. Volatility futures are only up 33 cents. And so a little bit of a mixed bag between the spot volatility, the VIX, and then the future volatility, which was the /VX, only up 30 cents. But it's, it's a little something. It's the start of a little something, and beggars can't be choosers. And so we will see what happens from here. So, all right, what I want to do, let's comb the streets, man. Let's go through the portfolio. Let's kind of see where we're at. Let's see if there's any, leaks that need to be plugged. I don't really think there are. I think it's pretty much just, going completely underwater, kind of as, a total package from the portfolio standpoint. And so I don't know if we can plug too many leaks. I'm pretty sure the whole thing is just going to be, sunk like a Titanic here pretty soon. But we'll see what we can do. Let's see what we can do for the next couple of minutes. And then we may do a new trade or two. I was looking at Tesla before the show, and this kind of piqued my interest. Because, guys, I don't know, man. I've seen some crazy markets. I've seen some crazy stuff. But look at this. Look at this stock, man. That's crazy. Look at this. I mean, you got Tesla trading around 220, 230, right before the election. right? And then obviously Trump wins, and Elon apparently is now his right-hand man, which is kind of news to all of us. But then you've got, you got a little gap and go right there. You got a little gap and go right there. You got a little gap and go right there. Like, that's a little unusual, right? That doesn't usually happen. You normally kind of have a gap and crap. Like, normally you kind of have a gap and just flush them. And so the gap and go 3 in a row like that. I think we got to fade this move, guys. Isn't Tom short Tesla? I'm pretty sure he is. He's been short Tesla. I think he got short at like 150 or 160. So we're not in quite as much pain as Tom might be in. But has Tom ever steered you wrong? Has one of Tom's trades ever gone astray for you? And so I think this is a good strategy for us to tail Tom, because I think it's gonna work out pretty well for us. So we'll do that in a couple of minutes though. Let's go ahead. Let's take a look at, man, where are we at? Where are the leaks that need to be plugged? We'll go ahead and we'll go down the list. Man, I see you guys. I see you guys in the chat already. David Calmore's in the house. Jim's in the house. YouTube Jim's in the house. Rob Banks, Raul, Grumpy Mike, VJ's in the house. Man, I see Drone and Junior Mac. Man, look at you guys. Tyler's in the house. Tyler talking about CPI. I see that really quickly, just glancing over. I'll tell you what about this CPI print. That's Wednesday morning, right? Yeah. So we've got less than 2 days. We've got less than 48 hours. Right? I don't know that I've seen a more important CPI print than the one that's coming on down the chutes on Wednesday morning at 8:30 Eastern. So you've got about 36 to 40 hours now to get all your affairs in order. Like, I would get the wills taken care of. I'd get the living wills taken care of, the dying wills taken care of. Just go across the board, wills done and dusted, right? Get that stuff tidied up because you don't have much time left. The bunker, probably a good idea to make sure that you're stocked. Probably a good idea to make sure that you got your blankie in there, you got your pillow, you got your Amazon Fire Stick, like you're ready to go down there in the bunker for Wednesday morning. So, that's what's coming on down the chutes on Wednesday. I don't think it's going to be good, guys. But anyway, let's take a look at what's going on here. So, let's go top down. We got DIA. We got a little Diamonds Iron Condor. Man, there's nothing like a Diamonds Iron Condor that's deep in the money. That's taken on a ton of water to kick off the show. And so 11 days to go. You can see it's pretty much marking at maximum value. And so we only have another 16 to 20 cents to lose in the trade. There's no reason to take it off right now. There's no reason to take it off. There's really no reason to roll up the untested side, in my opinion. We can't roll out for a credit. I can even show you if we try to roll this thing out to the next cycle, it would be a debit, which would mean we would be adding risk to the trade. So we don't typically like to do that with defined risk trades. Sometimes there may be unique circumstances where it might make some sense with, if it's only a modest debit, like a nickel, like a dime, whatever. But, you start getting into significant debits, it doesn't usually make a ton of sense. And so that's the main reason why we don't like to do that. And so here, I'll even show you. If I go to roll the put spread side, this will probably be a credit because it's the winning side of the strategy. If I roll out to January 10th, which is Penelope's birthday, I should be 10 on January 10th. That's crazy. I can't believe that, guys. Guys, my oldest daughter, I have Penelope who's 10, and then Amelia, who's obviously the trading assistant, my intern for the show, also my 4.5, almost 5-year-old daughter. She'll be 5 in March. And then Eli is kind of in the middle there, right between them two. But Penelope is going to be 10 on January 10th. And what's crazy about her birthday is not only that it's coming up, but also secondly, in 2016, on January 10th, that was the day that we made the trek. It was me, Autumn, Penelope was 1. It was her first birthday. We drove from Charlotte to Chicago, right? We had the 2 dogs, Teddy and Crouton. We had the 2 cats, Biscuit and Barry. And we drove from Charlotte, where it was beautiful outside. We drove into an ice hailstorm on January 10th, 2016. And my wife, Autumn, being from the South, like she had never lived in a cold climate before. And so it was quite an eye-opening experience for her, quite a shell shock that she had to kind of work through. But for me, it was kind of like, walking into your favorite pair of slippers, man. Because I grew up in Detroit. I'm like, God, I'm home. I'm home. Because the climate between Chicago and Detroit is very similar. Although I will say it is significantly colder in Chicago because of the lake effect. Because of the lake effect, it is significantly colder in Chicago. So I will give them the W there. I mean, they haven't had too many W's this year. Bears are 4-9. I mean, my Lions at 12-1. It's like, you got to give them a little something so that way they'll keep coming back and they'll play with you again. But anyway, I digress. If I roll out this put spread on January 10th, I get 8 cents on the put spread side. If I do the call spread side, it's going to be a pretty significant debit, I would imagine. Yeah, so it's a 49-cent debit. I actually thought it might be more. So you'd be looking at, net debit of 40 cents. I don't know, man. I mean, you could maybe make a case for that. I'm not going to do it just because, it's early in the week. We try to keep things kind of buttoned up on like Monday and Tuesday and then let the wheels kind of rattle and fall off by Friday. But here, we'll just sit tight. We'll sit tight. We'll stew in it. It's probably not coming back, but we've already absorbed, the pretty close to the max loss on the trade already. So DIS, this is a long put that we have on that's at the 100 strike. So you've got Disney down $1.68 today, which is good for us, but we need about 11 more days like this one. Like if I could just get 11 more days like this one, including Saturday and Sunday, that would be really good for this position. It's probably not going to work. It's probably not going to come back. This was a holdover from a put crab strategy. And this, from what I understand, we've now done maybe a handful of crab strategies. And I really like the strategy. I mean, it's great, especially when they work. Like they're amazing, right? But sometimes they don't work. And so it's like, well, what do you do when they don't work? Well, it seems to me like the most natural adjustment to make is, if you do a put crab strategy and the stock rallies, which is exactly what happened here with Disney, then you take off kind of the guts of the strategy. You take off the ratio spread portion of the strategy and you leave the extra long put as just kind of a flyer on, the stock. And if the stock, comes back down, you can sell premium against the put and, reduce the basis. And I think we've done that in like Oracle and Google, and we've done that in a couple of other trades kind of along the way the last, maybe 3, 4, 5, 6 weeks. And so for this one, it just didn't work. And that's just, that's just the way it goes sometimes. And so DIS not coming back. We've got GLD. This is our big boy Scotty S. Iron Condor. It's a $15 wide Iron Condor. Man, look at that guy. That's a little hefty. That's a hefty Iron Condor right there. You've got the stock at 245, which is good for us. Anywhere between, I'll even grab my my Diet Strawberry here. Anywhere between 240 and 248 is going to be a good stock price for us. And you can see we're already starting to move the needle on the profitability just a wee little bit. It's not crazy. Like it's not going to necessarily, move the bottom line on the year significantly one way or another, but it's a start. It's a start. Again, guys, this is day one. This is day one. This is not day 8. This isn't day 33. This is day one. Right? This is day one. So with GLD, we sit tight and we do nothing. And so MSTR, this is where you guys tricked me. You got me. Man, I was trying to stay away from becoming a crypto bro, but you guys roped me in last week on Thursday, it must have been. And now I'm having to, just absorb this huge down day that Michael Saylor and y'all got me into with MSTR now down 21. Little micro strategy for you guys. And so our spread is hanging in there so far. We're only down about 14 cents on the trade. I would imagine that's because the implied volatility might be dropping in MSTR as the stock goes down. This might be one of those more, I hate to use the word unusual, but it's just not really, it's not common. It's not common. It's not common ground. No. I'm not looking for common ground. A common denominator? No, there's some other common something that I'm looking for, and I can't find it. And so we're a little rocky here on this Monday, coming off of, 5 hours each way. It's a 5-hour flight from Tampa to Phoenix and a 5-hour flight back. And so it was no problem. Like, we watched Rounders on the way out there and a little Sebastian Maniscalco. And then on the way back, we watched a little Molly's Game, which is an amazing movie, by the way. I know that movie's kind of old. It might be even 7, 8, 9, 10 years old. Man, that movie was excellent. I was like, wow, that movie was so good. Jessica Chastain was great. I was like, wow, man, that was really, really good move. And then we did a little Nate Bargatze, obviously. I mean, you got a 5-hour flight. You're doing Sebastian Maniscalco on one way and Nate Bargatze on the other way. This is just basic long flight strategy. But man, we're a little rocky. We're a little rocky today on the program. But MSTR, we'll sit tight and do nothing. It is a vertical spread, so we don't really need to do too much adjusting to the strategy. So that fits pretty well with our do nothing approach, which we like to employ as often as possible. And so here with Netflix, wow, look at Netflix. Netflix down $20 today. It was up to $9.35 on Friday. Wow, that's crazy. I didn't really see the market on Friday. I know we had non-farm payrolls, and I'm still shocked that we made it through the most important non-farm payrolls of my lifetime, without question. Like, not even close. There is no close second. And somehow here we are. Like, I'm still not convinced this isn't the afterlife. But assuming it's not, here we are. And, man, Netflix down $20 today. So that means this thing was up to $9.35 on Friday? What are you guys doing out there, man? What are you guys doing? Look at Netflix. This thing was it was up to $9.35. That was the high on Friday. And then today you had a little gap down and it's continued going lower. And so we'll have to wait and see. Obviously, this is just going to be the tiny little dip before the mega pint rip that is coming, as if, this 75-degree this 75-degree line higher isn't enough of a mega pint rip. We need a little more. Like, we need a little something up here. Like, I need this thing to kind of get right there. I'm going to say, how long is that going to take? I don't know, 19, 20 hours? Like, it should be there by middle of the day tomorrow, I would say. 960 to 980, somewhere in this range. This is what my own proprietary technical analysis is telling me, right? This is called the mega pint rip formation, right? Where you rip it once, you get just a tiny little drop, and then you rip it again, right? And so this is basically what every stock and index has experienced over the course of the last 4 months. And so it's happening again right now. Right. And you can only find this type of analysis on the Tasty Network. You will not find this anywhere else on the internet. You can look and you can even Google it. But since I just made this up on the spot, you're not going to find it. Like, you're only going to find this here on the Tasty Network. And so Netflix down $20. Our long put spread is not looking too good. And so since it's marking for nothing, there's no reason to take it off. We'll just leave it on, and we will hope, beyond all hope, that this thing can come back. So NVIDIA. We've got NVIDIA down to 138, 139. We have a short put spread that was a holdover from the earnings trade that we did in NVIDIA. And so right now we are not going to do anything because we have 39 days to go, which is an enormous amount of time. I mean, you're getting through, we're getting through the end of the year. I mean, we're going to get through all the window dressing at the end of the year, you're talking about mega pine rip. Like, you think the Santa Claus rally bros are going to be denied? Like, you really think that they're going to be rejected? Like, I don't think so. And so NVIDIA is going to be, 160, 180, 205 by the end of the year probably. And so I'm not too concerned about this short put spread. This thing should be fine. And so we'll do nothing. And we'll sit tight. So SPX, yeah, this was our butterfly that, it's worth 43 cents now? Interesting. Huh. Oh, because of okay, all right. So I looked at this coming into, earlier today and then coming into the show because, we're basically on the lows on ES right now. Maybe I take that back. We were a little bit lower. But when I looked at this, I wasn't looking in the portfolio at the low print on the day. And so when I saw this, it was worth like 10 or 15 cents. I'm like, all right, so it's done. It's not coming back. I'm not going to sell it off for 10 or 15 cents. Like, there's no economic significance there. I'm just going to hold it and let's just kind of see what happens. Just thinking, okay, it's probably gone. But now all of a sudden, guys, we've got some life. And so if you go back and watch the show on Thursday, you'll see me put this trade on. I did this trade. Let me bring up my change here really quick. I did this trade back on Thursday. And we did it on Thursday at 2:30, so 2:35, right? So we did the trade back then. And, I talked about this for a while. We probably did, 15 to 25 minutes of analysis on this trade. So you could start watching the show at about, 12:10, 12:09, and that's when the SPX analysis will begin. But I wanted to do a Friday trade. That's what I would normally do because this was an NFP trade. This was a downside play on the non-farm payrolls print. And I didn't see I was up in the air and I was trying to watch the markets a little bit. The Wi-Fi was a little bit shoddy. But I obviously Friday was a fairly strong day in the markets. But I didn't see what exactly happened on the number, on the print. If I remember correctly, there wasn't too much either way. It was kind of a non-event. It wasn't super eventful one way or another. But had I done this trade on Friday, it would have absolutely been just dead to rights. It would have absolutely just been, stack of cash, lit on fire, over and done with. But now, I don't know, guys. We got a little something that's cooking on the back burner. Right now it's marking for 38 cents. We could take it off and save our 38 cents. I don't really want to do that, I don't think. We've come this far. It's like, man, you've got, can we get them to stomp on them going into the close? It's been done before, right? It's happened before, at least theoretically, at least as an intellectual exercise. Expected move equations are, they're required to have both sides. I understand practically this time is different. This market only goes higher. I got all that. But theoretically, they have to have both sides. You have to be fair and balanced, man. You have to appeal to all your voters. You can't just appeal to half of them. And so if you look at this, let's hold on to it. Let's just see what happens. And here's the beautiful thing about this. With SPX, it's cash settled. And so if I'm not watching this into the close, which I may or may not be doing, I'll probably be, now that it's kind of interesting, we're obviously we're going to watch it together for the next, we still have 50 minutes to go in the show. Like, we're extra long today to 3:15. And so, I mean, we're going to take this thing all the way to 45 minutes before the close, you and me. So that's kind of cool. And so we'll see what happens. Maybe we get, ES down 10 or 15 or 20 more points in the next 45 minutes, and we can cash it together here on the program. And so we'll wait and see. But then after that, even if I miss it, and here's what's great about SPX and other cash settle products. If I miss it and like that, this 60-50 put sneaks in the money, and let's say SPX goes down to like 60-45 or whatever, and you're like, I wasn't there at the closing bell, I missed it, what's going to happen? It's just all cash settled. Like, you're not going to wake up on Monday morning with a bunch of shares in SPX. Like, you're going to get paid for the in-the-money long put that you had, and you're not going to have to worry about the rest. And so that's kind of nice. Like, that's really a benefit to doing butterflies in, products that are cash settled. So SPX will sit tight. I didn't really have too many hopes in this, but now all of a sudden it's breathing some life. Like, we got a little something. You got NASDAQ now down under 500. Man, say it ain't so. Man, say it ain't so. Wow. You guys know what to do. We've had situations like this before. Now, you guys know what to do. When you see a lot of red on your screen, which now all of a sudden NASDAQ down 164, ES down 27, Boomers down 100, we just need a few computer restarts out there. If you just do a couple Control-Alt-Delete, Control-Alt-Deletes, if we get enough of you just restart your machines, because this is obviously a bad quote feed. This isn't the real markets. The real markets are never red. And so if we get enough people to just clean out, do a disk drive, do a little something to clean up some of the hard drive space on your machine, give it a fresh restart, we'll be back to unched. Like, we've done this many times before. I can't do it on the show because I'm live with you all, and then we all would just be sitting in silence for 3 minutes. I mean, you'll never sit in silence with me, but we'll say a bunch of rigmarole that doesn't mean anything to anyone. And so you guys need to restart your machines, though, and that'll bring this guy back. But TLT is our next position. So we have a long call on in here, and it's not looking great. It looks like the hourglass is going to run out. But the good news is there's only $11 of extrinsic value left in this trade. So we're not real. This is just a pure stock play at this point. This is just a pure bullish play on bonds. That's all it is. I mean, that's what it was intended to be from the beginning. And so now it's like, well, we could take it off for 365, but I would rather, just go, let's leave this guy on, let's run it down to the wire, and let's just kind of see what happens and then make our decisions next week. Because my objective with this trade when we put this guy on, which was a while ago now, let me go ahead and let's take a look at the Allston chains. Yeah, it's more than 30 days ago. More than 60 days ago? No, really? At 180? Wow, we did this trade back on September 12th. Wow, that was a long time ago. That was like 3 months ago. That was a very long time ago. And so we did this trade for 1080, and my objective at the time was for this to be kind of a poor man's, kind of a covered call substitute. It basically was a poor man's covered call, and I wanted to use this as a covered call proxy. Now, what's really cool, and I kind of teased this in the maybe a few weeks ago, we are going to start weaving in more stock on the show, and it's going to start this week. It's most likely going to start Thursday. It may start as early as tomorrow, but I think I need an extra day or two kind of getting settled back from Phoenix to get myself kind of situated with how I want to play this. But I know a lot of you guys out there are, you're mostly in stock. Whether it's individual stock that you've just bought because you like the company, whether it's company stock that you're invested in because you get discounts and employee share programs and all that kind of stuff, or it's just mutual funds through retirement plans or index funds or whatever. A lot of you guys out there, or like your friends and family, like they're in stock. They don't know anything about options. Like, and they're doing great. Like, obviously, I mean, strongest bull market of all time. It's like, you're going to do pretty well. And so you're like, man, do I really need to change anything? Do I really need to learn more? Do I really need to, challenge myself to get better? You may not feel that way right now because you are doing so well. But I know we joke about it, and I know that it's a punchline oftentimes on my show and all the other shows on the network. But I promise you, this is not going to last forever. Like, there is going to be two-sided action. There is going to be back and forth. There are going to be some downticks that come our way. And man, when you have a product like options, you're able to navigate that. But I want to extend an olive branch to my stock brethren out there. I want to show you guys that I'm one of you, or at least pretend to be one of you. right? I want to join your little club. I want to get a little invite to your underground poker game, Molly's Game Style. So that way I can kind of get in there, we can become friends, and then I can show you all the benefits to options trading. And so that's what we're going to do. We're going to start, man, I'm just going to buy, I don't know what I'm going to buy. I'm probably just going to buy like some Bank of America or something on Thursday. Like, let's get a reasonably small stock position, and we're just going to hold the shares, right? Tom's going to love it. He's going to love it, right? We're just going to hold the shares, and we're going to be reading fundamental reports. We're going to be listening to earnings calls and not like looking at moves from the actual earnings report. We're going to be listening to the calls, like trying to figure out like what's the financial health of this company? Like, where is it going? Like, do I use the product? Like, all that kind of stuff. It's all going to start this week, man. I think it's going to start on Thursday. And then, as time goes by, we will subliminally advertise for options along the way. I will kind of try to subconsciously weave in the benefits of options along the way that just aren't available with stock. And so, but we're going to do it. We're going to do it together. So that's TLT. UAL. All right. So UAL is actually doing pretty good now because this thing was brushing up right against this short call strike right before we left for Phoenix last week. And now we have a little bit of a drop in little old United, down $4 today, which is great. And so we're up about $1 on the strangle. Like you can see, we're up about 90 cents. I'm going to sit tight. Let's sit tight. I mean, it's cooking, the way it should cook now, which is kind of nice. And so I don't really feel a ton of pressure to get in here and start to kind of try to usurp the natural flow and the natural process of a short strangle that's working. Like, we've got some theta. We've got $12 of theta, man. We've got $12 of theta. Let's just let it cook. Let's let it go. And then we'll kind of see what's going on. So that's UAL. And then Uber is the last one. Uber, down another 8 cents. It makes sense, it makes sense because, the Tom Sosnoff, Tony Batista experience on with Whymo was really positive, right? Now, I was actually in the Uber that came before the Whymo. And so I actually didn't know that a Whymo was happening behind me. But even if I had, I still would have chosen the Uber. I don't know. I think Tom and Tony are lying through their teeth, man. I guarantee that they were they were frightened, that they were unsure. Right, you get into a driverless car, like it's one thing to be at the helm with the car driving, like a Tesla, like automated driving, whatever. But you get in there, right, and there's no driver. Like, there's no one that you can talk to. Like, there's no one that you can say, hey, man, like, this is not really the right way to get here. Or, hey, man, let me out early. Like, hey, something just happened, right? Hey, my wife's in labor. Hey, I got to pick up my husband from whatever. Like, hey, like, I got to stop. You can't do that. You can't do any of that. Like, you are locked in. You are going to your destination. There is no time for audibles. You're not walking up to the line calling a Jay Fiedler audibles. It's not going to happen. Right? You've just got to run the play, which is typically what Jay Fiedler did, which is why he wasn't that great. And so you basically have to you have to acquiesce to whatever Whymo wants to do. I'm not down with that. And so I'm gonna go ride or die with Uber. But man, right now Uber down 9 cents. It could be it could be the Whymo competition. I don't know. So all right. So what I want to do, man, I see you guys in the chat though. Man, look at you guys. I see Rob Banks. Man, Rich McDonald's in the house. Man, Cordova Dave's in the house. Man, Top Archer's in the house. Man, let me is that or Top Archer? Top Archer? I'm not sure. I looked at it pretty quickly. So let's do this Tesla trade really quick because, guys, this can't possibly last. There's no way. So Tesla down $3. I just want to keep this really simple. We got Tesla earnings on January 22nd. Wow, that's a special day. So I think I've shared this with you guys before, but this is not a Dr. Jim and how Dr. Jim and Autumn started dating story. I know I've told that story no less than 35,000 times on the network, so I'm not going to tell you guys here today. But this is one thing I don't think I've told very often. So January 22nd is a special day in my marriage with Autumn. We've been married now for 15 years. 15's felt like 50. January 22nd is the day that I proposed to her. So January 22nd, 2009, I proposed to Autumn, and she thought about it for 3 to 5 business days. And then she finally said, okay. She said, I guess, was her exact words. And so then we got married. So then I was like, well, we got to do a quick turnaround on this. Because I mean, I need this thing to expire. Like I can't have her getting out of this position. Like we got to do like a 7 DTE. Like let's do it, man. Let's do 7 DTE, which in the marriage world, engagement world, is about 8-9 months. So we went ahead and got married later that year. We didn't do no 18-month engagement. I'm like, no, man, we got to do this quick so it expires and she's locked in and she's just got the shares now. She's just got the shares. And like there's all kinds of like clawback clauses and all kinds of like she can't get out clauses. And so it's amazing. It's incredible for me. And so January 22nd was the day that I proposed to her. And February 3rd was the day that she said yes. And so, yes. So Tesla has earnings on January 22nd. Let's go ahead into the cycle before that, January 17th. And I'm kind of thinking, 395, 405 short call spread. Guys, let's not reinvent the wheel here, man. Like, I think, obviously it's a really high price stock. It's almost $400. So we're not going to do anything. That's undefined risk in here. We've only got a $30,000 account that we're trading here on the show. And so we can't do anything like that. But we could do a short call spread. We have a little bit of wiggle room, should Elon decide to do something crazy, with the Robovan and send this stock up another $10, $15, $20, $35, then our risk is defined. But we have a little bit of wiggle room. And I mean, we have, you're collecting a little over a third of the width of the strikes, kind of closer to 40%, which is where I personally like to live with my defined risk strategies. The pop is almost 60%. The P50 is about 70%. That's all looking good. The max loss is right about 2% of the account, which is also looking good. So everything's checking out, man. Like, everything is checking out. Everything is looking good. I think we put this guy on. Let's put this guy on. You guys control it in real time. If you troll it now, I probably won't get to it because I'm going to get to all the questions that came in before yours, but do it anyway. Do it anyway because your boy needs that YouTube engagement so that we can push this stream out to more people. But let's see here, 375. And all right, no takers at 375. Let's try 370. I bet you we'll find a taker at 370. There you go. Beautiful. So filled at 370. So we got a little short Tesla action. That's really what I wanted to do. And now how's our SPX trade doing? Okay. So yeah, it's only worth 33 cents now. So yeah, it's not looking good, but we'll see. We'll see what happens. So, all right, where are you guys at, man? I see you guys in the chat. Where are you guys at? All right. David Galmore's in the house. Dr. Jim, what's going on there, David? I have an SMCI covered call, stock at 21, short call at 25. That expires this Friday. The short call is way in the money with 100 deltas. How do I manage this? I don't want to take a loss. This is my rogue account. Okay, so first of all, you're not taking a loss. I mean, well, it depends on. So wow, SMCI at 44. That's crazy. So it depends on where you sold the call relative to your basis, right? So the way that you wrote the question and the way that the concern that you have leads me to believe that your basis on the position is obviously is over 25, right? So, and I'm just making numbers up because you didn't include it, but I'll be able to get us close enough to give you, some value in terms of what happens next. Let's say you bought the stock at 50, right? And the stock crashed, boom banged, stock at 21. Or no, wait, you said stock at 21. Yeah, hold on. So wait, if your stock is at 21 and you sell a call at 25, you're not taking a loss. This is a winning trade. This is a winning trade. Don't look at the short call only. You can't. It's a package deal. It's a package deal. Like your stock and your short call, it's one flesh. It's just like me and Autumn. We are one flesh. Sure doesn't feel that way a lot of the time, but it's the same way with your covered call, right? You can't be looking at just the shares or just the short call, right? You have to look at them together. And so when you do that, this is a winning trade. Now, it would be a losing trade if you bought it at let's say you bought it at 45 and you held it and the stock fell to 21 and you're like, I've got a huge loss. I'm going to sell the 25 call because that's where all the premium is. That's where all the juice is. I just want to be done with the trade and minimize my losses. Understanding that you're not getting this thing back in one cycle. If the stock does rebound back to 44 or 45 or whatever, it's going to be a losing trade. So in either scenario, taking it off is probably the move. Like taking it off is probably the way to play this. Now, what if you didn't want to take it off and you were just dead set on keeping this thing on? Well, let's talk about that for at least a couple of seconds here. So if you've got the 25 call that expires. So this is the option that you're holding. I'm 4 days away, right? 25 call is right here. Essentially, if you take that 25 call, now this is not an easy situation to navigate. So before we kind of move forward with, what the different pathways forward through the forest look like, let me make sure that you understand, that I clearly explain, and that everyone else that's watching, listening, however they're accessing the content here today, knows that this is not going to be an easy situation to navigate. And so this isn't just like rolling your intesticide on a triangle or rolling out a vertical spread that's, at the money or whatever, just do it for a little credit. This is going to take a little bit more finagling. This is going to take a bit more dexterity that, we may or may not want to do. And so just be aware of that. So you've got the 25 call. This is the position you have on right. You obviously also have the shares, but I'm just leaving, if you're gonna keep the position on, you're leaving the shares on. You're not breaking this thing apart. That would not make a lot of sense, because then all of a sudden it changes the risk profile dramatically, and you can run into some really crazy situations that you weren't quite expecting. Because sometimes when people take covered calls or vertical spreads or iron condors and then break them apart, they're left with kind of risk profiles and return profiles that they didn't quite know that they signed up for. And it's not usually a great situation to kind of voluntarily enter into. So we're not going to do that. But here, the 25 call. So basically what you would be trying to do is roll out the 25 call and either A, just add time and leave it at the 25 strike, B, add time and move up the 25 strike to some strike that's closer to where the stock is now, or C, some other option that we may find along the way as we discover and work through options 1 and options 2, because there's usually multiple ways to kind of work through this. But I want to show you first, if you take the 25 call and let's say you just roll it out to the January monthly cycle, so January 17. So I'd go in and sell the 25 call in January 17. You can do that for a 50 to 55 cent credit, right? It's nothing. It's essentially nothing. You get a little bit of extrinsic value. You get a little bit of additional decay. But does this make sense in this scenario? Not really. I'm really hard-pressed to find a good reason or justification for this. Can this make sense in other scenarios? Yes. If you're holding like Procter & Gamble or McDonald's or IBM, and it's, some shares you've had for a really long time, and you want to keep holding shares for tax reasons, or you want to keep holding shares because you like the dividend and you don't really care about the capital appreciation right now. I mean, we always care about capital appreciation, but sometimes you just have to, you got to trade the market that you have. You can't trade the market that you want, which is a quote that I've heard many, many times. And I'm still not quite sure what it means, but I feel like it's appropriate here. And so if you've got a stock that's paying you a dividend and you want to hold on to it, you don't want to get rid of it for a lot of reasons that you could have, then this could actually make a little bit of sense. Because remember, wherever you set your short call strike, you're actually protected against any drops in the stock down to that strike. Now, again, that doesn't apply to SMCI for you here because you're not getting a dividend. And so I'll probably rule this out as an option. But since, again, we're kind of exploring this in, a more complete fashion because we have, so much time on the show today, famous last words, right? This will be the only question I get to. But it's something that I know a lot of, traders and investors, this is a problem in a situation. It's not really a problem. It's a high quality problem if it is a problem. But this is an issue that a lot of traders and investors have with covered calls. So can it make sense to just roll the strike out even though it's deep in the money? Yes. In certain circumstances, when you have shares you want to hold on to for dividends, taxes, etc. Does it make sense here? I don't think so. Okay, so what is the next option? Well, the next option is now, just rolling out a little bit in time is not bringing me enough to make this worth my while. So now you've got to consider ratchet. And again, remember, I said the best option here is probably just taking off the trade. But if you were dead set on holding it and you want to try to challenge your, dexterous abilities, then maybe you have to add a lot of time to the trade. So now maybe instead of going January 17, maybe I'm kicking this thing out to, I don't know, maybe let's see March. Where does March 2025 look like? So March 2025, let me buy it back in the December weekly first. Buy back the 25 call in the December weekly. I go to March 2025 and I sell the 25 call. Now I'm picking up $2. Is that a lot of money? No. But is it significantly more than what we had in just the January front month cycle? Yeah, it is significantly more. And so now all of a sudden it's like, okay, now I'm adding something that's a lot more economically significant, and it's going to potentially pad my basis and kind of help me stay in the trade even longer. Okay. But now when you start to extend the duration of kind of, what you're willing to roll out to, you're kind of signing up for something that you're going to be holding for a lot longer, obviously. So again, this only really makes sense if this is something you want to hold for a while. And again, if it's not, see step one, which is just close the trade and be done with it. But if it is something you want to hold for a while, NASDAQ almost down 200, guys. Is this day one? I think this is day one. I think we can now officially ordain today is day one. Like NASDAQ down 194. This is not looking good for the tech bros out there. Got the Russell down 6 now. EMASB down 33. Man, we got to check in on that butterfly, but I don't want to lose my train of thought completely here. Now, though, when you're adding a lot of duration, you can also consider moving up that strike. You can also consider using some of this extrinsic value to move up the strike of where you've placed that short call option. So what I mean is this: instead of selling the 25 strike, maybe you move up to, the 27 strike. So now you can see that, your credit's only 70 cents, but this is a very, very different scenario for you, because now, yes, you're collecting a lot less. You're only padding your extrinsic value by 60, 70 cents, whatever the credit is. It's floating around as the market moves, of course. But you've also you've reclaimed $2 of intrinsic value that you would not otherwise be able to access if you stayed at the 25 strike. Now you're open up to the 27 strike. You still can't participate in any gains beyond 27, but now instead of being capped at 25, you're capped at 27. So on covered call positions that you want to hold for a while, the thing that I like to consider along the way is moves like this one. I'm going to stop now because I do want to get to more questions. And you play around with this, David, and anyone else has covered calls. Figure out, look at the balance between rolling out, 3, 4, 5, 6, 7 months in time, and you can move up the strike. The only thing I would caution you against, David, or anyone else that's interested in this, I wouldn't go hog wild and just go crazy and roll all the way up to the at the money strike right now. Even if you can for a credit, which you won't be able to for a credit here, but you can sometimes for a credit or like a reasonable debit or whatever. I would not do that because, you're really kind of chasing the stock higher a little too aggressively, in my opinion. I would much prefer to see you do it gradually over time and just give the stock a chance to breathe. Now, of course, if you run into a runaway train like the market we've had the last 3, 4, 5 months, then, you'll wish you had rolled up to the at the money strike, of course. But if there's any type of, drop or, two-way action or a slide in the stock, then you'll be glad that you were a bit more gradual. So hopefully that gives you a couple of things to think about there, David. This is a really great question. And this is what happens when they cut me loose, man. When they cut me loose on extra long shows, you get 18-minute answers, man. That's all I can say. I don't know what else I can do for you guys, Some of you are probably thinking you could do a lot more by trimming those 18-minute answers down to like 3-minute guys. But I'll try. I'll do my best. And so let's see. Greetings, Dr. Jim. What's going on there, Jim? You said YouTube, Jim. No, you're not YouTube, Jim. You're YouTube, Jim. You could be YouTube Jim if you want to be as well there, YouTube Jim. But you are YouTube Jim with a BE on the end. C plus humor, that's probably mine, probably not yours. Because yes, we are a little off our game today. So the typical B minus humor has been downgraded to C plus humor. I agree. Any thoughts for Oracle earnings after the market closed today? Thanks as always, man. I didn't have any prior to your comment, but now I might be able to find some. So Oracle down $2 today. Very interesting. So it's a Monday, so I don't really want to do an expected move butterfly. I like those later on in the week. Can we do a crab? We could do a crab. Wow, IV rank of 95? Man, what's going on in the Oracle world? Man, I don't know. I kind of think, Jim, I don't know, man. I think let's not mess around with the crabs and the expected move butterflies and all that kind of stuff. Let's just sell, because there's no premium like in the overall market, right? Like obviously, you've got the VIX up $1.20 now, almost at 14. That's crazy. You've got the VIX up over $1, which is nice. I mean, that's good for our future premium selling endeavors. But I kind of think let's use this opportunity. You've got an IV rank of 95 in an individual stock. It's Oracle. So I'm not super worried about like a 2 standard deviation move or like a coin move or a MicroStrategy move or even a Tesla move. Oracle, the expected move is plus or minus $16, which is a pretty big move, but it is almost a $200 stock. So you're talking about an 8% move or 9% move from earnings tonight. I think we just sell a strangle, man. I think we just go in here. Let's sell both sides. It's a $190 stock. We'll probably be able to fit it into our account. We're going to find out here together in the next couple of minutes. But what if we just go right to the copper strip? Let's go right to, if I sell a 172.5, 207.5. Yeah, it's perfect. It's a thing of beauty there, YouTube Jim. I appreciate you very much. That's a 492 credit, which looks pretty good. You've got a Papa 71. That looks pretty good. You have a P50 of 1. Interesting. Could be the Debs falling asleep there. I think that's Jajun's job now. And so Jajun falling asleep at the wheel with the P50 updates. I'm pretty sure it's not 1. I'm pretty sure it's closer to 90 or 80. And so the tech may have let us down, but that's okay. That's fine. We can make do and just kind of do this caveman style with like paper and pencil, and just kind of, bring up the old trade sheets. And so 71, P50 of, TBD, let's say. We're not sure. It's probably not 1 though. It's probably higher than that. And then you have a buying power of $2,000, which is about 6.5% of the account. That's perfect, man. Like to live between 3 and 7%. That's a great number for us. And we have earnings tonight. And the best part is, if it doesn't work, it's not my fault. It's Jim's fault. It's not my fault. It's YouTube Jim's fault, right? And so this is perfect. I am off the hook. I'm completely off the hook because not only is Jajun not updating the P50s, but it's YouTube Jim's fault. So man, let's do it. Let's go in here. At 486, boom, filled immediately, improved at 487. Man, look at that. All right, YouTube Jim, we're in it together, man. You and me. Don't let them tear us apart. VJ's in the house. Hey, Dr. Jim, it was really nice meeting you at the Phoenix event. Man, thank you so much, VJ. I remember meeting you and your son. Your son's name was Liam, I think, right? It was either Liam or Leo. I met two young traders. I met Liam and Leo. I'm 100% sure your son's name is either Liam or Leo. My apologies for not remembering which one it is. But I'm like 100 Delta. It's either Liam or Leo. And it's like those are so close to each other, phonetically, I couldn't really separate them in my mind. But man, please give my best to I think it was Leo actually, but it could be Liam. And so my apologies that I can't recall. But please give my best to your son. It was so great to meet. I met your wife. I believe your wife's name was Simple, if I'm not mistaken. So I think I do have that one right. And so VJ, it was great to meet you. Very, very great to meet you. And man, awesome. Or maybe I think I'm mixing up families because I met two wonderful families that were the husband, the wife, and the son. And so your wife's name actually might be Cindy. I'm getting it all mixed up. You guys got C+ humor. You guys got jet lag. You guys got everything today, man. It's brutal. But anyway, your son's name is either Leo or Liam. I know that. And your wife's name is either Simple or Cindy. I know that too. And so, man, I appreciate you, VJ, for being there at the event. And thank you so much. It really is only because of you guys that we can do what we do. So thank you guys so much. I am so humbled that so many of you guys make it out to the events. And it was really, really cool to get to meet you and get to meet your son. And please, let him know he can always reach out to me if I can ever help in any way. And so it's really, really my pleasure and my honor. So thanks for being there, VJ. So let's see. Grumpy Mike's in the house. Herb's in the house. 2-3 weeks ago, Tom, we're talking about your advising selling in the money puts. I missed the piece. Can you elaborate? Yeah, Herb. We did this Thursday. I actually talked about this on Thursday. So go back and watch Thursday's show. I actually got to your question. But again, it's always so late. You dropped the question and I don't get to it for 30, 40 minutes. So you may have missed that. But get to the Q&A section on Thursday and I actually talked about this. I talked about this for several minutes, probably 9 to 11. And so you can go back to Thursday's show and you can check that out. NASDAQ down 205. Yeah, this has now been officially cemented as day one. This is it, guys. This is what we've been waiting for, right? And so, VIX ain't going to be 13, 14 for long. It might even get up to 15. Like we may even see 1550 here in the next couple of weeks. And so Rob Banks says, good day, Dr. J. What's going on there, Rob Banks? I appreciate you for being here, my friend. Raul's in the house. What's going on there, Raul? Thank you for being here, my friend. Tyler's in the house. Tyler says, what are your thoughts going into CPI with the sudden dip this morning and holding this range? Yeah, I don't know, man. I don't know, but I know two things. Number one, this is day one. And number two, the CPI print on Wednesday, this is not any old CPI print. This isn't your grandmother's CPI print. This isn't your great-grandfather's CPI print. This is the most impactful economic number that we've ever seen. And so I would just be ready, man. You got to be ready. Again, get the rations in place. Like call, the people you haven't talked to in a while. Tell everybody that you love them. Like these are very, very important things. NASDAQ now down 210. And so, guys, it's something. I mean, we're almost down a full percent now. This is almost a 1% drop in the NASDAQ index. When is the last time you've seen a 1% drop in the NASDAQ index? At the close, intraday, it's been at least 7.5 years, right? I mean, it's been a minute since this has happened, and it's happening right now. Only on the Tasty Network, nowhere else. Nowhere else are you able to see this. And so Tyler, Junior Mac says, good morning from Australia. What's going on there, Junior Mac? Getting that short QQQ action finally. Yes, that's correct. And again, this is day one of many. This is day one of many. And so, yes, it's looking good. Let's see. Dronin, how did you peek over the precipices last Friday morning? The precipices. I believe you mean the precipice of the apocalypse. Yeah, again, I'm still not sure that this is actually happening. I'm still not sure that this is real life. And the fact that the markets are all red leads me to believe that this is most likely not real life. And so I don't know that I did, Dronin, peek over the precipices. I think the apocalypse got me just as it got you. Like maybe we really are living in a simulation. Like we have to see what the simulation, milords decide to do next. And so I don't know, man. We're just going to have to wait and see. Oh, Tyler says CPI has the market hesitant. Well, I don't know, man. It's not really hesitant. When I hear the word hesitant, I think unched. And I think most other people would agree with me when it comes to market action. When I hear hesitant, I don't think NASDAQ down 200. I don't think EME S&P is down 35. Now, what's interesting, too, about, the index levels where they are now, EME S&P at 6,000 is very different from an EME S&P at 4,500, which is maybe an obvious thing to say, of course. NASDAQ at 21,000 is very different than NASDAQ at 16,000, which, again, very obvious thing to say. But it wasn't that long ago that EME S&Ps were 4,500. It was like 15 months ago. I'm not talking about like 2013. Like this was like last year. Right. So, I mean, it's crazy, or maybe just be 2022, right? Where EME S&Ps were, 45, 4,600, whatever. NASDAQ 15, 16,000 was not that long ago. The reason why I bring that up is this, given the fact that this is now day one, man, I mean, a 700 point drop in the NASDAQ is not that crazy. It's 3%, 3.5%. That's not that big of a move. EME S&P is down 200 is not that big of a move from a percentage basis. Now, don't get me wrong. That's still going to be in the tails of the distribution. I'm not saying that's going to happen. I'm not expecting that to happen or anything. I'm just speaking statistically that now all of a sudden a 3.5% move in the EME S&Ps is not a 130 point move. It's a 220 point move. Like that's a significant difference in my opinion, and also objectively true. That is a pretty big difference in terms of like notional values changing hands and all that kind of stuff. And so, man, I don't know. We'll just have to see. But Arjun Per says NVIDIA appears to be forming a nice little head and shoulders. Yes, there you go. Which is about as worthwhile a technical pattern as my Megapint, gap and goes. You've got head and shoulders. I've got Megapint, gap and go. And so I think they're both pretty much equally as valid. So Arjun Per, I feel obligated to show on silver up 3% days. I feel obligated to show on silver up 3% days. Is silver up 3% today? Silver is up. Yeah, it was probably up 3%. Wow, 32.45. Look at that. Man, the Hunt brothers. Look at these guys. They're doing it, man. I mean, the Hunt brothers, that's like some 1970s, 80s stuff. And so, yeah, wow, look at that. Silver is, gold's not even up 1%, and you've got silver taking over today. And so, wow, that's crazy. That usually is what happens, though. We've seen a couple of days recently. I think I even called it out on the show where, you actually had silver kind of muted and gold being the overperformer, just in terms of the magnitude of the move. That's not normally what you see. You normally see silver being the more volatile play. They typically move together, of course, not always, not 100%, but it's very similar to like an S&P 500 NASDAQ relationship or S&P 500 Russell relationship where they usually move together. Not always. They are their own independent animals, but there is a high level of correlation between the two. And so normally you see them move in the same direction, but the magnitude of the move is oftentimes very different, with silver leading the way in the precious metal space, and then the Russell NASDAQ usually leading the EME S&Ps in the equity indexes, which we actually see today with, NASDAQ down almost a full percent. EME S&P is only down 0.5%. Now, of course, the Russell is closer to uns, only down 5 today. And so again, this is not like a hard and fast black and white type of thing that where it's always going to be X when you see Y. The markets are it's a living and breathing thing. Like it's just never going to be that obvious. But how's our butterfly doing? Wow, look at this thing, 50 cents. I kind of feel like we should take it off. I mean, I'm not going to, but because we still have another 17 minutes together. So let's see what happens for the next 17 minutes. But man, we get another 15 handles in ES. I mean, that gets us maybe 15 handles in, SPX. That gets us down to 60.43. That 60.50 put would be in the money by like $7 at that point. That'd be pretty awesome. And so I don't know, man. We'll see. We'll see what happens. But let's see. Noah's in the house. Says Dr. Jim's in the house, man. Noah's in the house. Man, I appreciate you there, Noah. Appreciate you very much. So Tyler's back. Says the rate cut is not good for the market short term, or at least it shouldn't be. But you know how that's been with, the retail bulls taking over. Yes, that's the thing, man. It's like, I mean, history has shown us, right, that rate cuts are typically when things can get really dicey in the marketplace. Typically, rate cuts correspond with, economic difficulty, stock market difficulty. I mean, if you look at previous charts, it's pretty clear, I think. Now, is it like, does it happen the day after the rate cut? I don't have that type of knowledge that I can access right now, and I don't even know that it's that reliable. But generally, we do see a relationship between rate cuts beginning and there being some market-wide, economic-wide difficulty. That's because usually the rate cuts correspond with, economic difficulty. They correspond with, maybe, job losses, and they correspond with, just recessions, and they correspond with, the Fed trying to spur the market on and kind of, get the market out of the trouble that it's in. And by the market, I typically mean the economic market, not the financial market. This time it is different, actually, because I think Powell has done a pretty good job of trying to, I don't want to say predict, but he's trying to get ahead of it, I think. Now, maybe he's doing a good job. Maybe he's doing a bad job. I mean, I know that there are people that are staunchly in one camp relative to the other. I actually think Powell's done quite a good job, to be honest with you. Like, to be Frankie Walsh with you all, to be Frank Caberna with you all, I think Powell's done a masterful job. Now, the jury's still out. Let's see how it all ends, and if we get through this with a soft landing and whatever, and it's just NASDAQ 25,000. Unemployment rates back to under 4%, under 3%, whatever they're shooting for. Inflation at 2%. I mean, we'll see what happens when this whole cycle kind of comes to a conclusion. But I think he's done a pretty nice job. Now, I think that, and maybe other Fed chairs have done this. I don't have the encyclopedic knowledge of Fed chair history and timing of rate cuts and whatever. But I can't remember a Fed chair, whether it be, Yellen or Bernanke or Greenspan or, going all the way back to like Volcker or whoever else that actually kind of got ahead of it the way that Powell's trying to do. Now, maybe Volcker did and he messed it up, or Burns did and he messed it up. Like, that's like 70s, 80s stuff. I wasn't even a twinkle in my parents' eye at that point in the 70s. I was born in 81. And so, I definitely don't remember any of that. But anyway, yes, Tyler, you might be right, but the market doesn't really seem to care, at least not up to today. But again, remember, guys, today's day one. So today is day one. NASDAQ's still down 180. And so we are hanging in there. But let's see, top archer could go either way with that one. We have a rate decision on the RBA tonight. Aussie rally on hold until tonight. Thank you for letting me know that. I will be on the lookout, seriously, for when I get up in the morning to see if there's any significant action as a result of what happened down there in Australia. It'd be interesting to see. It's obviously going to be a very important event for, yourself there, Top Archer, and Junior Mac. You guys are down there in Australia. That's an incredibly important event for what's going on with you and your economy and the things that you deal with day to day. How is that going to bleed over into the U.S. markets? We'll have to wait and see. We'll just have to wait and see what happens, in the early hours of the morning and then into tomorrow. So Rob Banks in the house says, Dr. J, I have some stacks of cash to burn. Well, I'm your guy, man. I'm your guy. Did you see the Oracle trade earlier? Like, I got you, man. Don't worry about it. Let's see. Rob Banks says, what is a good option selling strategy in low or rising volatility environment? Yeah, it's a great question. So I'll answer the second one first because it's a lot easier. When you have rising volatility, and you can make the case that today is that's when the door is essentially open to all volatility selling strategies. Like, that's when you want to sell premium. You want to sell premium when implied volatility is high. You want to sell premium when IVR is high. Now, what is quote unquote high? I talked about this in the volatility crash course, which is out there on the YouTube channel. It's been our most successful crash course ever. And that is a testament to you all. It's a testament to our production team. It's a testament to Ryan on the YouTube. You know, he's our head of YouTube strategy and like content strategy and like figuring out like what's the best way to kind of, you know, package these things up. And so he's done an amazing job. The team has done an incredible job, and you guys have done an incredible job. If you haven't seen it yet, please go watch it. Like, that really helps us out a ton. But I talk about this in the volatility crash course. What is high volatility? That's a very difficult question to answer. That's a very hard question to answer. You can't really pin it down to just one number. But I would say, just looking at the Tasty research, a very good starting point is an IVR of 30. And in the volatility crash course, I go through the study that I use to kind of, you know, kind of settle on that number. I'm not going to suggest or even pretend that that is like a hard and fast rule that you have to follow and stick to. You can adjust from that number. But if you need a reference point, if you need kind of an anchor that would make you feel better about, you know, what is a good demarcation between high volatility and low volatility, I think an IVR of 30 is a good level. And so when you're thinking about this, Rob Banks, with rising volatility, you start getting over 30 or at least around 30, that's where you can look to sell some volatility. Now, what do you do in low volatility? That's where it gets a lot harder. Because, you know, the last thing that we want to do is sell volatility when it's low, only to have to absorb all the weight and the impacts of a volatility spike. Like, that's when you can get hurt pretty badly, because you might get hurt on the delta effect, and then you're also getting hurt on the Vega effect, and it can be pretty nasty. I mean, that's essentially what happened in early August when we had the huge VIX spike and the huge drop in the markets, and anybody who was short calls going into that didn't get paid. They just didn't get paid. They didn't get paid, not because of, you know, the VIX interns messing up the VIX calculation. They didn't get paid because the volatility spike was so significant, like calculation errors aside, that the delta impact of the short calls and the market going down, it just didn't pay off. You were not compensated for that. So that's hard to do. That's really hard to kind of have to stomach. And so this is a time when I would be I'd be very thoughtful with when I would sell premium. You might want to have some premium selling strategy still working for you. Maybe you go into like an Oracle with earnings tonight. You know, maybe you go into like some international names that have higher implied volatilities and higher IV ranks that give you, you know, a better starting point for selling volatility in those names. Maybe you stay away from like an SPY, which is still what? I mean, IV rank is still 8, right? QQQ, IV rank is 6. Like, you stay away from those guys. Maybe you go to an IWM, IV rank of 20. Like, it's not quite 30, but you know, it's something. Maybe you go to what? EWZ, you know, it's Brazil, IV rank of 19. I'm just kind of picking these off memory. And then go to one of the watch lists, of course. You know, you go to a watch list and you can sort by IV rank. And then, I mean, boom, there you go. Oracle's on the top of the list, of course. You've got FXE, that's the Euro index. You've got FXB. What is that, the British pound? Yeah, there's your British pound index. And so FXI, there's your China index. And then you've got, you know, some other indexes down the road here. Let's see. Yeah, you've got XLE. That's your energy. That's one of those spider funds. That's kind of like a sector of the U.S. economy. You know, XLE, you've got an IV rank of 21, 22. So that gives you a little something, right, Rob? It's not amazing, though. This is not our time to shine. Our time to shine is going to be when the VIX is 18. Our time to shine is going to be when the VIX is back to 24, which, I mean, who knows when that's going to happen? I certainly don't know. But when it does happen, it's going to be much, much better for premium sellers. So Tyler's back. He says, my experience is these 2 days always flush beforehand, and this range hold till it prints. That's kind of what I've noticed. I got some next day SPX IB to take advantage right before, but I take profit at like 25%. My favorite before CPI or a big fat print. You know, when it comes to yeah, maybe you've got to tell, man. If you've got to tell that none of us know about, that's just yours. Don't tell anybody. Don't be putting it in a public YouTube chat. I mean, you can message me privately. I would appreciate that. But I would just trade that information. Like, you know, we're not, I mean, you know, yeah, it's every man for himself, right? But we appreciate you kind of being part of the brethren. But when it comes to the CPI and the big Fed numbers and whatnot, I mean, taking things off at 25%, that makes sense to me. That makes a lot of sense to me. Just because you're going into a big binary event, you're going into the potential for explosive moves either direction. You've got a nice winner on your hands. Just take it off. You've got a nice winner on your hands. Just take it off and be done with it, and look to redeploy the capital on the other side of the economic number. That makes 100% sense to me, and so I like that. So Anka's in the house. What's going on there, Anka? Anka says, finally a down day, not enough to ease the pain. No, it's not. But Anka, again, this is day one. You don't have to worry about that. This is the start of something special. Like this is the start of something really, really special. We're down almost 1% in the NASDAQ. I think when the dust settles over the course of the next couple of days or couple of weeks, when the day one streak is over and we've enjoyed the fruits of our labor and the victory and the spoils of victory, we may get a point and a half out of this. We may get 150 basis points when this thing is over. Like I'm going out on a limb, but we could see NASDAQ 21.1. We could see NASDAQ 21.2. Right. And what more can you ask for at this point? Like beggars can't be choosers, man. We just got to be okay with that. And so let's see. Anka says, would you like to do anything in APPL App Lovin'? App Lovin'. It is down apparently because it did not make it into the S&P 500. App Lovin'. I've never heard of that. Is that really? Oh, is this it? Look at this. APP. Huh. Look at that. APP. App Lovin'. Interesting. So APP, you've got the stock down $54 today. And so that's interesting. Let's look at these markets, Anka. Are you leading me into some stuff that is untradeable? That's actually not too bad. It's a $300 stock, so it's obviously doing okay for itself. And you look at the at the money, the at the money markets. It's a $300 stock, so I'm not expecting penny wide markets. I'm not expecting nickel wide markets. This is not going to have Apple liquidity. This is not going to have Facebook liquidity or SPY liquidity. It's gonna have $300 stock liquidity, right? And so you're only 70 cents wide on the put side, for the at the money strike at the 340, and you're about $1 or so wide on the call side. That's not that bad. It's really not that bad. If we go to Tesla, this will be kind of an apples to apples comparison in terms of the price. Tesla's at 380. If I go into January, you go to the at the money strike. Wow, look at that. That's crazy. I didn't realize just how phenomenal Tesla really is. The at the money strike. You're 20 cents wide. Wow, look at that, man. That's pretty wild. I did not expect that. I thought it might be 50 or 70 cents wide. You're 20 cents wide, 15 cents wide now on the put side for Tesla at the money. Same stock price, higher stock price than App Lovin'. And so I still think it's okay. I still think it's reasonable. And maybe we'll do a little something in there just real quick. But it's really interesting. Not quite as liquid as maybe I thought. But that's okay. Let's go in here. I don't know, Anka. You think we play the contrarian role here? You think we play to the upside? And we kind of fade the S&P 500 rejection. The S&P 500 rejection candle right there at the S&P 500 resistance level. I think that's what we do. I think maybe we sell. What are we doing? We selling a 330, buying a 320 for $4 basically, $4.20. I don't know. The risk is not too bad. It's only about 2% of the account. We'll play the market to the upside. We'll kind of fade this short-term drop in App Lovin', and we'll see if maybe the S&P 500 will have second thoughts. Maybe the S&P 500 will kind of review the application a second time. And so if they do that, that could be good for us. And so let's go ahead and go in here. Let's put this guy on 415, the moment of truth for liquidity. Our no takers at 415. If we have to do a ton of price discovery, that's not a good sign. But 410, hopefully we get filled. Oh, you got filled and improved at 411. It's not too bad. I've certainly seen and traded worse. So there you go, Anka. App Lovin'. It's your fault if this doesn't work. All right, Tony Jackson's in the house. Says it looks like a Madoff chart. That must have been my Mega Pint Gap and Go. Tyler says also known as an Elliott wave. Yes, correct. And let's see. Tyler says, how do you handle contract rollover when selecting options for the next cycle? Contract rollover. When you're dealing with equity options, it's not really a problem. Like it's not. I think what you might be referring to is like if I go into, you must be referring to futures options, because like if I go into ES right now, and I try to trade, like it'll kind of tell you, it'll kind of show you. Like if I try to go out to, here's the cutoff right here, because this is where the Z options expire, right? So you see, if you look more closely at the quote, these are all tracking to ESZ. Like you can see the little Z right there on all those quotes, and then these guys down here are all tracking to ESH. And so you just have to be aware that when you're selecting a futures option, just understand like what underlying expiration is it tracking to. so that you just understand where the at-the-money strike is. And then once you know that, it's all the same. Once you know where the at-the-money level is, it's all going to be the same. And the at-the-money level is going to be based on where that specific contract expiration is trading. If you're trading H, then look at H. If you're trading Z, then look at Z. So that's what I think you're asking about, because the equity options are a lot more straightforward than that. But let's see. Rich McDonald says, welcome back to the dark side of stock holding and listening to company conference calls, Doc. Yes, that's correct. I cannot wait. It's going to be super fun. And so, yeah, we're going to buy, where is Bank of America? Yeah, they're like a $46 stock. Yeah, this is about to be number one, baby. We are going to peg our financial future of the From Theory to Practice portfolio on Bank of America probably on Thursday. It's going to be amazing. Don't they pay a dividend? We'll look at all this in more detail on Thursday. But yeah, look at that. Look at this, guys. We're going to get a 26-cent dividend. We're going to get a 26-cent dividend just for holding Bank of America. And we just missed it. Oh, really? We missed it on Friday, man. Look at that. They got us again. We missed the ex-dividend date we're going to miss it by a week. That's crazy. So we're going to have to wait a full 3 months. I'm sure it's a quarterly dividend for our 26 cents. And what is the delta that Bank of America remains solvent in 3 months? It ain't 100. It's like 60, 65, right? That's brutal. Oh, that's brutal. Anyway, we'll talk more about that on Thursday. Bank of America. Oh, man, I can't even wait. But, man, look at you guys. I got to go. I got to get you guys to Tim Knight. But, man, Aaron Sin, I see you in the house. Colonel, I see you in the house. Sam L's in the house. Man, I see Matt's in the house. I see Herb's back. I see John's in the house. I see Night Moves in the house. Cordova Dave. Man, I appreciate you guys. If I missed your question, come back tomorrow. I think we have a regular show tomorrow in terms of it being 45 minutes. So get in early. As you see, I do them sequentially. And if it's a doozy, man, I will spend 19 to 24 minutes on one question. So get it in early, and I try to get to as many as I can, but I also try to be very complete with my answer. So I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hello, everybody. Tim Knight here, and it's our first decent down day in like 3 weeks. November 15 was the last time we had even a modest drop. As it is at the moment, the ES is down about 0.5%, 32 points. NQ's down almost a couple of hundred points. And even the RTY is down a little bit, about 1/3%. Ironically, it's right on the heels of yet another Chinese stimulus. They came out very loudly and announced they will have, I believe the words were rather loose sounds gross to me. Monetary policy, so rather loose. There you go. But in any case, that vaulted Chinese markets higher and worldwide markets and propped the U.S. for a while. But I'm having the best day I've had in eons. And, the stimulus is not so stimulating at the moment. I've got a lot of charts. I could speak for hours about this stuff, but, you're not here for that. You're here for the pictures. So let's go look at the charts together. Here, as I said, is the spider. And as I said, it's the first decent down day we've had since here. Ever since November 15, it's just been, lifetime highs every day. Finally getting a bit of reversal. We had the most recent lifetime high the prior trading day, Friday. But we've given up Friday, Thursday, Wednesday, basically tossed those days away. The diamonds are gently rounding themselves lower. They peaked early last week. And the next key test is this gap. Can we get below the gap? We'll see. The big event this week is Wednesday morning, an hour before the open. We've got the CPI. So we can hear what the latest ostensible inflation number is. So that'll be the next thingamabob. And of course, 4 or 5 weeks from now, we're going to have all the earnings season kick in. And of course, the inauguration and day one and all the long list of things that are supposed to happen on day one. So January should be interesting, especially the second half. As I mentioned, China has thrown open the spigots again, plunging themselves more trillions of yuan in debt. What it has managed to do is recapture the same feeble pop it had on October 3 and on November 7. So, it's like bang, 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 like so. We're still, incredibly on the FX side, the lifetime high was 17 years ago, and they were a lot less in debt back then because there was a time when the Chinese market was amazing. It looked like every stock was NVIDIA. And since then, it has been, insert colorful biological metaphors here all over the place. So that's FXI. EFA, I have shorted in size, as we used to say at Montgomery Securities, and there is the stop loss on that. So that's looking good. And I also, in spite of bouncing a bit, because everything bounced thanks to China, EWZ, I'm still the happy owner of a bunch of March puts on EWZ. Calm, which is the Earth's weirdest long position, continues to push higher. This has been mentioned dozens of times on the segment. It is an egg distributor, and it just keeps vaulting higher. Eggs must be a great business. PE is quite modest, but it's eggs, so it's not exactly breakthrough stuff. But this base was the foundation of a tremendous rally in this, which just keeps on going. But the thing I'm noticing here and there is that people have kind of run out of the good stuff. They've run out of really high quality companies. NVIDIA is not some undiscovered upstart. It's approaching $4 trillion in market cap. So people are looking for, well, what else can I buy? And so all these little small companies that don't make any money, but they're kind of ignored, are suddenly getting lots of attention. And so you're seeing this tremendous pops in price. No clue what these do. But here's ASAN. And you can just see that they're just so dreadful years and years. And then lately, it's like somebody just grabbed a tube of toothpaste and gave it a big old squeeze. Here's the real, which had been in this cute little top, started to slip lower. And then it has burst from a couple of dollars to almost 10, especially in days of late. We've got a 40% increase today. Now, I don't think this is going to last. I don't think this is the beginning of some grand bull market for this. On the contrary, I think this is going to exhaust itself if it hasn't already and give up all that, because you can see the amount of overhead supply here. But short term, it has been a sensation. Many stocks have like this. Here's another one. American Outdoor Brands, AOUT, just blasting higher, but very meaningful resistance right here. So, the small caps are getting some badly needed love, but ain't going to last. Now, my hang up has been semiconductors, and I sweated out all last week and talked about it every day, trend lines, and we got terrifyingly close, but didn't break one of them. We violated no horizontals, no trend lines, no gaps, no nothing. And it's starting to pay off. Here's AMD. This is my largest semi position. And, you and I went through this together. We failed here. We broke the trend line here. Resistance is like magic. Resistance over and over and over again. You got to keep in mind, 99.9% of the planet sees this. You're going to see nothing. See a bunch of wiggly lines. How in the world are you going to make sense of that? How on earth can you make a decision based on that? Hope, faith, charity? No. You need the good stuff. So we've got a nice push here on Wednesday where it tried one last time to get above the broken trend line. Down, and down with a big old capital D right there. So we got about a 6% drop on AMD right there. And it is still wildly overvalued. So that's pretty cool. And what else is cooking? Let's see, SMH. This was up earlier, but it's down now. And a little sloppier than AMD. We peaked on this one also on Wednesday, slipped steady and then slipped again. NVIDIA definitely has been a little wild today. It's down 2.72%, NVIDIA that is, which is the biggest component of SMH. And this is all contributing to the cubes, which themselves are down about 1%. And here again, there's nothing bearish about this. But let's see if we can break that gap. That'd be a nice failed bullish breakout, or at least a gap violation. And the real sauce would cook in when if we can break this trend line, but that's a long ways off. We don't want to get ahead of ourselves. Other shorts are doing well, and they are trying to scare me out of these positions, but it's not working because they are not. They're strong intraday. There's rallies early in the morning, but on the whole, they're not violating the key levels, be they gaps, trend lines, what have you. Caterpillar is a fine example. Caterpillar was up mightily earlier today. Now we've got the shooting star going on. It did not push above this horizontal. It got close, but it didn't do it. Huntsman, also very strong earlier and strong now. It's up over 2%. Look at this long shadow, we call it, on the candlestick, like so. All that buying expended, all of that bidding on the price already deployed and didn't do anything. Another one, Eli Lilly, down over $22. Boy, it sounds good. We're slipping away from this tremendous gap here. I've dragged this down to another lower gap. And in this rather hostile environment that Big Pharma is entering into, finally, after decades of just having billions dumped on them on a weekly basis, they're feeling the heat. Lumen Technologies, another good example. Now, I'd lightened up on this some, but it is down almost 8%. It's a sloppy pattern. We've pierced way into that one of the biggest patterns I've ever seen as far as the top, but we have unwound all the gain on Friday. All that push higher, again, deployed already. It's expended. The bidding is done. The cash is out. And so we're working toward the underbelly of that pattern again. Cracker Barrel. This one continues to do nicely. Got into the puts up here on this post-earnings jubilation. Down, 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 down it goes. And it's a succession of tops that's going here, which I suspect will persist. And one last one, Wingstop. This one down double digits. Once again, tried to spook me out of this. Nope. That was on Friday. Another shooting star. We opened below all that today, and we've fallen ever since. And this trend line here, which goes all the way back to May of 2022, has been damaged and maybe broken once more. I certainly think so. Even Royal Caribbean made me money today. Unbelievable. This thing usually just beats me about the head. But I shorted it early today, and it's been falling nicely. It's down double digits, and it's very lofty, as you can see, extremely expensive. So I'm just going to hang on to that. Tesla, for the first time in years, got over 400 today. And I guess there was a lot of orders at 400 goes, boy, that didn't last. The peak on this was 4.73. It is down on the day. It's within spitting distance of its lifetime high, but it's had a very big ascent here. There's going to be some profit taking, so that's no surprise. Rivian, which I've been enthusiastic about, another good day. Double-digit percentage gain on this. Green, 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 each day larger than the last. Now, this will exhaust itself. We've had pops before, like these here, and it doesn't amount to any meaningful long-term benefit. So we're probably getting close to the end of this, but it's nice while it's lasted. And speaking of cars, I'd also mention Uber. I stumbled across this weekend. Nice head and shoulders top on Uber, UBER, right like so. So just wanted to mention that since we haven't really looked at Uber before. Now, as far as precious metals goes, I've been saying the same thing again and again about this, which is long-term crazy enthusiastic, shorter-term more nervous. The nervousness didn't help because silver was up almost 4% earlier today. It's burned some of that off, but silver has been doing quite well. But I'm still not comfortable with it because you can see where gold is. Gold got close to this gap here. It's been selling off from the open, as has silver. I just think it's got a lot of risk here to fall. Silver itself is above this very handsome green tinted base. But here too, we got close to this gap and now we've been receding. So this doesn't seem quite right yet. PSLV, there's the target way up here. Might as well make, well, that's red's appropriate, yeah, but there's the base, target's way up there, but doesn't seem like a real great price right now, so not touching it. Interestingly, Bitcoin is down thousands of dollars. Of course, on Friday, I believe it was Friday, it crossed 100,000 very swiftly. People went berserk. Everyone's talking about 250,000 next, baby, and then 1 million, and then the little progress bars with the 10% filled in, $9 to go, and so forth. All right. It's been playing jump rope with 6 figures all weekend. I think some big whales out there really wanted that psychological comfort for the public that we have a 6-figure Bitcoin. Didn't last. It's in the past few hours fallen about $5,000, and yeah, there we have it. So there was the big pop. There was the excitement, the thrills, the $250,000 speculation, and it's just been just sputtering ever since. That's fine. If we can get below this level, I think things get really interesting, But suffice it to say, the $100,000 thrill, seems like ancient history now. It's 5 days ago, but that seems to has exited stage left. Just to wrap up, here's the XLU, which of the Dow has been the weakest. This has been just red almost every day for the past 8 days or so. And the last thing I wanted to point out is the VIX, which got down to a 12 handle on Friday. And if you look at this in sort of raw arithmetic terms without a log scale, which I think is appropriate, you can see how rare these low levels are. And we have lingered there for a long time at certain times of market history. That's true. But let's all agree that over the long scale, and this is about a third of a century you're looking at, it's really low. So that is it. Anyway, like I said, it's a good day, and we've got a couple of full trading weeks left this year, 2 or 3. So thanks for stopping by. Hope you're doing all right, and I'll see you here tomorrow. Thanks. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
When I was in Krakow a month ago, I was introduced to, this is cherry vodka. It's not like vodka you get in the States. It's like 80 or 90 proof. We should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque, I'm going to be honest. I mean, she's got 2 cherries that are kind of...
Easy.
Yeah, you're uncomfortable considering...
The show doesn't have a lot of sex appeal. The network
You're
in
50%
general.
right.
But here's the thing that I don't get about TP. He's got to stop doing the show from a lazy boy. He goes
Usually you can see
lower
right up
and
his
lower.
nostrils.
Like you,
I want him to go even lower, so it's just all you see is just like like he's in an iron lung. Okay, we want him to be in an iron lung. It's like it's a bubble boy.
Stas, what comes up next?
The opening bell, don't look so surprised. Sadov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed? I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage. When I got,
we didn't, wait a minute. So
when I got in this business,
we used to open it 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that at $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Soz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, baby.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the closing bell here, my friend. And you know what? Closing bell's a little bit weaker this afternoon, Sadnov. Even the S&P is down almost 35, trading near their lows and steadily marching lower. Sneaky little 0.5% move on decent volume, a little over, well, just about 1.1 million cars of even the S&Ps. NASDAQ down 200 and change. That's the leader to the downside. The Russell and the Dow, which were green earlier, turned red. Russell down 9, Dow down 170. And volatility, which has been up all day, continues to be up 50 cents. Bonds down 24 ticks, trading 3 ticks off of their lows. Bitcoin and Coinbase lower. Bitcoin down by around $5,000 to 97 and change. And coin is down about $29, almost $30 now to 313 and change. Oil up 95 cents. It's been up all day. Gold is up $21 after hitting 2,700. It's backed off by $20 to 26.80. Silver's up 84 cents. It was up much more earlier, about another 50 cents earlier than that, or more than that. And nat gas up 10 cents. That's a decent sized move too. But Sadnov, it was all about the downside for most of the day today, with coin, as I just mentioned, down 30. MicroStrategies obviously following suit, down 28. But Netflix down 22. Palo Alto Network down 16. Meta down 12. AMD down 8. Costco, which has earnings in a few days, is down $4 also. On the upside, UNH up $13 and change. And the Chinese stocks, Baba, Baidu, up $6 and more a piece. PDD up around $12. Humana up around $6. And Reddit off of its highs up 4. Sadnov, you were wrong again about your conspiracy theory that the person who shot the UNH CEO was dead somewhere. He committed suicide. No, he's alive and well in Pennsylvania, but don't worry, he had the gun on him and the ID he used. It's okay. We got him.
Yeah, I heard he was an Italian kid ordering Italian food at he was an Italian kid, went and ordered pasta at McDonald's. They didn't have any. They called the police and they got him.
You mentioned he was an Italian kid because I'm on the air with you, right?
Luigi? I mean, I don't want to say the kid's guilty, but the kid's guilty.
Wow.
Yeah, Luigi. Mm-hmm. Yeah. Sorry.
It had to be Italian, right? Had to be Italian. Unbelievable.
Sorry. You know.
Mm-hmm.
I mean, it's a good thing, actually, that the kid's a white Italian kid, because if he was like Mexican or Guatemalan, I mean, we'd be like, you know, we'd be sending troops to the border. But, you know,
close those borders, damn it.
right. You know, we'd be ripping the country.
I just hope
apart.
Now I might be able to get my Italian citizenship a little cheaper than I was going to get it before.
Oh yeah.
This could be a good thing.
Oh yeah. Well, anyway, good. They caught the kid, so whatever. Doesn't seem like he was too sophisticated to start with. Anyway, so it was actually a pretty busy morning in the markets because the screens are red today, and we haven't seen a red screen with a green VIX in about what feels like a month. So I wouldn't exactly call a 0.5% down move a mini crash, but it is a down move. And
it is a down move. It is a sneaky little 0.5 percentage point move down. Not big, right?
But I will say one thing about it that I think is a very good lesson. There was, you see the VIX was, the last couple of days, the VIX was struggling to get a little bit lower, just because, it had gotten to the point where it was, it was already on the basement floors. I mean, it was down there. And
sure.
One little tiny downtick in the market today, and the VIX is up, $1.30, and the VIX futures are up 53 cents. I mean, barely even a downtick after, but because we're at record highs, as crazy as this is, it made a big difference, Sure.
No, I get that. And it does make a difference. I mean, especially off the low levels that we are.
Yeah.
So what do you think? The top is in? Can you call that? I mean, I just want to get.
I mean, on a 0.5 point down move, I don't really think you can say the top is in, unless you want to do your best impression of Louis Rukeyser or whatever, but I don't think you can do it.
I don't think I can either.
No, I would say this means it does less than nothing. Less than nothing. So
it doesn't mean much to you.
No, it does not mean anything to me. It really doesn't.
Okay.
We would have to drop, I would say, at least 250 S&P points for me to say, oh, that's even a potential to do something. And this is a 35-point move. So I say this is basically nothing.
We did trade over 6,100. We are down to, let's call the lows 6,062. So we did have a 50 some odd handle range today, which is definitely a decent sized range.
Yeah, it's a decent sized range, but it's, it's less than a 1% move down. In order to get any kind of correction in this market, you'd have to start a minimum of 5%. Minimum.
Sure.
You can't even call it a correction other than anything else. And everything else kind of stayed range bound. I mean, I would say Bitcoin down.
Not Tesla. Tesla was the big mover today, and in option volume, 2.2 million Tesla options have traded today with some big orders too. SPX has 2.6 million contracts. So Tesla definitely, after going over 4,000, got on everybody's going over 400, got on everybody's radar.
Tesla will stay really active until the market starts to sell off, and then all the flow will go back to the S&Ps. I would say today, the two big stocks probably were Tesla and Palantir. Both of them had big turnarounds, and Reddit as well. Reddit was up like 12 this morning, went down a little bit, but Palantir was up like 5 or 6 on the opening. Also from the downside up, I want to say Boeing might have opened down this morning, then rallied like $5 or $6. So there were some decent moves in both directions. Crude oil had
individual stocks.
Yeah, crude oil had some pretty good movement today. Gold and silver was up a lot higher at one point. So there was, it's so much more fun when there's a little bit of vol coming into the marketplace and there's a little bit of stuff to do. It just makes
a little bit of two-sided action. You can fade moves, you can buy into moves, you can sell into moves. At least you get a little bit of action. Yeah.
It just makes things, stuff starts to move around a little bit. I mean, I wasn't like super active today. I've just been trying to.
How about Apple with some crazy strength over the last couple of days? Apple up another $4 today to $246. Remember when Apple just about a month or so ago in November wasn't participating with the market? We talked about we'd rather buy Apple and sell everything else. Well, that would have been a good trade.
Yeah, that is a super weird.
Yeah, it's been strong. What does Milord have to say about that?
About Apple?
Yes, sir.
I honestly, I don't have that much to say about Apple. I don't have any position on in there. I kind of feel like Apple's is a relatively uninteresting play for me.
Okay. If it's uninteresting to you, then it's uninteresting to me. What was that?
I was just flattening out some Coinbase stuff. I took a little leg in there to.
Wow, we do plenty of research. We talk about no legging, but I guess you do it. How about this? My Taiwanese sources want to know in Amazon. Amazon was trading at new highs, got up to 230. It's 226 and change, down 75 cents. Is this going to be an abandoned baby?
You're kidding, right? do your how do I say this nicely? Do your slow
abandoned baby at the top?
Do your followers / slow adults?
These are my Taiwanese sources.
Slow sources even know what an abandoned baby is. It would take tomorrow to make that statement, not today.
Oh, darn. Is it abandoned baby in the making then?
No. Wake me up tomorrow on a gap down opening. Wake me up tomorrow. And then you can ask that question. If they gap them down 100 points tomorrow, you can have a little fun with that. But until then, no bueno.
Got it. All right. Well, I tried.
Yeah.
Mm-hmm.
So I'm actually going home short tonight. I'm going home tonight a little bit short. Who plays Monday Night Football, by the way? So I have to know what my focus is going to be on.
Let's see. I can do that for you.
Because I really don't want to watch the markets all night. I'd rather relax. And so
you're gonna want to watch the markets, Sadnoff.
Oh no.
Bengals, Cowboys.
Oh God.
You think they would have called an audible?
Yeah, why wouldn't they just that game should have been swapped out for somebody, for two decent teams.
Yep.
Okay. Well, yeah, you're right. I don't have to watch that tonight. Yeah, it would be nice to see a little continuation. It would be nice to see a little bit of a down move here. I mean, they did try to rally at about 1:30 this afternoon. They had them only down about 18, 19 handles in the S&Ps. And I'm like, they're not going to really rally them again, are they? And and lo and behold, no, they did not. And now they're down double that amount, so down 36 or 37. And like we're both said, it's kind of weird for us. This is the first day we've seen stocks down, bonds down. It's just a little bit weird. The good news for us, for me personally, is that the Russell was a little bit stronger relative.
Yeah.
And they did.
It was better. It was better earlier, but sure.
Yeah, biggest winners for us today were the S&Ps. That was my biggest winner because I'm short it.
Well, you have short delta. We're down 37.
Yeah, but
handles,
Tesla came in a little bit. Coinbase, MSTR.
Tesla came in on price, not really on volatility. IB rank is still 68 in there.
Nope, Tesla did not come in on volatility, but Coinbase, MSTR, SMH, all those came in on volatility. Basically, also a little down move, and then Russell Nasdaq. So, all in all, today was at least a good one for a change. We need a little follow through though. So tired of these.
We haven't had anything, and maybe follow through is not another 20 handle down move for tomorrow. Follow through is like some good volatility expansion, a lot of weakness, a little nervousness would be fun.
Yeah, there really, I talked about it this weekend at the Cherry Bomb. I talked about other things. I think that, I made a comment and a bunch of people emailed me on it, and because I made a comment, I can't remember if it was this morning or last night, or on Friday.
Ladies and gentlemen, before we go any further, he's a good person. He just said a stupid thing.
I made a comment that the most questions / emails we've received lately from customers is that their covered calls are getting run over because stocks are going up so much. And
it's funny you say this, because I actually spoke to a gentleman at the show on Phoenix who told me, he's short a 5 lot of calls in Tesla, at around like 350 or 360 or something like that. And, Tesla was around 380 at the time, maybe closer to 390. And I'm like, okay, well, you can sell puts against that and blah, blah, blah. I'm going through all these little scenarios you could do. He goes, well, what do I do with the stock? I said, excuse me? He goes, I'm long, 500 shares of stock against the 5 calls. I've been long since 260.
Yeah, no, the first thing they always say, you got this wrong. The first thing they always say is, I'm getting killed. I go, you can't get killed on a covered call. You're up money.
On the upside, you can't. No.
Yeah, but here's the thing. When the markets are selling off and the markets are down big, we get the what should I do emails.
Right.
I'm on the ledge type emails. And when the market's going up big, we get my covered calls are getting run over emails, which is
right. I could have made more. I didn't make enough.
Which is a max profit. Right. So I find those interesting turning points. That's all I was kind of, that's the only place I was going with this. It's just that I feel like those are turning points in when red flags jump off the screen at me. I mean, today's the first day we even had any kind of an uptick in the VIX, any kind of a downtick in the NASDAQ. And
it's a small downtick.
It's nothing. It's nothing. But there was just so much just flat out bullishness that at least this is, I don't think I sometimes don't think people realize how important it is for markets to stair step higher, and how important it is for markets to have some kind of cyclicality to them, because when markets are cyclical, they present a ton more opportunities than when they're one dimensional.
Right. Agreed. Yeah. There are things to do as opposed to just watching your bad trades go bad and your good trades, you tend to get out of them soon enough because it's gone to your direction. You know what I mean? It makes it a lot harder.
Yeah. So the only thing that we did tonight for tomorrow to our existing positions, because I'm like I said, I'm short, but my theta numbers are, I covered a lot of strangles this morning on the opening because I don't know why, because the IB rank was so low. That was the reason. In the S&Ps,
a lot of places had low IB rank. Yeah.
In the S&Ps and the NASDAQ, I covered short strangles. But the only earnings play I have found for tonight, which is a very small earnings play, by the way, is Oracle.
Yeah, there's not too many others. Oracle, MDB, Toll, and AI, if you're interested in that.
So I'll go Oracle first. I have a tiny position on. I had a much bigger position on, and I took it off. I don't know why. Oracle, the IB rank is good. It's 94. I feel like
stock's on its highs. It reversed off of its highs today. It traded all the way up to 198. It's 190 right now.
Here's my issue with Oracle, and just tell me where I'm wrong. It's a $200 stock. It has a implied move of, I don't know, $16.
$16 over the next 4 days. Let's call it $13, $12 for tonight.
Yeah, maybe more, maybe 14 or 15, but whatever. I feel like it's, I don't know. I don't feel like there's that much juice in there. I know the IV rank's high. I don't love it. I feel like selling something very far out of the money, but
don't be forced into doing anything you're uncomfortable with.
Jan. I have a Jan strangle on. I feel like selling.
What strangle you have on?
Crappy, junky, hated it.
You mean far in the money? Is that what you mean by
160, 230?
160, 230. Yeah, you're down in the 10 delta range.
Yeah, and I just sold some in Dees too. Just to have a little Dees Jan combo. Also, I didn't realize
that's not a combo, and that's not a Dees Jan spread. That's just short Dees and just short Jan.
Okay, so AI, I did not realize they had earnings today. We have a small position from what's your assumption trade on in there.
Do you know on your positions tab on the right-hand side, you could make a column earnings,
I don't
and then
want
you
to.
would know.
Yeah, I don't want to. I have too many other things I need up there. But
then put it on the second page.
I have the 35.55.
Strangle?
Yes.
In Jan?
Jan, 35.55. There's massive amounts of call skew.
The calls are $14, $13 out of the money. They have a 25 delta. Your puts are $7 out of the money. They have a 22 delta. How does that happen?
I don't know.
That was a question.
I don't know. But if you're ever going to trade,
I figured a genius like you would know.
Well, if you wanted to trade an earnings play that has very decent volume because it's a $41 stock, this is potentially one of those stocks. I just bring it up to your attention.
Okay.
There is solid volume on every line in January, and in Dees, it has decent vol. In Jan, it has monster volume.
What did that get us? What did that get us to do? What are you looking to do?
Nothing. I mean, I got a crappy little position on there. I would do something in there if there was something to do. I mean, why? What do you see?
No, I don't see anything, to be honest with you.
I mean, this stock is at its high? It's pretty damn close, right?
But it was at its highs today. I mean, when it traded up to $42 and change, almost 43.
Yeah, I mean, you can sell some. If you wanted to go way out of the money, you can sell some crazy calls in here. Stock's $41. You can sell the 60s in Jan for $112.
That's almost 2 times the expected move.
Yeah,
a little over.
Yeah, there you go. So if you wanted to do something,
understood, my friend. You know what I want to do right now?
I'm like an altar boy today. I'm going to be good.
You don't know how. I'm going to bring in a couple altar boys, though. These good, fine gentlemen from Overtime. How are you? There they are. There's the 3 amigos.
It
looks like
if you guys say Dees one more time, is it that hard? Say December.
Yes, it is.
Is there such a shortage of time? Is there such an urgency to transact that using the word ember at the end of Dees, that the catastrophic financial losses that you might suffer as a result of the lost time?
Do you know, Dylan, I don't know of any trader in my life that I've ever heard use the full month of December.
I agree. I was thinking the same thing. What's that?
I'll tell you what's even crazier that people don't realize. In the trading world, in the professional world, nobody uses the first 2 numbers.
In most instances.
You mean for what? First 2 numbers, what?
Like, well, what, like even if somebody said, what are the even S&P, they would say 6150. You're supposed to know that there's 6,000.
Or they would say 50.75. They wouldn't even say, they might say 150.75, or they might just say 50.75. They wouldn't.
But the implication is that the implication of this entire convention of speaking in such a manner is that lest we waste time with all these extra sounds and words, we would be, but for the loss of that time, we could be poor men. We would lose all of our money because Radigan kept saying December, and we couldn't, all the traded away from us.
Without lingo, there is no cool factor.
That's right. Without lingo, Dylan, we're like, you know.
You're just
gotta have
people
lingo.
Talking about the months of the year.
Without lingo, we're like CNBC. Okay.
You gotta have lingo.
You know, how bad is that going to be?
I know, but I listen, there's a point where there's only so many Deeces you can hear until you're like, listen, if this guy says Deece one more time. Because the worst is you get a trader out in normal society, he's just like sitting at like a normal social structure. Starts talking about Deece. Makes me think about Deece Nuts, which is a cousin of Deece.
That is a distant cousin.
Hat tip warrant.
A distant. Sorry.
All right, boys.
Deece,
What do
like
you got
Deece.
here? First down day,
Sorry.
Ilya. You and I were both talking about this yesterday. We both liked the downside.
Yep.
Got a little payback. Got a little money back today. Not enough.
Are you flipping the coins? Are you flipping the coin? You going to the other side?
Please. Talk to me at 5,900 in the S&Ps.
Yeah. I'm not ready to lean in on either S&P or NASDAQ. I'm happy with my Russell short. That's doing its thing. It's holding its breakdown from last week. So we'll see if I can get it down to 2,300. I'll be happy. And then if it keeps going, great. Chris and I were talking earlier today on Futures Power Hour, and basically settled on the November 11th high in both the S&P and the NASDAQ being the magic number. If you can get back under those highs, which would essentially be back under 6,000 on S&P, then you've set a lower low, you've overturned something, and then there's something to sell. In the meantime, this looks like a correction, and I'm not going to get in front of it because this market has no rhyme or reason on the upside as far as I'm concerned.
I don't even know if this looks like a correct, Chris. This is not a correction yet.
This is not a correction at all.
Exactly.
It's a pullback.
No.
It's not even. It's not anything. It's just.
It's not even a pullback.
It's a moment.
It's a blip.
It's a moment in time.
You don't want to hear from me though, because I'm full of the hiccups right now. So this is going to be a fun next hour on overtime.
In fact, that hiccup is the perfect description of what this is.
You're full of the hiccups.
I know. I'm like a child. Apparently, I'm just. You know what it is? I can't catch my breath.
You gotta
I'm full of
hold your
excitement.
breath. You gotta put your
Juan
head back.
Soto. Juan Soto signed.
You gotta
So I'm
hold
a
your
little
breath.
excited.
You gotta hold your breath. You gotta put your head back, and then you gotta count to 30, and then you gotta drink water.
No. You need to be scared.
All while thinking S&P 7,000.
All you do is need to be scared. Just watch Tom Sosnoff trade for about 10 minutes. You'll be fine.
You just need a terrifying experience.
It's a terrifying experience. All right, you guys, I'm going to let you go. Even the S&P is going to settle in down 35, NASDAQ down 185, Dow down 245, and the Russell down 14. Chris probably says take a picture of that. You're not going to see it till the end of the year. We'll be back in 90 seconds. We got more Tasty Trade after this. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We got a lot to talk about this week, though. Full 5 days of trading coming up ahead of us. Dylan, let's start with you. It's a wild week. It's one of those weeks where a whole decade has happened. Is this the market finally today coming to terms with the fact that maybe, just maybe, some risk has been underappreciated, geopolitically speaking, for the past few weeks?
Only if you think of a market that more or less has got stopped going up to a record every day. I mean, it's not like there's not some major markdown in prices. I mean, it's sort of like the burden of expectations for even the highest performing index or security price can only, reach such a certain level where it's going to disappoint. But I think that to look at the fact that it has gone down a little, or even gone down 2 of the last 3 days, again, modest declines, is meaningless. I mean, I think even Ilya, who would be delighted to be, proven right on some of his more pessimistic points of view, not that he's even a pessimist, but Ilya, are you winding into some wild short position here? I can't imagine.
Not at all. No. No, I mean, I don't think you can. I mean, I think if you look at the Russell, that one makes sense. there was a double top there. It's pulled back. It's held the bounds of the range breakdown on Friday and today. It had opportunities to undo that breakdown. It tried and failed. There you can see it. You look at the S&P, you look at the NASDAQ, and as we were just saying on last call, and as Chris and I said on Futures Power Hour earlier, it's that former high, that November 11 high that we see on the screen here. That's the magic line in the sand for me. You give me a close under that, and okay, we've set a lower low, something's different. But as and until, this is a stair step higher. And as skeptical as I am of not the impetus for the rally, but the price level given the ongoing fresh fodder feeding this, I think the price level is high and the fodder has been spent a while ago. So it would make sense for there to be a correction. But that's all speculative and that's all hypothetical until it isn't. And there's no evidence that it is at this point. You need to get back under that former high to tell you there's a lower low and something's rolling over. You need a sign of capitulation. That's just not here.
Why today of all days producing this kind of negative move in risk assets? It's not contained just to stocks. Of course, you can just see a little bit lower there in the left panel on the screen. Rough day for crypto as well. Like the risk sensitive aspects of this particular segment of the market are getting hit hard. That's a divergence, Ilya, from what you see in the currency space. In the currency space, the Japanese yen is the worst performer. So every single yen cross, if it's CAD yen, Euro yen, pound yen, Aussie yen, dollar yen, they're all up across the board, which is usually a sign of risk on. And the leader in that parade or that procession is Aussie yen, of course, which is up huge today, up by about 1.7%.
Yeah.
So square that circle with me. The stock
Easily
market
done, sir. Easily done.
Pray tell.
Yields. Just look at yields. Stock markets don't like higher yields. And what you see here is a response to higher yields. Probably the most significant rise in yields we've had in weeks. Now, I don't think it changes the trend, but it is a significant rise in yields. And you're seeing that significant rise in yields echo in the dollar's performance against the yen. You're seeing a sogginess in other major currencies against the dollar. So the euro is down a little. The pound is basically flat. It's not having a strong response. The Aussie is back on the back foot and starting to retreat off its earlier highs, which I'm sure we'll talk about, were mostly China induced. But those gains starting to get eroded here, and the breakout there going away by the close, the dollar reasserting itself. Crude oil higher, gold higher. All of this seems to be, interestingly, a response to what's happened in Damascus over the weekend. Because, and the start seems to be the rise in crude oil. Because what you've seen here over the course of the day, we mentioned this earlier, it's kind of strange. You had gold, yields, and crude oil going up at the same time. If yields are going up, it's weird that gold is going up at the same time. It yields nothing. They typically move inversely of each other. Higher yields make gold less attractive, not more. So it's curious that that's going on. But if you consider that the reason yields are going up is because oil has gone up, and that's where this begins, and oil is reacting perhaps to essentially no knowledge of what's going to happen next. I mean, obviously, I don't think anybody's shedding tears for the butcher of Damascus being removed from his post and sent packing to Moscow. But we do have now a very significant knock into the sort of Russia-Iran regional infrastructure. Obviously, Hamas has been significantly demolished. Hezbollah has been hit hard enough that they went begging for a ceasefire, another major piece in the Russia-Iran regional influence architecture has fallen away in Syria. This is a big development. It's not necessarily a big development near term. If you look, oil hasn't broken its range, gold hasn't broken its range. But for the 1 day of price action that you see here, if you begin with oil, then higher oil leads you to higher yields. Higher yields lead you to weaker stocks. Gold is up as confirmation to give you a sense of geopolitical uncertainty. Yen is getting killed, and the dollar is, let us say, reclaiming a bit of lost ground, or at least finding a lifeline, even against European currencies.
Gold story seems to extend beyond the Middle East today. China's stimulus announcement over the weekend, overnight, where they also changed their monetary policy stance from prudent to, we'll call it a little bit looser. But it's the first time they've changed the language around their official monetary policy stance in 14 years. Likewise, after we get that announcement, we see that China has officially announced that they've resumed their gold buying as of November. What day in November, they don't tell us, but I would imagine it might have been around the 14th when gold stopped its fall for the rest of the month. Dylan, this was such a powerful narrative back in the spring and going into the summer. June 7th, when gold prices fell back, it plunged us right back down towards 2350. Although that was really the end of the road for gold's fall. Do you think that China stepping back into the market is going to have the same type of, reverse reaction here where this is the end of the story? Or as people who have been on the long side of metals at various points this year, you famously cornering the silver market, do you think that this is the good news that bulls have been waiting for, maybe that shakes us out of this sideways stupor?
I don't know. I mean, I find the whole thing fascinating. I mean, I guess it's sort of obviously very much worthy of discussion, but I hate to answer your question with a stack of questions. But unlike silver, which trades in some ways relative to supply and demand in some industrial components, at least in my opinion, gold obviously has sort of the mystery component of central bank buying that's only reported well after the fact and at the time is sort of speculative. And then you have the crypto component as a recent arrival to the gold price. And so I don't even know what makes gold, like I can talk about what drives the silver price or what drives Tesla's price or the S&P's price or whatever. I don't know what is gold's price? Is it a referendum on inflation? Is it a referendum on risk? Is it a referendum on currency alternative of some kind? Is it a referendum on what is it? What is gold price even? What do we think it's even? What risk is it pricing? What supply and demand is it pricing?
To me, gold is basically a foil for the dollar as a kind of alternative to fiat currency. It is also a foil for interest rates because it yields nothing. So,
but isn't that what Bitcoin is now? I mean, at least in the first instance.
I think Bitcoin enthusiasts would like to say that. I think they would like to say that what Bitcoin is. And by the way, we heard this from Jay Powell when he spoke at the DealBook Summit last week, which sort of lends credence to the perspective. He said, well, look at Bitcoin is basically like gold. It is a speculative asset that reflects the same speculative give and take that gold reflects. Speculation about the attraction of fiat and speculation about the direction of rates. And that if rates look loose and fiat looks weak, value storing alternatives are interesting, and gold and Bitcoin basically occupy the same space. I am not quite sold on Bitcoin as that, but that the market treats it as that enough of the time.
But Chris certainly seems to be asking me my opinion of gold, and I'm throwing the question back to gold specific. I would say I could better explain what I think Bitcoin is pricing, meaning of the speculative fever and FOMO and techno utopia, take techno utopianism and whatever, Or I could say why silver is trading. I can't explain why gold is priced wherever it is. Even oil is a much easier handle for me. I don't know why gold is where it is. You're saying it's the dollar. It's a dollar. If the dollar is strong, the gold is weaker.
I think the difference between sort of those kind of more usual catalysts for gold is you've had periods of weirdness where those things don't work. One of them was China's aggressive accumulation of reserves, mainly last year, where they were growing their gold reserves at a very rapid speed, and gold really was behaving for no rhyme or reason until you looked at Chinese gold reserve numbers. Gold also has this weird, and I would argue undeserved, thing that it does where when there's geopolitical risk somewhere, markets reflexively go to gold. I don't think there's any good reason or logic why that is. I think it's mostly legacy, but it does seem to happen episodically for a day or two when guns go off.
I think today is just simply about the weak dollar and the China buying story, right? We're getting another wave of the whole China is stimulating the market. We see it here in FXI up 8.22% today, obviously taking back a big share of the losses that were in place after shares peaked out back in early October, perhaps about half the losses, back to an area where we peaked out right after the election, interestingly enough. Ilya, you and I seem to be at a little bit of a, I say, disagreement here about the sincerity of China's stimulus announcement, but it also seems like we're very much on the same page that this isn't enough yet. But
they got to do something.
They still got to do something, but at least within the announcement that they've made, there is enough lip service being paid to the notion that they realize consumption needs to go up in order for the recovery to gain steam. Whether or not the PBOC is the institution that's equipped to make those changes or spur that type of shift in consumption is one thing to be seen, of course, and we certainly don't think it is. But at least policymakers are now talking about how the problem is a lack of demand in the economy, not the supply that they've clearly flooded the zone with.
Yeah, I mean, this is not new. It's been pretty clear that China has been talking about this. I mean, notice the rally from September. Why was that rally there? Because the Politburo back then came out and said, we need a more generous fiscal stance, and that's coming. And then they didn't do it. And then didn't talk about it thereafter. There was a big, loud meeting of party officialdom. They had a big CPC Congress where they were supposed to unveil these things. The Ministry of Finance was supposed to make a big announcement thereafter. None of it materialized. Instead, they had a bunch more tinkering at the margins type of measures about improving the finances of regional governments to basically let them roll over debt so that they can borrow and spend more. There seems to be a kind of allergy in Beijing to big national fiscal spending. They seem to only just want to give inducements via monetary measures or via refinancing for regional governments or all of these things, giving money to regulators and the sovereign wealth fund to go buy stocks, all this stuff. And if you look at the way that U.S. markets have taken this on, I mean, obviously we have a big jump in FXI here. This is a U.S. dollar-based ETF. If you look at what Chinese markets themselves did overnight, they barely moved. In fact, the onshore mainland stock index was down a bit. Hong Kong rallied, but it didn't get out of its range or go very far at all. This seems to be more like optimism outside of China about maybe this is something. Now, in fairness, a lot of the bad news out of China is already a known. And so with that, you probably, until you have the tariffs show up and new variables emerge, you probably have some room for the markets to give Beijing the benefit of the doubt on saying, look, we're finally ready to do something. And that's probably why you get the Aussie rallying on this. And as long as the trade numbers that come out later this week are not horribly worse than expected, which seems unlikely, then you probably continue to get the benefit of the doubt. But that doesn't change the fact that structurally, China hasn't done anything, having promised stuff before. And their monetary stuff just plainly isn't working.
We'll see.
But I mean, I don't. How does what China is or isn't doing in terms of their economic policy or stimulation or structure, or whatever you want to call it, how is that relevant to whether are you suggesting
their economy is in shambles?
Right, but
falling apart.
Is that are they? What we're talking about, gold, no gold here. Does that drive them? Does their economy in shambles make them a gold buyer, non-buyer? Believe them, don't believe them? Do I care? Do I don't?
As far as gold, I'm not sure it makes much of a difference. I don't think that there is anybody in China saying, you know what, we can't be spending all this money to buy gold because we need it for fiscal stimulus. I don't think it's the same pot. I think it's more like a willingness to do fiscal stimulus, which Xi Jinping seems ideologically opposed to. He doesn't seem to want to do that kind of a thing because he doesn't want the economy to become reliant on government outlays from the center. He essentially, the way that he's phrased it is, he that doesn't want high growth, he wants high quality growth. That is to say, self-sustaining. And so it's unclear whether there is an understanding to this point in China that what you need is to replace demand. Because for 6 consecutive quarters now, China has had no demand. They've been in economy-wide deflation for a year and a half. That's abysmal. So they need to do something. It's a huge threat to global growth. And it's a huge threat to stock markets if ever the U.S. were to misstep. And there is no perpetual motion machine. Eventually, the U.S. will misstep. So the threat here is the global economy is operating with no plan B to U.S. economic growth at all. U.S. is shrinking, or Eurozone is shrinking. China is nowhere. They've been idling for years, and the U.S. is booming. If the U.S. were to ever not be booming, then what is going to power global growth? The three of them together are 58% of global GDP before we account for all the economies that need those three to grow to have export demand. So it's actually even more than that. That's the issue.
The news out of China that interests me most today is that they're introducing new antitrust investigations into NVIDIA, which seems to me to be a very funny reason for a stock to sell off. Why do I bring that up? For NVIDIA in particular, if people want to go back to August 2nd, that's a day here on our chart. Market gaps open lower, of course. That's the Friday. Non-farm payrolls report, slightly weaker than anticipated. But that's when we hear that the Justice Department is investigating complaints against NVIDIA. Now, that reaction lasted a full, we'll call it more than 24 hours because technically it's a weekend, but in market time it's not. And NVIDIA bottomed the next day and hasn't looked back since then. I don't know, guys. If China is stepping up antitrust probes into NVIDIA, it feels like it's more about the tit for tat of the forthcoming trade war than anything else. The Biden administration just, of course, levied new tariffs onto China. China responded by banning shipments of rare earth metals to the United States. Now we have this coming out. Dylan, should we take this seriously as a threat to the AI superglide story of 2024 continuing into 2025?
I just can't imagine how you could possibly I just don't. There's what on earth is going to. The only thing that's going to derail the AI superglide is going to be the inability to actually manifest value from the use of AI. But again, which I think, is a real possibility, certainly relative to time frame expectations. But, I also, Bezos said it, I think, the best last week when he was talking in New York, and he said, listen, AI is a universal horizontal factor like electricity. So everything uses electricity.
Mm-hmm.
Everything will use AI. And so is electricity going to be derailed because of a political policy or a trade policy? No.
This is the whole thing.
If you're Germany,
right?
yes.
Telecoms were not derailed by the .com bust. Nevertheless, we had one. Railroads were not derailed. Ha ha ha. That was not intended, but I'll take it. By a giant market sell-off in the initial phase of over speculation about booming railroads and everything is getting interconnected and it's a whole new world and steam engines and yada yada yada. So sure, of course. I mean, I agree. The question is, as ever, of price. Is this the correct level now? And there's no confirmation at this point that it's the market's realization that it's not, but the structure in NVIDIA here is starting to look a little head and shoulders-ish, which is a top. Now, if this were to turn, NASDAQ would turn because it's such a huge component. And if NASDAQ turns, lots of things turn because that's such a huge component. So does the AI narrative need to be wrong for that to happen? Not at all. Just needs to hit a speculative road bump. So could it happen? Of course. Is it happening confirmed now? No.
Top performing sectors today in this market, to no one's surprise, those are the ones related to the metals. Gold miners, junior gold miners, they're your top two performers. XME, likewise, the metals and miners, 0.79% higher. Otherwise, energy, XOP up by 0.95%, OIH, oil services up by 0.71%. The only commodity positive group on the day was home builders, ITB. You also have XHB, home builders, 0.71% higher there. You can swing around to biotech or healthcare, but real estate and healthcare are the only non-commodity names that are up on the day. Is there a signal amidst this noise, or is this just a noisy Monday where we have a little bit of trading volume back in these markets? 1.27 million contracts traded in ESZ4, Ilya.
I mean, when you look at what you have here, again, it seems to be that a lot of this is tied together with a response to geopolitics over the weekend, because it does all seem to kind of stem from everybody wakes up and goes, China stimulus, but also Syria has fallen. And you see that mix in the dollar most acutely and in the gyrations of the Aussie dollar, which first goes sharply higher on the China news, then ultimately retreats as yields inspire the dollar in the latter half of the day as the U.S. comes online, because the story starts being oil, yields, stocks, currencies. And so in that sequence. And so what you find here, I think, is something that's going to probably unravel come tomorrow, because what you're going to start to really focus on is immediate event risk, because nobody knows what Syria means, and it's unlikely that anybody's going to know what Syria means for weeks and months on end. We have no idea if this is going to be, let's say, Libya, or if this is going to be Egypt, to look at the the Arab Spring experience, or if this is going to be Tunisia to look at the Arab Spring experience in a very different way. So who knows what this is? The initial comments out of HTS, the lead rebel group, and their leader Jelani seem to be very encouraging. They're saying officials don't go anywhere. We're not purging anybody. We're not gonna hamstring any minorities. We're not going to impose any kind of Islamist dictums on anybody. Just hang tight. We're going to have a unity government. The prime minister remains. The police and other officials were encouraged to stay on and do their job. So maybe this is encouraging. Who knows? But the episodic response is probably short-lived, and CPIs on Wednesday. We're going to get back to thinking about that tomorrow, and markets are going to swing back.
I have a much lower standard. Like maybe I have a higher standard of expectations or a lower bar here for these for HCS, which quite frankly, last week when this is happening, I'm like, is this like a is this like a K-pop group that's touring in the Middle East, HTS? And I don't know, this guy's ex-ISIS. Like, why should we expect anything positive out of this? Ex-Al-Qaeda. Oh, sorry, ex-Al-Qaeda. Why should we be expecting anything other than what's been, Syrian civil war is part of the reason
because
why
the
Europe
people that made the Good Friday
agreement
agreement in Ireland were also former IRA. You don't make. I mean, you don't make peace in these kinds of situations without some dirt on your hands.
I don't see how Syria is not the next Libya.
It could be. It could totally be.
Or Iraq.
I mean, don't forget could be. Isn't that? I feel like that's the most likely case.
Could be.
Just a murderous.
But the things that were happening in Libya and the things that are already on the ground in Syria are different. You didn't have the kind of thing in Libya where you had one group and it was leading and it was galvanizing everyone. And by the way, I'm not saying that I'm optimistic. I'm saying we just don't know. Because here you have a clear leadership. But already, by the way, to your point, some of the Turkey-backed groups versus some of the others are starting to see some friction. And some of the unity is starting to maybe come apart. We're going to have to see. I think the bottom line is nobody's going to know for weeks.
And I do think the bigger question is, it's like why, from a humanitarian perspective, how can you not be concerned constantly? But from a financial markets perspective, tell me why I care.
Because this means the Qatar Turkey pipeline, gas pipeline can get built. That's why we should care.
Right. So, but what? Energy gets cheaper.
I would think so in that part of the world, flowing from Europe. And Turkey's a major conduit for energy into Europe now.
I agree.
Yeah. So like if Turkey, Erdogan is he's on my list of leaders who I wish would ban me personally from his country. That said, Erdogan's place.
He may have already. All the things we've said about the lira over the years. They have a law against that.
But he's certainly he's
made it brilliant long strategy here where now even further now in power, or at least has a lot more leverage over Europe. Right. Oh, there's now the Syrian crisis. I would like some better trade access to the European Union, lest we have more Syrian, refugees spill over the border. Or more importantly, we want to get this gas project built. You guys want to connect your pipes to ours? Like, let's work together here. So there are long-term implications for Europe's energy security that Turkey can leverage in the context of the Russia-Ukraine war. But nevertheless, I think that what a turn of events. Now, does it reduce the risk in the region? I mean, maybe Iran gets a little bit more desperate, but they are certainly reeling.
Well, they're running out of levers here.
If the past year has been defined by an environment where geopolitical risk was about which IRGC tentacle would ultimately flare up if it was Hezbollah or Hamas or someone in Yemen, and that causing problems for a variety of markets in the futures over the past year or so. We seem to have come onto the other side of that. I mean, oil prices today, despite their bounce, IVR rank is 16.6. The low for the IVR today was negative 1.6, right? I mean, this is the lowest volatility that we have literally seen over the past 52 weeks. When the IVR goes negative here on the platform, today even negative 1.6, it means volatility was 1.6% below the lowest point it had been over the past 52 weeks at one point during the day. So this is a dead market right now. It gets a little bit of a lift. Maybe it's due to the China demand story that could be coming back in. They are the world's second largest economy after all. But this is not this is not a market today that's moving on geopolitical risk emanating out of Syria, so to speak. And if it is, and people really think it is, I'm not of that mindset. But if I did think it was, I would be fading the hell out of this rally.
Well, I think it is. I just don't think it's going to last longer than a day.
There's a lot of time to tell here. Syria obviously is not a really significant cog in our export markets. I don't think S&P 500 companies derive that much of their revenue from Syria. I looked in the top 25 countries. I didn't see their name there. I don't think anyone's going to be surprised by that whatsoever. Whether or not this is a lasting story we're going to see how this plays out. But as we've learned from Iraq and from Libya and Tunisia in recent years, odds are this could go sideways. Guys,
I mean, odds are. I mean, I'd like tell me how it doesn't go. I would let. I mean, not on it, but like.
No, seriously though, that's kind of the burden of proof is on the people who think this is going to work out well, given what we've seen in recent history.
Assume this is going to be a hellhole, murderous hellhole for the next decade, like Libya.
How is Libya negatively impacted financial markets?
That's the easiest call to make.
And so then the question is,
and it would be difficult for it to not be that.
Right. So then Libya became a murderous hellhole and still is.
Yes.
And exacerbated the Southern European immigration problem, which brought in Giorgia Meloni, which weakened Sanchez, which weakened Merkel, and sort of strengthened Le Pen, strengthened the conservative sort of strain of European leader, and weakened the liberal strain of European leader.
Yes.
The number one issue with Syria, other than for Syrians, which is it's a murderous hellhole, is more illegal immigrants in Europe.
They just may not be let in this time.
Right. But, let in, not let in, they still come. It's like, they're not, I guess to game this out, the most likely thing that happens is a rise in conservatism in European politics in rejection of an additional feeder territory of immigrants.
Well, and of course, Syrians have been coming for a long time.
Murderous hell.
Because the Syrian civil war has been ongoing for a while. These rebels have been holding territory near Idlib for years. I mean, that was sort of their stage of operations. They've been holding a piece of Syria. So, yes, I mean, that's certainly the path of least resistance. If Syria is going to continue to be the hellhole that it's been, and if it's Libya ultimately, which is essentially a failed state and chaos, then yeah, absolutely.
Now the other version of our little future story is masterstroke by Israel going back to the Iraq War, tipping over one domino after the next.
Right back to the Iraq War, like 1983 Iraq-Iran War. Like 80s? Which Iraq war?
Yeah, 03. I'll take you back to George W. Bush.
Because I know that they bombed an Iraqi nuclear reactor, the Osirak reactor, back in the 80s. Yeah. So that's.
And I'm not gonna reject that, but when I say what I'm saying, I'm like, okay, They tipped Iraq, they tipped Libya, they tipped Sudan. They're basically in the process of eliminating Palestine. They've effectively neutralized Hamas and Hezbollah, or certainly diminished massively, and sort of secured, if you want to call it that, southern Lebanon, really only leaving Iran as and
Iran is really the force that they're fighting by Proxy.
Right. So let's
Essentially.
say we go, that's good. But I'm just taking, so now Israel's safer and more secure than it has ever been.
Which is really interesting because now if what this inspires is ongoing peace between Israel and the Arab states, as happened under the last Trump administration, or at least was formalized. Israel, of course, has had quiet peace and mutual interest in containing Iran with Gulf Arab states for decades, but it was formalized, as it were. If this leads now to a peace deal with Saudi, and if there is a grand bargain to be had here because Iran is particularly weak, having lost Hamas and Hezbollah and now Syria and the Houthis on the back foot, this could be a significant regional realignment, especially if Israel and Turkey find a way back to be friends as they've been historically. So you get there, and now you have an interesting situation.
How is that? But so let's say you get the most secure Israel's ever been. How does that affect the financial markets?
It gives you much cheaper oil.
Mm-hmm.
It gives you much cheaper oil. And if Iran were to buckle under out of all of the different angles from which it is being squeezed. It is being squeezed from the Turkey side. It is being squeezed from the Saudi side. It is being squeezed from the Israeli side. And Saudi and the Israeli side are increasingly allies. In some cases, overtly. The Saudi kind of sphere of influence of Gulf Arab states already have peace and diplomatic relations with Israel, as does Egypt, as does Jordan. When you get formal relations with Saudi, which the Trump administration is going to obviously push for very hard, the Abraham Accords was one of their major wins on foreign policy. They're going to very much attempt to build that. If you actually get Iran to change its stripes over time here, if the pressure is way too hard here, especially with the Trump administration probably dialing up sanctions, or at least sanctions enforcement. Biden administration was very lax on sanctions enforcement. Mm-hmm. If you get all of these pieces together and you actually get Iran to turn and those sanctions go away and that supply comes out, game changer.
I don't know if the Ayatollah is going to do much of anything right now that's constructive.
Not right now.
It kind of begs the question that we're talking about crude oil here, and this thought's been bouncing around my mind the last few minutes. We're heading into a 2025 and into a new administration that's, I dare to say, it's not really that behind the green energy boom. We have seen, obviously, a significant push higher in renewable energy stocks in recent years, predicated on a lot of these government subsidies, tax incentives, what have you. But under a Trump administration, they could go away. Dylan, from your view in Europe, obviously, Europe has a very different view of climate change, of this climate responsibility than, American corporations do right now. I think about some of the biggest companies in the world that operate in this clean energy world, like Next Era here, ticker NEE. We could go over to something like Brookfield Renewable Partners, which is BEP, for solar, of course, which everyone remembers Solar City, but it's not the same company. SEDG, Solar Edge Technologies, and Clearway Energy. All these companies, they're not exactly going gangbusters here post-election. A lot of sideways chop to lower, if any, resolution at all. Should we be thinking about thematic trades like long fossil fuels, long legacy fuels over green energy during the Trump era, or is that too simplistic of an investing view heading into next year and beyond?
Yeah, I think that it's sort of, Trump is so unpredictable and what he says has so little meaning, and at the same time is so insightful. It's sort of a very complicated situation because obviously he's going to be as liberal as possible with fossil fuels. but he's also chosen the single most successful anti-fossil fuel entrepreneur in the history of mankind as his first buddy. And so, how are you going to make a call, between, the Department of the Interior that's long fossil fuels and his first buddy on the big airplane, who's blathering on about the power of couple of hectares of Arizona give you enough electricity to power the whole earth, or all this stuff. So my point is, I would be hesitant to express a macro opinion. Although I find it interesting, like if you're long peace in the Middle East because of the Syria collapse and because of the Israeli scorched earth, and you're also long fossil fuels because marginally, whatever happens with green energy, Trump is still going to be fossil fuel friendly, maybe a short oil position over the course of, like, a longer dated short oil position becomes interesting as a commodity price. The war in Ukraine is going to stop. The peace in the Middle East is closer than ever. And drill baby drill is in the White House. And oil's going to break 50. I could make a case for that.
I heard I forget who it was today on Bloomberg Radio. They were making a case for oil. For gas prices right now nationwide are bouncing between like 325 and 350, which when you look to the futures market, not a surprise there. RB futures at 194.5. Typically there's 75 cents boost. Current oil prices from where they were a month ago. Today is the 9th, so we go back to the 8th, the final closing day, 199. So yeah, it's actually there's a little bit more there, about $1 premium. But the point is, they said that their forecast for 2025 is for the average gas price year round to sit closer to 250 than 350 a barrel. We know oil companies aren't in the business of giving this stuff away for free, and that means there's going to be a margin that they are able to charge on top of the oil that they're pumping out of the ground, refining, transporting, guarding, yada, 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 everything that goes into a price. But if we get down to 250 a barrel nationwide on average, that means gasoline futures are going to be dropping fairly considerably. That probably means that oil futures have a ways to go. That could be looking at a 5 handle. Dylan, you just alluded to seeing $50 a barrel here. What makes you think that? Is that just supply, OPEC being cowardly?
I mean, it's what I just said. It's sort of like, look where we are. Lay in everything you just described. Lay in forecast at 250 a barrel. Lay in Syria. The Ukraine war is going to end next year. Lay in Russia's pulling out of Syria. Lay in drill any pile of oil you want in America. Get me into some 55s, even 60. If the question is, you're just playing a game of madman's delight with the calendar, God help you.
Well, you need enough duration to do something like that. One of the things that rolls around in the back of my mind about some of these green energy stocks as I'm thinking about 2025, and I'm going to take some money and put some thematic basket trades in that I just kind of hold for the whole year, or at least assess at the halfway mark. And oil prices going down actually hurts the green energy companies even more, right? Because on a cost competitiveness basis, even if the cost of renewable energy is going down over time, if the incentives are taken away, then that's just that's basically you're adding up another price level there. But more importantly, if oil prices are going down, then the incentive to transition is diminished, at least in the short term. And so when you're facing the prospect of all these tariffs, I don't think NVIDIA and this antitrust investigation in China is really about NVIDIA. It's really more about the Trump administration and letting them know, by the way, your companies rely on us for business too. So let's make sure that we slow our roll before we get into a tit for tat here, because we can hurt you just as much as you think that you can hurt us.
Yeah, it's I've got a gun too.
Right.
And I'll use my gun too.
Exactly. There's a signaling impact here. So if we are heading into a world where the Trump administration is, promoting drill baby drill, which that means we're going to have to expand capacity here in the U.S., the cost competitiveness for green energy in a world without significant subsidies goes down. And while that's bad for companies like NEE, to me is a really interesting one. It's a fairly large company, not nothing, 9.16 million shares traded today. It's been slowly losing altitude here. And I've been watching it the past few weeks and then haven't really done anything with it. But some of the price action recently, as we look into next year, right? Like this recent move, the pivot that we have in October, right? Kind of them becoming resistance here at the end of November, and now we're rolling over again. It feels like a market that's really in a state of decline right now. And so while the energy companies themselves, we can think about the XLEs of the world, which I have in my personal account, I've held for a long time, several years now, and haven't really given anything up. You think about XLE being able to weather the storm, right? Their cost basis for pulling oil out of the ground in the U.S. is going down right now. The break-evens in the Permian Basin are going down right now for oil companies. When Chevron last week announced that they were reducing investment into the Permian Basin, and a lot of people are saying, oh, this is really bullish for oil. It's like, no, they're reducing investment because they can get the same yield from their operations without having to need to spend all that additional money. And they're kind of reaching the levels that they're looking for in terms of production from these wells. So once you're at your capacity for production from a given well, there's no reason to continue and invest in capital expenditures around it. It's a sign of how cost effective these operations have become. So they can weather a storm, right? XLE would suffer, but without the subsidies that are provided to the clean energy companies in the midst of a tariff war, you probably have a lot more downside exposure right now. So I'm thinking about NEE, CWEN. We talked about SEDG. There's First Solar, of course. Who knows? Maybe a military coup in South Korea disrupts some of these supplies as well, Ilya.
Take a look at ICLN. So this is one that I've been looking at. This is the Clean Energy ETF. By the way, if you look at today's price action, you'll notice the spike higher on the daily chart, and that's sort of telling you that story of crude oil spiked today, and sort of rhymes with that. But if you look at the weekly chart, as you had going here a moment ago, you had a major break of a long range with the election results. If you look at where that long candle is, you can see that's early November. That's the drill baby drill election right there. You'll notice it hasn't had any legs to continue to bounce. It's just digesting sideways. I have a little bit of put exposure here. It's very cheap. So if you wanted to look for a big leg down, it's certainly been lower than this, and there's been a major breakdown. So if you wanted to buy some puts that cost next to nothing to take a punt on this story, this is one vehicle.
Yeah, during Trump's first term, which will just date to the start of the election in 2016 onwards, at least as it pertains to the market pricing it in, ICLN hits a low just below $8. And while it makes advances over the next few years where it ultimately trades back up to 10, it underperforms the broader market along the way. And there are times when even as the broader market is rallying, like when you get to the lows in December 2018, ICLN is right back on the lows. So this was up until late 2019 when everything started going up again, right? Yeah. This is something that underperforms the broader market structurally. Ultimately, it is hurt by the China trade war when that comes into play. We can see from, we'll call it 2019, mid-2019 onwards, there's a period where the thing just goes sideways while the rest of the market is, starting to make an advance and turn to the upside.
Yep.
The point here I'm getting at is that if there's a place where we see any clean energy stocks outperform in the short term, it probably sets you up on a path where you can fade that rally. And I bring that up because on a day like today, Solar Edge Technologies is up by 11.1%. It has a 45.1 IVR. It's in the throes of a more considerable downtrend here, right? We can see that there's some pretty interesting resistance coming up. I don't have anything on right now, but in thinking about a possible trade opportunity here, looking at a short call vertical that may be dated closer to around 20 or so, and we need to, you're a little too far away from me there. Let's go to you, strike width. There we are. Okay. We could be thinking about trades like this going into next year that give you something in the neighborhood of like a 70% probability of profit. You might have to go $2.50 wide, $5 wide to get in there, but you're talking about risking 1 to make 4, 1 to make 3. And in a thematically bearish market, those are swipes that you have to take. So rallies in clean energy for me going into next year, any of those names listed above, any of the constituents or holdings in ICLN, those will be little targets for me to take shots at for 2025. Guys, as the week goes on here, I have a few things for us to talk about. Tomorrow, we're going to discuss here on Overtime the top 5 performing non-US stock markets for 2024 and the worst 5 performing stock markets in 2024, and whether or not we think that they'll outperform or underperform in 2025. There's some interesting names on the list. Of course, China has switched places back and forth between both sides in recent months, but a name like India, for example, has been sitting atop the list for some time. Will Germany continue their outperformance despite Europe's lack of growth? I mean, there's a lot to discuss here, and maybe give us some international flavor as we think about the new year and get away from just the US dollar denominated markets and US equities, which, you know, we're not going to leave them behind, but we have to think about other worlds as well. So for that, this has been the Monday episode of Overtime. We are now out of time here. We'll be back tomorrow, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. See you all in about 23 hours time. Until then, good luck trading. Up next, though, there's more Tasty Live, starting with Macro Money and Ilya Spivak up next after the break.
See you there, everybody.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel. Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you'd like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Veneta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Global interest rates are on the move. In fact, they are on the move in the world's top 3 economies. Will the markets care, though? That's what we're going to ask ourselves today. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we're going to look at the big inflection points up ahead this week. We face what would be a very active week by any other measure. But of course, we are here in the second week of December where liquidity is already on the wane as the holidays approach and participation is relatively modest. Witness, if you will, the relatively muted responses to an attempted coup in South Korea, the toppling of the government in Syria, and the unraveling of the administration in France. The markets seem relatively blasé about the whole lot. But this week, it is the cost of money, the most fundamental of all trading and investment considerations, that is going to be on the menu for consideration. And so it is here where we might get a bit of a crescendo on what has been a very action-packed year up to this point. And we'll start the conversation with a look at what the markets did last week, and then consider what those key points are. As we can see here, kind of a quiet week last week, but for the NASDAQ. The S&P manages an overall rise for U.S. equities of 0.8%. A little bit of a wiggle lower on bond yields as the correction continues for a third consecutive week. We, of course, will touch on what all of this follows from, but needless to say, if you've been watching markets since September, you know that there's been a massive repricing for reflation after the Fed's dovish outing at that time, and that's seen a powerful rally in the dollar, a powerful increase in yields. And over the past 3 weeks, all of that has been redistributing a little bit as that story seemed to run out of speculative fodder. Yields managed to continue down that way, albeit modestly. 10-year down 0.6%, the 2-year down a little bit more, 1.4%. Crude oil and gold basically do nothing. They wiggle within familiar ranges, but the moves ultimately don't take us very far at all. In fact, as we get news over the weekend here now that the Bashar al-Assad regime in Syria has fallen apart and the country is being taken over by rival forces, we get a little bit of a pop in crude, we get a little bit of a pop in gold, which take us to the tops of the ranges that we visited the lower boundaries of last week. So we have a little bit of back and forth, but none of this seems to be a trend-defining sort of thing either way. The dollar basically standstill last week. Euro down 0.2%, the yen down 0.3% after sizable gains the prior week. So not much doing there last week. And we'll look at the dollar against the Australian counterpart shortly as we discuss China. And Bitcoin up 4.1%, relatively modest uptick in Bitcoin terms. But no big story there, it would seem, other than the selection by the incoming Trump administration of a crypto favorable sort of nominee to lead the SEC. So we have here a relatively modest week for price action last week, but all the reason to expect that maybe that sort of low gets shaken loose this week as we start getting some big U.S. economic data. Now, last week was not starved for it either. To be frank, we had a speech from Fed Chair Jerome Powell. We had, of course, the U.S. jobs report. So there were opportunities for things to make moves. They just opted not to have immediate follow through, and that'll be what we try to divine for this week. Can we actually get these markets to go in a direction? And we start with U.S. inflation data. The expectations here that we're going to get an uptick on the headline number to 2.7%. That would be a significant leg higher, of course, for U.S. inflation. That would be the highest reading, in fact, since July's 2.9%, and the second consecutive month of increase on the headline number. The core reading expected to remain unchanged, 3.3% year on year. And this is the bit that the Fed is, of course, watching most closely. We are looking here mainly at inflation that lives within the service sector. We can clearly see here, looking at the latest contribution numbers, housing is sort of subsumed within that part of housing services in the core services bit. That's, of course, still a bit sticky, but food is steady, and goods as well as energy are at this point deflationary forces. They have a negative contribution to headline inflation still. And the real sort of area where there is stuff to do for the central bank is in that core services section. So it is that core CPI number, the one excluding energy, the one excluding food, that's the most critical. And if we were to come in at 3.3%, that would essentially mark the fifth consecutive month without disinflation. We started with a downtick from 3.3 to 3.2 from June into July, but since July, core inflation has not gone down. And that's really something of a problem for the Federal Reserve, one would think, if not for the recent comments that we've received from Fed Chair Powell last week. Again, Fed Chair Powell in a prior speech, and of course the November policy announcement where he discussed the moving parts after the November FOMC meeting. And all of that seems to point, along with minutes from that November meeting that were recently released, in the direction that policymakers are not prepared to jump on this piece of data or that. They continue to see, despite these recent months of standstill, the trajectory for inflation as heading in the direction of the 2% medium-term objective. They have repeatedly, whether it's Powell or other policymakers or the FOMC minutes, argued for a look through near-term data volatility, especially of the likes that last week's jobs report gave us. And so it doesn't seem like we are looking at the kind of inflation data that's going to change, at the very least, December's Fed policy trajectory. And moreover, we look at the way that U.S. economic data has performed relative to forecast. We've been talking about this bit for about a week and a half now, this idea that the City Economic Surprise Index has moved through its 20-day moving average after a long string of outperformance from late August, and that this is eye-catching. Not because we're trying to do technical analysis on a macro indicator, that would be ludicrous, but because we're looking at an index that measures data outcomes, not in absolute terms, but with reference to forecasts that come out of economic models that typically look at data on monthly release cycles. Some of it is quarterly, like GDP results. Some of it is weekly, like jobless claims numbers. But the overwhelming majority of key U.S. economic data is on a monthly cycle. A 20-day moving average is about a month, or about a month of trading days. So 5 days a week, 4 weeks, give or take. So one would think that after about a month of data going the wrong direction relative to forecasts, the economists running these models that generate the forecast against which we're measuring here would start to turn the knobs and adjust their models, because they would say, well, reality is not endorsing our model. That means our model is wrong. We need to fine-tune it. And so when you go through the monthly average for this index, the sense you get is that perhaps the fine-tuning has commenced. That there's been enough of a judgment reached that the model is wrong, or models in aggregate, and that now they need to be trued up to what the economy is actually putting up. Which in this case suggests that just like here, or here, or here, or here, you might get, after the move through the 20-day moving average here, continued correction toward basically the zero line, where data is going to be relatively in line with expectations, or at least closer in line with expectations as we go. And that probably speaks to CPI numbers that should be less than controversial. The first upshot there is that the December rate cut is probably firmly on the books. 86 almost percent a chance of the cut being baked into Fed funds futures, and it seems unlikely that you get too far off this square. Maybe you get a little bit lower in the direction of the high 60s, the 70s, if the number is a little bit warmer than expected. But it doesn't look like the Fed is going to get shaken out of this move. Moreover, if the numbers are close enough to forecasts that the view for next year is sustained. As we can see here, for 2025, we're looking at about 67 basis points in easing. It's been oscillating around 60-odd basis points for a while here, as we can see. And that is basically comporting with 2 cuts being baked in and some speculation about the probability of a third, but not particular conviction. We'd have to get in the direction of 70 and change, and obviously 75 would be a full 3 cuts. So we're sort of on the fence about that third cut here, but 2 of them are in the outlook, and we can see that that has marked a very significant dilution from what was there when the markets started to think about the beginning of the Fed rate cut cycle in earnest before the initial move in September. We can see here the total was 233 basis points for this year and next, of which 100 basis points, right here, was this year. Now, of course, we know at this point that 75 basis points of that has already been delivered. 50 basis points in September, 25 in November, likely another 25 in December. So it's next year's outlook that's the moving target. If it was 100 about basis points for this year in September, when the markets reached their sort of dovish crescendo speculatively, Then it was about 130, 133 basis points for next year. And now at 60 and change, it's been cut in half. That's in part, of course, because U.S. economic data has been doing better relative to expectations, suggesting the economy is anything but cool. And the response has been, since September, a rise in inflation expectations. These are 5 and 10-year break-even rates from the bond market that give you the priced-in expected inflation that the bond market is telling us is there. That rise in inflation expectations gave us higher yields. Here we have both the 2 and the 10-year going up, so the curve is shifting up at the front and the long end. And of course, the dollar has rallied. But what we've seen since mid-November is some of these moves have started to correct because the markets have basically settled on expectations. If we take a look at what's happened here, again, since mid-November, there's been a peak in the sort of move to reprice this and a bit of a correction. Against the backdrop of that, this redistribution of speculative positioning, not that the narrative has changed, but just whatever speculative capital was looking for just this as a trade seems to have had enough of what it needed to see to start taking money off the table by the second half of November and obviously going into December. If the CPI numbers are relatively in line with forecasts, then this might continue. This might get the green light for its next leg. Might mean lower yields, might mean a weaker dollar in the wake of these numbers, as long as they're not shocking. Then the interest rate story continues, but from the other major non-China driver of global growth, and as we've said here quite a lot, the Eurozone, the US, and China together comprise 58% of global GDP, conservatively speaking, because a lot of the other economies in the remaining 42% are vendors to these big three and need these big three to have growth in order for them to have export demand and growth in turn. Before we get to China, though, it's the Eurozone. Here we have a monetary policy announcement from the European Central Bank this week. Expectations are firm that there's going to be another rate cut of 25 basis points. We can see it is almost all the way baked in, about a 70-odd% chance that this move is going to occur. And as a matter of fact, if we look beyond this year into next year, the curve, the futures curve here, would imply that actually the perspective on the ECB going forward has become more dovish relative to when the central bank met in mid-October and in mid-September. So mid-September we can see is the more hawkish of the three curves here. And then over time, we have a rate cut from 3.5 to 3.25 in October. That's that shift right here. But we can see the tail end of this curve is a little bit steeper than the tail end of the current curve from January onward. So the markets are expecting a little bit more dovishness from the ECB. And in fact, we can see that correction here. This is that October up through now expansion of dovish speculation. And as we can see, it's not coming from expectations for this year. That's pretty well locked in. It's coming from a more dovish outlook on next year, where we're now expecting about 110 basis points in rate cuts. So leaning on 4 cuts with some optionality for a 5th. Not much, but a little less than half of it is there. It would need to be 125 to be the full 5. So we can see why this is, of course. Eurozone economy, looking at the latest PMI data, is coming apart. It had a little bit of a rebound into positive growth territory, as ever. PMI numbers have positive growth above 50, which is the neutral kind of boom-bust level here. Below 50 is contraction, above 50 is growth. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. We can see that of course, manufacturing has been in contraction going back to 2022, but the overall economy here has been following the service sector. That's the orange line. The catch-all is the composite in the kind of grayish, bluish line there. And what we find is that at the end of last year, there was recession-like conditions in the Eurozone, well under 50. We had a little bit of a pop in the first half of this year, little bit of a attempt at recovery. And of course, since then, things have unraveled again. We are now back below 50 across the board. And the most recent composite numbers are, of course, eye-wateringly weak as services contracts again. So it makes sense, really, why along the same period of time here, the outlook has become more dovish. Does look like the economy needs more stimulus. However, looking at the latest numbers from the Republic of Germany's finance agency here on break-even rates, again, this is a measure of inflation expectations baked into the bond market, we can see since bottoming in October, there's been a little bit of a wiggle higher in short-term inflation expectations in Germany. This is kind of a benchmark, a sort of bellwether for inflation expectations regionally, and that you've had this rebound may give the ECB some cause for pause. They may not want to jump out the window and be even more dovish than is already expected because inflation expectations are ticking the wrong way. Now, maybe this is just a correction. Maybe this is a temporary development ahead of the winter as preparations get made for another winter with energy supplies, at the very least, disrupted by the Russia-Ukraine conflict that continues. And there is perhaps some risk premium built into these inflation expectations around what could happen if it were a cold winter this time, which it hasn't been over the past 2 years. And of course, the energy supplies in Europe at this point look well stocked, but markets do speculate. So it's unclear why this is popping necessarily, but popping it is. And if we consider then the ECB's position with a shrinking economy but rising inflation expectations, they already have a bunch of dovish intent on the books. They may not want to dial it up quite right here. And with that in mind, you might see a relatively status quo ECB that doesn't move the needle too much this way or that. You get the cut, you get the dovish rhetoric that cements you for easing next year, but maybe you don't get anything that's even more dovish beyond that in this kind of inflation expectations upswell that we're seeing here, modest though it is. And that may give a push higher to the euro, if only as relief that the ECB, faced with the economy hitting the skids again, isn't prepared to flood the zone with more money than it's already committed, at least looking at expectations. And finally, there is China, the world's second largest economy and the third in the world's top 3 economies. Here, we're expected to get a trade report where there is expected to be continued strength on the export side, not quite as strong as the surge of over 12% in October, but November's number is still relatively buoyant here at 8.5% year on year. Imports anemic, just 0.3% expected after a contraction in the prior month. Some of the strength in exports, of course, has been chalked up to front running ahead of any would-be tariff increase from the U.S. with the outcome of the U.S. presidential election and the return of Donald Trump. So it doesn't look like this is necessarily a sign of strength, more like a sign that there is an attempt at de-risking, essentially, before this is going to become a larger issue, because, of course, it is U.S. importers that pay tariffs, and the latest from Chinese PMI numbers have suggested that there's been an increase in export orders and in export demand from the U.S. And indeed, those very same numbers and those very same surveys suggest what's happening here is that demand is trying to stock up inventories before costs go up, because tariffs are, of course, a kind of consumption tax on imports. So this is probably going to continue to be an uplift on exports for a little bit longer, but it doesn't so much speak to the strength of the overall economy, which remains in shambles. China has had economy-wide deflation for 6 consecutive quarters now, and the inflation numbers that we got published over the weekend here didn't tell any better of a story. Consumer price index numbers still show essentially the absence of domestic demand, 0.2% versus 0.5% expected. The situation on the wholesale side is a little bit better, slightly slower decline than anticipated, but nevertheless, they've been in negative territory going all the way back to mid-2022. What's more interesting in China is that there was a meeting of the steering Politburo committee, that's the 24 top Chinese officials, including President Xi Jinping, over the weekend, and they once again started to put some feelers out there and to stoke some hopes out there that maybe they're finally ready to provide some fiscal stimulus that works. Monetary stimulus has abjectly failed for about 2.5 years now, because we clearly see that flooding the market with money has not created demand. As a matter of fact, new loans as a share of GDP have been falling at an increasing rate, not the other way around. We should be seeing loan growth buoyed by aggressive monetary easing, such as it has already occurred and such as is being promised now for next year, but it plainly hasn't worked. And the People's Bank of China, the central bank, has done surveys showing that if presented with new capital, overwhelmingly most consumers would prefer to save that money because they don't have confidence in the direction of the economy. Very few would either invest or spend. Close to 70% would save. Moreover, bank deposits are at record highs, highlighting that that's exactly what's occurring. So what's needed and what everybody's been pining for is the government basically creating the kind of demand replacement that we saw during COVID in the US and the West, where the government spends a bunch of money to get the economy kick-started. China has been resistant. The Politburo over the past day or two here said they're prepared to be more aggressive and more accommodative on the fiscal side. We can see the response here. The Aussie dollar, a proxy for Chinese economic momentum, it popped here, though it didn't overtake its down move on the whole. If we get a set of trade numbers later this week, which, like recent Chinese economic data, which has carefully edged up relative to forecasts above zero, such that it's cautiously tending toward outperformance, CPI numbers notwithstanding, if that gives us reasonably okay trade numbers, then perhaps Beijing's officialdom is going to get the benefit of the doubt on these fiscal stimulus pronouncements, at least until a few weeks or months pass and it is clear, if it is clear, that they don't mean it yet again, because we saw this movie in September and nothing came of it. Perhaps something will now, but as long as the data is not awful, maybe the markets are prepared to believe that this time is different. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what might follow. I'm on for Futures Power Hour with Chris for Mondays and Fridays, on with Victor Jones for The Price of Truth on Wednesdays, back with Victor and Tom for First Call on Sundays at the Global Market Open. writing for the news and insights portion of tastylive.com, and commenting sporadically on the platform formerly known as Twitter, as well as on Blue Sky at IlyasBivak. Thanks very much for joining. Macro Money's back tomorrow.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, the one, the only, Katie McGarrigle. How are you?
I'm doing well. How are you?
Yeah, pretty good.
Yeah.
Nice, relaxing post-Thanksgiving reprieve weekend,
Yeah.
I suppose.
Yeah. Lots of downtime.
Taking a break from the food and the booze and all that good stuff.
Nice.
Yeah.
I went to Twisted Spoke. Which,
Oh, okay.
Not to dox either of us, but is in a relative shuffle zone to the Tasty offices. So I did have a bloody at lunch on Saturday.
Nice.
But otherwise, I was pretty well behaved.
I haven't been to Twisted Spoke in a while. No. But
mean-
shout out to Diego, though, if anyone's watching.
Yeah. I actually have never been there.
It's awesome.
So I think I need to do a little bit of traveling in my little shuffle zone.
Yeah.
More than I have been.
Well, I'm glad you had a nice weekend. Got
Thank you.
out and about. It's been pretty decent weather here in Chicago.
It was all right. Yeah, I think it's going to slip. So take advantage of this evening's, walk and or ride home and prepare to wear 10 layers of clothes to work.
Well, Katie.
To not see the sun until March.
Are you ready?
I'm ready.
To start.
I'm ready to start. We've been started. We've had started.
Yes.
But I still have a couple of outstanding questions that I'm hoping we can kind of get to today. But what have we done so far?
Yeah, so to this point, if you haven't been watching Where Do I Start on the Tasty Crypto Show here on the Tasty Live Network, we've covered the basics of investing in cryptocurrency, kind of what crypto is. Hopefully, we've provided a decent perspective around why we think the technology is interesting, and then therefore why we think an investment in it makes sense or why it fits in the portfolio. We've covered the basics of Bitcoin, both from the tech perspective as well as the investment case, and we've done the same thing for Ethereum. We're 5 episodes in. This is episode 6 as a result. And I want to do a little bit of a recap, but more so kind of turn it over to you, Katie, and get some of your questions answered. Have a discussion around some of the details that maybe we kind of shuffled past pretty quickly on the show at times. A lot of this has just been me reading slides to you. So I want to have more of a discussion here today. Mm-hmm. We have some of your questions here on the slides, but we won't be constrained just to the presentation. Kind of go anywhere, and maybe I can show you some of the things that I look at as well. But before we do, we've got to shout out the chat on YouTube. Metaphysics, Magic, Lone Sophos, Dav, Brett Green, what up?
What up?
The gang's all here. If you're not watching this on YouTube, get over there and, well, type something crazy into the chat.
Type something crazy, tell your friends. Speaking of, sister brokerage, Tasty Trade has a referral program.
Oh, yeah.
So you can tell your friends and get paid.
Pump it.
Yeah. I'm just saying.
I like it.
It's the season for giving.
That's right.
Give them the referral code.
And get a bonus.
And then get a bonus. Yeah, they get a bonus. You get a bonus. Everybody wins.
You're on the marketing side of things. What is the bonus?
So it is currently, if you have your friends open and fund an account, I believe you get $250.
Okay.
So not too bad.
That's pretty good.
You can turn that into a couple of Amazon gift cards to send to people or whatnot.
I'd take a flyer. I'd go and either buy some upside calls, far out of the money, something, cheap in that sense. Maybe not cheap from the vol perspective, or get the Tasty Crypto wallet. You can just buy some meme coins. We've been doing that on the show as well.
Yes. How was the bag battle today?
It's been fun.
Might I ask?
Yeah, I rotated out of Fart Coin into AI16Z. Mike is in Snoopy Babe still.
Okay.
Which, shout out to Snoopy Babe. They've been interacting with us on Twitter.
Oh, nice.
Which has been fun. And Nick, he's in this for the first time now.
First entrant.
He went with a political themed coin. He's in the MAGA token.
I see.
So we'll see.
Yeah, leading into
what
next
happens.
year.
I guess so. He's got to bet. He's
inauguration.
putting his money where his mouth is, I guess.
Okay. I mean, I respect it. I look forward to being able to enter the bag battles one day.
Yeah, next week. You're in. Everyone's in.
Well, I'm hoping that, you can answer some of these questions for me today too, and maybe it'll instill a little bit more confidence, even though I know that that's kind of not the full point of the bag battles.
Well, you've got to be confident enough to participate. So want to get you there, want to get you comfortable. But no, really all you need is $100 and a dream. So I think you'll do just fine. But Katie, let's jump into the show. Where do I start? Episode 6, a little bit of a recap here today. We'll throw the slides up on the screen. And like we said, thus far, I think that's the proper way to say it, right?
Thus
far. We've discussed the basics of Bitcoin, Ethereum, and investing in crypto. Now, let's turn it over to Katie and answer her questions. Let's get right into it.
Yes.
Katie's questions.
Yes. So real quick, one more shout out in the chat because this person also responds to us on Twitter, and they said that they were probably going to be chugging a beer while they watched today's show.
Hell
so
yeah.
give it up for Crypto Psych 007. Big fan.
That's
Hope
what's
you're
up.
drinking a nice bruchacho.
Yeah. Let us know what you're drinking. I think that's probably the best way. It's Monday.
Some water.
It's Monday. It's 4:40 Central Time. 5 o'clock somewhere, as they say.
Yeah.
Almost 5 o'clock here, I guess. Yeah, let us know what you're drinking. And we'll go from there.
Sure.
Yeah.
All right. So, okay, there was a couple of things that inspired a few of the questions that I had. And I'm trying to, like I said, put myself back in that student role, which I haven't. I mean, I'm a student of life, of course, but I'm trying to go back to 2013, 2015.
Damn.
Wee baby Katie. With, fresher skin.
That's how long ago it was? It was
dewier
2015?
doe eyes.
When you started Where Do I Start?
I started the first Where Do I Start in 2013.
Wow.
Yeah. So that said, obviously Tony and Pete had to do a little bit more, I guess, convincing, I would say, than you have, because I was starting at square one. And over that time frame of 11 years, I've kind of developed a little bit of a risk tolerance. And therefore, as you've told me some of this stuff, and as I've said on the show, I've just kind of started to nibble because I trust in you guys. And I understand that, you need to have a little bit of skin in the game to really start to understand the dynamics of these products. But that said, I think that if I were sitting in my old shoes again, I would have some basic questions about just how the markets actually work as a whole before I were to really feel more comfortable putting a little bit more money where my mouth is. So without further ado, question number one that we've kind of touched on a little bit in previous segments, but what are the different price drivers for Ethereum than Bitcoin? I understand there's a little bit more that you can currently do in the Ethereum world as it comes to building on top of it, and my horrible SimCity metaphor. But what are the different price drivers between the two?
Yeah, well, here's how I think about it. I guess I'll put it this way. I think they have a lot, or both of them have many of the same price drivers. Right? When you look at the asset class, everything is pretty positively correlated. I might have a slide that just shows one thing here. So if we look at the bottom, this is from earlier today, but these are the correlations between Bitcoin and a bunch of different assets, but you've got Ethereum at the bottom there. And so you can see whether it's a 15-day period or it's a 1-year period, or if you look out multiple years, there's a strong positive correlation between Bitcoin and Ethereum. And you see that for the most part between a lot of tokens. If I look at the screen right now, a lot of red on the screen, a bit of a correction here today. We've got ETH down 8%, Bitcoin's down 4%, Solana's down 10%, but they're all down. So they all tend to move in the same direction most of the time. Not every single day, but most of the time. And so the price drivers are largely the same. And I think that's true, and more so today, given some of the institutionalization that you've seen in the space, the maturation of the space, more people participating. So a lot of the price drivers are the same, but it's the narrative drivers that are a little bit different that also then show up in price, if that makes sense.
Yeah.
So big picture macro, well, what matters to crypto as an asset class? Well, whether it's Bitcoin or it's Ethereum or it's whether people speculate in meme coins or not is largely dependent on the macro backdrop, in my opinion, right? So during periods where you have strong economic growth or periods where you have ample liquidity in the financial system, you have participation in the financial system, there's certainty, there's less fear, there's more greed. Those drivers are all the same for crypto. But when I look at Bitcoin and the narrative, at least to this point, has largely been institutions participating, or more currency debasement from governments around the world. Does that feed into other assets like Ethereum? It does, but primarily that's a narrative that is around Bitcoin. Whereas Ethereum, there maybe is more of a fundamental case when we talk about fee revenue on chain, or how many users does it have versus competing blockchain networks like Solana. So slightly different drivers there that, again, feed into price. But when I think, again, at the highest level, okay, top down what is driving the price here for all crypto assets, for the asset class, it's liquidity. It's a function of the cost of capital. It's a function of just how well the economy is doing and what else is happening in markets. I don't think it's a surprise that Bitcoin is at an all-time high, and so is the S&P 500. They're not perfectly correlated on a daily basis, but we don't often see, at least we haven't up to this point, environments where significant sell-off in, let's say, the stock market, just arbitrarily it's crashing 5% a day,
Right.
and Bitcoin's going straight up. We just haven't really observed that before.
Right.
So a lot of the same price drivers.
Okay,
if
that makes sense. Yeah, I mean, and I almost like think, and they're not quite the same. So again, I'm not trying to boil it down into something it's not, but I think about it also the same way when I power up my platform and I'm looking at my traditional currency futures watch list, right, where they're all based against the US dollar. And oftentimes, of those 5 or 6 that are listed on the platform, you see all of them red on the same day or green on the same day. So it's not quite the same as you're saying, but because of the strong positive correlation between Bitcoin and Ethereum, like that's where my brain kind of goes.
Yeah, I think another thing is important to be aware of here, I guess getting us back into what could impact price or what do we observe. You're going to have different volatilities, obviously, for different tokens. And so if you consider the market cap or simply just the size of the asset as something that potentially leads to price action or more or less volatility, I suppose, that's a driver. So you see things like Ethereum or Solana or others that are much smaller than Bitcoin, and that is a characteristic that shows up in more volatile price action.
Sure.
It's just smaller. But you see the same thing in the stock market, right? Yeah. You see the same thing when you look at an ETF or a broad-based basket of stocks versus an individual company. So very similar there, but definitely not like where you look at your Tasty Trade platform and you've got a bunch of different commodities that have different price drivers. This is more so like the commodity is crypto,
Right.
and they all have the same kind of price driver at that level.
Got it. Okay.
But different narratives within that.
Got it. And like you're saying, maybe as those markets mature, there will be more deviation potentially, like as we get more clarity around and adoption.
I think so. Yeah. At this stage, it's still very early in terms of just global adoption. More and more people are using crypto, participating on chain, but relative to, let's say, the amount of, or the estimated total number of global internet users, this is still pretty small in terms of participation. So many of the drivers are the same.
Okay. Moving right along then. So going back to like a core tasty pillar, if you will, liquidity is kind of king. And I think I like texted you about this one night because I couldn't stop thinking about it. But as you've said, more and more people are participating in the space. I know that we'll probably continue to see that adoption, but how, like, in your mind, does the liquidity kind of compare? And like, I was specifically thinking about it, like, if I wanted to buy, or I had, Sosnoff bucks, and I was like, okay, I want to buy a large amount of coins. Like, how does the filling process and the liquidity for that work? Is it like, can you get partial fills? Like, kind of just try to boil that down for me, if you will.
Yeah, absolutely. I mean, it's going to vary kind of depending on the exchange. So in crypto, you don't have this sense of national best bid offer. You don't have this kind of consolidated price feed that exists in the stock market where there's a single price. So you have different prices on different exchanges. Maybe more like currency trading, I guess, in that sense. So you do have that to be aware of, but it's large enough where if you're trading Bitcoin, it doesn't matter what exchange you're on, you're going to have ample liquidity, I think, for most people. Now, if you're coming in there with a $25 million purchase order, you probably want to work that over the counter, and that's going to look a lot more like it does in the traditional financial markets as well, where you use a dealer. Could you do that with just anybody? Possibly, but I think like institutions participate a little bit differently.
Sure.
They're not necessarily just on a trading platform, or they're not on a mobile app, that sort of thing.
Right.
But to get back to your question, in terms of partial fills, yes. So you'll see that And especially if you're using a limit order, you might get a portion of that trade filled at that price, just like you would with stock.
Yeah, multiple contracts or,
you'd have to wait for the rest of it to be filled. So you do have kind of a similar dynamic there. Generally speaking, though, it's becoming much more liquid. You can look at even these ETFs to get a proxy for liquidity and just the flows that have gone in there. Or you look at the spread for futures trading, for example. These spreads are pretty tight. You're seeing higher open interest in the derivatives. You're seeing growth in that space. So it's becoming more and more liquid. To answer your question again, yes, you can get a partial fill, but it definitely is not as liquid as traditional markets, at least not across the board. Bitcoin, sure. And when we look at the ETFs, I think we quoted this on Options Trading Concepts Live earlier today, but sometimes you see more volume, or you're seeing more volume in some of those Bitcoin ETFs than you are in other areas of the market, at least at certain points in time. So it's getting there.
Okay, good to know.
And getting better. But with meme coins and things like that, you absolutely should be concerned with liquidity, or if you're trading at a centralized exchange, slippage is really something you become pretty accustomed to. And that slippage can be anywhere between, you could say 0.5% to a couple percent.
Yeah.
So substantial if you're trading in size.
Okay, good to know. Yeah, but like you're saying, as there are more participants in some of these larger names, it's less of a concern as it is with some of these like smaller coins.
Yeah, I would consider Bitcoin and Ethereum extremely liquid in the grand scheme of things.
Got it. Okay, so you've already kind of answered my next question a tiny bit, but maybe just in case you want to expand on it, what binary events tend to impact crypto markets? So is there, we've talked about just like developments in the space as a whole, but when you're saying, oh, there's going to be network improvements, like, does that really impact that like coin, or do you see it across the board, or?
It's a good question. It's not so much that there's a binary outcome where when you look at an earnings announcement, there's a known unknown that becomes known. Here's how we did over the last quarter. And certainly there are people in the market that know this information ahead of time, or people that model it pretty accurately. So it's not completely unknown. There are surprises though. So there's no equivalent like that, but you do have things like the halving with Bitcoin, which happens every 4 years. You'll have different network upgrades with things like Ethereum or other blockchains. You also have points in time where we know that there's going to be various supply unlocks, just like post-IPO periods. But these things are all known well in advance. So sometimes, most of the time, I would say, they're priced in to an extent. The ETF approval, a binary event in some ways, but also known well ahead of time that the ETFs are going to be approved.
Right.
It's just a matter of when. What was unknown was how much capital was going to flow into those ETFs, or wasn't going to flow into those ETFs. With Bitcoin, it's been a pretty decent result. With Ethereum, maybe not as exciting up to this point. So you don't have the same thing there, but I would argue that many of the binary events that impact traditional equities or the market at large also impact crypto, as it's now part of that larger kind of ecosystem. Interest rate decisions, you can see some volatility in the market in the exact same way that you would see that in the S&P 500. Another thing that I'll call out here that has an impact on crypto, and it might not be apparent right away, but geopolitical risk at times has resulted in a lot of short-term volatility. And that can be geopolitical risk in terms of war, but it can also be not so much geopolitical, but more global macro in the sense that, there is liquidity that exists here during periods of time when the other markets aren't open. So if you go back to August 5th, where we had a lot of volatility in the market that started to materialize, I believe, over the weekend and on Sunday night, especially prior to the futures markets opening and then prior to trading on Monday, you saw a lot of that volatility materialize in crypto, where if firm XYZ needs to meet a margin call and owns crypto, that market's open. And so you can see this kind of as a predecessor to volatility in other places, if you think about that as a binary event. But the same thing, again, that impacts traditional markets has an impact on crypto. It's just that there aren't crypto earnings announcements.
Got it. Okay. So with that said, you've already kind of talked through like my next two questions. So maybe I might just combine them really quickly. So One is, what sources are you kind of using and looking at when you're starting your day, or like rolling over in bed and looking at your phone to see like what's really kind of developing and going on in the crypto space? And then knowing that, and based on everything else you just said, like what other things are you considering, particularly as it pertains to like investing in some of the smaller cap coins?
Okay, yeah, to start off with, market awareness. I approach this in almost identical fashion to how I do with any other market. So when I wake up in the morning, I'm checking prices. I want to see what the S&P is doing. I want to see what other assets are doing. I want to see what Bitcoin's doing. So I'm going to start with Bitcoin as kind of the beta or the proxy for the market at large. I'll look at ETH. I'll look at my positions. I'll just look at a watch list. You can look at that on Tasty Crypto, on the Tasty Trade app, or anywhere else that you trade crypto, or any other app that you use. I like everything from CoinMarketCap to Coinbase to Tasty Trade. Wherever you're trading, you're going to have that data. So that's what I'll look at first, and it's just price action, percentage change. You get a sense for what's normal and then what's maybe outside of kind of the day-to-day trading activity just by looking at this.
Right.
So it might seem volatile because the numbers are larger. It's a $100,000 asset, 98,000, 96,000, whatever it is right now. But 5% is a pretty standard move. We just quoted ETH down 8%. So a bit of selling pressure here. Bitcoin down 4%, pretty normal though. So you get a sense of that over time. There's not really anything more to it. This has been an asset that you can sell short in the derivatives markets, or you can basically just go long, and a lot of people just go long and they hold it and they think that it's going to go much higher over time. So you get some volatility as a result, but you also get a sense of kind of what's normal just by looking at the prices each day. In terms of sources of information to stay on top of what's happening in the industry, believe it or not, one of the best sources for crypto is X or Twitter. If you're following the right people, or just through that algorithm, there's an awareness, I suppose, by the application that you're interested in this topic. You're going to get that information that's surfaced to you via the platform. And quite often, that's where you see it first. It's on Twitter. It's on these decentralized platforms before it makes it to a financial news outlet or a crypto-specific outlet.
Right.
For crypto-specific news, though, there's a ton of great sources. I like everything from The Block to Decrypt to CoinDesk. A couple of these services now just use AI to aggregate all of the other headlines and then give you a summary.
Serve them up.
So pick your favorite provider, and a lot of them are doing the same thing. But that's really what I look at.
Okay.
And then to take it one step further in terms of research, there's a lot of other tools out there in the same way that you have different platforms that let you do analysis on ETFs or funds or individual companies. You have platforms that'll let you do a deep dive on the tokens. These are things like DeFi Llama, Token Terminal, The Block, which I mentioned as a news source, also has a great data dashboard. And you can look at really anything that you can imagine, from how many people hold this token to more market-related fundamental information. It could just be volatility, market cap, et cetera, trading volumes. And then you can get really down into the details too, as to like what's happening on chain. When we look at some of these protocols, what fees are being generated, how much capital is locked in them. And so you can start to compare these things on an apples to apples basis. But those are the sources that I use. And mostly just kind of from looking at the prices each day, you get a sense of, oh, that's a big move, that's a small move, or what's kind of going on as a result.
Yeah, I think that's interesting because, you kind of expect, and you do as a trader, develop your own little routine and muscle memory and habits that you kind of start to integrate into your day. And I think the same thing, like you're saying, is applicable to the crypto space. It's just a matter of the sources you're using. The technologies are similar. It's just the sources you're using to kind of start to build, like you're saying, what is a normal day, what is deviating from that, and what is interesting as to like something that might be coming.
Yeah, a lot more. I guess the last thing I'll add to, a lot more of what I've been looking at recently has been the fund flows, the ETF flows, because that's become a bigger driver or more a part of the narrative. And we're talking about significant size too, where last week there was $2.5 billion that went into Bitcoin funds alone, well over $3 billion that went into the whole space. So that shows up in price action on the way in, and it certainly shows up on the way out. So I've tracked that a little bit more as well. But I think as we go forward, the plan is to, because we're going to run out of time here, but the plan is to jump into kind of DeFi next. I want to take the next step from this is what Ethereum is to more so like, here's how you use it.
Yeah.
Here's what makes this interesting. This is the concept of decentralized finance. That's where we're going to have a lot of fun. Gets a little bit more complicated, but in a good way. And so excited to talk to you about that. But through that process, I'll show you a lot of these sources that I use. And I want to get you to the point where you're comfortable with what you're looking at, going out, finding potential opportunity, or at least knowing where to look, and then knowing what to do once you find it.
Beautiful. I'm ready. And like you're saying, I think it'd be fun to do a little bit of a segment every week where we're not only touching some of these larger cap coins and stuff like that, but I can actually build more of an investment portfolio that is, spans more than those two.
My goal is really to get you and anybody that's watching to a point where you know what you're looking at, you can articulate what you're doing, and you're comfortable doing it, and you're making some money at the end of the day, or you're managing risk appropriately, one way or the other. But we've got you participating in the same way that you do that today with futures and options and equities, and you have an opinion and you know where to go, and you have trade ideas. That's what we're going to get you, or that's where we're going to get you here with crypto.
Can't wait. Little baby golf clap.
Awesome. Well, Katie, as always, thanks for coming on the show. We will be back on Wednesday for episode 7. Going to start to, like I said, get into the weeds with DeFi. But until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology
Was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Oh yeah. Tasty Nation, good morning.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Oh, yeah. It is Monday, December 9th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little show called The Price of Truth, the podcast where we like to explore the incentives that govern our world. It is Monday, everybody. You know what that means. It's a solo show. So what I'd like for you to do, shout out to everybody watching on tastylive.com, shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, there is only one place to do it. And that's head on over to Tasty Live's YouTube channel. Type in Tasty Live, subscribe to the channel, jump in to our little stream here and start typing. Get your phalanges working. Tell me whether you made money, whether you lost money. Quite frankly, it doesn't matter what you say. Type in random ass characters so we can spoof the Google algorithm into putting this in front of as many people as possible. Speaking of the people, because this is a show by, of, and for the people, we should say what's up to the people. Shout out to Lone. Shout out to Grumpy Mike. Shout out to Dav, Crypto, and so many more. Cato, I see you. Happy Monday to you too as well, my friends. What a day. What a day. What a day. They look like they're running out of steam. It's one down day, a little red on your screen, and I'm not quite sure what to do with it. I'm not quite sure whether to be happy or whether they're just, what's that scene? They pull me back in right when I think, gosh, you know, you can't really use a movie quote if you don't know the whole thing, but I did it anyway. Just when I think I'm done, they pull me back in. There it is. The NASDAQ, my babies, down 0.4%. The Dow Jones down 0.5%. The Russell down 0.2%. And the S&P down 0.2% as well. That's right. And we could throw this up on the screen if you'd like to. But the point is, Cato asking time to sell the NQ. I don't know. I told you guys I was trying to stand in front of the train last week. So today was a little bit of catch up. It was a good day. It was a needed day. I'm I don't know if it's time to sell it. Only if you're a crazy person. I don't think many people are standing in front of this thing, which is why. Who knows? Maybe it's time to roll them over. Cactus Leo, Dumb and Dumber quote. No. That's not a Dumb and Dumber quote. Volatility. Make volatility great again, I suppose, was today. That's not a political quote. There's a hat floating around. Our good friend Jem Carson wears it every once and again. But the point is, we were on Sunday talking about a VIX with a 12 handle on it. 14.19 is where we are at today, up $1.40 in percentage terms. That's a gigantic move. That's sort of the whole point and premise of what we were talking about on Sunday, which is when we get to these low periods of the VIX, statistically, you have a higher probability of trend, higher probability of autocorrelation, higher probability of lower vol in a low vol regime, which means higher probability of a statistical climb to the upside in S&P price. But because you've got this little right-leaning distribution to offset your expected value, you also have a higher or a fatter left tail. That fatter left tail makes up for your expected value of the likely right-leaning distribution, or a likely market that's going to trend higher with lower vol. And in order to make up for that right-leaning distribution, you get a fat left tail. The potential for jump risk is what that means. So the potential for a quick correction to the downside. And it depends on who you are, what your style is, how you play these little right-leaning distributions. But my personal opinion, I was coming into the week trying to play for that down move. And but I can tell you, 4/5 of 1% was not the down move that I'm playing. You know what I mean? I'm playing the 2 to 5% move. But beggars can't be choosers. I'm not gonna be upset about this move. It's a good start in the right direction. Cato Prime time sell. And Q read that one already. Loan. We're talking futures, my babies. That's right. Grumpy Mike lost a crap load of money today. Just a normal day. Grumpy Mike, I know you're being facetious there, but we can't be losing the whole stack on a 4/5 of 1% day, my friend. If 80 basis points is going to do us in, we got to size ourselves up a little bit differently. Do we have to get back into China again today? Nice little rip in China today. We had said this before, my babies. We had said what their whole move to talk about the economy mid-year in September. That was an anomaly. They normally, the Politburo doesn't come together to put out their economic plans until December or November, December, and they likely weren't going to do it until December because of the U.S. election and the likelihood that they want to see the direction that the U.S. is going before they make sort of concrete future economic plans. So, we had sort of said coming into the early parts of December, expect some economic announcements out of China. The likelihood that you're going to hear austerity is probably not the direction that they're going to go. So a lot of positive headlines over the weekend about them. I don't know if this was their do whatever it takes type moment. Mario Draghi, but some very supportive language coming out of China and their Politburo around their support for the economy going into 2025. And you saw, I've got FXI up on your screen, which had basically based out around $30, up 10% here today. And but that goes for some of the holdings as well. So I can bring you through some of these. Alibaba. These are some of the holdings I have here. Baidu, which quite frankly, Baidu to me has been the underperformer right? Alibaba, JD.com, all of those things, PDD, which is Pinduoduo, which I believe is Temu, somewhere in there. Those instruments are all, it's like straight consumption, right? So if you're sending out money to people for consumption, the idea is somehow that will more positively impact those types of names. And I get it on a first order basis. That's probably true. So a lot of those more consumption based names have held up better than like a Baidu. But to me, like, if they want to get going on like their Chat GPT type business, their AI type consumer business, Baidu's a likely benefit from this. So some part of me scratched my head wondering why this one trades so cheap, but the market always knows, right? We're never smarter than the market, but in my personal opinion, for whatever that's worth, this one's still trading a bit cheap relative to its U.S. counterparts. Is it time to buy it? It's always funny because we want to ask that question after the move, right? I think I said last week sometime, it might have been the Friday or the week before, I just started to nibble again on these things just a little bit, but I have nowhere near the position that I had when we got that gigantic move. This one, I probably sold out of 60% of the position at this point. But I don't know. I would be careful of buying on the 10% move. You know, thinking, is it time to buy after it runs the 40, 50% move? Then you go, okay, should I buy this? Or it runs 10, 15%. Is it time to buy? I don't think that's the way we want to look at this stuff. Let's see. VIX didn't move much. I would agree on an absolute basis, on a percentage basis, when you get down to 12 and you move $1.40, it's a 10% day. K-Web holds all the Chinese tech. That's right, Caspian. I don't know why. I always invest in the individual names in Chinese tech. I never use K-Web. It would make my life perhaps so much easier. But thanks for bringing that one up. I won't because of the possibility of sanctions. Prince Caspian is pointing out. I think that's the whole point, though. So the reason you're going to get these things trading with a deep, deep discount relative to their U.S. counterparts is multi-part. One part is because of the lack of predictability of the home government. Over the last couple of years, there's been tons of sort of government intervention that has been. The government has made a lot of moves in the interest of the government at the expense of the shareholder, at the expense of profit motive. And when you do that, it creates a lack of confidence in the investing public. So I think that's one of the reasons. Second reason is the potential for delisting. For the last several years, we've been flirting with this sort of back and forth with Chinese listed or U.S. listed Chinese equities. So the real potential that a sort of Cold War type conflict could escalate into some sort of hot war, and in that scenario, what that could mean for delisting, or even prior to escalation into a real hot war scenario, just cutting off capital investment could be an escalating step. So that's there. I can name 4 or 5 other risks here. But the point is, all of those risks are known and they are reflected in the deep discount that these Chinese equities will trade at. They're not as cheap as they were trading sort of mid-year. Most of these things were trading with single-digit forward PEs. So they played a little catch-up to get closer to fair value, but they're still trading cheaply. Let's see here. Let's keep cruising. I thought, the relative relationship here, the way the market traded today, the relative relationships, and by that I mean the Russell versus the NASDAQ. Russell outperformed by 20 basis points today. So in other words, if you were long Russell, you lost money, But if you were short NASDAQ, you would have made more money on the NASDAQ short than you would have lost on the Russell. So on a relative basis, long Russell, short NASDAQ technically worked today by 20 basis points. So it played a little bit of catch up. And I think that's the value of putting on these relative basis trades. I'm not in this one right now. I would rather just be outright short NASDAQ. But I think that's the value, especially if you think you're in one of these inflection points where you could see weakness across all of these indices. If that's the case, you want to bet on the outperformance of one versus the other. I think that makes a lot of sense. But in my particular case, I'm being a little bit greedy. I'm going for the NASDAQ sell-off, which famous last words. Famous last words. All China news acts like a massive short covering rally nowadays. Exactly. These things tend to carry high percentages short. So you do see these massive sort of short coverings. It's part catch up, and it's part short covering. I would agree with that. All right, let's keep going. Looking at bonds here today. A /ZB 119 and 13/32, so nearly half a point. We were down about a point today. A little disappointing in that give back. We had played the long end of this range and played the breakout of the sort of the 116 or the 115.5 to 118.5 range, and we played the breakout of that. Luckily, we were rewarded. Sometimes better to be lucky than good. Taking a quick look at the yield curve. Again, we always put up three different lines for comparison here. The red line is effectively what the yield curve looked like before we embarked, or as we embarked on this rate cutting cycle. So that 50 basis points in September. This is what the yield curve looked like September 18th. The green line is what the yield curve looked like November 7th, was right before the second cut, which was the 25 basis point cut in November. And the blue line here is where we are now. So you can see, obviously, we've eased off those highs. If I were to go, I think some point after the election, sort of the max of the yield curve, but we've come off some at some level. So the 10-year, we are lower by about 14 basis points. And the 30-year, we're lower by, what's that, about 15 basis points or so. So it does seem like it took some time, but we are starting to ease in the long end versus what we saw in September. As soon as they start lowering those short end rates, and you can see that here, right? You can see those short end rates here. As soon as they start lowering those short end rates, the opposite was happening in the long end. The long end starts lifting as the long end has a little bit less confidence about the inflation picture over the long end, and perhaps a little bit more confidence in the growth picture in the long end. All that has to be factored in, and you don't have a Federal Reserve who's sitting there as a non-economic buyer just buying in all these longer dated tenors, and they're able to respond to just growth and inflation. And in that case, you got a little bit of a long end lift. And the question was always, is this the bond market revolting against the yield, the policy stance of the Federal Reserve, or is this kind of what always happens? It's not uncommon on the cut to see a little bit of a lift in the long end before normalization over a longer term period. And the question again in this show, and on any people who have been watching the yield curve, is whether or not, again, that was just sort of that normal short-term phenomena, or is this sort of a revolt against the monetary policy? Still hard to see. And in the coming next week, on the 16th, we're going to get another summary of economic projections. We're going to get what is likely another cut. Oh, come on. Let's look at the probabilities. They basically shored up the probabilities of a cut on the 16th, 85% now. So we flirted a week ago with the idea that they might not go, right? There was about a 60% chance that they cut, about a 40% chance that they don't. The market was easing into the potential of pricing the cut out. But now it looks like we fully priced it in at 85%, and I doubt that that's going to go anywhere anytime soon. Depending on the, there are the inflation numbers that we're going to get later this week, just to show what this is going to look like. We're going to get the 10-year. We're going to get the CPI on Wednesday morning. The 10-year auction later in the day. And then we're going to get PPI on Thursday, and then the 30-year auction later in the day. So anything is possible. You could see, a warmer than expected CPI. The expectation is to come in month over month at 0.3%, which is a bit warm. It's warmer than last month, 0.2%. So there's already an expectation of a warm number, 2.7% year over year versus the 2.6% last month, year over year. So there's an expectation of a warm number already. If you get something warmer than expectation, it is very possible that that we see something different here. But if I was a betting man, and I am, if I was a betting man, and I am, I would probably say that they move forward with the cut, and if anything, they probably give a hawkish summary of economic projections. I'd say they likely want to get this this extra 25 basis points cut in, and they probably, if they want to go hawkish, they lean hawkish with their summary of economic projections, which we took a look at last week. But just as a reminder, this is where they left us on how to think about the future. These are usually as valuable as the piece of papers they're written on. But the future from the Federal Reserve standpoint as of last September was 2% real GDP expectations, unemployment rate at 4.4%, PCE inflation at ending the year at 2.3% and going down to 2.1%. I think the likelihood is that they raise these inflation expectations for 2025 and perhaps even just a bit in 2026. Core PCE inflation, 2.6%. I think the likelihood is, because 2024, all this is going to drop off. The likelihood that they likely raise core PCE inflation expectations in 2025, I think, is high. And then what is almost a certainty, I probably bet my life on this one, is that this is not going to stay at 3.4%. And sometimes it's as easy as just looking at where the 2-year is. When they put this projection out, the 2-year was at 3.5%. And so it was not a stretch of the imagination that they put 2025 Fed funds rate at 3.4%. But now the 2-year is at 4 and change, 4.07, right around there. So the likelihood is that they move this up somewhere towards 4%. And if they do that, what they're effectively saying, with the market, the implied pricing that the market already has priced in, the market is priced about, I can show you here, the market is priced about 2 to 3 cuts next year. So if we look at the CME Fed Watch, you just go to the aggregated probabilities. There's different ways to look at this. You can look directly at the yield curve to pull this out, but if the CME is already going to do this for you, it's an easy way for you to look at it. So the probability here, we're in a target range, 450 to 475. The likelihood that at the December meeting that changes, they've got an 85% probability that we're going to drop a quarter of a percent, 25 basis points. Then the likelihood for the next meeting at the end of January is about 88% that we hold at that same policy rate. The next meeting in March, about an 80% probability that we drop another quarter. Then the next meeting after that, 85% probability that we hold. In June, a 25, or excuse me, about a two-thirds chance that we drop in June. So you can basically look at these aggregated meeting probabilities, and you can see not only the probabilities, but the speed with which the market is pricing in. So it's basically, after you get December out of the way, you're looking at 25 basis points every quarter, once a quarter, until you get into the end of the year. By the end of the year, it's saying 1, 2, and then 3. So somewhere between 2 and 3 is where the market has priced, but the timing of that third one is fairly uncertain once you get past June. That's effectively how the market is pricing this so far. Just an easy, quick way to look at that. So the likelihood that when we get this summary of economic projections back from the Federal Reserve on the 16th, this number is likely not going to be 3.4%. It's probably going to be in the ballpark of 3.9 if they want to be generous. If I was a betting man, that's what I'd be betting on. I would guess maybe a little bit more hawkish, so they leave it at 4. That gives them room to be a little bit more dovish, but we'll see. That's my guess. What's yours? Catan, what's going on? Vince K says, just insights from appliances manufacturing. Volumes are low. Next year outlook is calling for low volumes. Therefore, housing building forecasts are low. No new orders. I think Fed needs to cut. I think they will. Disappointed. Trying to follow the chat here. So yeah, that's I'm still betting on I'm leaning a little long in the yield curve. I shouldn't say the yield curve. I'm leaning a little long in /ZB in bonds. But I think I'm here for what's the saying? Good time, not a long time. I think somewhere around 121, I've probably had my fill. I probably, who knows? Maybe we chop here at 120 to 119, but I'm still leaning a little bit long ZB deltas. We'll see. Maybe I'm getting too greedy. I took it down by a third of the position size, so I can give up a little bit here, but not too much. We will keep cruising. I'm surprised. I suppose I shouldn't be. I'm really surprised at Bitcoin price action here. It keeps ping-ponging on both sides of 100,000. So I'm still long Bitcoin from this spot. We got long on the show. It's about 61.5. Went long again once we backed off of 100,000. I think like 90, 93, 94. Can't remember. And the thesis was that as we crossed 100,000, that we'd see sort of this this resurgence of the narrative around Bitcoin. That Bitcoin crossing 100,000 would be sort of this big news event that people would be talking about in your 5 o'clock news programs for the older generation and everybody's news feed for the younger generation. I think it was to an extent, but I don't think it was as meaningful. I think it was short-lived in the news cycle that we're in. 97.3 down around 2,000 today, which is about 2%. I don't know if this is the point you get super bared up, but it is looking weak here. It's either, I'm seeing this as more of a consolidation, so I'm not closing out the long position. I see this as consolidation around 100,000. That buying demand is sort of meeting seller demand, and we're just trading on either side of 100,000. That 100,000 not playing that much of a significant psychological level. Everyone keeps talking about all the stops, all the sells that are at or around 100,000. So I suppose it makes a lot of sense that the momentum is going to be hard to shoot up. through this psychological number, but I didn't see that happening. I thought what would happen is we'd get through 100,000 and we would sort of immediately get the hook. We'd rip through 105, 110, 115 quickly, and that would instill this sort of sense of FOMO to the marketplace. And then that's your distribution. You distribute into that new excitement, but it did not happen. Katan saying beautiful dip in BTC. Bull and China shop arriving soon, VJ. 3-card money, Gensler, Powell, Yellen. Yeah, I'm still long here. I don't love Ethereum. So to me, it makes sense that this thing, when these things lose momentum, Ethereum gets absolutely punished. Ethereum down 6% to Bitcoin's down 2%. I just think this isn't trading. Ethereum's sort of this networking utility. When you're trading Ethereum, you're trading the network, you're trading the utility of the network. You're trading Bitcoin, I think there's a scarcity element that you're trading. And you can see but the difference in the value that the market is giving those two narratives, let's call it. Crude oil at 68. I have no position here, but I am, if I'm being honest, taking advantage of the weakness in some of these energy names. And they are getting brutalized. So to me, I look at energy demand. This is sort of the weird thing for me. Energy demand and energy investment is falling. I don't want to say falling off a cliff. It's not exactly the most bullish here. But how can these two things be true at once? How can markets be trading at all-time highs on a real and nominal basis, and energy demand, the bottom, is falling out of energy demand? One of those things probably doesn't make sense unless asset prices are only going up on a nominal basis just because of the money that's being put into the system, which is definitely possible. So I think I've been using this as an opportunity to go shopping a bit in the energy names. There's been weakness not only in Devon Energy, was the one I have up on your screen, but I mean, if you throw most of these things up, all these things are going to look a little bit ugly. So I would rather sort of be long or start to get long the stuff that's cheap, start to be short the stuff that's expensive. But that's just me. I know that there's a lot of hype behind the whole AI trade. I just think on a relative value basis, there's probably more interesting names to be long in this environment, especially if we're in a no landing or soft landing scenario. If either of those things are true, then a lot of these energy names are probably trading too cheaply. The other place that's getting cheap is the miners. So while gold has broken off the highs, the break in the miners has been so much greater than the break in the gold price. It's not just gold price, right? It's copper is well off its highs, $5 highs, but it's been trading relatively sideways. Silver is starting to get a little bit of a bid. So in my personal opinion, for a long-term position, I still like the miners here. And so I've been nibbling a little bit. Newmont is sort of, I want to say I don't want to call it my favorite, but it's the one I have the largest position in. Barrick Gold, another one. Some of the silver miners, in my personal opinion, still trading price. On a price basis, they're cheap, not necessarily value. So if I go to a weekly chart, something like 20 years, you can see Pan American Silver, while on a yearly chart it looks expensive because it's had this move from 14 to 24. If you zoom out, it's still below mid-range over a longer-term period. So on a price basis, cheap. I'm not talking about value for right now. So again, sometimes what we like to do is come in here, we talk about value areas in the marketplace. Those are mine. Energy names right now, in my personal opinion, offer a little bit of value. Doesn't mean they're going to go up next week. Doesn't mean they're going to go up next month or even next quarter. You know how I roll. I just like to start accumulating things that have been, beaten up a bit. I'm going to take a quick look at sectors for the day, but communications down like 2%, financials down 1 1/3, utilities down. The only area of refuge was real estate, given the relatively muted curve. I think rates are coming out this week, so people are going to see that mortgage rates dipped relative to last week. They're off those highs at like 6.8% or something like that. We're coming in, and then healthcare up 1/3%, or nearly 1/3%. Let's see. Vince Case has been pondering energy. If oil becomes cheaper, will the energy companies make more money or less? Less margins, more volume. Why invest in oil may seem like an Ibis question. Vince K. So I think what's happening here is, and again, this is just a guess, I think a lot of this is pricing in lower energy demand at first. I'll pull up some of these. I'll just do like an XOM. It's going to be hard for these. Any of the smaller names are going to tell a very different story. Some of this stuff, you start to price in lower energy demand on a go-forward basis, and then on a post-election world, you start to price in a Donald Trump victory. So as you get closer and closer, you price in a Donald Trump victory, you price in less regulation, you price in more permitting, you price in basically more supply. And I think for all of those reasons, a lot of these names are getting beat up a little bit. But why buy energy? It's sort of this thing where it's not a why, like there's going to be some catalyst in the future. That's not really what the point is here, Vince. The point is, when I look at the S&P, I look at a world where fixed hard assets are going to could potentially hold their value in a world where we're running 6% debt to GDP in a quote unquote strong economy. So if we're running that level of debt with $2 trillion in deficits every single year, the likelihood that we continue to see erosion of purchasing power is high, which means likely the value of commodities and fixed assets, those types of things will probably retain their value best in that world. So I still, regardless of how other people are thinking about commodities in the very short term, I still like things like gold miners, silver miners, oil, not necessarily holding the instrument itself, but I like owning the energy sector. Why? Because I also see concentration risk in the S&P 500. 30 cents of every dollar in the S&P 500 is going towards one sector, and that's effectively 7 names. And the whole point of a broad-based index to begin with is to give you diversified exposure. And that's not really what the S&P 500 is doing. It's giving you exposure to 7 names. 30 cents of your dollars getting spread around 7 names. And only 2 cents of that dollar, 2 to 3 cents of that dollar is going into energy names or energy investments. And in my personal opinion, in a world, if AI and the hype and the pricing around that is real in any way, if digital currency, whether it's a federal one or a private one, is real in any way, if the data centers, the gigawatt data centers that we are building and need to continue to build into the future, if the electrification of the cars that we're going to be driving, if all that's real, we need energy to power that future. And to me, whether that's 2 years or 5 years down the line, when people realize that, and we start to normalize the investment in the S&P 500, I don't know. I don't know if that's in 6 months, 9 months, 2 years, 10 years. I don't know. But in my personal opinion, we probably need to normalize. And you're seeing a bit of normalization in utilities. Like this gigantic move is sort of the beginning part of a realization that, oh man, we might need nuclear energy. And nuclear energy coming online is even if you start today, that's like a 5 to 10 year project. And so I just think that the future is highly energy dependent in the way that we're thinking about the future today. And there's not a ton of investment in either utilities like nuclear or energy at the current moment. And so that's the way I'm thinking about this. So the cheaper that sector gets, the more interesting it becomes to me. But Victor, we are at record oil production. Understood. But Vince, that's also priced. And so the Treasury Secretary Bessent wants to do, or is advising President-elect Donald Trump on a 3-3-3 strategy, right? To get back to 3% debt to GDP, to get to 3% growth, and to drill 3 million more barrels per day off of our highs. I don't think I talk to a lot of smart people in the energy sector, and I don't know that they believe that the 3 million is a realistic figure in the short term, that we're probably close to capacity. But what I'm trying to say to you, Vince, is all of that, the current production levels and the potential to add up to 3 million, it's already in the price to whatever extent the market believes that to be true. And so if that level of production is already in the price, that level of sort of ease in policy is already in the price. I'm not saying they go up tomorrow, my friend, but I'm saying you're probably getting some value. And I might be wrong. These things could cut in half. But I would rather be buying some of these energy names at this price than some of the AI names at their price and value. Again, famous last words. But that's the way I make money the hard way. I don't go to the fast momentum. I make money the hard way. I go to the stuff that nobody likes, and I wait for them to like it. And when we were saying on this show a year ago that China was too cheap, that nuclear energy, it was only a matter of time before the light bulb goes off and the marketplace realizes they need nuclear energy. When we were saying we're holding Newmont mining and a bunch of all these materials, it just took time for the market to come around to those ideas and those themes. And when they do, we get paid in an asymmetric way. Would it have been easier to just hold on to NVIDIA that whole time? Maybe. Probably. But it's not as fun. You know what I mean? That's not as fun. All right, real quick, let's look at some of these things. I am curious, which one of you, Catan says, energy, financials, home builders. So that's all the cyclicals. Catan's long Catan's long effectively the cyclicals. Almost forgot my home builder ETFs. I almost forgot my symbols. You guys know how I feel about home builders. I'm not very bulled up on them. I am not going to be short them while long bonds. To me, that doesn't. I would only do that if I wanted to be hedged on both sides of the market. But I am long bonds here. I was short home builders. I'm no longer short because the position expired. I didn't roll it when I got long bonds. But I am not super bullish on the prospects of home building right now. Catan says low PE as the reason for energy, financials, and home builders. I get it. But I just can't. I cannot get behind you on the home builders. I'm probably going to be wrong. I was long, and these things ripped. And the whole concept behind the long was nobody's going to sell their home. And in a world where nobody sells their home, the only inventory are new homes that will be built. So I had a decent piece of this home builder run. But now I think once we started to cut, my thought was that the long end lifts, it doesn't ease. And it actually makes home affordability even worse. And that becomes this inflection point for home builders. And also, if we continue to cut, what does that mean? It means some of that locked in supply is going to get unlocked. Once you start easing rates, that means, hey, I was locked in at 2 or 3%, and I don't necessarily want to live here, but I'm not going to go buy a new home at 7% mortgage rates. You start easing those mortgage rates, you're going to unlock the existing supply, which means the value of the new home supply to the marketplace, I think, comes in a little bit. And you still have an affordability problem or an affordability problem. So I don't know. This is all sort of like macro tourism stuff. It's not like in the weeds looking at the actual values. It's just more narrative than anything. I just think once you start unlocking existing home supply, they will be a little bit more, they'll be cheaper. And I think you'll have a harder time moving new home inventories. And I think until affordability changes, I think these things got to get cheaper. That's my personal opinion. 10-2 is finally positive this year. Prince Caspian. Are you talking about real? Here, I'll pull up the 10-2. 10-2s have been positive for, I mean, the 2s and the 10s uninverted by like 20 something basis points earlier this year. Yeah, we uninverted September 25th by 26 basis points. And we've been moving the other direction. We've been moving closer towards inversion territory. So we are uninverted by about 2 basis points. But if they keep buying bonds here, who knows? We could reinvert. How about that for a headline? Yield curve reinverts. Who's got that? Who's got that between now and the end of the year? I'll bet that before I bet your Santa Claus rally, everybody. Sorry to be a end of year hater. I'm just betting Santa Claus doesn't come to town this year, my good friends. And I probably will bet that every year. Starlink will drive phone carriers nuts. Yeah. All right, I'll do a few more. We're gonna end a little bit early here today. Hope you guys don't mind, but I got to run to speak with my son's teacher and principal early this morning. No issues, just a checkup. So Tesla at $389.79. It's up $2 in extended hours. Any of you, I'm going to come back to this one, but any of you brave enough to be fading this right here at 400? Every part of me sort of wants to do it. I think I'm going to, if I wake up brave tomorrow, if I'm brave this evening, actually, I'm going to fade it. Let's look at the earnings calendar really quickly. Oracle on deck. Take a quick look. It should be out already. They are down $15. They closed at $190.54. Bid $175. They're down $15. Adobe on Wednesday, and Broadcom and Costco on Thursday. Broadcom, wouldn't that be nice? Wouldn't that be nice if they just poke that one, they pop that little balloon, and we can keep rolling to the downside on all these NVIDIA names, or excuse me, AI names. NVIDIA was down 2.5%. I mean, come on. Once it cracked 135, we can do it. All right. I don't really want more short deltas, but tomorrow we might need to get on the opposite side of this. Vince K says, damn, don't say that, Vic. I'm bulled up with the HELOC funds. If Santa ain't coming, yikes. Oh, no, Vince. No, Vince. Do not tell me you took out a HELOC to go long the Santa Claus rally, Vince. For your sake, Given the sizing of your position relative to the sizing of mine, I'm hoping you're right, my friend, because I don't want to see that type of pain. I'll take the loss for that one. But I must tell you, that is not my bet. We shall see. All right, everybody, I got to get going so I can make this meeting. Do me a favor, hit the like button if you haven't already. I'm not sure if the comments are turned on, but if you can, leave a comment under the video if you're watching on demand. Chris Connolly, I faded Tesla on earnings when it was around 220, managing a 350 call, left from a ratio spread. Nice. Kind of. All right, everybody. Do me a favor, hit the like button. I'll see you back here tomorrow with a conversation with Chris Vecchio. Same time, same place, same great network, only on Tasty Live. Until then, peace.